Points. Watch the miners once again on the strength we're seeing around gold and silver. DAX futures pointing to gains of 14 points. Hannah.
Yeah, so flat to positive for European stocks, flat to negative for US futures. In amongst all that, let's have a look at some of the individual stocks and the sectors that we're watching. Miners could be in focus. For some businesses, buying gas is important, so as a result, anything connected with the gas price should be in focus today as the gas price in the States really flies. Here in Europe, up by around 5% right now. Anything to do with precious metals also in focus. We've got the silver price up by 5%, which is almost not worth mentioning because we see the silver price up so often, so much. Gold price is up by 2%, so a lot of reasons to buy precious metals, it seems. We'll watch anything connected with that. Ryanair in focus on the back of their numbers. They have lifted their passenger guidance. Will some of the other guidance look a bit cautious? That seems to be what some of the analysts are saying. And VW also in focus as they might not go ahead with the planned Audi factory in the US, all to do with tariffs, Guy.
Okay, yeah, that story around tariffs and Trump and everything else seems to be, again, rippling through these markets. Let's talk about where we are this Monday morning. FTSE 100, up by less than 0.1%. Equities just aren't where the story is today, but it's going to be really interesting to see what the kind of derivative effect is of what happens with the dollar, what happens with the euro, what happens with the pound, what happens with gold, silver, commodities more broadly. How does that get folded into the price message we're getting from equities right now? Because at the moment, at a headline level, there's nothing to see here. Volatility is super low. Take a look at the VIX. It's trading at 16, which is amazing considering what is going on. US futures dipped first thing this morning. I was keeping a beady eye on them and then bounced amazingly. Was that a buying of the dip or was it something else happening there? Anyway, the CAC 40 is a little bit weaker this morning. We'll get into the details of what's happening there in just a moment. The FTSE 100 is a little bit stronger, but not by much. We'll have to wait a couple of seconds for the DAX and the SMI to get going. But at the moment, the signal coming from equities is nothing to see here. Is that really the story? Tom, what have we got on the sector front?
Across the sectors, lower rates seems to be a factor as well. If you look at insurance topping the gains right now, that sector up 0.8%. Real estate as well on the back of lower gilt yields, and we'll get more details on that. Of course, the domestic politics at play in the UK and gilts at a bid. So up 0.5% on real estate. Basic resources gaining 0.5 as well. Again, the copper, I should say the gold and silver story. On the downside, consumer products coming down 0.5%. Autos taking a bit of a hit as well. So off 0.3%. Anna, when you lift the hood, what are the individual names that kind of stand out to you right now?
Well, I was actually focusing on what you were just talking about there, some of the gaining sectors, real estate and insurance, and that made me think of gilts. So I went to check what's happening with gilt markets, and indeed we are seeing gilt yields come down. So down 4 basis points at the 10-year, and across the curve, we are seeing lower yields on gilts. In fact, around 4 basis points from the 2-year horizon out to the 50-year horizon. So a little bit of a shift around, a little bit of buying of gilts on relief around politics in the UK, and that all to do with whether Keir Starmer was going to be replaced by somebody who might have spent more money fiscally and upset the gilt markets. But that's not going to happen in the very short term, and so we see that rippling through into equities as well.
Absolutely. In terms of what we're getting, there are single stock stories about energy, and sort of that whole theme seems to be certainly part of the narrative that we're watching so carefully here in Europe this morning. What is the impact of a higher gas price in terms of the European energy story more broadly, and specifically key components like chemicals? Where are we going to see that rippling through? So it's interesting to see what we're seeing. You certainly got the energy names higher. on the back of that trade.
Yes, absolutely. And some of the airlines, in fact, weaker on the Ryanair news, perhaps. Ryanair itself down by 0.7%. Let's talk to Nancy Curtin, Global CIO at Alti Tiedemann, and the perfect voice to give us a bit of a transatlantic perspective of what's happening in a really busy week for equities and every other asset class, no doubt. We seem to be at a bit of a standstill on stocks this morning, Nancy. US futures pointing a little lower, European futures pointing a little higher. A lot of things to wait for. Guy's been talking about volatility being low in various asset classes. Are you also surprised that we're not seeing more volatility around these markets?
Not really. Look, there's a very big week ahead with the technology earnings. I think, Microsoft will be hugely important in that regard as a read-through to what happens in Alphabet and Amazon next week, and frankly, in NVIDIA. So you've got that. You've got threats of the government shutdown, which maybe is no bad thing. In other words, I think we all saw the video over the weekend. Graney seemed to be holding a mobile phone, wrestled to the ground and shot 4 times. So what's happening here is I think the Democrats and many Republicans have united to say enough's enough. We don't want to fund ICE in its current form. So we'll probably see something, removal of the ICE budget from Department of Homeland Security in the passage of the government. I think one thing about President Trump, he recognizes when the wind is not at his back. And on this one, it looks like the $75 billion incremental spending for ICE that has been approved and as part of this appropriations is going to face some tough challenges in the Senate. Remember, he needs 7 Democrats to get through.
I think it's really interesting because there's a temptation to put what's happening in Minneapolis in a basket and keep it over there. But you're drawing the links between what's happening in Minneapolis to the markets.
Well, I think the important
potentially, if there's a shutdown, right?
I don't think there will be a shutdown, to be honest with you. I think what will happen is the Senate recognizes they don't have the votes. They take out the Department of Homeland Security, which they can do. It then needs to go back to the House, which, remember, approved the 6 bills last week, because any change has to go back to the House. Removal of the Department of Homeland Security, or at least ICE. You can approve the Department of Homeland Security's budget and remove ICE subject to further investigation of what's going on.
It's interesting, the Journal's leading with a 5-minute conversation they had with the President overnight, talking about, and he feels like he's backing off a little bit.
He's talking about a full investigation, which is different language to what we've heard from other parts.
That's what I think the Democrats need to see. No one wants a government shutdown. Okay, we've been through this before. We've gotten used to relying on alternative sources of data, but it's not good for the government employees. It's not good for the image of the United States, blah, blah, blah. So I do think there's going to be some resolution here with respect to the ICE budget, in particular, being removed. But if it is, it needs to go back to the House.
Okay, and in the midst of all of that, or if that can be worked through and we don't end up in a shutdown situation, then, Nancy, you are still pretty positive on stocks globally. Are you positive on US stocks? Is it much wider than that for you? Where's the focus?
First of all, we have diversified portfolios. So we have things that will protect, like gold and private markets, which we think can provide a lot of resilience, but we also have equities as well. So on the equity side, yes, earnings ultimately drive markets. The earnings expectation for the S&P 500 this year is 15% for 2026. For small and mid cap, it's moved up to 16+%. So we do think there's a lot of earnings momentum in the United States. The economy is very strong. At the moment, it's going to be firing on multiple cylinders: fiscal, monetary policy, consumer investment spend, net trade improving. So there's a lot to like about the United States. Plus, the tech sector, I think, will be still a contributor to enthusiasm. But your question was, do we like other parts of the world? And the answer is yes. We have leaned in.
Are you leaning into a sort of de-dollarization or not so much?
No, we have leaned into emerging markets by way of example. Why? You've got 2 things you've got to like about emerging markets at the moment. You've got some very, very significant technology companies in Asia which trade at lower multiples than the U.S. tech sector. Take China, Korea, Taiwan by way of example. Lots of things happening in Korea in robotics, which I think is a super interesting longer-term trend. And then you've got commodity prices heading higher, and that's Latin America, and maybe a little bit different kind of political situation after Venezuela, which could be good for Latin America. You take those 2 things together, emerging market earnings we expect are about 22% this year. We have leaned into emerging markets. So yes, we do see the broadening trade, small, mid-cap, emerging markets. We do think will be a broader year beyond the tech sector.
Nancy, on Europe, do we have to reassess our earnings forecast given euro strength?
You know, I think we struggle to find the earnings growth in Europe on a broad-based basis. Look, the defense sector will continue to do well for all the reasons we understand. The bank earnings look pretty strong in Europe. But overall, I think we have leaned more into emerging markets than we have into Europe. You know, from a U.S. investor perspective, they do look at Europe. They're going to look at the earnings. They're going to look at some of the top-down growth challenges associated with, you know, very large amount of bureaucracy and regulation. We haven't seen the big trillion-dollar fiscal stimulus packages, et cetera. So there are some challenges around Europe as well. And emerging markets, I think, will benefit from fund flows.
What is your, you mentioned tech in the US. You think you're confident that continues to deliver. How have you adjusted your thesis around AI and tech?
So we're underweight the Mag 7. So tech is no longer a monolithic 7 stocks. You need to own them. They're very, very different stories. And we're going into an earnings season this week. We've got Microsoft, Meta, Apple, and Tesla. Completely different stories. All 4 of them, by the way, down year to date. I think, as I said, Microsoft is the most important because the read-through in terms of all of this Gen AI expenditure, to the extent that it accelerates, revenue growth and earnings, that will be seen in terms of the cloud. And the cloud expectations for Microsoft are up 37%. If it delivers, I think investors are going to read across to Google Cloud, Alphabet, as well as to Amazon, AWS, and that's positive. And that is, I think, ongoing support for Gen AI. But Gen AI, we think, is much bigger than the Mag 7, broad need across the sector, and that this year will be diffusion of Gen AI applications across companies of the economy.
If I'm a euro investor, am I going to lose money in America if I put money to work there this year?
I mean, the dollar, if it continues to decline, and I think...
Is it going to continue to decline?
There's some positive things.
Yes.
I know it's hard this morning
to
focus on
those.
Like but the trade deficit is improving. Take a look at what happened in October. We went from $100 billion a year ago to $29 billion. That's dollar positive. On the other hand, you've got a lot of psychological elements of where people are like, okay, I need to have a little bit less U.S. dollar exposure.
What about the Fed cutting rates aggressively?
And you have the Fed cut aggressively. I don't think they're going to do anything this week,
Once Rick Reader becomes the Fed chair.
I think Reader would be a brilliant choice.
Why?
Because he understands markets, he understands fixed income, he understands the bond market, and the reaction that can come both at the long and the short end.
Would he want to run the economy hot?
What he's talked about, which I think is very interesting, is that the U.S. economy, where it is interest rate sensitive, is in the K part of the economy, the lower K. In other words, lower-end consumers, the housing market, mortgage rates, credit cards, which we all know that is an issue, and smaller businesses. So cutting rates, I mean, credit market's on fire in the States. He's not cutting rates to give more credit to the corporate sector. This is to help the lower end of the economy. That's number one. Number two, the thing he talks about is productivity gains, which are up 4.9% in the third quarter, could be up 3% this year. Are we entering a different kind of productivity supply side in America, in which case maybe we won't see the level of inflation and maybe the job market will continue to moderate. So there's a lot about what he says that I find quite interesting.
Right, so if he cuts rates to help the lower part of the K, it could risk overheating the top part of the K, but you're saying that maybe not because of the way the US economy is evolving and technology and AI, we don't know.
This is the Greenspan trade, though. Does it work twice?
Well, I don't know about the Greenspan trade. What I know is the top part of the economy has a tremendous wealth effect. Cut rates, I don't think that does anything. It takes away from their money market funds where they park cash, and they make less on them. So that's number one. Number two, 75% of Americans have mortgage rates at 2.7%. They haven't been interest rate sensitive as rates went up. But what has been interest rate sensitive is the lower part of the economy, small businesses, low-end consumers. This is where the rate cut matters. And by the way, it plays into President Trump's affordability challenges, which I think is quite interesting. But what I like about Rick Reader, he's also understands bond markets. If it goes too far, he knows what to do.
Do you have to hedge for higher rates from the Fed in 2027?
You know, in our positioning, we believe that yields could head higher, period. Put aside inflation, which actually we think things will be disinflationary, just given the huge amount of debt issuance, the fiscal sustainability challenges. So one of the things we have on the government side, you know, bond markets are a tale of two cities. Credit looks great, corporate side, government bonds, we're keeping that shorter duration than the benchmark. And we are concerned about term premiums rising. Yeah, not just the United States, Japan as well.
Japan as well. Okay. The corporate bucket's full. The government bucket feels empty. How does that get
That
resolved?
is a tale of two cities.
Exactly.
Tale of two bond markets, yeah.
Nancy, nice to see you. Thanks for stopping by to see us.
Absolutely.
Nancy Curtin, Global CIO at Alti Tiedemann. Thank you very much indeed. Okay, let's take a look at the core six this morning. What's moving around Europe in terms of the big single stocks that we watch out for? A little bit of weakness in tech. In fact, broad weakness this morning across Europe, except in the defense space. Actually, energy stocks are having a fairly good morning as well. The airline sector is fascinating. Higher energy prices, quite a negative, but a lot of European carriers hedge. But let's see how the Ryanair numbers are rippling through the European space this morning with Chloe Mellet.
Morning, Guy. And so indeed, Ryanair is a touch lower this morning, down about 1%, despite raising its guidance for passenger growth and fares. And some analysts have said that the guidance was maybe a touch conservative, a touch cautious, and therefore that might explain a little bit of weakness there. Moving on to Spire Healthcare, which is really surging this morning after it said over the weekend that it was being approached, that a bid was being explored from private equity firms Bridgepoint and Triton Partners. And so we are up 17% this morning. This would be yet another loss for the London Stock Exchange if this deal actually comes through. But investors seem quite keen on this happening, and we are up very strongly this morning. Moving on to CSG, and the defense firm is also up. This is the second day of trading for that defense firm after a really strong trading debut in Amsterdam back on Friday. And so this is another strong day today, up 6% for the defense firm. Nemetschek is also up this morning, also in the green. This is a software company specializing in real estate. It was double upgraded at JP Morgan, with the analyst saying that it was really going to benefit from AI opportunities rather than seeing the disruption from the technology. And therefore, we are up almost 4% this morning. And finally, Volkswagen is a touch lower after the CEO said that it might not go ahead with an Audi factory in the US unless tariffs are reduced. And we are down almost 1% for VW this morning.
Chloe Mellet with some of the stocks on the move in the Monday session. Chloe, thank you. Coming up, we're going to be checking in on Ryanair after the budget airline raised its passenger and fare outlook for the year. We'll check in, get the details. The CFO's been talking about Elon Musk as well. Stay with us. This is Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romain Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Versace in Davos, Switzerland, and this is Bloomberg.
Welcome back to the opening trade. 18 minutes into Monday's session, and this is the picture on European equity markets. Actually, Guy, looking pretty mixed. Stocks Europe 600 up by 0.2%. The FTSE doing okay. A lot of that's to do with mining and interest rate sensitive sectors, which seem to be doing okay on the back of lower gilt.
Just considering the maelstrom, the storm that is raging in so many other asset classes, gold through 5,000, Japanese bonds, what's happening with the currencies, gas kind of moving really rapidly, energy. It is in some ways amazing to see, what is it, the DAX there? My eyesight's not that good. Unchanged on the day. Anyway, let's talk about single stocks. Let's focus on what is happening in Dublin. Ryanair shares are on the move after Europe's biggest budget airline raised its full-year guidance for passenger growth and fares. When I say they're on the move, they're going down, which is actually maybe not the reaction you would have expected. But is that a kind of macro story, or is that a Ryanair-related story? Ryanair's been in the news a lot recently, so you've got to fold that in as well. Speaking on Bloomberg TV earlier this morning, the company's CFO, Neil Sorahan, also commented on Mike O'Leary's, MOL's, recent little spat with Elon Musk.
It's been good for bookings. I think it was something that kind of fell in our lap, and that we were able to, I suppose, have a bit of fun out of. But it's pretty much behind us. Good marketing out of it. It's two big idiots having a bit of fun with each other.
Are they planning to meet and talk?
Look, no.
Michael O'Leary apparently wants the spat to carry on, so we'll see what happens on that front. But apparently they've just had the best 2 weeks of January bookings they've ever seen. Kate Duffy reporting on the stock this morning, joining us around the table. Good morning.
Morning.
What do I take away from these earnings? Are the earnings the focus, or are there other things that I need to be talking about?
The earnings are the focus this morning, as well as the spat with Elon Musk, but we can come back to that later. So the main takeaway was that the outlook is looking positive for Ryanair. So fare guidance is up, passenger growth target is up, and that the latter was a metric that they actually raised in November from 206 to 207 million passengers for the full year in 2026, and today they've raised it again to 208 million. So we're seeing this increase in demand. It's also off the back of constrained capacity in Europe as well. Lots of airlines are struggling to get aircraft in, and the supply chain continues to be tight. And they also mentioned early Boeing deliveries as well, so that's really lifting their outlook for the rest of the year.
Well, yeah, Kate, you talk about Boeing, you talk about the capacity constraints. Have they resolved? How much progress have they made in terms of getting those Boeing aircraft delivered?
I mean, compared to this time last year, it's a really positive outlook for them. This time last year, they were really criticising Boeing for late deliveries. That was putting a real burner on their growth targets going forward. Now we're seeing the opposite. They're increasing their growth targets. They're really happy with Boeing. They're seeing progress there in the factories. They're happy that the fact that there's these second flight test phases for the MAX 7 and the MAX 10, and also the ramp up for the fourth production line at Boeing as well. So the communications there with Kelly Ortberg and his customers. So it was a real positive sign from Ryanair this morning on Boeing.
Never miss an opportunity for some publicity would be one thing you could say about Ryanair. How do you see the spat with Elon Musk playing out?
Well, Sorohan this morning, CFO on TV, said, it was very much done and dusted. But Ryanair's Chief Executive Officer O'Leary has obviously come out on radio this morning saying that he would welcome any continuation in the spat because it has boosted bookings by 2 to 3%. But really, what they're waiting for is some good Wi-Fi product to put on their planes, and that was essentially what O'Leary was saying a couple of weeks ago and what Musk took offence to. It could escalate. It depends whether Musk is prepared to post more on his social media platform X, and it depends what O'Leary is prepared to put up with as well. But they are both very outspoken CEOs, as we know.
Unpredictable characters.
Exactly. Yes.
The two big idiots sale is how Ryanair framed this.
Yes.
It sounds like they want to lean into it. Maybe if there's more.
O'Leary does.
All right, O'Leary does.
Selling a lot of seats. It was really interesting. I was talking to Neil in the green room, and he was talking about the dollar a lot. Like, they buy aeroplanes in dollars, and the dollar's getting cheaper and cheaper and cheaper. And he was like, "Yeah, I'm just every time I get the chance, I'm just hedging this. I'm hedging this. The planes are getting cheaper and cheaper." So that some Europeans are going to win off this one, and if his planes get cheaper, that's only a positive.
Well, it's a reminder, that Euro strength isn't always the downside.
I imagine.
No.
Not a great deal.
Kate Duffy walking us through the numbers from Ryanair. Thank you very much indeed for that update. Speaking of airlines, a massive winter storm, of course, hitting the US Atlantic coast on Sunday, forcing more than 17,000 flight cancellations so far. European natural gas prices also extending their year-to-date rally as storms across the Atlantic cuts US LNG capacity. Joining us for more on this is Bloomberg's Priscilla Azevedo-Roja. Priscilla, we're seeing a tick higher in natural gas prices here in Europe. How sustained do we expect that to be? How much of an impact longer term could this have on European gas prices and our consumption of US LNG?
Good morning, Tom. So the European gas prices are reacting because Europe now has become a massive importer of US LNG. So in Europe, traders are expecting this to continue for as long as we have disruptions. Right now, everyone is looking at the facilities in Louisiana and Texas, which have become big export facilities to the US. The moment a freeze settles in and you have some snow and you have some bad weather, those facilities, they stop operating at full capacity. So far, we haven't seen much disruption into Europe as yet, but the prospect of gas rising on the back of this continues to dominate the market narrative. And one thing that we expect to continue moving forward to the end of January and the rest of winter is the intense volatility that we've seen since the start of the year. So prices that have been up and down, it's been a massive roller coaster, and the market expectation is that this is set to continue.
In terms of the impact, if we see higher gas prices in the US, what is the impact into Europe, and kind of how high can Europe go? How high can the US go?
The US has become Europe's #1 supplier of LNG since Europe stopped or pipeline supplies got cut following Russia's invasion of Ukraine, and Europe has become more and more reliant in the US. Last year, we saw that trade agreement that hasn't been rectified yet, that Europe will import more and more energy from the US. So Europe is now reliant on issues that happen around the world. So if trouble continues in the US, we will see the impact here. The ceiling will depend on the real impact on the facilities. So far, we're getting indications that supply has been decreasing slightly. Some facilities are operating at lower capacity, but the intensity and how far the prices will go will depend on the real impact that we'll see as this storm passes through.
Priscilla, thank you very much. Bloomberg's Priscilla Azevedo-Rocha, and we continue to, even though it's dark in much of the United States, of course, we continue to see evidence of the widespread disruption, a lack of traffic on some of these highways. Interstate 95 is the one that's caught our eye. Not seeing a huge number of vehicles on that right now. Lots of cancellations of flights, as we've been saying. And will this actually disrupt the political landscape in the States and some of the economic landscape? We'll see.
Yeah. It's going to be interesting to see whether it is a market volatility suppressor as well.
Yes, if people aren't at their desks, just don't get to work.
32 states impacted by this story.
It is amazing.
Half the US population.
And if it lasts, and clearly today seems worse than the end of next week, I guess, but if it ends up being a 7-day event, a lot of strain on the grid, we'll certainly watch that. Coming up, we check in on AI and the tech investment landscape. We'll talk to the CEO and co-founder of Synthesia.
Peru is maybe first country inspired to me to how can I use the different ingredients. First time I went to Peru, trying to culture food. I never had this ingredients never used in Japan. Kind of like a wow, you know, and cilantros, chili, garlic, and olive oils. It's a lot of good seafoods, complete a different way. Example, they have the fresh fish, but Japan, the fresh fish uses sashimi. But Peru use fresh fish, make the called ceviche, cooked with the lemon juice. You know, never use the soy sauce. First time I eat this, kind of the, wow. So then after this one, my open eye more, my cooking style that change, combined to Japanese style and another country food, then make a novel style.
The most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
This is the opening trade. We're 30 minutes into the Monday session. Good morning and happy Monday. Across the European equity space, very modest gains of 0.1%. You lift the hood on a sector-by-sector basis. Some strength coming through for banks, basic resources, real estate on lower rates or lower yields, I should say, when it comes to gilts. They are bid. The story, of course, is about what's happening in the FX space and what's happening in terms of commodities around gold and silver. That's a factor as well in terms of basic resources. The DAX is currently flat. The CAC current over in France down 0.2%. The FTSE 100 in the UK just up 11 points so far. Guy.
I am struggling this morning to kind of get a sense of direction from equities. Price takers, not price makers this morning in the equity market, it feels like. 328 up, 255 down. Volume is very, very light. Is that to do with what's happening in the States? I don't know. Or the fact that nothing is happening in equities. Single stocks, we've got a few. We've got a takeout story in the UK. More takeout stories in the UK. Spire is up by 15%. Total, there's A in energy space, and there's some specific stories around Total. In the defense space, CSG listed Friday, up another 6% this morning. That's kind of the story you're looking at on the upside. Ryanair's a little softer, not by much. It's come a long way. certainly has come a long way over the last 18 months. The stock is down a little bit this morning on the back of the numbers we've seen delivered today, but also you've got to kind of factor in all the other kind of stories as well, what's happening with energy costs, etc., and how that ripples into stocks like Ryanair, very heavily, obviously, consumer bias. Let's look at Luxottica and Richemont. Richemont down by 1.26% this morning, so a little sell-off in the luxury space. Anna.
Let's get an update on some of the other stories that we're covering this morning then, Guy. The risk of a partial US government shutdown later this week is rising after Democrats threaten to block a spending package. Senate Republican leaders plan to reject Democratic demands to split off funding for the Department of Homeland Security following another fatal shooting by immigration agents. The British Prime Minister Keir Starmer and his Labour Party allies have voted against allowing Mayor of Greater Manchester Andy Burnham to run as an MP, which would have been a pre-requirement to launch any challenge for leadership of the Labour Party. Burnham is widely seen as a potential challenger to the Prime Minister should he return to Westminster. That's not going to happen anytime imminently. Gilt markets on the move as a result. Volkswagen is reportedly set to pull plans for an Audi plant in the US unless auto tariffs are reduced. Audi has been weighing an American manufacturing site since 2023, initially encouraged by subsidies that would have made such an investment economically viable. Speaking to Bloomberg's Handelsblatt newspaper, Handelsblatt newspaper, VW CEO Oliver Bloom said additional investment cannot be funded unless the levies are cut. Tom.
Okay, let's get to the tech space right now, because Synthesia has announced a $200 million Series E fundraise to reach a valuation of $4 billion US. The London-based company enables users to create AI-generated videos from text. The funding round is led by existing investor Google Ventures, with participation from Ivantic and N Ventures, NVIDIA's venture capital arm. Victor Ripabelli, CEO and co-founder of Synthesia, joins us now. Victor, thank you for joining us on set. So there's the fundraise, which is significant, $200 million, $4 billion valuation. And then there is the rollout of these new role-playing agents and avatars. So let's start with the product first, and then we'll get to the fundraise. What do these new agents do? What could they enable us to do? What is the proposition, and how much demand do you expect to see?
Sure. Thanks for having me back. So for the last 5 years, we've been focused on video as we know it, but made with AI, right? So just faster and better, no cameras, actors, studios, and so on. What we're moving into now is like the intersection of video and agentic experiences. So rather than sort of just passively watching a video for training purposes, for example, what we're going to be able to do with this new product is that the video can engage with you, the viewer. It can talk to you. So if you're just watching a 5-minute video, you're a seller working in a big software company and you're trying to learn the new pricing policy, rather than just consuming that content passively, the video will now go in and role play with you, pretend to be a customer, and then you have to answer objections, making sure that you've actually understood the content. And that's a pretty big shift from just one-way communication to two-way communication, and making sure people have actually understood the content. But that's just one use case.
Does that roll out this year?
That rolls out this year. We're in beta right now, and in the next 2, 3, 4 months, we should start to see this roll out more broadly.
What do these interactive agents look like in 2 years' time, Victor?
So there's a visual aspect of it. Avatars is what we've always been known for. And of course, it's going to be a real-time avatar, so you actually feel like you're talking to a person. But it goes much wider than that. This is all about moving away from communication and into more kind of process automation. So you can imagine in the future, when have these video agents interview candidates, for example, do a first screening. They could do role-playing, like we just talked about here before. Maybe one day they can do customer support. Like, there's a lot of different things that they can do. And essentially, what we're excited about is, what does video look like when it's truly AI native?
Where does that $200 million fundraise get you? $4 billion valuation, reports that you were in conversation with Adobe around a potential takeover. What's the next play, Victor?
I mean, look, this is...
On the funding side. This is taking you towards an IPO.
We're not at the point yet where we're like thinking about listing. I think for us, we just see a massive market opportunity in front of us. And with this new cash, we're even more well-funded to go after those opportunities. And especially moving into this new product space where we're beginning to think more about agents and the intersection with video. Having a proper war chest is obviously something you need, right? It's a big space. There's a lot of people competing for it. And I think with this round, right, we're signaling that we think that there is, a $100 billion opportunity in front of us that we want to tackle.
We all love the training videos. I love it.
I know you do.
Fantastic. What else? What else can you do other than a training video? Where does the product portfolio take you?
So the best way of thinking about what we're doing today is more like a replacement for PowerPoints rather than a replacement for kind of advertisement and marketing videos. So a lot of what we're seeing right now is what we think of as like knowledge sharing. Training could be one of them, but it could also be pitching a customer, for example. As the technology gets better and better, the avatars become more lifelike and more real. What we've seen is that every use case sort of opens up, right? The world is moving to video. Everybody wants to consume video. They don't want to read anymore. And so, I think the next 5 or 10 years, it's just like almost every communication point you have with a company, no matter if you're an employee or customer, is going to be driven by video and audio.
Is there a trust issue that comes at some point? Are people comfortable interacting with avatars rather than humans? How do you resolve that kind of? I like talking to you. You're sitting in front of me. It's great. How do I get that kind of similar connection and that trust that I have that I know that I'm talking to you?
And we've been building it for 5 years now, right? And this has always been a question. And I think the answer is actually pretty simple. It depends. Like there are some instances where you definitely want the real person, right? I would say if you're a CEO who has a big announcement, either good or bad,
probably better to show up.
You want to show up, right? You want to meet people in person. If you're delivering, real-time news for someone around the world, you don't want that to be AI generated.
Well, that's a relief.
That's a relief, exactly. And don't worry, I'm not just saying that. I actually
I'm just saying that because you're surrounded by us three.
Exactly. No, but I think, look, it's just different use cases for different things. If people are watching a corporate video, I think the overall feedback
ends up being regulated.
I mean, there is some regulation on the horizon, and I think, obviously these technologies can be misused. We've seen that play out already, not so much with our tech, but with other kind of platforms out there. I do think that some level of regulation is needed, but I think for our company, it just doesn't matter so much. We've always invested in security, and we're very much like an enterprise B2B company.
Victor, good morning. What happens if some companies decide they don't need the visual element, just audio is enough? I mean, you do some training courses, or it could be some sales pitches where you just get audio. And I mean, you're not seeing a real person anyway, so does it matter if there's an avatar?
I think, again, it matters in some use cases. If you're teaching a seller how to sell better, and one of the things you want to teach them is empathy, having an avatar, which actually our technology is starting to do now, that can actually react to what you're saying, can change its facial expressions, then it is like a simulation, right? Like an F1 race driver, do they learn everything there is to learn about driving a car by doing simulations? No. But it has some value, right? And I think it's the same thing. Sometimes an avatar will be needed, and other times you just want to have a voice, right?
And training might only be one element of what you can do with this technology. But but you say that the companies generally are under unprecedented pressure to spend more on training. Why is that? Is that because of AI in itself? Use AI to learn about AI.
So my sense is that in almost every boardroom right now, there is excitement about all the new things you can do with AI, and there's also a lot of fear around how do we transform our company to be an AI-first company, right? It's easy when you're a Silicon Valley startup with 20 employees to do everything AI first, but for a lot of these bigger companies, right, upskilling their workforce is probably like the biggest leverage they have in their business. And so they're trying to figure out how do we do that, right? Sending people books to read along documents clearly doesn't really work. It needs to be more interactive. It needs to be video and audio driven. And that's the kind of demand we're seeing in the market. And essentially, I think there's a lot of tech companies who talk about the fact you can automate everything and there's going to be no humans working in companies anymore. I tend to not believe that's going to be the case. I think even in 10, 20 years, the core DNA of a company is its people, right? And we want to help the enterprise upskill their people so that they...
That's a company thought, isn't it? 10, 20 years.
But that does chime with some of the things we've heard from some of those companies that do AI implementation, that where it's fallen down at this very early stage has been around people and around their inability to
adopt,
be
to
trained.
skill up.
There's so many pilots going on right now, right? Where people are trying out new things. A lot of those pilots, to be successful, rely on the people who need to use the technologies actually understanding how to use it, right? And so if that fails, the technology may be great, but the outcome will not be what you expect it to be.
I've asked you this question before, but as the valuation increases, I think it becomes more salient, which is you are a UK tech champion. How does the UK government keep you here? If there is one thing that this government could do, what would you ask for?
I think we're seeing movement in the right direction. I still think there's the same structural issues around how much do pension funds invest in growth equities and venture capital, et cetera. I still don't think that the kind of capital markets here are ideal for growth stage companies. Some of the things we've seen around like wealth tax, I think, is also problematic. We've seen a lot of people leave the UK. I know a lot of founders who are thinking about leaving the UK. I think some level of wealth tax is potentially okay, but I really think we should split that into what is high-growth, productive companies of the future, and what is old money, rent-seeking, I think there's a big difference between those two pools of people, the innovators and the rent-seekers, and I think they should be better at delineating between that, because we have a great foundation.
How would you do that?
I'm not a politician, so I don't know.
Over to you.
That's the problem. No, but I think, look, when I look at my peers, everyone's talking about where should you live, right?
Yeah.
We've decided to have our HQ here, and I want to maintain having my HQ here. But I think with the non-dom scheme, for example, I think one of the things the UK government underestimates is that for people who have the means, the world is very small, right? Like most founders I know don't spend half the year in London anyways, or wherever they live. Like everyone's on the road all the time. And I think that's what we've seen. There's 1,000 millionaires who've left the country, right? And I bet you that a lot of those 1,000 millionaires, it's not like they just like pack their bags and they're never going to go to London again. They're just going to be there less. Or maybe they're actually going to be there the same amount of time they've always been, but they're just going to have their residence somewhere else. And so I think it just doesn't feel very thought out. And I think it's always been one of the things that made the UK very competitive, right? Because it's been historically a great place that attracts people with the means to invest in innovation and growth.
Victor, always enjoy our conversations. Victor Ripperbelli, thanks for coming in once again on the back of that $200 million raise, $4 billion valuation for Synthesia, the CEO and co-founder of Synthesia. Coming up, this is the number of the day, what figure has Goldman Sachs, talking of the wealthy, raised CEO David Solomon's pay to? The answer when we come back. This is Bloomberg.
Estava sitiada.
Nisso eu começo, eu também não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering, and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Okay, before the break, we asked what figure has Goldman Sachs raised the CEO, David Solomon, of course, and his pay to? The answer, Goldman Sachs boosted David Solomon's pay to $47 billion would be nice, wouldn't it? 47 million, I think he'll be happy with that. $47 million, his biggest award ever. A filing has revealed that the board handed Solomon a $2 million base salary and $45 million as a bonus in the form of shares, cash, and carried interest. The figure came in higher than the $43 million awarded to JP Morgan CEO Jamie Dimon. Under Solomon's leadership in the last year, Goldman posted record revenue in its banking and markets division and record management fees in its asset management business. Solomon's pay now in line with Guy Johnson's. Guy.
Not this Guy Johnson. There must be another Guy Johnson. Let's talk about what is happening in the markets this morning. That trading story that Tom's just been referencing. The yen is strengthening. Traders remain very much alert for market intervention. Prime Minister Sanae Takaichi warning markets about that. We also had the big story Friday. The New York Fed checking desks on pricing. Bloomberg senior editor Brian Fowler joining us. What is the latest? Because we've just had another move, it looks like. So what are we hearing?
Yeah, so we're about to get some very important data at the top of the hour. These are the Bank of Japan's current account balance data that they publish every day, and those data are going to tell us what they expect the balance to be Tuesday morning. We already have an estimate from 3 money brokers that indicates that the average is a forecast of a 167 billion yen decline based on fiscal factors. If the number the BOJ gives us diverges a lot from that number, it would indicate that intervention did occur on Friday. If the numbers are more or less aligned, probably it means we didn't see actual intervention. So we should have a number. It does require a calculation on our part and a lot of interpretation, but it'll give us a good indication in just a few minutes.
Okay, that's interesting, Brian. So that's what we watch for in the very near term. In the also near term, I suppose, we've got an election on February the 8th. What are we watching between now and then?
Yeah, so I think one interesting thing this time around is, we just mentioned it a few minutes ago, that what happened in New York on Friday was we saw officials making rate checks, calling trading desks to ask about where the yen was. Of course, they don't really need to do this. They all have Bloomberg terminals. They don't need to call trading desks to know what's going on with the yen. And we all understand that they make these calls to send a signal. It's a warning. They aren't happy about what's happening. And it's important that the Fed is doing this because it shows that there is an alignment between the U.S. and Japan on currencies. And it also raises the possibility that if we actually do see real money, real intervention, we could see coordinated intervention for the first time since 2011. And that would be huge for the market as a signal. So I think that's one of the important aspects. The other thing is, yes, you mentioned Takaichi. We have the election coming up February 8th. She weighed in. She's also, it's unusual for a prime minister to talk about markets much, but she said that action would be taken if necessary. The reason she's doing that is she's afraid of inflation, which of course is being spurred by the weak yen, especially food inflation. So much of Japan's food needs are imported. So she's worried about the weak yen. She wants to see that come down. And so I think we're going to be on watch for all sorts of actual intervention or verbal intervention between now and then.
Brian, thank you very much. Thanks for the update. Bloomberg's senior editor, Brian Fowler, with everything you need to watch when it comes to the Japanese story. There are lots of corporate reports this week, so we need to get ready for those. We've got luxury goods companies, we've got tech companies, we've got European banks, we've got aviation, we've got a host of sectors reporting. Plus, it's a big week over in the US for earnings with Boeing, Meta, Microsoft, Tesla, IBM, and the list goes on. For more, we're joined by Rod Turnbull from Bloomberg Intelligence, who's here to preview the week ahead with us. Rod, really nice to have you with us. So technology certainly in focus. What will you be watching from the big tech names?
Well, I think the unifying theme that we might look at across the Atlantic is, firstly, it's a show me time for sure, and secondly, capex. We are looking at a market for Gen AI of 1.8 trillion in the early 2030s and about 600 billion for GPUs and ASICs in about the same time frame. So it's a lot of money being spent. So we've got Microsoft and SAP, which we can look at in unison. I mean, it's going to be the focus on cloud capacity, the build out with Microsoft and the future for Azure growth. But I think the interesting thing with Microsoft is they're talking about spending 150 billion of capex this year. That's about 45% of sales. Now, the market's been prepared to pay about 11 times EV sales for this stock in the past. We know returns are kind of low in this space, so it's going to be a case of are they going to generate something for that amount of spend? And then equally with SAP, maybe not so much equally, but the stock's been up marginally so far this year. Okay. And again, we'll be looking at the conversion of that backlog in cloud.
So that's the show me element.
Very much so.
There aren't many spaces where European multiples are higher than US multiples. Defense is one of them.
Defense is.
Talk me through the week. So we've got, I think, is it Lockheed's on deck this week? Rheinmetall trades on some epic valuation versus the US. Is that going to close in anytime soon?
Well, it's interesting. I mean, Lockheed Martin report on Thursday. They trade on 19 times earnings, so reasonable. Everything's going to be about missiles, and that's certainly where the focus is. And you can understand where the theme lies in that. Patriots everything just now. The Americans have the kit that the Europeans probably do need to buy. Rheinmetall, on the other hand, 45 times earnings, Saab in the early 50s, and it's very much dependent on a couple of things: the unity of the EU and fiscal headroom and the ability to spend on this and execute on that over time, but equally so the industry itself to execute on it and have that industrial capacity to meet the demand. We know demand's there, and we know that growth is being factored in, but can they deliver on that? And I think that's the thing that we should be focused on as they report.
From defence to the pharmaceutical and drug space, is it more of a tariff story, or is it a pipeline story, or where is your focus when it comes to big pharma?
Well, interesting. As we go into next week, we've got Novo and Lilly, so two big key bellwethers in the pharma space, both sides of the Atlantic.
They've been duking it out, haven't they?
They have been duking it out, and they're probably going to be doing that through the first half of this year. What's interesting with pharma just now is perhaps its issues from 2025 are now in the past. There's concessions been made on price. There's manufacturing moved back to the US, et cetera, et cetera. So perhaps that's already discounted. Otherwise, we're looking at a sector that's growing maybe 5 to 6% this year. We've got a couple of big catalysts coming up, one of which will be what looks like good data on oral Wegovy, and then we'll have Lilly data on their oral equivalent in I think, the second quarter. So there's a couple of big catalysts that should come pharma's way on reasonable valuations. And of course, the sector's about, I think, the fourth best performing in Europe so far this year, so a little bit of hope there.
Okay, Rod, fantastic setup for a big week when it comes to earnings. Rod Turnbull from Bloomberg Intelligence. Here's what else to think about this week then. Later today, we're going to get Germany's IFO Business Climate Update. There's a summit taking place in Hamburg, North Sea Summit on Tuesday. The EU-India Summit, we'll see if they make any progress on a potential trade deal. The US will officially also withdraw from the Paris Climate Agreement. And on Wednesday, of course, it is the Fed rate decision. We'll be hearing from Jay Powell. Canada also coming through with their decision around interest rates. On Thursday, Prime Minister Keir Starmer will be in China, and there is a meeting of the Foreign Affairs Council as well of Europe, and we get some data out of the US on Friday, GDP and core producer prices going.
It's a busy week coming up. Like, it's a busy Monday.
Is it back to fundamentals this week?
Don't know. You got a president of the White House. Anything could change. Who knows what's going on? I'm stunned that we're ignoring Canada, but I think people have even moved beyond Canada. Skylar's here. We've talked about a whole load of stuff. What do you want to talk about?
I think probably the most interesting thing this week will be the Fed.
Yep.
Because we have all of the shutdown data now.
Yep.
I think on the aggregate, it's come in on the strong side. So if you look at something like the Economic Surprise Index, that's positive in the U.S. Inflation isn't particularly worrying from what we've gotten, but we'll see whether or not that feeds into more hawkish commentary. And also the dissents now we really care about.
Yeah.
So whether or not the 10-year yield kind of continues to push higher, it's pulled back because of what's happening in Japan. But if you have more hawkish commentary, that could certainly feed into higher yields.
We could end up with somebody new named to lead the Fed.
Which is the big Fed event this week?
I don't know. When you said the Fed, I was thinking, yes, indeed, for two reasons. I mean, it is possible that we get somebody who is named who is risk positive, isn't it?
Yeah, absolutely. I mean, if you have a more dovish member put forward, that could be risk positive if it's seen as not so dovish as to mean you lose Fed credibility, but a dovish enough that maybe you get a little bit more of an easing bias. I think we're also wondering whether or not Powell stays on the board. You know, when his chair ends, he doesn't have to be removed. And so I think, you know, it might be even more dangerous if you have a governor appointed that's more in line with the consensus or more credible, because that's the idea that the Fed could still come behind that person rather than a complete dovish outlier would likely be more ignored.
Skylar, on the UK, gilts have given up some of their gains, in fact. They came out of the gates pretty strongly with yields down around 3-4 basis points. They've given a lot of that up. Politics back in focus, but maybe markets are now looking past that in terms of a little bit of relief at the start of the session. How are you thinking about the UK? We had a previous guest who said, actually, gilts are amongst the most sensitive to what happens in Japan.
Yeah, I mean, it's an interesting one because I think where you're seeing the sensitivity within bond markets to Japan is your kind of fiscal mixed behaviors. And so the UK always comes up on top of that list because of the Liz Truss crisis. But what we've seen is debt to GDP ratios have actually been improving in the UK. So maybe it shouldn't be in that camp anymore. And if you look at like the pound, for example, Euro GBP has substantially closed the gap to rate differentials. And so that premium has looked like it's compressed for good reason. And it is a very high yield. So I think that increasingly becomes attractive attractive as you have inflation come down, as you get this virtuous cycle where lower inflation means lower yields, which means lower debt servicing costs, and it improves. There is a question of kind of what level you get there still. So in the near term, maybe that shifting in pricing around March means that it's not as safe a bet, but certainly that yield is attractive.
Okay. Bloomberg, Scarlett Mongorian-Koning, thank you very much indeed. Dan Honor's on the move today as well, around an infant formula
Shares falling after the French food company expanded its infant formula recall amid a toxin crisis that's engulfed Nestle and Group Lactalis. So that stock is down by just over 5%. We're watching that, of course. We're watching the weather in the States. We can get iPhone numbers out of Germany shortly. So important read on the German
But it's the dollar. Dollar's down. Dollar is weaker. That's the kind of the story that we're watching. We'll continue to keep you up to speed with everything you need to know. Markets, weather, what is happening in the United States, all of that in focus. But the EFO number is the next big market event, and the Pulse will bring you that in just a moment. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
You know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
A partial U.S. shutdown looms as Democrats threaten to block a funding package after Border Patrol agents killed a man in Minnesota on Saturday. Traders on high alert for intervention on the yen as Japanese authorities say they'll work closely with the U.S. to defend the currency. Plus, the biggest winter storm to hit the U.S. in years brings travel chaos, the threat of blackouts, and the highest natural gas prices in more than 3 years. Well, good morning, everyone. There's quite a busy day ahead. We have a lot of market-moving stories, so let's go straight to the markets. This is a picture overall for what the dollar's doing. Dollar extending its sell-off as speculation swirling that the U.S. could coordinate intervention with Japanese authorities to support the yen. So we look at dollar-yen 153.93. Then we look at gold topping $5,000 an ounce, extending its breakneck rally, while silver actually surging to 6%. We'll spend a big amount of time looking at natural gas, again, at the highest since 2022, and the S&P futures practically flat. Let's also take a look at the European markets map just to give us an indication on whether what we're seeing in the U.S., especially the dollar falling for a third day, is translating into Europe, maybe at the margins. A lot of the indices are actually tentative, with the CAC 40 under a little bit of pressure. We're also getting the German figures. Now, German January IFO Business Confidence Index coming in a touch below estimates, but not by much, at 87.6. The estimate was 88.2. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the risk of a partial government shutdown is looming in the U.S. as Senate Democrats vow to block a giant spending package. Now, they're demanding that Republicans strip funding from the Department of Homeland Security after a Border Patrol agent fatally shot a man in Minneapolis. Now, the governor of Minnesota has called on President Trump to pull the immigration officers out of his state.
President Trump, you can end this today. Pull these folks back. Do humane, focused, effective immigration control. You've got the support of all of us to do that. Let our law enforcement continue to do what they do, making Minnesota one of the safest states in the country, one of the best places to live.
Well, with us now, Ursula Marchioni, EMEA Head of Investment and Portfolio Solutions at BlackRock, and Stephanie Baker, Bloomberg Senior Writer and author of Punishing Putin. So thank you both for joining us. Stephanie, the images coming out of Minnesota are really pretty astonishing. We hear that a lot of congressional Republicans are now also showing signs of wavering on the immigration crackdown after this U.S. citizen was shot and killed.
Yeah, there are a handful of MAGA Republicans that are coming out against this because of a number of reasons. For one, the fact that some of the Trump administration officials are saying he was brandishing a gun, and for many conservative Republicans, they view the Second Amendment right to bear arms as central. He was carrying the gun legally, and according to the footage, which we all saw, he was not posing a threat. It does not appear in any way that he brandished that gun. He was restrained and had taken the gun from him when the agent shot him multiple times on the ground. I mean, I think it was so shocking to everyone who saw it that I think it is a real turning point in this immigration crackdown by Trump. And you had that New York Times poll last week, which showed 61% of Americans think that ICE tactics have gone too far. So whether or not that funding bill will go through, whether or not they can strip out DHS funding from a number of other bills, that remains to be seen. That would prevent a wider government shutdown and prevent other agencies from being denied funding.
Stephanie, I mean, what happens next? State and city officials keep on repeating their calls for federal officers to leave, and also demanded that Minnesota's authorities take over this investigation. What happens next?
Well, Trump gave an interview to the Wall Street Journal last night, briefly, saying that there would be an investigation. I think that is going to be the central theme, that there's going to be calls for a full investigation. The question is whether or not state officials will be allowed to take part in that, because I don't think there's any trust in the Trump administration to carry out a fair, thorough investigation of what happened. If DHS carries out the investigation, I don't think anyone will trust the findings of it, and whether or not the courts will intervene to try to make sure that state and local officials are allowed to participate. I think that will be a key factor to watch.
I mean, crossing to the markets, Ursula, there's, we talk about a possible shutdown, trying to strip some of the funding, but it's not really playing out on the markets.
No, not yet, Francine. And I think also, I'm just back from a big trip to see clients, I think it still adds to that duality that our European investors are grappling with. On one side, since COVID, the big exposure towards the US, which is now 72% of the MSCI World, 64% of the MSCI ACWI, from investors with historical own bias towards Europe, that has to be rectified. But then on the flip side, from a more tactical perspective, there is this desire to diversify and remain exposed to the AI trade and to the US, but with some form of protection. And so we've seen last year the great repatriation trade with nearly 92 billion of flows going back into European equities ETPs. If you compare it to the period 2014 to 2024, that was 94. So it's basically a decade in a year.
But I mean, it just feels like there's a lot of money out there. So you know, prices or risk isn't really being priced because we're awash with cash. Is there anything that you're looking at? I know there's a big story with like yen extending gains. There's, you know, pointing to some intervention risks. But apart from specific flashpoints, what is the market pricing in?
I think it's a very good question, and there is the element of what markets are pricing in and how investors are reacting. I think that, you know, with all the headlines around AI and where is the way forward, obviously we're entering a big week this week, we remain, you know, we have conviction into very strong earnings, and again, this week will be important, resilient profit margins, solid balance sheets. But to your point, I do see investors wanting to take part in that, but at the same time, take into account other diversification elements, which could be, you know, trading around AI or beyond AI, thinking about European defense or US healthcare, thinking about diversifiers in portfolios. We've just seen gold crossing the historical level of 5,000. There's still a lot of appetite there. It's kind of solidifying itself as the hedge for everything. Hedge funds, buffer strategies, long, short investment solutions. I think that's where we continue to see appetite for, in this desire to balance out, remaining exposed to markets, but with care.
With care. What did we learn last week in Davos? I mean, it was pretty incredible looking at this new world order taking shape. It's unclear what happens in, you know, second, third, and fourth quarter.
Well, I think the Trump backtracking on Greenland was very significant. You know, there's been a lot of discussion about that as to why he did that. I mean, it does seem to me the tariff threat to European countries over Greenland caused the markets to react, and that's what pulled Trump back. Now, we still don't know what the exact agreement is, you know, whether or not, for instance, they will allow U.S. bases to have ownership over that territory, much like British forces have in Cyprus. That is totally unclear. What about mineral rights? You know, it's very hazy what was actually agreed, and I don't think Trump is done. He may come back with further threats, but it does seem like this was not a serious, you know, I said on this show a few weeks ago that he'll come up with some sort of fudge, an agreement to back down on it, but we don't know what's been agreed.
Stephanie, how much of it was also pressure from Republicans? I mean, you heard it quite a lot on the ground in Davos, that maybe there was a wishful thinking in saying, well, look, there's a Congress, they got this, they don't want him to invade Greenland.
Well, I would have expected more Republicans to speak out, considering the situation. So I do think it was really the markets that pulled him back. And, you know, the markets are the most powerful thing here and seem to be the only real check on Trump. It's not Republicans in Congress, unfortunately. Now, and you see that even with, you know, Minnesota, that, you know, there are few Republicans, but given the situation and what everyone can see in that video, you would think there would be more Republicans that would call this out as, you know, at the very least, a law enforcement operation that has gone terribly wrong, and that there should be a full investigation. So, you know, I'm kind of surprised that there haven't been more Republicans, you know, turning out. But like I said, I think, you know, we can't predict what's in Trump's head and what will happen next. Particularly, I think Greenland is still an open question.
Yeah, it is an open question. Ursula, I mean, going back to some of the things you were saying about AI, because it was very clear that, you know, there was a kind of tale of two halves with the geopolitics and the AI last week. Are you worried about job losses? We had also a survey today saying that the UK actually will probably suffer more job losses in the smaller term comparative to the workers than other countries. Or do you have valuation concerns?
So, good question, and I think as we get into FOMC this week and we'll hear more, you mentioned in terms of labour market, I'm thinking about a lot of the headlines referred to the US recently, so we'll see how Fed Powell will balance out the inflation element and the job space. But I think, Francine, in the US, we continue to see a picture of resilient economy as a backdrop of the big mega force that is playing out. So I think the concerns there are, even when I think about how investors are approaching it, discerning between winners and losers. Beyond the headlines, is it a bubble? We don't believe it is. There's a clear element that it will be an environment that will change very rapidly. And so strategies that try to capture the more innovative names, in addition to, you know, the classic winners that we've seen emerging, are gaining popularity. I think if we look across the globe, you mentioned UK, you mentioned Europe, I do see that element around interest in adding diversifiers to portfolios, which persists. The UK remains interesting in terms of being very lowly exposed to global trade. And so, Stephanie, to your point around all these discussions, I think it does generate a different profile in investors' portfolios, which is of interest.
Quickly on Ukraine, I mean, this was, Vladimir Zelensky, you could see he was tired, you could see he was under pressure, and he also, I guess, is worried about the future of his country.
Absolutely. You've had these talks, these trilateral talks going on in Abu Dhabi. They have not gotten much coverage, but Ukraine sent Zelensky's new chief of staff, his advisor, the former head of Ukraine military intelligence, this guy Kirill Budanov, who's a very serious guy. I've interviewed him in Kiev, and he is now negotiating with his counterpart in Russia, a head of military intelligence. So it's a far more serious set of talks. They seem to have made some agreement. I'm quite skeptical still that they'll reach a breakthrough because of Russia's continued demand for this, the rest of Donbass. So, but those talks are continuing this week, so let's wait and see.
Okay, thank you both for joining us. Ursula Marchioni, EMEA Head of Investment and Portfolio Solutions at BlackRock, and Stephanie Baker, Bloomberg Senior Writer and author of Punishing Putin. Coming up, the British Prime Minister, Keir Starmer, heads to Beijing, hoping to reinvigorate trade ties with China following approval of a new embassy in London. We'll discuss all of that with Mij Rahman, European Managing Director for Eurasia Group. He joins us next, and this is Bloomberg.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Vonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress-testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Wednesday, the The Fed decides.
It really feels like the door is closing for another interest rate cut.
The economy is actually still in decent shape.
The market is betting the Federal Reserve retains its independence.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
How does Fed Chair Jay Powell position himself as being politically independent?
You don't plan on Donald Trump's economic vision.
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
The conversations that matter, the insights that you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, the Chinese president, Xi Jinping, has moved to probe his top general and one-time ally. Now, the investigation comes after the Wall Street Journal reported the general was accused of passing secret information about the country's nuclear weapons program to the U.S. We're now joined by Alan Wong, Bloomberg's China economy and government editor. Alan, thank you for joining us. So what do we actually know so far about Xi Jinping's move against his top general?
Yeah, the Chinese government hasn't said very much about the investigation itself, but what we know is that one of the most senior general in the Chinese military was investigated, and along with another member of another general on China's top military decision-making body. So that means that there's only 2 people left on that normally 7-member panel of decision makers, including President Xi Jinping himself. What is so stunning about this development is that Zhang Youxia was considered a close ally of Xi Jinping. Their fathers both fought in the Civil War, and Zhang was seen as one of the few people in the Chinese military who actually had combat experience. So his downfall meant, at the very least, that there's no one safe in Xi Jinping's perch of people believed to have violated its corruption rules and also party laws. But to the extent that we know from official releases, we know that he's being investigated for violation of party discipline, but then a PLA Daily writing piece detailed some of those allegations, saying that he's accused of violating party discipline, but also trampled on the integrity of various party rules. So that is a very coded way to say that he betrayed and tested the authority of Chinese President Xi Jinping.
Alan, thanks so much. And this, of course, has implications for the rest of the world and geopolitics. Bloomberg's China economy and government editor, Alan Wong. Now, the British Prime Minister, Keir Starmer, looks to reinvigorate strained business ties with China when he travels to Beijing this week. The UK government recently approved a new Chinese embassy in London, ending a years-long saga that had strained bilateral relations. With us now is Mish Raman. He's European Managing Director for Eurasia Group. Mish, thanks so much for joining us. Look, it's unclear, and we heard this also with, in Davos last week. It was definitely Mark Carney that kind of broke away a little bit that alliance with the U.S. They're looking to China. But is China de facto the counterpart for allies that no longer want to be dependent on the U.S.?
So you are seeing lots of countries now look to diversify their relationships away from the United States. I think we've seen that reflected with the EU attempting to get that Mercosur deal over the line last week. You're seeing Ursula von der Leyen, she's in India, looking to conclude a free trade agreement. The problem with China is many countries have problems with the regime, the nature of the regime, and things the regime has been doing in the European theatre that run counter to European interests. That's aid and non-lethal aid into the Ukraine theatre, it's overcapacity, it's the trade distorting subsidies. And so as they try to find a way through with the US administration, I think there is a question now as to whether the de-risking approach that many countries have articulated now shifts. I think for Starmer in particular, it will reinforce this sense of never hear Keir. I think the Tories and Reform will absolutely go after him for kowtowing to Beijing, but he'll try and make this trip about the domestic agenda, jobs, investment, etc.
But, I mean, if you get too close to China, does President Trump retaliate? I mean, is everything, are we questioning everything that policymakers are doing in case Trump retaliates?
I think that's one motivating factor, but as I say, I think there are other concerns many countries will have about getting off that de-risking agenda, certainly for the Europeans and indeed for the Brits. And so they're going to try to find a balance here, a way through where they both remain, close and constructive with the Americans, while at the same time cognizant of the risks that come from getting closer with the Chinese.
Also, what's happening in the UK Labour Party? So, Keir Starmer allies barred the Greater Manchester mayor from standing as Labour's candidate. I mean, this is a widely popular person, so does he feel threatened?
I mean, Francine, you know my view. I don't think Starmer will see the year to conclusion. I think he is going to face a leadership contest, the midterm regional elections, 7th of May. That's going to be a massive problem for Starmer and for Labour, given their likely performance in Scotland, in Wales, in the English councils. And so I think a leadership challenge is coming. Andy Burnham would have been a favourite and a darling of the soft left. The unions like him. He's very popular, obviously, with the base. And so that would have reflected, I think, a big threat for Starmer, and that's what they're trying to manage in the very short term. But that doesn't prevent these structural challenges that have prevented Labour from performing well. They don't have a plan for power. Starmer hasn't managed the parliamentary party well. The polling is abysmal. They don't have a clear narrative or a message for the country. And so I think a leadership challenge will come. I think Angela Rayner is my base case to replace him. If not, then I think West Streeting is highly likely to succeed if Angela Rayner does not.
What does it mean for the economy? Because what they offer at the moment, they say, is stability.
I mean, I think if it's a leader to the left of Starmer, and it will be, they're going to want to pick apart the fundamental, let's say, governing philosophy of this government, which is going to be a change to the fiscal rules. I don't think they're going to throw the fiscal framework in the bin. Angela Rayner, these guys on the soft left, that's not the same constituency as Corbyn and his allies. So whether it's a West Streeting, whether it's an Angela Rayner, I think we're looking at a tweak to the fiscal rule, but their instincts will be to borrow and spend more. I don't think they'll want to sign up to the fiscal straitjacket that Reeves and Starmer have alighted on, that is dictating so much of what the government is and is not able to do on their domestic agenda.
Mitch, what happened over Greenland? So I love your piece, actually, that it says Trump's ruling out of military action does not diffuse a crisis. That's what I felt.
Right.
I mean, there was like a sigh of relief in Davos saying, oh, he's not sending the military, crisis averted, let's move on.
Right.
But it's deeply disturbing, actually, when that's even, a base case.
So I wrote that piece after Trump had excluded a military intervention, so military adventure, but then we had the further climb down later in the day where he talked about working through the NATO framework. So now I do think the most extreme tail risks have been controlled for, the tariff threat and any unilateral intervention, whether militarily or through economic coercion. So he's going to do a deal in the NATO framework and bilaterally with Copenhagen and Greenland. I think the remarkable thing is this is a deal that's been on the table for over a year.
Right.
The Danes, the Americans and the Greenlanders have been talking about reinforcing security on the island for the Arctic. But Trump was opposed to working with NATO and felt that he needed sovereign control over the island in order to deliver on these security goals. I think a combination of European resolve, congressional and public opinion in America, and of course market pressure resulted in that big taco that we all saw in Davos last week.
I mean, does the president go back after Greenland? Because he doesn't, I mean, a lot of the times what I'm told by people close to him is that he just doesn't let go.
I mean, I think on Greenland, I think we're in a more boring negotiating corridor now. I think the risks have largely been controlled for, and I suspect there will now be an agreement that sees the Americans reinforce their security on the island, but they do it in a context through NATO with Rutte and bilaterally with the Danes. Maybe they upgrade the 1951 treaty that will give the US more of what they're looking for. Sovereign bases on the island is something that's been talked about. As long as that's done in conjunction with Denmark and Greenland, that may be a possibility. It doesn't mean other risks in the transatlantic alliance don't remain real. I mean, Europe has signed up to a 5% spending target by 2035 on security and defence. Many countries, Francine, just don't have the fiscal pathway to get there, the UK and France being two very obvious examples. And so at the moment of this midterm review, there may be a question when the Trump administration looks at the numbers and says allies aren't following through on their commitments. There remain very real risks in the Ukraine theatre. The administration...
Which by and large is forgotten about.
Which has been completely forgotten about. But again, where the administration is really pressuring Zelensky to concede to territorial concessions in the Donbass, in particular in Donetsk, in areas of territory that the Russians have not been able to win on the battlefield. So that remains an existential and very real risk for Europe. And of course, implementation of the trade deal. is now stuck because the European Parliament said they're not going to ratify it. So that creates the risk of more bilateral tensions. There's, of course, things around free speech and the Digital Services Act and the Digital Markets Act. And so there are many irritants and many potential sources of friction in the transatlantic relationship that may blow things up again.
Do you have a better understanding now what this new world order could look like?
I mean, I think the Europeans are getting to grips with a new world order that isn't governed on the basis of rules and norms and institutions that they're so comfortable with. And I think we are beginning to see the Europeans flex a little bit more. But again, Francine, you know, it's about that Draghi agenda on economic competitiveness. It's about capital markets union, about the tech ecosystem, about doing more to ensure the Europeans, as Macron has always said, can be more strategically autonomous. And I think there is still some ways to go.
Is there a timeline problem that you can be more autonomous, but it takes time to build up your supply chains, to have access to rare earths?
I mean, I think it's a crisis and non-crisis context problem for the Europeans. I think there's always this question about, will Europe perform well in a crisis? And my general expectation is it tends to perform better than consensus suggests. Yeah. The problem with Europe is it doesn't have a playbook for governing in normal times. So as soon as the existential threat has removed itself, as soon as the environment is a bit less menacing, everybody again begins to rest on their laurels, and some of these important reforms don't move forward.
So interesting. Mish, thank you so much. Mish Raman there, Europe Managing Director for Eurasia Group. Coming up, what does Europe need to do to boost business and deal making? We'll discuss all of that with Hugh Van Steenis from Oliver Wyman. That's next, and this is Bloomberg.
Climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in London, and these are your top stories. A partial U.S. shutdown looms as Democrats threaten to block a funding package after Border Patrol agents killed a man in Minnesota on Saturday. Traders on high alert for intervention on the yen as Japanese authorities say they'll work closely with the U.S. to defend the currency. Plus, the biggest winter storm to hit the U.S. in years brings travel chaos, the threat of blackouts, and the highest natural gas prices in more than 3 years. So traders on a heightened alert for Japanese authorities intervening in the FX market following the yen's recent slide. Potential U.S. involvement could also worsen sentiment towards the world's reserve currency. Let's bring in Ven Ram, Bloomberg MLive cross-asset strategist. Ven, it's so good to speak to you. So this is the strongest gain for the yen since mid-November. Is it likely to continue its advance?
Morning, Francine. I think definitely there's a case for the yen to be rallying in the short term. It's going to be a very tactical rally, particularly through the first quarter, I think, because what is clear from what has happened since Friday in the currency complex is the Fed New York is also in the act of weakening the dollar. So I think that, when the Fed goes all out to want a weaker dollar, I think investors are paying heed. And what we have seen is an unwinding and a flushing out of long positions, long dollar yen positions. So I think that that's got further to run. And I think that with the U.S. administration actively seeking a weaker U.S. dollar, I think that the yen gains have got further to go in the first quarter.
So gold marching higher, what could, if anything, bring it down?
Well, I think that it's become a bit of a self-fulfilling prophecy, this rally in gold. Markets wanted 5,000 for a long time. They've got it now. But even the most optimistic outlook out there is from Goldman Sachs, which are calling a level of 5,400. But I don't think, the risk-reward equation on gold doesn't look too good from here. So I think that the markets, unlike the October flash crash when it crashed about 10%, Francine, I think the markets are now better prepared for a correction in gold. If you look at the wall expressions on gold and silver, they are pretty high. And they are thinking that, gold could tumble to as much as $4,700 an ounce in the short term. And for silver, they're expecting a pullback to $86 an ounce. So I think that this is a market that is acutely aware that these gains are getting overextended at current levels.
The Swiss franc, Ven, also making some of the strongest levels ever seen. What's driving it, and how problematic is this for the SNB?
Well, I mean, the haven bid knows no let-up in the franc, but I think it's going to become increasingly a headache for the SNB for two reasons. If you look at the real effective exchange rate on the Swiss franc, it is creeping up to levels where the SNB has previously had to intervene in the currency to pull back some strength. But also what it means is that tighter financial conditions in Switzerland, which of course will bring down inflation, but to the extent that it brings down inflation, it may not be good because the SNB already expects inflation to trend only 0.3% this year. So if inflation goes even lower than that, then they may have to impose a negative policy rate, which of course they don't want to do. So I think that this poses a headache for the SNB. There's no question about it. The question is when do they intervene from here?
Thank you so much, Ven. Bloomberg's MLive cross-asset strategist on Yen Watch and on Frank Watch, our very own Ven Ram. Now we're fresh off the slopes of Davos. I'm not sure about the slopes, but the Congress Central rooftop, more like, where leaders across the world declare that the old order is gone. But what does this mean for global business and deal-making? Now, many global leaders we spoke to last week mentioned the importance of strong supply chains, established industries, and sovereign AI to national security. My next guest argues that if Europe really wants to realize its AI, energy, and industrial ambitions, it needs to up its risk appetite and deepen its capital markets to enable these long-term investments. Well, joining us now is Hugh Van Steen, as partner and vice chair, and Oliver Wyman. Hugh, as always, thank you so much for joining us. Look, we know, everything that I heard in Davos was CEOs from Europe saying we need a capital markets union, we need it, why is it taking so long? And yet we still don't have one.
No, very much, Francine. Well, thanks for having me on again. Look, I think there was the real positive from last week was the penny was dropping in Europe that you needed to have broader and deeper capital markets to fund the extraordinary trillions of investments that folk want. The statistic we had was that in the last 7 years, there's been $68 billion raised for data centers in the US capital markets via securitization, less than $1 billion in Europe. And I think that's a key bottleneck that we need to address. What's fascinating, though, is how many US investors are actually financing Europe's data center. So it's one of the bizarre things. I came away actually one always thinks that what's the consensus trade at Davos? It was the end of globalization. I think that's too strong. I think it's de-risking rather than decoupling. And I see many reasons why there's still going to be plenty of capital flowing back and forth.
But can the Europeans organize themselves and actually move away in terms of dependence to the US, which doesn't mean that capital doesn't flow. It just means that you're reducing your vulnerabilities.
Well, look, so I think there's two aspects to that. One is, could they, and the second is, will they? I think what's fascinating is how even many large asset pools, asset owners that I met there, still were very bullish about US because of the tech dominance and the AI prospect and also other projects. And so even when you sell an asset, you need to find something else to buy. One of our good friends, Katie Koch from TCW, had which are coming to Europe to raise. I mean, I was also struck that last year there was a 40% increase in private credit raised in Europe, actually mostly from international investors rather than domestic ones, but we just don't have that depth and breadth of pension funds and long dated. And so what I put in that piece was we really need to allow insurers to be able to put that patient capital to work. It's that risk capital where we lack.
Infrastructure is actually quite strong in Europe.
Infrastructure is quite strong, but of course, what's really bizarre, Francine, that over the many years we've known each other, banks now are in the best health for 17 years. In fact, in some cases, probably better health than they were even before the financial crisis. And yet, the way regulations straitjacket them, they're not meant to do these 10, 15, 20-year projects. So they can do the development, but then they have to pass the baton to an investor. And actually, it's the sovereign wealth funds, actually, who are funding a lot of Europe's infrastructure.
Is there any regulation that actually you think is beneficial to Europe? I know there's always a joke, and I heard it many times in Davos, that actually Europe always regulates, that's why everything's constrained and they can't boom as much as the US. But when something goes wrong, maybe pockets of consumers will be more protected than the US. How do you weigh that?
Oh, well, of course. Look, there's many aspects of regulation which are positive. I mean, go back to it. If you look at it, Eurozone banks are in the best health they've been since 2009. In fact, their earnings share of Eurostocks is higher than it was since March 2009. So there's many aspects that we've cleaned up the system with good regulation. But also, it's highly unlikely that 17 years ago we got all the rules right. And so there's a level of recalibration we need. And I think sometimes the frustration is a little bit of bureaucracy not to look afresh about where there might be blockages. And particularly in a world where there are choke points, we do need to invest in infrastructure. We do need to have credit flow that a little bit more smoothly.
Do you see European companies, European investors, European pension funds moving away from, if not dollar-denominated, US assets in general?
I think to a small extent. I mean, obviously, the scale of our markets is so much smaller than the US, even if someone sold 0.5%.
We have quite a lot of treasuries, though.
Well, exactly. No, that's true. No. So on the bond side, I don't see as much. I see a small slither of reallocation. We saw it particularly Q2 last year. Then there was an increased investment in the States. Actually, what I came away from Davos was every conversation went back to gold, as you were just discussing. Gold, silver, platinum, copper. That's where there's a lot of reallocation. But of course, there's a lot of interest that the fiscal impulse in Europe's improving. There's some level of diversification, and there's plenty of projects which need to be financed.
But is gold a pure play away from U.S. assets? Or is it also, the fear of inflation and other things? What's the function of gold today?
Well, like many narratives, there's a number of reasons. No, but the key one is a little bit of nervousness about inflation. So actually, one of the most interesting conversations I was in last week was between asset owners. There's a greater disparity between GDP growth because of AI and employment. And the more that gap expands, the more the Fed, with its dual mandate, probably does worry about inflation and could let the economy run hot. And then inflation expectations, which are, 2.5% for the next 2 years, could tick up. So that's one of the worries for gold. But the other is, of course, is just in a world which is a bit more mercantile, a bit more gunboat diplomacy, actually gold just feels that little bit of safety. And if you go back to the 70s, most individuals were encouraged to hold 15% in gold. We're a long way from there.
Yeah, but now also silver. Do you see actually one of the big conversations that we had is when you look at AI, when you look at infrastructure, it does go back to these commodities.
Yeah,
right?
so, well, I think there's two aspects. So one is obviously the US and the rest of the world trying to de-risk to the supply chains of all the critical and rare minerals that China has got sewn up. But also, with AI, there's a huge shift towards electrification. In fact, not independent of all the EVs, actually data centers are shifting way more to electrification, which then there's going to be real bottlenecks around copper, platinum, and so forth. So actually, a lot of the thesis is actually an acceleration in electrification.
What was the best conversation you had, or the most surprising conversation you had in Davos?
Aside from with you, that I think, well, it was the bullishness. So in fact, many of the asset owners who want to put money to work are frustrated with private equity not giving their money back quick enough. Yeah. And so there was some real friction. And obviously the good news from some of the banks there was there's going to be a big pickup in IPOs and M&A this year. But I think those asset owners are going to keep the Bunsen burners on the private equity's houses.
Hugh, thanks so much. As always, Hugh Van Steen is their partner and vice chair at Oliver Wyman. Coming up, gas prices rocket. Thousands of flights are canceled after a brutal storm pummels the U.S. We're live in New York next, and this is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance. Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
The conversations that matter, the insights you need. This is The Pulse. I'm Francine Lacroix here in London. Now, a massive winter storm hit the U.S. Atlantic coast on Sunday, bringing heavy snow and ice and leaving brutal cold. More than 1 million homes and businesses across the U.S. lost electricity, with more than 17,000 flight cancellations so far. Meanwhile, the cleanup is already underway in New York City.
This immense snow fighting operation, the largest in the entire country, is working across our city every single minute. We are speaking of more than 700 salt spreaders and 2,200 plow vehicles, which are being monitored in real time by DSNY's Blade Runner system.
Well, let's go to Lionel Moise, ABC News reporter in New York. Lionel, give us a sense of scale of the storm, of how emergency services in New York are being forced to react.
Yeah, the emergency services are reacting to the scale of this storm. And, you know, they always say that the media or the news is hyping things up, but they did warn that there was going to be a lot of snow, and that is exactly what we've got. Overnight, I have seen snowplows, even at my own house, coming through the block more than I've seen in the past. It seemed that they were very prepared. Not so many issues with the trains as well, but flights are going to be a major issue, and that is something that is going to last for days.
Lionel, the storm is disrupting energy and aviation across the country. Where are the pressure points, and how long is this set to last?
Yes, so the National Weather Service is warning that we should expect this for several days. DC's airport, Reagan Airport there, canceled all flights yesterday. Philly dealt with a number of cancellations. There are about 4,000 flights to and from inside of the U.S. already canceled today. We do expect that number to continue to go up, and that big issue is it is still very cold, so there's not an opportunity for this snow to melt, and ice will be a major concern, not only for the morning commute, but for any traveling today as well.
I mean, I know, Lionel, looking at, some of the size and scope, this winter storm has triggered most flight cancellations since COVID. Give us an idea of how big is this storm compared to other storms that you've seen?
This is big. I mean, you mentioned this before, but here in New York City, where we deal with snow all the time, this is the largest snowstorm that we've had here in 5 years. Some areas are digging out of 16 inches of snow. And you think of rural areas where it may take a little bit longer for the snowplows to get there, or people who do not have assistance with, let's say, digging out the snow in front of their house. So these are going to be major concerns that we're going to see. But it is atypical to see this much snow in this many states. From Texas to New York to Maine to New Mexico. This was a very widespread storm system, not just set to one area or one coast like we're used to.
Lionel, thanks so much. Lionel Moise, their ABC News reporter in New York. Now, the freezing weather pushed U.S. natural gas prices above $6 for the first time since 2022. That follows a 70% rally last week, the biggest weekly advance in records going back to 1990. Well, let's bring in Joe Wirtz, our weather and climate reporter, and Priscilla Azevedo Rocha, who covers European gas and power. So thank you both. An interesting panel that I'm looking forward to. Joe, can U.S. power grids grapple with the threat of blackouts?
Boy, they're pulling out all stops to make sure they have enough power. We've seen, the federal and state authorities issue, broad mandates to suspend environmental rules in order to run, run plants at their max. That includes, coal and oil plants in some cases. But the regions where this is hitting in the U.S., a lot of these places. First off, have above ground power lines in a lot of areas and not a big history of dealing with this. So really a triple threat here. We've got snow, we've got ice, and we've got deep cold. So in some of these places, in the south, we could see this ice accumulate and the rain freeze on these power lines, freeze on these trees and snap and fall into power lines and cut off power. So expecting widespread power disruptions for days.
And Priscilla, U.S. natural gas benchmark went to a level not seen since 2022. Does it stay at these similar levels?
It will depend on the impact that the storm will have on the U.S. export facilities and how much this will curb production of natural gas in states like Louisiana, Texas. It's really important for us to have in mind here that the U.S. has become the #1 exporter of natural gas to Europe after we lost most of the Russian supplies to the continent following the war in Ukraine. So the impact of natural gas prices rises in the U.S. is also being seen in Europe. Prices are up more than 50% since the start of the year, which is absolutely crazy, and it shows how dependent we still are on global supplies.
Joe, more than 800,000, I think, households and businesses are basically without electricity because of distribution lines. So how long does this last?
Well, so they're expecting this to last for days. Like I said, snow, ice, and then deep cold. So we're expecting, the brunt of the storm to move through, but then we're going to get this sustained deep cold, that ice accumulation. I mean, some places in the U.S. are essentially a skating rink. We've got an inch of ice in some places that rarely see this kind of thing. And a lot of these power outages right now concentrated in like Tennessee, Mississippi, Louisiana. These are places with a lot of infrastructure and a lot of above ground power lines and things that are very vulnerable. And you can imagine that if roads are snarled and that could hamper the recovery effort and getting that power back online if those blackouts hit.
Yeah, and Priscilla, I mean, I imagine they're trying to redistribute, right? So they're asking manufacturers to hold off for the moment so that they curb their power use and give it to people that need it most. I imagine it's the same for AI data centers, that you can shut it off or actually use less power there so that it goes elsewhere. How much does this help?
This is right. This helps to a certain extent because the number one driver of natural gas prices usage, both in Europe and the US, is industrial demand. So whenever you have periods of extreme cold weather, demand increases in households and elsewhere. Therefore, one way you could look at this, you could ask business to curb. So it helps, but the economy needs to continue, right? And industries need to power through.
And Joe, this could last for how long? We don't really know when this ends, right? So it could be cold for a long time, and this continues snapping, or at least status quo.
That's right. The National Weather Service is warning people to prepare for this to last for days. Some signs that we could see another round of cold in the week or so ahead. So this could be a feature of life in the U.S. for quite some days. And to Priscilla's point, we've already seen a power generator, that serves from Chicago to D.C. already telling its major customers that they'll pay them not to use as much power, which is pretty unprecedented.
Okay, wonderful. Thank you so much for a great panel, Joe Wirtz and Priscilla Azevedo Rocha. Now, Ryanair has lifted its outlook for passenger growth and fares after releasing third quarter earnings. Europe's biggest budget airline touted improved Boeing aircraft deliveries and strengthened travel demand. The company's CFO batted away a question about a recent public spat between the Ryanair chief executive and Elon Musk.
It's been good for bookings. I think it was something that kind of fell in our lap, and that we were able to, I suppose, have a bit of fun out of. But it's pretty much behind us. Good marketing out of it. It's two big idiots having a bit of fun with each other.
Are they planning to meet and talk?
Look, no.
Let's get more with Benedict Kamel, Bloomberg's managing editor for space and aviation. Benny, so good to speak to you. So what impact has this online spat with Elon Musk actually had on the business?
Well, we heard it here just from the CFO. He said it actually helped them because it gave them some marketing edge, and that the bookings were up slightly. I mean, it'll probably not have a market effect, but what it did do, it sort of reminded people of the Ryanair brand. It reminded people of brand Michael O'Leary, who always sees an opportunity when he can. This was ultimately a small spat that lasted for a couple of days. The kind that anyone with small children will recognize as just sort of two people misbehaving, and they walk away at the end of it. But for Ryanair, it was sort of good news. Whether they will actually install this Starlink product at some point, that remains to be seen. Again, the CFO this morning saying it's not really a product that's core to our offering. Most of our flights are maybe 2 hours long at most. It's not really something that people are demanding. They come on the planes with their own devices and downloaded films. So, as I said, a bit of a storm in a teacup, but a good marketing gag for Ryanair.
Yeah, I always try and remember to actually download films before a flight. Never happens. What are some of the key takeaways, Benny, from Ryanair's third quarter results?
I mean, the numbers were fairly solid, but again, people are sort of hoping that they can deliver more than they ultimately did in terms of the outlook, which is why you're seeing the stock slightly down, not dramatically so, but the overall tone, and this is something we have heard from US airlines like United, like Delta, like Alaska. They've all had fairly good numbers, but they're always they're all going into this year with a slight sense of caution. There is obviously the geopolitics hanging over this. I mean, you got a fair dose of that last week in Davos when you were there. So that is something that is sort of on corporate leaders' minds. How much will that impact consumers' behavior? And flying is ultimately also about how you feel about the economy, how you feel about spending. So Ryanair going into this year with a slight sense of caution, saying, yes, we are somewhat optimistic, but maybe not as much as some investors would have hoped for. And that's why, as I said, you see the stock down slightly.
Yeah, Benny, you know what, when I was thinking, I mean, I did get a fair dose of geopolitics in Davos last week. And if you see this, fight that could be brought to chief executives or business level between the U.S. and Europe, it's really, there's nothing as big as Boeing versus Airbus. I mean, what does it mean for air travel?
Well, that is a big question that we'll probably see in the next couple of weeks. We already heard from the likes of IAG and British Airways in the last quarter that indeed transatlantic travel has had a bit of an impact. A lot of people in Europe are having second thoughts about going to the US. So far, the effect has been somewhat mild, but that could get worse. I mean, we've all seen the horrific pictures over the weekend out of the US and with a shooting, the latest one in Minnesota. And some people over here are positively spooked by this, and they're wondering, is this the place I want to visit right now? So that's something we'll keep a very close eye on. We did hear, for an instance, from the Airbus CEO over the weekend. He wrote an internal memo to employees saying, look, the year looks tough. You know, geopolitics are front and center, and we need to be very focused, but make no mistake, this will be a difficult year for us. So the tone is sort of set in terms of caution, being careful, and really keeping a close eye on operations, and that will feed through to the travelers.
Benny, is Airbus at higher risk than Boeing? And actually, Ryanair, I know, relies quite a lot on the Boeing deliveries. Will they buy more European, or is the timeline, it just doesn't make sense?
I mean, for the time being, Ryanair has no plans to go to Airbus simply because Airbus can't really provide the planes that Ryanair would need. But you raise an interesting point, sort of how will that duopoly between Boeing and Airbus play out over time? Airbus has acknowledged that Boeing has an advantage, and that advantage is called President Trump, who's obviously used Boeing as a tool for sort of his economic statecraft. So wherever he goes abroad, he, you know, in his slipstream, there will be some Boeing orders that he can use either for tariffs or, you know, for some diplomatic deal. That has helped Boeing, and Airbus doesn't have that advantage.
Benny, thank you so much. Benny Camel, there, Bloomberg's managing editor for space and aviation. Up next, it's Bloomberg Briefed. I have a full roundup of what's going on with dollar yen, gold, and silver as well. This is Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety, and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Under pressure, the dollar weakening as the yen surges on speculation around a coordinated U.S.-Japan intervention. Shutdown risk rising. Senate Democrats threaten to block a giant government funding package after a second death in Minnesota during an immigration crackdown. And markets assessing the impact of the winter storm with power grids and transportation infrastructure getting tested ahead of a week full of tech earnings and a Fed decision. It's going to be a huge week. We thought we had put to bed some fears last week with the Greenland issue, but there are more emanating now. For example, President Trump's threat on Canada. Tariffs there, potentially. We also have this partial government shutdown looming now, less than a week away. So we do have futures pointed lower. It's perhaps not surprising. Let's take a look at the bond universe because we are also seeing a little movement lower again in bonds. So the 30-year yield back down to 4.80. The 10-year yield has found its comfort zone once again. It's just above 4.20. There's just no getting it off that level, is there? The 2-year yield at 3.58. So that is definitely a flattening of the yield curve. So there you can see a little bit of the fear coming out of the bond market. But let's take a look at currencies because we're going to be talking about currencies a lot today. The yen, 1.2% stronger versus the US dollar. We went from above 159 on Friday to below 154. That's more than a 5 yen move. There's talk of the New York Fed calling around and checking on currency exchange rates. There's talk of intervention. There's Takeichi warning the markets that there will be intervention if necessary, even though she says she doesn't want to talk about currencies. And then you have gold nearing $5,100 an ounce. Not to mention the aftermath of the storm, which sees natural gas up 17% just a few hours ago when that market opened. Front-month contract, albeit, but nevertheless, that's the highest the front-month contract has been at in 4 years. 2022 was the last time we saw natural gas above $6. All right, let's get some individual movers now on this Monday. Let's get to London and Chloe Melly. Chloe.
Good morning, Bonnie. Let's start with Revolution Medicines today. And the shares, as we can see, are taking quite the hit after the Wall Street Journal reported that Merck was no longer considering buying the biotech firm. And this is a deal that could have valued Revolution at about $30 billion. And therefore, the breaking down of those talks is not being taken very well by the market this morning. And we are down almost 23%. Moving on to USA Rare Earth, which is, as we might have guessed, a provider of rare earth materials. And it is up very strongly in pre-market trading this morning after the FT reported that the Trump administration was considering buying a 10% stake in that company, and that would represent an investment of about $1.6 billion. And therefore, we are up almost 40%, and a decision on this is actually expected later today, so let's watch out for that. And finally, miners are also in the green, as we are used to seeing them these days, and that is after gold hit yet another record, extending that rally as investors continue to rush towards safe haven assets because of those renewed political and geopolitical and trade tensions, of course, and therefore that is reflected in those shares all in the green this morning.
All right, Chloe, a similar story this week, it seems. Chloe Melly there in London. And coming up this hour, a closer look at the dollar and the yen and all of those currency moves with Sonia Martin of DZ Bank. So our top story today, a huge snowstorm hitting the East Coast and many states across the United States.
This immense snow fighting operation, the largest in the entire country, is working across our city every single minute. We are speaking of more than 700 salt spreaders and 2,200 plow vehicles, which are being monitored in real time by DSNY's Blade Runner system.
Joining us now outside in New York City is ABC News reporter Lionel Moyes. Lionel, nice to have you on the show. Sorry that you are on the ground outside, but give us a sense of the scale of this storm. Was it what we were anticipating?
It was exactly what we were anticipating. And the first thing is, it is very cold, and that is going to be a big issue moving forward. And that's because all of the snow that fell, 16 inches in some areas, it's not going to melt anytime soon. And that is going to be a very big issue for the morning commute for so many people. Schools here in New York are actually remote today. They are also suggesting that those who do not need to be on the roads still stay home.
Yeah, the ice is going to be a huge issue. How are emergency services dealing with all of this?
You know, it seems that emergency services have been really prepared. Even as we were setting up for this live shot, there was an emergency service vehicle back here working on things on the road. In my own neighborhood, I saw the plow come through at least 10 times. I've never seen it happen that many times. It seems like all of the warnings, people were taking heed, and it seems like the city had enough staff to kind of keep things at bay. But again, the big thing to see will be that ice tomorrow, because people are getting back to normal and thinking that the snow is kind of going away and it's going to be fine, and it's still going to be very dangerous. The National Weather Service is warning that we could see the effects of this for several days.
Yeah, and of course it's disrupting energy infrastructure and transportation, no doubt, across the country. Do we know how long experts are saying the disruptions could last, Lionel?
Yeah, they are saying several days. We're hoping by the end of this week. Looked at our local forecast just here in New York, but again, there are several states and several climates dealing with the same thing. But here in New York, it's not going to get above freezing until at least Thursday. So putting that into perspective, people still need to get around even for essential things or going back to work, and we're going to need to be careful because ice could be a major factor. In the storm, though, things were good. Some things were put at halt, like DoorDash delivery. They did actually have to cancel service at one point because it was just too much going on with the snow and the roads were just not safe for those delivery drivers.
All right, Lionel, several more days to come. Thank you so much for the context. That is Lionel Moyes of ABC News. The US dollar is selling off against all major peers, hitting its lowest since September. That's a speculation that the US coordinating with Japan to support the yen is out there. Bloomberg's Ven Ram joins us now for more. Ven, we've seen a 5 yen move just between Friday and today. Is what we're seeing actual intervention or just the market speculating that there might be intervention soon?
It's more the latter, Bonnie. I think that, what happened on Friday was that during the Asian session, there was considerable speculation as the yen ricocheted above 159 very strongly within a very brief period of time. So that set of speculation that the BOJ authorities and the FinMin authorities were doing rate checks in currency days around currency desks. And then later on in the US session, we also had the New York Fed doing the same. So that kind of gave the markets an idea that this was a coordinated warning for the markets before any actual intervention. As you mentioned, the yen has already rallied 5 big figures so far. But in previous intervention episodes, mind you, this is not an official intervention, but in previous intervention episodes, the yen rose about anywhere between 10 to 12 yen. So I think that the comeback in the yen has further to go. And the most effective thing is that because the US Fed is involved in this, I think that they are going to accomplish that much more without actually intervening in the markets.
Yeah, I mean, it's doing their work for them in many ways, which is obviously what they want. Now, interestingly, the Swiss franc is also strengthening, and I'm curious, is this a similar dynamic that's playing out? Are we going to see the SNB actually considering intervention too?
Well, I think it's not an imminent thing because if you look at the currency's real effective exchange rate, it's approaching levels where previously the SNB has intervened. So we are not quite yet there, but we could get there in a short span of time if the Swiss franc continues to attract haven flows. But I think that the SNB is likely to expand its balance sheet further by intervening very gently in the currency markets. But I think we are not yet quite there.
Then we're obviously seeing gold very close to $5,100 an ounce, right? It blew right past that $5,000 mark. How much of those strength is thanks to dollar weakness purely?
Well, I guess it's a question of a bit like the tail wagging the dog here because the gold has had its own momentum. Gold and silver are completely in a different league at the moment. They don't need further inspiration from a weaker dollar, although that does help. But I think the question here, Vonnie, is the risk reward for investors who are trying to go long at this point because the risk reward is clearly very skewed and lopsided at this point because I think that even the most bullish call is for gold to end the year at $5,400 an ounce. But I think that the investors are much more likely to be aware of the pullback in the short term, the risk of a pullback in the short term. If you look at gold's volatility expressions, they are exploding. They're above 26%. what that implies is that gold could drop to as little as $4,700 an ounce, and in silver, the volatility expressions favor silver to drop to as little as $86 an ounce. So I think it's the possibility of a correction that is looming large over the markets at the moment.
Yeah, but interestingly, Ben, we're seeing this gold move, but we're seeing rates just completely calm, right? They're so much calmer than they were even last week. Why are rates not also expressing the same thing that gold is expressing?
Well, I think that, in rates, you've got a completely different dynamic going on. Because if you look at the 2-year yield, we are nudging 360 at the moment. And if you're looking at the 10-year yield, we are doing about 420. And what does that say? In a time when the Fed meets this week, and if the Fed is expected to keep cutting rates, and at some point this year, I think that the 2-year rally should rally, and that is not happening. So the markets are already kind of sending a message of diffidence to the Fed, saying that, look, you can cut rates as much as you want, but that won't be fair, and we'll keep yields where they are at the moment.
Wow, Ben, okay, thank you so much, Ben. Our market whisperer there, Ben Ram, out of Dubai, thank you. Now to other top stories trending on the terminal this morning. Amsterdam-listed CVC has agreed to buy U.S. credit manager Marathon Asset Management. The deal is a cash and equity transaction with a base consideration valued at as much as $1.2 billion. The acquisition is part of CVC's efforts to grow its footprint in U.S. credit markets. SoftBank is said to have halted talks to acquire U.S. data center operator Switch, a setback for founder Masayoshi Son's ambition to roll out Stargate AI infrastructure. According to sources, two sides remain in active discussions about a partial investment or a partnership after Son conceded that a full acquisition was off the table and scrapped a planned January announcement. The UK is losing more jobs than it's creating because of artificial intelligence, and at a faster rate than its international peers. That's according to a Morgan Stanley report. British companies reported that AI led to net job losses over the past 12 months, with an 8% net job loss, the highest level in a group that included German, American, Japanese, and Australian firms. Coming up, risk on the horizon for another government shutdown as tensions flare in Minneapolis. More on that next. This is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Earnings season is here.
Earnings season is upon us.
Can they surpass expectations? Bloomberg is first to break the numbers.
Taking a look at Starbucks.
Meta with the outlook. eBay also reporting earnings. More earnings to get through.
With the smartest insights.
You start the year at 22 times forward earnings. You're just going to have a more sensitive market.
We're probably going to have another good earnings season.
And our conversation continues here on Bloomberg.
Continuing coverage on Bloomberg. Context changes everything.
We cannot fund a Department of Homeland Security that is murdering American citizens, that is traumatizing little boys and girls all across the country in violation of the law. Democrats are not going to vote to fund this version of the Department of Homeland Security.
Democratic Senator Chris Murphy speaking to CNN after a second death in an ICE crackdown in Minnesota. GOP Majority Leader Steve Scalise spoke to CBS on Sunday saying, quote, Minneapolis has its own problems, failed leadership that has led to all of this. Failed leaders need to look in the mirror and tone it down. Now, more than 60 CEOs of Minnesota-based companies are calling for an immediate de-escalation of tensions between state, local and federal authorities. Joining us now from Washington is Bloomberg's Kasia Klimashinska. Kasia, take us first to the Senate and what happens now that the Democrats are threatening to block the funding package.
Hello. The bottom line is that there is a new and a higher risk for the markets now after this terrible situation in Minneapolis over the weekend, because not only Democrats but also some Republicans have expressed frustrations, and Democrats said they will not allow more funding for the Department of Homeland Security, which is the department that is enforcing the anti-immigration policies. So what we have is this higher risk of a partial government shutdown at the end of the week. Congress must pass another funding bill, or there will be no money to fund not only the Department of Homeland Security, but also, for example, the Department of Defense or Department of Labor. So if lawmakers don't find a compromise, those agencies will be shut down, meaning, for example, that the Department of Labor may not issue some economic reports on time. The issue here is that Democrats don't want to vote for more funding for the Department of Homeland Security, but the bill that is ready to be passed has the money, not only for the Homeland Security, but for other departments. So now lawmakers have to decide whether they strip away the Homeland Department and vote for a budget for other agencies, or they find some other solution. But there is very little time. It's Monday already. We have snow here in Washington, D.C. The city is paralyzed. Lawmakers and only senators will not come back until tomorrow. They need several days to pass any legislation.
Right, and I mean, the House is not scheduled to be back until after the shutdown or partial shutdown would begin anyway, right, Kasia? So is there any way this gets done, even if the GOP goes ahead without the DHS funds?
Yes, so that's another issue, that the House passed the bill last week before an American citizen got killed by a federal officer in Minneapolis. So House lawmakers left the city, and they are not planning to come back until after this week. Of course, Republicans can decide to cancel this break and call them back to town, but for now they don't even have any specific bill to vote on.
No, exactly. Kasia, thank you so much. Bloomberg's Kasia Klimashinska. Turning to trade, Canada saying it won't back down on its efforts to diversify trade away from the United States. That after Treasury Secretary Scott Bessent suggested that Prime Minister Mark Carney did an about-face by striking a deal with China to lower some trade barriers. Let's get more with Bloomberg's Brendan Murray. So another day, another tariff threat. Brendan, does Canada have to be worried given that the most recent tariff threats have not been carried out?
Yeah, exactly. This is the third big tariff threat that we've heard from President Trump this year. He's made this threat to the trading partners of Iran. He did so to European countries last week over Greenland, and now this latest one on Canada, the 100% that he's threatening to put on Canadian exports to the U.S. Most analysts look at this and say this is never going to happen. This would be way too costly for U.S. consumers and severely hurt Canadian companies even worse. And so a lot of analysts are looking at this and putting this in the category of big negotiating tactic. President Trump's trying to get some leverage over Canada. He's annoyed at Prime Minister at Carney over his remarks in Davos last week that sort of upstaged President Trump's own comments. So most economists, analysts are looking at this and saying it's bluster and it's never going to happen. It would destroy one of the world's biggest bilateral trading relationships, and putting a 100% tariff in place would be self-destructive.
Meanwhile,
for President Trump.
Yeah, and Canada is continuing on. It's in India negotiating another deal there at the moment. I want to ask you, though, about Volkswagen, because the CEO says the company might actually pull its plans for a U.S. Audi plant if tariffs aren't cut. Is this the first instance of a company actually taking a stance and saying, you know, we're going to call your bluff, if you know, doing what Trump does, but vice versa?
Yeah, exactly. So this has come about. The Audi, Volkswagen has been planning on making this investment for a couple of years now, predating Trump's second term. But what they're saying from the comments that we're reporting is that this is too unstable of an environment. Set aside the cost of the tariffs, but the policy uncertainty that all of these threats of tariffs are causing just makes it impossible to make an investment in. And so the Audi executives are saying, you know, this is on hold indefinitely until we get some sort of policy that's predictable, that removes the uncertainty. But this just goes back to the risk that we saw for much of last year, the tariff uncertainty. We thought it was all over with, and that President Trump would come into this mid-year election year ratcheting down the rhetoric on tariffs, but he really hasn't, and in some ways he's even stepped it up and applied it to the realm of geopolitics, sort of outside the normal bounds of a trading relationship.
Yeah, exactly. Brendan, thank you so much. Bloomberg's Brendan Murray. Coming up, President Trump says his administration is reviewing everything about the Minneapolis shooting. More on that and what else is making headlines in your front page news next. This is Bloomberg.
What's great about it is it's a well-developed gaming ecosystem, right? So it, you know, folks know to find games there, but it's also a highly competitive gaming ecosystem. So its developedness gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is, you know, social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, you know, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, you know, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up, the Wall Street Journal leading with a fatal shooting in Minnesota. In a 5-minute telephone interview, President Trump told the Journal, quote, "We're reviewing everything and will come out with a determination." The Journal also saying the president criticized the man who was killed, Alex Preddy, for carrying a gun during protest activity. Next up, Reuters is reporting Ukrainian President Volodymyr Zelensky saying a U.S. document on security guarantees for Ukraine is completely ready and Kyiv is waiting for a time and place for it to be signed. The statement, an indication weekend talks with Russia in Abu Dhabi made some progress. And finally, the Financial Times reporting defense company Rheinmetall and satellite producer OHB are in talks to launch a joint bid to build an equivalent to Elon Musk's Starlink internet service for the German armed forces. The FT says the proposed joint venture would give the groups a slice of Berlin's €35 billion military budget. Coming up, the dollar weakening, the yen surging. We're going to talk with DZ Bank's Sonia Martin about currency moves. This is Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
It It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Under pressure, the dollar weakening as the yen surges. Speculation around a coordinated U.S.-Japan intervention. Shutdown risk rising. Senate Democrats threaten to block a giant government funding package after a second death in Minnesota. And markets assessing the impact of the winter storm with power grids and transportation infrastructure getting tested ahead of what's a full week of tech earnings and a Fed decision. So a massive week on the way, but today markets are reacting to some threats that emerged over the weekend, including that risk of a partial government shutdown rising, and that would happen in less than a week. So you have futures pointed lower. We also have President Trump threatening Canada with tariffs now, and of course the after effects of the winter storm. Let's take a look at bonds, because that of course is all about the FOMC meeting Wednesday. Not anticipating any kind of rate cut or any movement, but we are anticipating a lot of parsing of language. The 2-year yield is not budging. It's at 358.57, but the 30-year yield and 10-year yield both came down, so a little bit of curve flattening there. The 10-year yield right back to its comfort zone practically. And then take a look at currencies, because this is where the real action is right now. We had the yen above 159 on Friday. It is down below 154 today, 1.3% weaker just in the session alone. Gold almost at $5,100 an ounce. And natural gas futures, well, that's the winter storm story. Up 17% when that market opened just a few hours ago. In Europe, it's just a mess, and the front month here in the United States is reacting to that and the winter storms all coming together. We're at the highest for the front month contract since 2022. Let's get to some individual stocks now before we get back to the currency story. Let's get to London and Chloe Melly.
Good morning, Bonnie. Revolution Medicines shares are firmly in the red this morning after the Wall Street Journal reported that Merck was no longer considering a bid for the company. This is a deal that could have valued Revolution at about $30 billion, but now those talks are breaking down, and therefore we are seeing that reflected in those shares in pre-market trading today. We are down almost 23% for that biotech firm. Moving on to USA Rare Earth, and there the company is moving very, very much higher. It's surging this morning in pre-market trading after the FT reported that that the Trump administration was considering buying a stake in the company, considering investing about $1.6 billion in that company, and this is an announcement that could come as soon as today, so we'll be watching for that as well. And finally, miners are in the green today as gold surged to another record, pushed by this investor rush towards safe haven assets, and we are seeing that reflected in all the shares of miners today, all of them in the green.
Chloe, thank you so much. Those miners very happy at the moment. Not so happy New Yorkers bracing for that messy commute this morning after the heaviest winter storm in years.
This immense snow fighting operation, the largest in the entire country, is working across our city every single minute. We are speaking of more than 700 salt spreaders and 2,200 plow vehicles, which are being monitored in real time by DSNY's Blade Runner system.
Joining us now outside in New York City is ABC News reporter Lionel Moyes. Lionel, give us a sense of the scale of this storm, the context of it, how it fits into storms past and so on. Lionel, I'm not sure if you can hear us, but curious as to how bad this storm is affecting New York right now, if you can hear us. All right, we'll get back to Lionel Moyes in just a few moments. Of course, what we do know is that it's affecting all sorts of assets, including natural gas and so on. But what we'll do is we'll look at currencies right now, because we're seeing a massive movement in dollar-yen as well, and that's just one currency that's affected. Yen at 153.74. It's rallied 3% versus the dollar since Friday. 5 yen, 5 big figures. The New York Fed calling financial institutions to ask about the exchange rate. And Prime Minister Takaichi also warning markets. Meanwhile, the dollar is slipping and gold is gaining as the debasement trade is back on. Sonia Martin of DZ Bank writing, quote, "There is no denying that White House policies are putting pressure on the dollar. Also, the Bloomberg U.S. Surprise Index has been falling, which supports the view that while U.S. economic data remains solid overall, they're not as impressive as Trump would have us believe." Sonia is chief economist at DZ Bank, and she joins us now. So, Sonia, you think that the U.S. economy is actually weaker, perhaps, than what we might be seeing at face value in the data. Is that correct?
Yes, I mean, we had a very surprisingly strong Q3 GDP release recently. At the same time, obviously, we've seen the official data suggesting that inflation is well below 3%, and all that seems almost too good to be true. I mean, to be fair, Q3 growth did see some positive impulses, obviously from AI investments. We've seen that, and there's a few other items on the GDP numbers that suggest underlying strength, consumption in particular. But there are also points of weakness, you know, in the labor market. Definitely, also when you look at consumption, the savings rate has been falling quite rapidly. We are witnessing what's called a K-shaped economy, and there's an underlying very soft consumer sentiment. So I think there are pockets of weakness in the U.S. economy, definitely.
Well, so how much is this trade, the debasement trade, and how much is it really just the yen trade at the moment and the flight to safe haven? Because we're not seeing the same kind of panic or unsettling behavior in the bond market, for example.
Yeah, it's a very confused market, I would say, right now. There is a lot going on. I mean, it's the 26th of January today, and it feels like the year is at least 3 months old with all that's been going on the geopolitical stage, on the economic stage, everything that's happening. So I think markets are very confused right now, and I'm not sure which trade to play. I think there's a definite flight to safe havens. Having said that, with some concern about the U.S., I mean, we just mentioned it in the introduction early on, the risk of another shutdown, the erratic policies from the White House. That's, you know, obviously not making the U.S. particularly attractive as a safe haven right now. And that's probably one of the main reasons why gold is where it is this morning.
Sonia, hold that thought because we're going to return to you in just a moment. We want to get back, though, first to Lionel Moyse, ABC News reporter outside in New York City. Lionel, people are just beginning their morning commutes in New York. Give us a sense of how the storm is affecting the city overnight and what we should expect for the next few hours.
Yeah, this is a big deal. They're actually warning people to stay off the roads if they can this morning because ice is going to be an issue. It is still very cold here in New York as it is in other cities, and there's a concern that the snow will not melt as it needs to make the roads safer. There are some flurries that started coming down a little bit a while ago, so that could be the story again today, but we are not in the clear. The National Weather Service is warning we could feel the impacts to travel and infrastructure for several days.
Yeah, I mean, anyone who can stay at home, I guess, is trying to stay at home, including, you know, everybody who goes to school, right? Schools are out for the day. Does that continue into tomorrow? We know that obviously energy infrastructure is going to be impacted. Transportation has been hugely impacted across the country.
Most definitely, transportation definitely impacted. Now, the kids were not so excited about this. School is still in session, but it is remote, so they're going to have to enjoy the snow day, maybe on a lunch break. But that is going to be a major issue. There are about 4,000 flights that have already been canceled again this morning. And again, the flurries are still coming down, and it is very, very cold. So this is something that we're going to have to keep an eye on. The trains were doing okay. There were some issues with trains. It seems, though, that the city was prepared in getting the salt trucks out and getting the plows to come. We've seen them out and about this morning, and hopefully that will make the morning commute a little bit smoother.
Hopefully so. Lionel, thank you so much for being outside for us today. That's Lionel Moyse of ABC News. Sonia Martin is with us now of DZ Bank to talk about these crazy currency moves that we've been seeing. So, Sonia, you mentioned gold at $5,100 practically. I mean, it was a surprise to see it above 5,000, and suddenly it's you know, way beyond that. But we also have the Swiss franc strengthening quite considerably today too. How concerning should that be to the SNB?
Massively concerning to the SNB. The Swiss National Bank is in a very, very difficult situation right now. The problem is that the franc has been strengthening, or has been very strong. That is leading to a massive import of deflationary tendencies into Switzerland. It is a big problem for the SNB. Interest rates are already at zero. There's basically no room to cut rates further unless they're willing to go back into negative territory. The alternative would be intervention, but that might be risky because tensions with the US over the trade deal are still running very, very high.
So when the New York Fed calls around banks to check on the exchange rate, I mean, what is this rate check signaling to the market?
Well, I think the important message here is that the authorities in the US and Japan are willing to work together. I mean, obviously, intervention from the BOJ and the MOF in Japan is nothing particularly unusual. They have a very active history of intervention in the currency market. But the problem is oftentimes that these interventions don't have a lasting impact. Underlying trends usually tend to dominate what you can achieve by intervention. It's a bit of a different story when you have the Fed and the BOJ and the MOF working together. And I think that's why we have seen such a massive move in the dollar-yen exchange rate, because the signal here is we might be potentially intervening together in this one, and that is a much stronger signal to the market.
Sonia, we had, Prime Minister Takaichi come out and basically warn the market, even though she said, look, I don't talk about these things, but I'm warning the market, we will do what it takes. Now, what is the market supposed to believe? Because on the one hand, she's saying, for her election pitch that she's going to pause the sales tax for 2 years. And on the other hand, she's saying, but we'll do whatever we want. I mean, at some point, it's not in her hands, it's in the market's hands, right?
Yes, I think that's been an ongoing problem for the yen. I mean, we've talked about this in the past. I mean, we have for a long time now had a situation where the BOJ has signaled very clearly that it's sort of achieved the monetary policy turnaround. We're looking at higher interest rates. We're looking at, quantitative tightening. And yet the yen sort of continued to weaken because the signals that were coming were so mixed. And it's the same here now. Takaichi, saying on one hand, she doesn't want the exchange rate to weaken further, but at the same time planning quite a dovish fiscal policy stance, which is obviously putting some pressure on the currency. So it doesn't really fit together. And again, intervention can only achieve so much if the underlying fundamentals are pointing in a different direction.
Can I ask you about sterling as well, Sonia? Because obviously we had Andy Burnham, not being allowed to run, let's say, for a seat, which means that he can't challenge Keir Starmer as Prime Minister, which, there's so many cross currents here because that means that maybe somebody else could and the market wouldn't necessarily know who. So what happens with sterling, given that there's also the Bank of England in play there?
Yeah, again, there are a very confused situation. We have had for a long time now, I think, a very difficult political situation in the UK. I mean, Keir Starmer won a landslide victory, and it's kind of been going downhill ever since. He hasn't, presented a good picture, neither domestically nor externally. I mean, he did show some backbone earlier this week or last week when it came to Greenland and remarks by Donald Trump, but generally speaking, he's perceived to be very weak. So that's not doing any good for the economy. The fiscal policy situation, the budget, all that's weighing on growth prospects, on the labor market. The BOE, obviously in a tight spot, weakening labor market, too high inflation. So I don't think there's any real upside for sterling from here onwards.
Sonia, is it possible to have targets in an environment like this where, a tariff risk goes away 1 week, but then a different tariff threat comes along over the weekend?
Yeah, I think that's the big problem that we all have. I mean, as I said earlier, the year is not very old, but it feels much, much older. And, we've had such turbulences already. And I think we have to just face the fact that Donald Trump is entirely unpredictable. I don't think he knows himself what he's going to do the next day. So to be honest, that's going to stay with us. That is not going to change. He's still going to be in office for another 3 years. And I think that volatility will not entirely go away. So it's just a matter of keeping an eye out on things and just being ready to adjust at any time.
Yeah, absolutely. Sonia, thank you so much. Sonia Martin of DZ Bank. Now to other top stories trending on the terminal this morning. Amsterdam-linked CVC has agreed to buy U.S. credit manager Marathon Asset Management. The deal is a cash and equity transaction with a base consideration valued at as much as $1.2 billion. The acquisition is part of CVC's efforts to grow its footprint in U.S. credit markets. Franklin Templeton is folding its European private credit unit, Alcentra, into its U.S. counterpart, Benefit Street Partners. The combined businesses, operating under the Benefit Street Partners title, will oversee roughly $86 billion in assets. The move reflects broader consolidation across the private credit industry. Columbia University named University of Wisconsin-Madison Chancellor Jennifer Mnuchin as its next president. She will be Columbia's fourth leader since late 2023. Columbia launched its presidential search in the spring after a period of leadership turmoil that began when pro-Palestinian protests swept the school. Mnuchin will take the helm July 1st. Coming up, shutdown risk looming as Democrats threaten to block funds to Homeland Security as tensions flare further in Minneapolis. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
We cannot fund a Department of Homeland Security that is murdering American citizens, that is traumatizing little boys and girls all across the country in violation of the law. Democrats are not going to vote to fund this version of the Department of Homeland Security.
The risk of a partial government shutdown rising now as Senate Republicans plan to reject Democratic demands to split off funding for the Department of Homeland Security. That's after a second killing of a U.S. citizen in Minneapolis. House Majority Leader Steve Scalise spoke to CBS on Sunday saying, quote, Minneapolis has its own problems, failed leadership that has led to all of this. Failed leaders need to look in the mirror and tone it down. Now more than 60 CEOs of Minnesota-based companies are calling for an immediate de-escalation of tensions between state, local and federal authorities. Joining us now from Washington is Bloomberg's Kasia Klimaszinska. Kasia, is there any hope of de-escalation? Who would make the first move? Because right now, at least in Congress, it's only escalation that I'm seeing.
Hello, indeed, very difficult situation. And here in DC, the bottom line is that the risk of a partial federal government shutdown is increasing significantly because Democrats said they will not fund the Department of Homeland Security. That's the department that sent federal agents to Minnesota. Both Democrats and actually some Republicans demand a thorough investigation of what happened over the weekend, but Democrats also say they will not let any more money flow to the Department of Homeland Security, and they do have significant leverage because by the end of this week, Senate has to pass a funding bill. Otherwise, not only DHS, but also Pentagon, the Labor Department, the Health Department will not have money to operate. And so we have this risk that Congress will not find a solution because Republicans at the same time insist on passing the bill that the House has already passed last week. So House, interestingly, voted on the funding measure last Thursday and then left the town. So they aren't even here if the Senate was to make any changes to the legislation.
Yeah, it's so complicated. Now, meantime, President Trump has a new tariff threat out there. He's threatening Canada again if it does a China deal. Can you give us, more details on that? Because it seems like Canada has already moved on to India at this point.
President Trump issued a new threat of 100% tariffs on all goods from Canada because he believes that if Canada goes ahead with a thorough trade agreement with China, then China will just dump its stuff in Canada and it will find its way into the U.S. So also Treasury Secretary Scott Bessent reiterated this threat on Sunday, saying that Canada is changing its posture here. It used to be with the U.S. and with the European Union trying to block the flow of cheap Chinese goods, but now they're letting them in. This all happened, of course, after Canada Prime Minister Mark Carney gave a speech in Davos in which he warned against the coercion by superpowers. It's clear that President Trump didn't like the speech, and after those remarks, he changed his tones and issued those threats.
And of course, Mark Carney is dealing with Ottawa and, Quebec and so on as well. He has domestic issues to think about here too. But I'm curious, will Canada continue to make these bilateral deals? I mean, it looks like at the moment they're in the middle of making a deal with India too.
Indeed, so it's clear that in the light of the uncertainty coming out of the U.S. and this constant change of tone and new threats, Canada is looking elsewhere, so it's building ties not only with China, but also with India. And to be fair, the deal with India and the deal with China is relatively narrow. It's not a comprehensive free trade agreement. It's just an understanding that the two countries reached to kind of renew the flow of some goods. So Canada indeed would let a relatively small amount of Chinese cars in, and in return, China would buy some of the Canadian agricultural goods.
Kasia, a new week in Washington, always interesting. Bloomberg's Kasia Klimashinska. Coming up, a big week in markets, a Fed decision and tech earnings still on deck. Your week ahead next. This is Bloomberg.
Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities. It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg.
Bringing you up to the minute news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead this week. And boy, is there a lot. We have that Fed rate decision coming on Wednesday, obviously. We also get earnings from Meta, Microsoft, and Tesla, three of the big ones, and that's also on Wednesday. And then we get Apple results on Thursday. All right, let's take a look at some movers pre-market. We have Revolution Medicines moving quite substantially. Wall Street Journal reporting that Merck is no longer interested in talks to acquire the biotech firm, down more than 22%. USA Rare Earths, well, this is up more than 40% earlier. The Financial Times is reporting the Trump administration is planning to invest $1.6 billion into the mining company. Now, we'd heard about this before for USA Rare Earths, critical metals, and so on, but, you know, we have to wait until it's obviously, you know, made official, and then you have to wonder if that's going to be a sell the news event. And then, of course, you have mining companies just rallying today across the board. Newmont Mining up 4.5%, but plenty of others also rallying. Gold has surpassed $5,000, almost at $5,100 an ounce. Silver also rallying, as are other metals. Let's take a look at the macro environment now, because we have futures pointed lower. We're off our lows of the session, but some risks emerging over the weekend. Once again, the tariff on Canada risk, the partial shutdown risk, the winter storm aftermath risk, plenty of them out there. That has gold. Look, we're only $8 away from $5,100 an ounce. The 10-year yield, though, at 4.20, so all pretty calm on the Treasury front. Let's take a look at currencies, because you really want to be watching the yen today and also the Swiss franc. We had a 5 yen move, 5 big figure move since Friday. We were above 159, we're now below 154. The market is definitely anticipating intervention, or at least believing that intervention could come if things get worse for the yen. The haven trade is alive and well in the Swiss franc, and that's got to be causing the SNB some concern. And with all of that, the US dollar down 0.4% versus a basket of currencies. That debasement trade potentially back on, but it's also, of course, the mirror image of all of these strengthening trades, these haven trades. Sterling also a little stronger today as well, after the Andy Burnham threat to Keir Starmer has maybe gone away for the moment, but of course that opens up the potential for other threats. But this is definitely a space that we want to be watching in today's trading. We also have natural gas as well. Just a few hours ago, the front month contract opened up another 17%. A huge threat here, at least to prompt delivery, right? So the second month contract and the third month contract, they're not rising as much, but it's at the highest now since 2022. All right, that is it for Bloomberg Brief. Surveillance is next.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Versace in Davos, Switzerland, and this is Bloomberg.
After 20 years of financial repression, we're back to live markets.
The market's probably going to take off again.
We still see a lot of upside opportunity in U.S. markets.
I wouldn't really bet against the U.S.
The U.S. bond market is still the closest thing to a risk-free asset that there actually is.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Monday, recovering from a major storm. Travelers bracing for deepening disruption to begin the working week. The Japanese yen extending gains driven by elevated intervention risk, and gold smashing through 5K, building on a record-breaking rally. Gold on a 6-day winning run.
It's been incredible, building on the momentum we saw last year when gold had its best year since 1979. And really, pick your poison as to why gold has this record run, topping $5,000 a troy ounce today at the very start of 2025. We're still only 3.5 weeks into this new year. It could be anything. There's geopolitical tensions. The U.S. domestic politics right now on edge. You have demand from central banks at historically high levels. Whatever you want to say, all travels right now, all directions seem to lead to gold.
I'll use a word that the Prime Minister of Canada used in the last week or so, rupture. A rupture in foreign relations. Nobody's house is in order. Nobody's house is in order. So if you want to sound the dollar, what are you buying? That's why you're turning to precious metals. It's more fuel, more oxygen for a trade, even at these lofty levels.
It's a very good point. You do have the U.S. right now in order, especially now, potentially, Jonathan, we could be barreling down a government shutdown, a partial U.S. government shutdown this Friday. Also, what is going on with Japan? You have snap elections. We saw this play out in financial markets last week. Basically, what everyone is pricing in, the fiscal story dominance of all these countries will continue.
This was a pushback from the market in the last week or so, from the JGB market to be precise. Japan doesn't just have an FX problem. This is a symptom. It has a debt problem. And that's the issue at hand here. Even if you get that intervention, does it address the root cause? And a lot of people in this market would argue no. Yes, dollar yen's got a big move today down to 153.59, but there's some problems they need to address, and it's more than just FX intervention.
Well, part of this is that the Prime Minister is coming in, calling a snap election. She really wants to fortify the fact that she should be running this country and her policies. Well, when she scheduled that election, there was a bond market meltdown. Why? Because her pledge on the campaign trail to waive a sales tax on groceries for 2 years, just more of these populist policies we are seeing around the world, and that is just going to breed higher debt levels because they're going to be pumping more money.
We've got to talk about this storm as well, away from the markets, the winter storm. Word of advice, don't do what we did this morning. If you can avoid it, don't go to work, avoid the roads. They are absolutely terrible. We've seen the flight cancellations just yesterday, 11,600. On Sunday alone. Already this morning, more than 3,500 flight cancellations.
No snow days for Bloomberg TV. Most flight cancellations since COVID. That statistic is incredible. And then, of course, today around 1:30 a.m. So expect this number to just continuing to rise. As you say, 3,500 flights are going to be canceled. You have to be careful if you are going and traveling, whether or not that's by plane, but getting to the plane. I mean, the streets, Jonathan, you saw them. They're okay, but it's not great. I mean, you have to add at least another 30 minutes to your travel time if you're traveling by car this morning in the tri-state area.
And some. If you're just joining us, welcome to the program. Stacked program. No idea if the guests show up in studio. We'll see if that happens a little bit later this morning. Futures negative by about 0.1% on the S&P. Coming up this hour, we'll catch up with Russ Kostrick of BlackRock on elevated geopolitical risk. Amy Gower of Morgan Stanley with gold on a record-breaking rally. And Mike Dada of Roth Capital looking ahead to this week's Fed meeting. We begin this hour with gold at fresh all-time highs. Russ Kostrick of BlackRock writing, while gold has had an extraordinary run, we continue to maintain a modest position. The yellow metal has demonstrated demonstrate that its value as a hedge against both the debasement trade as well as ongoing geopolitical and headline risks. Russ joins us now for more. Russ, welcome to the program, buddy. Let's talk about this move through 5K, a clean break and some. What's next for this one?
Well, good morning, John. Thinking with gold, I don't think there's any objective way of coming up with a target. But part of the reason gold is doing so well is, unlike other assets, we can't sit here and say, well, it's overvalued. Because again, the value of gold is always what people are willing to pay. And I think, as you talked about in the lead-in, in this environment where you have both fiscal issues in most developed countries, not just the U.S., but Japan, the United Kingdom, France, and obviously geopolitical risk that is growing rather than shrinking, gold works in a portfolio because it's one of the few assets that actually hedges against those types of risks.
So, Russ, let's just pair what we saw with gold in the last week with what we saw in the FX market. The dollar, the biggest weekly drop since May last year, on a week where gold had the best week since 2020. Are you expecting more of the same kind of thing to come? And is that a hedge against dollar weakness or a hedge against something more than that?
I think it is a hedge against multiple things, but I definitely agree it is a hedge against dollar weakness. As a matter of fact, one of the things that's really happened post-COVID is a lot of these long-standing correlations have broken down. For a long time, bonds worked as a hedge against equities. And what we've seen over the last 5-6 years is much less stability in these inter-asset class correlations. One that's held up and I expect to keep holding up because it's very fundamental is gold moving in the opposite direction of the dollar. If you're worried about the so-called U.S. debasement trade, if you're worried about U.S. debt, if you're worried about the hegemony of the dollar, gold is generally going to do well in those environments.
Russ, how do equities trade with that backdrop?
That's the funny thing. Equities and gold actually have not been that negatively correlated. And for a lot of 2025, gold and equities have been moving together. So I don't think on a daily basis, if you wake up and the S&P futures are down 1%, you can immediately assume that gold is going to be up. But as a portfolio diversifier, and again, trying to think about some of these risks, whether they're geopolitical or the long-term risk around U.S. debt, those are risks where I think gold does a very effective job, not necessarily the day-to-day fluctuations in the stock market.
Russ, it doesn't seem like these risks are going away. And your note says you have a modest position. Do you think you're going to add more from here?
I think we're probably about where we want to be. It's one of those assets where you have to be careful because, as we've seen in some of the moves, particularly back in 2022, gold can also go down very abruptly. So, the exact percentage depends very much on what else you have in the portfolio. But within a classic 60-40 portfolio, somewhere around a 3, 4, 5% position, that seems to work well, particularly in environments like this, where you're trying to compensate for those hard-to-quantify risks.
We also saw silver absolutely on a tear as well overnight. Do you think this bodes well for the entire commodity complex?
I think there are a few things going on. Certainly gold and silver are moving in tandem. Part of that is silver, while obviously not as liquid, not as popular, still a precious metal that's used to hedge against these type of risks we've been talking about. But there's also a broader rally going on in many commodities, and certainly metals like copper, which are tied to the electrification trade. So in general, we're in an environment where a couple of things are happening. You have these concerns, these geopolitical concerns about debt, but then you also have a very significant infrastructure build-out going on. Whether we're talking about data centers, we're talking about the grid, we're talking about power, many of these metals are absolutely necessary as that build-out continues. And our view is that is a multi-year trend, which means that this support for metals, not just precious metals, that's likely to continue.
As for that AI transition, plenty of earnings this week. We've got Meta and Microsoft on Wednesday, Thursday, Apple. Next week, we'll hear from Google and Amazon. Russ, I want to talk about this move in Japan. Ken Griffin put it this way of Citadel just last week over in Davos, Switzerland. I actually think there's an explicit warning that if your fiscal house is not in order, the bond vigilantes can come out and retract their price. We saw that move in Japanese government bonds in the last week, Russ. What was the signal you took away from the convulsions in sovereign debt?
Well, look, the move in Japan has been very real. It's been very dramatic. And I think we used to joke, we called that the widowmaker trade. People have been looking to short the Japanese bond market for years, if not decades. Obviously, a few things have happened. Japan, over the last several years, has really exited the deflation, which plagued that economy for decades. At the same time, you have a new prime minister that is looking to use fiscal stimulus to support the economy. We're seeing this in most of the developed world. So the fact that you're having this move in the Japanese bond market, while at times violent, it's not a shock. But what's interesting is, yes, we've seen a little bit of a move higher in U.S. yields, but in general, despite what's happened to the Japanese bond market, despite what's happened geopolitically, we haven't really seen the U.S. 10-year break out of the range it's been in for quite some time now. And if anything, U.S. rates, bond volatility, is fairly low. So I do think you've got some concerns about the long end of the curve. You do have some concerns about whether or not you're being adequately compensated by the term premium for going long U.S. debt. But in terms of the spillover effect, U.S. bonds have been relatively stable despite what's been happening in Japan.
So, Russ, that's a great observation, and one that I share as well. I've been looking at the same thing. The fact that we sit here at 420 this morning on 10-year, given all the craziness, is pretty remarkable. Yep. What do you think is insulating the U.S. government bond market from the rupture, to use Carney's word again, in JGBs?
Yeah, a couple of things. I mean, one, the spillover effects from Japan to the rest of the world, again, they're not always as dramatic as people make them out to be. But I also think the factors that have supported the U.S. bond market, despite the levels of debt, despite the concerns about a sell America trade, remain in place. The fact is there's still no obvious short-term replacement for the dollar. We also have an environment where inflation, while not at the Fed's target, has been heading in the right direction. We haven't seen the type of stagflation that people were talking about back in Liberation Day. And there's still an opportunity to pick up some yield in a portfolio, not just in the Treasury market, but more broadly in the credit markets. You know, again, we're still in a world where for the first time since the mid-2000s, you can build a fairly high-yielding portfolio without taking a lot of credit risk, without taking a lot of duration risk. And again, talking to clients, that's still fairly attractive for a lot of people that were not able to access yield for a very long time.
30s this morning at 480, 10 to 420. Russ, it's good to see you. Thank you, sir. Russ Kostruck there of BlackRock. On fixed income at the end, conversation also about what's developing in Japan. Check out dollar yen, down to 153.53 on that currency pair. We're negative about 1.4%. Some real yen strength in the face of potentially intervention risk. We'll get to that a little bit later. Let's give an update on stories worldwide this morning. Plenty to cover with your Bloomberg brief. Here's Vonnie Quinn. Hey, Vonnie.
Hey, John. Good morning. A massive winter storm hitting the U.S. East Coast on Sunday, bringing heavy snow and ice, straining electric grids and grounding thousands of flights. Parts of Texas and the Mid-South were coated in freezing rain, enough to take down power lines. More than 1 million homes and businesses across the U.S. lost electricity. The CEOs of more than 60 Minnesota-based companies are calling for an immediate de-escalation of tensions between federal, state, and local authorities. This following the shooting of a U.S. citizen this weekend. The Minnesota Chamber of Commerce sharing a letter signed by chief executives from companies including Target, Best Buy, and General Mills. The European Union is probing Elon Musk's X over concerns it failed to prevent its Grok AI chatbot from generating deepfake images of children. The investigation will check whether X properly assessed and mitigated risks associated with the deployment of Grok. Officials from the social media app saying they have removed illegal content and are working with law enforcement. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. More from Vonnie later this hour. Up next on the program, shaking up global alliances.
On the Greenland issue, I disagree with the president. What we need to do is to bring down the temperature.
We live in an era of great power rivalry. The rules-based order is fading.
With an endless accumulation of new tariffs that are fundamentally unacceptable.
When friends shake hands, it must mean something.
Up next, we'll catch up with the former House Financial Services Committee Chair, Patrick McHenry.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Live from New York City this morning. Good morning to you all. Big week. Absolutely stacked week still ahead of us. We'll hear from the president in about 24 hours' time. He's got a big speech in Iowa. Look out for that on Wednesday. A Federal Reserve interest rate decision. And after the bell, we've got some earnings to get through. You'll get numbers from Microsoft and Meta. The day after that, we'll hear from Apple. Lots to look forward to. Equity futures so far this morning pulling back by just 0.2% on the S&P. We're down 1/3 on the NASDAQ. On the Russell, we're down about 0.25%. Under surveillance this morning, a rupture in foreign relations.
On the Greenland issue, I disagree with the president. What we need to do is to bring down the temperature.
We live in an era of great power rivalry. The rules-based order is fading.
An endless accumulation of new tariffs that are fundamentally unacceptable.
The use of tariffs against allies is completely wrong.
When friends shake hands, it must mean something.
It looks like we have the concept of it. It gets everything we wanted, including especially real national security.
He again has been able to take leadership on this issue.
The process of getting to that agreement has clearly damaged trust amongst allies.
No doubt, the rhetoric we have heard the last year is unacceptable for us.
So here's the latest this morning. World leaders emerging from Davos with the world order tested. President Donald Trump saying he'll hit Canada with a 100% tariff if the country becomes a drop-off port for Chinese exports. Joining us now is Bloomberg's Tyler Kendall. Tyler, is there an appreciation for just how offended American allies actually are at the moment?
Well, John, at this point, considering the White House's staunch threats against our allies, I'm not totally sure that we did hear the U.S. Treasury Secretary Scott Bessent in an interview over the weekend appear to temper the president's threats when it does come to Canada, saying that if they do not pursue a free trade deal, as the Canadian Prime Minister Mark Carney said over the weekend, then these tariffs wouldn't end up going into effect. Though we have to keep in mind here that the relation between Trump and Carney has long been strained, right? Carney largely campaigned on countering this White House when it comes to trade, and there has been mounting frustration between both of the sides amid a lack of progress on a trade deal. While, yes, a lot of the Canadian exports to the U.S. are shielded by the USMCA, there is still huge exposure when it comes to those sector-specific tariffs, particularly like steel, and that is why this escalation is likely previewing what is going to be months of positioning ahead of the renegotiation for the USMCA this summer. I spoke to one senior administration official over the weekend who told me that the U.S. is going to maintain the posture that this is only going to complicate matters for Canada going forward, that ultimately we're going to see more economic risk, they said, to Canada because their economy is smaller and less diversified, which brings us to the reason why President Trump is upset in the first place, because they are reaching out to those other trading partners like China. Though, just for quick context here, Canada does about 1/10 of the trade it does with the U.S. with China. So we're talking about a very small portion. This emerging deal is supposed to be a lot limited in scope. But John, to your question on whether or not this is materializing, the U.S. is realizing these deeper rifts, I will say it's not necessarily deterring our allies. I'll point out that today, Canada's energy minister is actually in India to pursue some more trade agreements there.
Tyler Kendall with the latest in Washington. Tyler, thank you. Thank you very much. We discussed this a lot extensively in the last week or so. Let's just park trade. There are legitimate criticisms of Europe to make, and we've had them extensively on this program, and I think they're justified in many ways. We can talk about the style Okay, that's one thing, but the substance, a lot of Europeans might agree with some of the substance coming out of the US administration. Where the administration crossed the line in the last couple of days, and this is without debate, they crossed the line by questioning the involvement of NATO allies on the front lines over the last 20 plus years is a step too far. And I don't think there's significant appreciation on this side of the transatlantic relationship to what extent the Europeans are offended by some of the comments from the president in the last couple of days.
Keir Starmer, the Prime Minister of England, out of all the NATO countries that came to the U.S. when they triggered Article 5, by the way, the only time Article 5 has ever been triggered was after 9/11, and then you saw British troops in Afghanistan. More than 400 British soldiers died. Keir Starmer called it appalling and wanted an apology. Now, we did see the president take to Truth Social. Not sure it's done enough. You then came out and saw Giorgia Meloni, the Prime Minister of Italy, also talk about the fact that their sacrifices of these countries should be recognized, and they are not warming up to this language the president is using, and potentially this does cross a red line for them, and it's going to mean a lot more fraction going forward with the European Union.
Let's extend the conversation. Patrick Mahendry, the former House Financial Services Committee Chair, joined us now for more. Patrick, welcome to the programme. Allies have disagreements behind closed doors, and sometimes they spill out into public, and we've covered many of those disagreements over the last several years. This feels like it's something more than that. What's your perspective on things?
There's always a moment like this in every Trump administration where they say it will never be the same after this moment. And it largely goes back to what it was before. This should not be a surprise to the Europeans. President Trump, when he announced he's going to Davos, was going to control the terms of debate and the items discussed. And he, in fact, did that. Now, coming out of Europe, the offhanded comments the president made about Europe's and NATO's commitment post 9/11, that is something different. I mean, we have allies that put lives at risk in America's national security interest, their national security interest as well, but the sacrifice is real. And whenever you talk about the loss of life for our friends and allies, or any nationality, that nationality will be deeply offended because it's their blood, sweat, and tears that was sacrificed, and it was their young men and women that went and fought and died. And so, that is obviously deeply offensive to our allies. But the larger discussion here, we have to step back one aperture and realize this is a shakeup, but not a permanent fissure or rupture.
But can this do any long-term damage?
Of course. Look, the Europeans and the world thought the first Trump election was a one-off thing, and they didn't need to take him seriously. Coming back the second time, a second administration, the world realizes this is something to take seriously. But they make a mistake in taking every one of President Trump's statements literally. And they have to get past the noise and get into the substance. That has always been the challenge with Trump's style, is that everyone hangs on every sentence and tries to take it literally, rather than trying to understand what the president's going for. And I think that is largely what we're dealing with right now.
Do you expect any immediate blowback? Jonathan talks a lot about the fact that when the president was really jawboning then Prime Minister Trudeau, calling him Governor Trudeau, you saw the country rally behind the Liberal Party, even though the Conservative was, in the moment, leading the polls, Poilievre. Now you have another truth from the president talking about Governor Carney, Mark Carney. Do you think there is going to be damage in the sense that the administration is going to force other populations to rally behind Liberals instead of Conservatives that they actually think they could probably work better with?
Well, imagine this. Would you have predicted on Inauguration Day that President Trump would have a better relationship with the Mexican government than he would with the Canadian government 1 year in? And look, Mark Carney is a different cat than his predecessor, has a different set of politics, a different set of strengths. And I think the president has to adapt to that changed reality. Frankly, we see in Canada's reaction the immediate effect of of the aggressive stance President Trump has taken is that we have fewer Canadian tourists coming south. And I think you see that in a rekindled sense of Canadian nationalism as a result of the president's tactics here. Look, I don't know how this will shake out, but clearly we have a massive trading relationship with Canada. It's a very important trading relationship that Canada has with the United States. We're a huge market for them. We do need to work something out. And I think we have to get past this very strong rhetoric from both sides and get to the reality of a better trading relationship, better trading understanding.
Patrick, it's always good to hear from you, sir. Thank you. Patrick McHenry there, the former House Financial Services Committee Chair. Patrick's right. We've had moments where we've all sat here and said something's changed, and then you've gone back to exactly where we were before. You mentioned Canada. I'm pleased you brought it up. We've talked about it a lot on this program. A diplomatic spat became an economic problem. And my question walking away from last week is whether the diplomatic spat in Europe becomes an economic problem, whether the same kind of trends you saw emerge in the Canadian economy start to emerge out of Europe as well.
Well, actually, the #1 trending app right now in Denmark for free is an app that tells you what products are American-based so you can boycott them. That is trending right now in Norway, in Iceland, the Danes. They are actively trying to stay away. Now, these are just everyday consumers. They're going to the grocery store, looking up products, and they do not want to buy American because they don't like the rhetoric coming out of this White House.
That's a situation we all need to avoid. Question is, have we crossed the line in the last week? Futures right now on the S&P just about negative by 0.2%. Up next, we'll catch up with Amy Garr of Morgan Stanley with gold on a record-breaking run. Plus, Danny, has your morning movers, USA rare earth jumping 36.9% in the pre-market.
crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Good
morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Three days, no losses on the S&P 500, but unable to avoid a weekly decline on the S&P just last week. Coming into Monday morning, we're down about 0.2%. No real drama here. On the Nasdaq, down by a third. On the Russell, we're down by a third of 1% also. We'll talk about this massive small cap run that we've seen over the last several months and whether this has got enough oxygen, given that so many of you are already expecting an economic boom, at least over the next couple of quarters in this country. Let's turn to the bond market. Very interesting week in the bond market. 2s and 10s pretty stable in the face of what happened in Japan. 10s are back down to 420. 2s at 358.36 going into the Fed meeting on Wednesday, and no change expected to policy just yet from the FOMC. The big towel was in the FX market and in precious metals. Last week, DXY posting the first weekly drop of the year, the worst weekly drop we've seen going back to May of last year. More weakness again this morning. We're down 0.5%. On the same week, gold, a rip-roaring rally last week, the biggest one since 2020, up by close to 9%, 8.52% higher to be precise, and up again 2 percentage points this morning, blasting through 5K.
It's unbelievable, and all the banks have now having to look at where their price targets are, and they're like, oh, we need to reevaluate this. Goldman on Friday tweaked its year-end price target to $5,400 an ounce. The previous call, they blew past just the first 3 weeks of the year, $4,900 an ounce. Bank of America, Michael Hartnett, coming out saying, quote, history is not a guide to the future, but the average increase in gold during 4 upward cycles was about 300% over 43 months, which means the gold price could reach $6,000 by spring. 6,000. That is just in a few months, according to Bank of America.
5K sounded nuts 18 months ago, and here we are. So who am I to question any of this? Right now, gold approaching 5,100 and higher by 2%. So that's the FX precious metal story. Let's turn to what's happening in Japan. Dollar yen down to 153.78. Dollar yen negative on the session by 1.2%. Intervention risk incredibly elevated going into the weekend and coming into this week. What kind of action could we see, and what kind of coordinated action could we see between Japan and the United States?
So basically, you have the New York Fed running these so-called rate checks, inquires about pricing, and that could precede direct intervention. While the market is taking this as potentially we will see that intervention, the Treasury Secretary spoke about Japan at length when he was in Davos, which is why a lot of people are reading the tea leaves and saying this is something potentially you can see coordinated between Washington and Tokyo. Remains to be seen, but this is something for sure the FX market is watching.
This is an important signal. The bond market pushing back and the FX problems. We talked about this about 30 minutes ago. Never mind the intervention. Japan has a debt problem. Let's talk about why we're here. We're here because Takeichi, in the minds of many, is going to push for some kind of tax relief, some kind of tax cut. And the market's pushing back. That's the problem you've got to address here in Japan. And to Ken Griffin's point, what you've seen in the last week or so in the Japanese government bond market should be a warning for everybody that when you take it too far, this market will push back.
She wants to spend billions of dollars of fiscal support in Japan, including things like waiving a sales tax on food for that minimum 2 years. And that is why she called these elections, because she wants to have her coalition have a very strong grip on power. And given the fact that she won, it looks like her coalition will do well, which basically means that fiscal impulse is coming.
For much of our careers, going back decades, for many of you sitting at home who have lived through many a cycle, the Japanese government bond market has been an anchor around global interest rates for a long, long time. Anchors away. There's no support anymore coming from Japan. What's intriguing is just how insulated the US bond market has been so far, given the rupture, the convulsions we're seeing in the Japanese debt market. Russ Kostrick of BlackRock noting the same thing about 30 minutes ago on this program. Can that continue? Is a big question in fixed income. As we count you down to the opening bell, let's get you some single names. The big movers out there in the pre-market, 3 hours away from the cash open. Let's catch up with Danny for more. Hey, Danny.
Hey, John, everything that happened over the weekend itself would have been enough to say, wow, this year has been something, and that just adds on. So whether the intervention risk you're talking about, more odds of a government shutdown, threatening more tariffs on Canada, as you should, it's playing through gold. With gold above $5,000, and that's sending the gold miners much, much higher this morning. Newmount, that's up 4.2%. Barrick Mining, that's up 3.3%. Both of those, when they open, it means they will open at new record highs after closing at record highs on Friday. A little bit of deal news, or a lack of a deal. There had been some earlier reports that suggested that Merck would be buying this company, Revolution Medicines. That deal has fallen apart, according to the Wall Street Journal. They could not agree on a price, but Revolution Medicine, the journal reporting, still might be a target for another company. But even so, those shares falling 22% this morning. To the upside, a different type of deal. USA Rare Earths, reporting from the FT saying that the U.S. government would be injecting support, taking an investment, a 10% stake in this company, and supplying them with $1.3 billion worth of senior secured financing. That deal could be announced as soon as today. Shares soaring for this small company, up 37 1/3% in the pre-market, John.
Hey, Danny, thank you. Thank you very much. The latest on that move, massive move in the pre-market. I've lost count. What number are we on now?
I literally was just thinking which number of company this is ranked in terms of U.S. government intervention. It's literally a half a dozen, and I'm sure there's a list of others they're going to continue in the next 3 years.
I know that Republicans are somewhat happy with this effort, and I understand why. We're trying to get some of these production off the ground in this country for national security reasons. I'm right there. I understand why, but I caution this. You have to think about the kind of policy behavior that we're normalizing here in this country. And if you're happy with this kind of action because you yourself support the White House and the Republican Party, okay. But how unhappy are you going to be when you see a different flavor if the other party gets into power in a few years' time?
I've said this to Republicans when they give me the whole, this is about national security, which I understand. China has an absolute monopoly on rare earths and the processing of rare earths. And the United States needs that for the defense sector on top of the technology sector.
Without question.
But then you push back and you say, well, what if in 2028 there is a, say, President AOC? How would you feel about this? And then they get a little bit nervous and they're like, oh yeah, we don't want to see equity stakes then. They're only okay with state capitalism if it's under their party. And if it's not under their party, they're probably going to call it something else.
What kind of policy behavior are we normalizing out of the White House? It's an important question. Let's get back to our top stories. On our radar this morning, the yen surging as the US dollar extends its sell-off. The greenback hitting a 4-month low on speculation the United States may help Japan. This coming after Prime Minister Takaichi warned that the government is ready to intervene. Elsewhere, the risk of a US government shutdown is rising. The Senate Republican leaders vowing to reject Democrats' demands to split off funding for the Department of Homeland Security, the threat following the fatal shooting of a U.S. citizen by ICE agents in Minnesota.
Absolutely horrific weekend when it comes to domestic politics in America, but this is also going to have repercussions for potentially a government shutdown. A lot of people said we're not going to have a government shutdown until this weekend. And then you have Senate Minority Leader Chuck Schumer coming out with a statement vowing that he is not going to vote and he's going to make sure his caucus doesn't vote for the very long appropriations bill because it includes DHS funding. So that is why the odds of a partial government shutdown have gone right up.
Should we just sit on developments in Minnesota? Because they are so important right now. The president won for many reasons in the last election, but one of the big reasons was just how poorly the southern border was handled by the Biden administration. A lot of people have commended him for tightening that up as quickly as he had done, but it looks like he's losing, and losing on a policy that he won on just a couple of years ago because of the way this is playing out in one state.
Well, if you look at the polls, he is. Immigration right now is trending downwards along with his overall performance. If you look at what Nate Silver put out over the weekend, you could see that just trending lower because this is not what Americans, when you look at the polling, thought in their mind would be closing of the southern border. They were not expecting Americans to get shot in the streets while they were conducting some of these operations. The president did speak to the Wall Street Journal last night. We should note, 5-minute interview. He said, quote, we're reviewing everything, and we will come out with a determination. The administration officials have publicly defended the officer, but the president is looking likely in this Wall Street Journal interview that he wants a little bit more of a thorough investigation.
And that's the latest on developments here stateside. A winter storm also dominating the headlines over the past 24 hours, hitting the East Coast, bringing heavy snow. The storm straining electrical grids and grounding thousands of flights. More than 1 million homes and businesses across the United States are now without power.
This is really scary when it comes to this storm. It's one of the biggest we've seen. It's once in a decade. It's pretty surprising. Actually, you and I made it into the studio this morning. No snow days for surveillance. When it comes to the flight cancellations, the biggest and the most flights we've seen canceled since COVID. Over the weekend, more than 11,000. And this morning, as of 1:30 a.m., 3,500 flights canceled. And that number is rising. Everyone needs to stay safe out there.
Stay super, super safe. I can tell you, coming into New York, the roads were not good at all. Let's turn to commodities. Gold smashing past 5K for the first time ever as traders pile into the debasement trade. Amy Goward, lead metals commodities strategist at Morgan Stanley, writing, "We don't think prices have peaked. With geopolitical risk, positive signals from central banks and ETF buying, we highlight our bull case 5,700 for the second half." Amy joins us now for more. Amy, good morning. Just to clarify, is that the second half of this week or the second half of this year?
It's the second half of this year.
Amy, let's get into that call. We have moved so quickly on the precious metal. Have we got a new driver here, given developments over the last week?
Yeah, look, I think there's multiple drivers working together. So, of course, we should mention geopolitical risk and all of the uncertainty that we have at the moment. I think that is driving investors towards precious metals in particular, and especially given prices are then performing so well, I think that is providing additional price momentum. We also got a bit of dollar weakness the last few days, and that is always a tailwind for commodities, making them cheaper for non-dollar holders. And then I think while we're still in this, when will the Fed cut rather than if the Fed will cut, that's also a broader tailwind. But the key thing I think also has changed that's worth flagging is around central bank behavior. So we've always thought of central banks thinking about gold as a percentage share of their reserves. And of course, that means as gold prices rise, you would think that they would slow the pace of buying because the price is kind of doing the work for them. But we had something really interesting from Central Bank of Poland about a week ago, saying they're now targeting 700 tons of gold, so an absolute tonnage amount of gold, which would imply about 150 tons of buying. So for context, Poland was the largest buyer already last year. This would be about another 50% buying on top. So if central banks are just thinking about having gold regardless of the price, then that could also keep that kind of structural buying at a higher level than we were previously expecting.
Amy, I understand countries like Russia and China that face sanctions threats wanting to make sure that they have this historical level of gold buying. Why a central bank like Poland?
I think it's part of sort of where do you put your reserves, and we've seen you've got the dollar sort of seeing a slightly declining share across the world, but it's not really clear what the other currencies are that can really compete against the dollar. So I think when it comes to central banks looking at their options, and gold is there, it's sort of something that should hold its value over time, which I guess for a central bank, their key role is to sort of protect the value of their reserves. So if you are worried about currencies in general losing value, gold is your sort of your natural hedge there. And then I think Poland did cite specifically all of this geopolitical uncertainty as well. But we'd also highlight, say, we saw Brazil, for example, coming in September for the first time in about 4 years. So it's pretty widespread now, this buying.
There seems to be so many reasons why gold is just smashing it this morning. Can you give us what you think potentially is the #1 driver?
Yeah, look, I think the price momentum is very important here. And I think given all of this geopolitical uncertainty, I'd say probably that is the #1 driver in terms of the last week of price action. But I do think all of these other factors have set the scene for us to be here.
Well, Amy, speaking of momentum, let's talk about a different precious metal. Let's talk about silver. Got a 5% move on my screen on the Bloomberg terminal so far this morning. Can you just give us an idea of how big that market is and how easy it is to push around on any given day?
Yeah, so silver is much smaller than gold in terms of its kind of global traded volume, in terms of the market size on the screen and what you can move financially. It is a bigger market in terms of absolute tonnage terms, just because it's a lower value in terms of sort of annual production. But I think for what we're seeing on silver is it's slightly different to gold in that it's partly an industrial metal and partly a precious metal. And so you do have real users who need to buy silver. Arguably, nobody needs to buy gold on any given day, but if you have a factory that is dependent on silver to make solar panels or electronics, so there's a buyer out there that physically needs this metal. And so that has been a big driver over the last 4 or 5 years, pushing that silver market tighter and tighter into deficits. And then you've also got this precious metals angle of safe haven buying, and we're seeing that really accelerated last year and continues to this year. So when these two come together, when money flows into a silver ETF, they need to find some physical metal to underpin that. But that's largely been eaten up already by all of this industrial demand we've had. So that metal is just not there. And we're seeing this particularly in China at the moment. So China is trading at about a 15% premium, even to what we're seeing in London and in New York. And that's physical demand where the metal is just not available. If we go to London vaults, there is silver in there, but it's all kind of owned by these ETFs. It's not really freely available to the market. And I think that's why we're getting this squeeze.
Amy, this was really well framed. Appreciate the clinic. Amy Gower there of Morgan Stanley. So you've got the industrial metals trade, see it in copper. The precious metals trade, you see it in gold. Then you've got the best of both worlds right now, which is silver, up another 5%.
Silver, $109 an ounce today means its price is more than 3 times higher than it was a year ago. That is an absolutely stunning statistic when it comes to this precious metal.
Some major moves in precious metals again this morning. Let's get you an update on news worldwide with your Bloomberg brief. Let's cross over to Vonnie Quinn for more. Hey, Vonnie.
Hey, John. Thank you. New York Mayor Zohran Mamdani vowing to use, quote, every option to prevent an aggressive ICE operation in New York City. The mayor also defending the city's sanctuary city policies, which allows cities to limit their cooperation with federal agencies looking to deport undocumented immigrants. China's top general is being accused of passing secret information about the country's nuclear weapons program to the United States. The Wall Street Journal reporting Zhang Zhuxia is also accused of accepting bribes for official acts, including promoting an officer to the post of defense minister. The report goes beyond China's announcement on Saturday that it was investigating Zhang. And Chinese officials are telling the country's largest tech firms to start preparing orders for NVIDIA's H200 chips. Sources saying Alibaba, Tencent, and ByteDance have initial approval for purchases. Alibaba and ByteDance earlier told NVIDIA in private that they are interested in ordering more than 200,000 units each of the H200. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thank you very much. Up next on the programme, reshaping the Federal Reserve.
I know within 3 or 4 people who I'm going to pick.
I have a pretty good idea who I want.
I'll announce them at the right time. There's plenty of time.
I have somebody that I think will be very good, but I'm not going to reveal it.
That conversation up next with Michael Dada of Roth Capital.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting the between the rice air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now that these 2 fingers, top to the bottom, make the sushi shape more beautiful. 3. Then, I'm not, looks like pushing, not pushing. 3, 4, turn, same way. 5, and 6. So this is 1 through 6.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in 1.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Making money isn't about drowning in emotions.
It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Stocks are down across the board. We're negative by 0.2% on the S&P 500. On the Nasdaq 100, we're down by about a third. Under surveillance this morning, reshaping the Federal Reserve.
I know within 3 or 4 people who I'm going to pick.
I know who I'm going to pick.
I guess a potential Fed chair is here, too. I don't know. Are we allowed to say?
We're going to be looking at a couple of different people, but I have a pretty good idea who I want.
Someone who believes in lower interest rates by a lot. I'll announce them at the right time. There's plenty of time.
I'll be telling you soon. No, I have somebody that I think will be very good, but I'm not going to reveal it.
So here's the latest this morning. A key week ahead for the Federal Reserve. President Trump set to announce his pick for the central bank's next chair as policymakers gear up for the first rate decision of 2026. Michael Dada of Roth Capital writing the incoming chair of the Fed will then inherit an increasingly divided and defiant FOMC. Michael joins us now for more. Mike, welcome to the show. It's good to see you. Let's talk about why you believe this Fed will be such an unruly Federal Reserve for the next Fed chair.
Thanks for having me on, John. Well, look, I think Trump is kind of overplaying his hand here. We're seeing pretty significant pushback with this Justice Department investigation on Fed Chair Powell, which is obviously a political ploy to put a lot of pressure on the next chair of the Federal Reserve. But Senator...
I think we've got a problem with that connection with Michael Dada of Roth Capital. Is he out in a chalet somewhere, skiing?
For
We're going to try and re-establish that. Look, the noise on the Federal Reserve, and hopefully we can reconnect with Mike and we'll continue the conversation. We've talked about this a few times. The perception, and perception is important. The members of the committee right now, and we've seen that evidently from the chairman of the Federal Reserve, Jay Powell himself, perceive there to be a threat from the White House that is a threat to their independence. And we've talked about that galvanizing the other officials on the Federal Reserve, which makes it difficult for whoever comes in to lead the committee and get everyone else to follow them. It's going to be very hard for the next Fed chair.
It potentially can be very hard to gain that consensus, unless maybe it's someone from within, like Governor Waller. But his name hasn't been thrown out as much as some of the others, Jonathan.
I understand we've reconnected with Mike Dada of Roth Capital, so Mike, we can continue the conversation. Let's go with it. Okay, I understand why this Fed could be a more unruly Federal Reserve. Does the market price the volatility within the Federal Reserve, or does the market price the outcome of that volatility, which means it's difficult to reduce interest rates?
Yeah, I mean, look, the market still gives the Fed a lot of credibility and is not looking for a huge political disruption. So, I think we're playing with fire here going down this path with a lot of political pressure on the Federal Reserve. So we'll see what happens. I mean, at least there's some pushback. Senator Tillis has basically defended Powell, saying forget any new appointees to the FOMC until this is resolved. And you have a divided Fed, and this is a Federal Reserve that makes decisions based on a consensus. So you don't just pick one member to lead the Fed and then assume that rates are going to go to 1 because you assume that's a good idea. So we'll see how all of this plays out, but I think the administration's really overplayed their hand here.
I'm glad you mentioned Senator Tom Tillis. He spoke with Jonathan, Lisa, and myself in Davos, and he talked about the fact that he is not going to let a candidate go through until this is resolved in terms of the DOJ probe on Jay Powell or the more than 340 days he has left until his retirement. Do you think the market is pricing in the fact that we can have Jay Powell be the Fed chair for, I don't know, another 300 days?
Well, I mean, look, his board seat doesn't expire until 2028. So if Fed Chair Powell is really worried about political influence on the Fed, he could stay on as a voter and deny the administration that board seat. So, you know, they would have to use the expiring term of Governor Marin for the next Fed chair. And then, as I said in the quote, you've got a pretty divided and defiant FOMC. So that's just kind of a mess, but it also prevents, you know, dramatic political manipulation of the Fed and pushing the Fed down a path where it's doing things it shouldn't be doing. You know, running it hot might sound very good in the short term, but let's not forget how the 10-year went from 50 basis points to 5%. That occurred on the back of an inflationary policy error by the Federal Reserve. So I don't think we want to repeat that exercise again.
Mike, do you believe there is upside inflation risk this year? And what's the source of that?
No, not really. I mean, I think that the Powell Fed has done a phenomenal job here in terms of the previous tightening and then easing by just about the right amount. The nominal economy has been super steady. Inflation expectations are anchored. So I think that they've presided over just almost a perfect, immaculate disinflation. And I think that continues this year. But we're playing with fire in terms of what the administration is doing, and they should really reverse course, in my opinion.
Mike, it's good to see you. My apologies about the technical disruption. Mike Dowder there of Roth Capital on the Federal Reserve. This from Torsten Slock of Apollo in the past few weeks. Covered it on the programme. I think worth repeating. The risk of overheating here. The list of tailwinds keeps growing. We're starting to worry about overheating in 26. Torsten Slock of Apollo just a few weeks back.
And he had so many reasons on that list, including the AI trade, the build out of those data centers. On top of that, we are in 2026. This is the year the United States will be hosting the World Cup. The tourism that's going to be coming in, the money that is going to be spent on that. He had so many reasons why potentially we could be overheating this year. And you have to think, potentially is that a concern for inflation?
I was so excited about the World Cup coming to this country this year. Just for right time, right place.
Ticket prices.
Return of Americana, great moment for the sport in this country as well. The scenes we've seen play out, the headlines we've witnessed in the past week or so, out of just one state. I just wonder how much perception is being shaped by that abroad, and how few people decide to actually come over and watch the games. Now, I hope in 6 months' time, we're all wrong about this. I hope the stadiums are full. I'll be one of the happier people sitting around this table to see that play out. I hope that's the case.
I hope so, too. I mean, right now, when you have the State Department talking about visa bans for a number of countries, especially a country like Brazil, but saying, oh, but it won't affect the World Cup. But if you're an individual, are you looking at what's playing out in America and thinking, I feel safe to go there right now from these countries? No.
Futures right now, negative by close to 0.2% on the S&P. Up next, we'll catch up with Sarah Hunt of Alpine Saxon Woods, Terry Haynes of Pangea Policy, Stephen Shork of the Shork Group, and Bob Michael of JP Morgan Asset Management. The second hour of Bloomberg Surveillance, up next.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety, and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks happening everywhere, and that's what AI is most helpful in improving.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
The U.S. economy is really growing fast.
The U.S. has been really an incredibly strongly performing market, strong economy.
Corporate health is excellent. Consumer health at the top end is excellent.
Diversifying away from America is impossible.
So if you look at the economy today, there's a lot of good short-term things.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures a touch softer. We're down by about 0.1% on the S&P 500. On the Nasdaq, we're down by 2%. The Russell down by almost 1/3. The big move in gold. Gold up last week by almost 9%. Up this morning by 2%. Up on the year by close to 18%. Gold through 5K for the first time ever. Lots of reasons for that. We'll get into it in just a moment. Going into this massive week ahead, lots of earnings. We'll get that Wednesday and Thursday from big tech, Microsoft, Meta, Apple. A Fed rate decision coming up on Wednesday, and an address from the President of the United States tomorrow.
There's a ton, and potentially a government shutdown, Jonathan, by the end of the week, given what we heard from Senator Schumer over the weekend. When it comes to the Federal Reserve, there's no urgency either way. That's made obvious by Fed officials. What is going to be interesting, though, is a lot of developments have happened since we last heard from Jay Powell. And the Q&A at the press conference is going to be very insightful. 1, do you think it was political that you showed up to Lisa Cook's hearing at the Supreme Court? 2, what can you tell us about the DOJ probe? 3, do you plan to stay on past your chairmanship, to stay on as governorship? And I don't know if the chairman is going to offer any insight into how he's thinking about a number of these issues that are political, not monetary policy focused.
Base case would be he won't engage. Yeah. I would say I've lost some conviction around that base case, given how assertive he was just a few weeks back. That was a different Chairman Powell. And I wonder how willing he is to address some of those questions in the news conference this Wednesday.
Yeah, he might come out a little bit more forthright in how he's thinking, especially since the fact that he has showed up to Lisa Cook's hearing. And you heard from the Treasury Secretary saying that is Jay Powell that is politicizing the situation. He might talk about whether or not he's had phone conversations with members on the Hill, like Senator Tom Tillis, who says that he is not going to entertain the administration's next candidate until what is going on with the DOJ is basically figured out between Jay Powell. It's going to be an interesting next few weeks.
It's interesting looking at the market betting, the probability, all those things out there at the moment who are now got Rick Reeder in the lead, because they think that the other individuals are a little bit too close to the White House, and this is the guy that can probably make it. Speaking to the senator just last week, he said it's not about the man, it's about the process. And I just wondered to what extent here on Wall Street we're still underestimating just how long this could go on for.
Well, Senator Tillis was pretty factual in the sense that he said how the process works. Nothing can go through the Senate Banking Committee without his sign-off or until he retires. That's more than 340 days because he is retiring. And it was interesting. He said it doesn't matter about who it is. It's a process. Until this DOJ is wrapped up in this investigation to Jay Powell, I'm not going to move it forward. What's going on with Rick Reeder, though, is inside and outside the White House, you are seeing a lot of an embrace and warm tones about this individual. I definitely heard it at Davos.
See the things we do, the lengths we go to get to the studio to talk about the Federal Reserve here at Bloomberg Surveillance, getting through that winter storm just to talk about the Federal Reserve. Let's talk about this storm. Here on Wall Street, we're starting to put some numbers on it. This came from Bank of America and Aditya Bharve. The impact of Fern may drag down Q1 GDP by 0.5 to 1.5% quarter on quarter.
It's no surprise when you find out that this is the most flight cancellation since COVID, when the world literally stopped and there was bans on flights. Individuals cannot get to the airport. If you can get to the airport, it's too icy. The conditions are not safe for flights to take off. So we saw more than 11,000 flight cancellations over this weekend, and the number is going up this morning as of 1:30 a.m. 3,500 flights were canceled. And if you're an individual that potentially works in the city, besides us, I think you're working from home.
It's pretty quiet. Let's put it that way in Manhattan, but it's always pretty quiet around 4 a.m. anyway. But I imagine it's going to be pretty quiet throughout the day ahead. We'll keep tracking developments for you through the hour right here on Bloomberg TV. Coming up this hour, we'll also catch up with Sarah Hunt of Alpine Saxon Woods as equities look to bounce back. Stephen Schork of the Schork Group as U.S. natural gas prices soar. And Bob Michael of JP Morgan Asset Management seeing no evidence of a Sell America trade. We begin this hour with stocks trading water as key earnings loom. Sarah Hunt of Alpine Saxon Woods writing the following. Earnings have been coming in fairly well so far, but are obscured by some potential policy changes. Sarah joins us now for more. Sarah, typically when things get crazy, you don't even bother trying to price it. And over the last week, things got pretty crazy. When you talk about potential policy changes, policy from where and who?
Well, if you just look at some of the edicts that have come out, if you looked at things like let's go 10% on credit cards, or the whole Greenland thing that was happening that was so fast that went from this is going to be a big problem to no, this is not going to be a big problem. I think that those are the kind of things that get markets' attention, especially if you start looking at the credit card regulations and those interest rates, because the banking sector has had some strong earnings coming in that all of a sudden throws some potential cold water on what could happen there on the earnings front. So I think the concern would be that while you have a reasonably good earnings picture, which we think we do right now, that anything that looks like it's going to threaten that earnings picture is going to be problematic, because that is what is going to drive equity prices, especially from the highs that we're sitting at right now.
Well, Sarah, to that point, the backdrop for earnings is pretty decent. The backdrop for growth is even better for the year ahead in this country. Is there something about the policy posture in Washington right now that makes that sector less investable?
I think it's more just the frenetic changes in the ideas of what's going to happen next and how that's going to happen and what can be regulated and what can't be regulated. And the truth of the matter is there's a lot of things that would need to go through a much bigger policy question than just a sort of edict from above. But I think that the concern is just that you get these big idea changes and you're not ready to look at how that's going to impact earnings, and then you switch to another one so quickly that it becomes this sort of rolling information cascade. And I think that that's kind of can be an issue for markets, although many times they turn around and ignore them. So it's difficult to figure out which things are going to gain traction and which things are not.
Every day it seems like the market is dealing with another question mark now, a potential government shutdown. What does that mean potentially for the next non-farm payrolls report? Will we actually get data? Sarah, when you look at all of this and you're looking at all these questions, where do you want to hide?
I don't think it's so much about hiding as it is trying to figure out and stick with sectors that you think are going to do well in the long term. Almost, I mean, you can never say irregardless of what's going on outside, right? But you want to look at the things where you still see that growth in the AI build out. That is happening. There's a lot of ancillary things that go along with that. We know that we're going to need more power. We can see that higher power prices are driving what is going to be a larger demand for power. You can see that there are places where there's going to be growth. There's been a lot of activity in the biotech sector. There's been a lot of activity in some of those healthcare sectors where there's been some M&A activity. I think that what you want to do is look forward to what's going to happen over the next 3 to 5 years, because the noise can get very loud in the short term, but you're looking for longer term. You're looking for companies with really good balance sheets, really good cash flow. We want to see that those fundamentals on the balance sheet, they really do matter. And I think that especially with where we are right now in levels on the indices, you really want to be careful of your fundamentals.
When you look at the AI trade, Jonathan has been very good about bringing this up because a lot of guests have spoken to us about this. How important is OpenAI as a litmus test for AI this year?
I think that's a big question. And I think that there's some real questions about what's going on with the financing there. And I think that that's one of those things that is going to be it either is going to be a bellwether or it's not. And it's hard to tell early on because there's so many other things going on. And there are reasons that you could call that particular issue something that is only matters to OpenAI as opposed to mattering to the entire infrastructure or the entire sphere. But it's going to see anything that's really bad that comes out of that is definitely going to give investors a scare, I would say. So I think that it's something to definitely keep an eye on.
Sarah, do you think that's why people are taking more comfort and looking at, if I dare say, an equity haven trade at the moment seems to be small caps? The outperformance of small over large so far this year is notable. We've got the S&P up by around 1% and smalls up by close to 8% on the Russell 2000, Sarah. And I just wonder if some of these themes, forces that we're discussing right now, policy risk out of the White House, speak to the fact that some people are just looking elsewhere to smaller companies that might not be in the firing line.
I think that there's also been, we've been talking about, or investors have been talking about a catch-up trade in small caps for a long time. And I think that the concern that happened with the small caps when they started to rally a couple of years ago was really much more concerned about a U.S. recession and how that was going to impact small caps. I think that I wouldn't say that it's 100% taken off the table because you can never say 100%, but I would say that the idea that we were running into a recession is less of a problem right now. That's beneficial to small caps. People are looking for value because they've seen how much the multiples are higher in the larger cap spaces. So I think that there is a combination of things that are going on there. One, better feelings about the U.S. economy, better feelings about what's going to happen in earnings in general, and a valuation gap that has been fairly substantial. So I think that people are looking for value in markets. They always do, and this is someplace where they're starting to find it right now.
Well, Sarah, let's pick up on point one. I think it's the most important point. The re-rating of the outlook for U.S. growth. And it's been re-rated quite dramatically. When I look at notes from Torsten Slok of Apollo talking about overheating, and I'll have a similar conversation with Morgan Stanley a little bit later this morning, Sarah, that is a well-understood story now. How well priced is that story in equities?
Well, there's a give and take with that, right? Because if the economic picture is that much better, then it sort of poses the question of why we need to be cutting rates, where the technology sector is still looking, well, the market is still looking for a couple of rate cuts this year. I think that there's going to be some tension there because, yes, I actually do see that the economic picture looks pretty good. And so that begs the question of why we need to cut rates, which gets into the whole problem that the White House is having with the Federal Reserve. So there's a lot of different tensions there, but I do think that the U.S. looks pretty good relative, especially to the rest of the world, but also just relative in general to the last couple of years. You have some things that have gotten a little bit out of the way, and you do see some reasonable employment. You see some good numbers on the economic front, and I think that that's just going to help equities in the U.S. perform better.
Sarah, you don't sound like someone who's part of the Sell America trade. Is that accurate?
Yes, that's accurate.
So you're sticking with the United States, especially when it comes to the economic backdrop. When it comes to your last point just about the Federal Reserve, basically, do you now, when you look at some of these economic projections, do you now basically map in no rate cuts from this Fed?
Well, I think that the expectation on rate cuts and the reality of rate cuts is not really matched up very well in the last couple of years, because if you start out every year, I mean, we're not starting out this year this way, but if you started out every year in the last couple of years expecting some major number of rate cuts, and we haven't actually gotten them because the economic data has been pretty decent. And I think that that's going to be the big story of 2026 on top of another couple of things. If we don't see inflation, you can say, okay, if you needed to get some rate relief, you could have it. But if you see very strong growth, it's going to be harder to justify that. And I don't see how all of this noise around the Fed helps that in any way, shape, or form, because no matter what happens, it's going to be discussed as politicized. But I think in the end, the U.S. economy is doing pretty well. And it's hard to see how that is majorly impacted in the near term in the same way that you've got some of the issues with other kinds of slowdowns in Europe and other places. So I think that the U.S. is looking pretty good right now. And I think that the consumer is looking and acting pretty good right now. So we'll see how that plays out as we get through the year. And we do have to be concerned about inflation popping back up because power prices are higher. And even though you don't have as many inflation drivers as you had before, there are still some in the system. So I think that that's another reason where cutting rates might be a little bit difficult to justify.
We'll discuss those power prices later this hour with Stephen Short. Looking forward to that. Sarah, good to see you. Sarah Hunt there of Alpine Saxon Woods. If you're just joining us, welcome to the programme. Futures were negative by a few tenths of 1% on the S&P, now just about unchanged, almost completely flat on the S&P 500. Let's give you an update on stories elsewhere this morning. Here is your Bloomberg brief. The US East Coast trying to get back to normal after yesterday's massive snowstorm. The storm causing the most flight cancellations since the COVID-19 pandemic. According to FlightAware, more than 3,600 flights were cancelled as of this morning. Elsewhere, OPEC Plus sticking with the supply pause. Delegates telling us here at Bloomberg the group is currently expected to maintain all production levels when they meet on Sunday. There are no signs it needs to adjust supply due to events in Venezuela and Iran. And finally, BYD aiming to increase overseas deliveries by nearly 25% this year, targeting 1.3 million sales outside of China. Strong demand abroad helping BYD overtake Tesla in 2025 to become the world's largest EV maker. How many of those cars will be sold in Canada alone over the next few years?
That's what I was thinking, obviously, because this is at the crux, really, of this concern between Ottawa and Washington right now. And we've seen what BYD has been doing to Europe. Going in there, massive investment, and it's, as you say, it's overtaking Tesla.
Commerce Secretary didn't hold back last week in Davos, Switzerland. It's going to complicate negotiations over USMCA later this year.
USMCA, those negotiations are going to be incredibly challenging, especially when the President of the United States is now calling the Prime Minister of Canada Governor Carney, like he did with Justin Trudeau.
It didn't help last time, did it?
Nope.
See if it helps this time. Up next on the programme, tensions rising across the aisle.
Maybe go to another city and let the people of Minneapolis decide.
We don't stop this in its tracks. People being killed simply for exercising their First Amendment rights is going to be a regular feature in this country. That should unite Republicans and Democrats in Congress.
That conversation up next with Terry Haynes of Pangea Policy, live from New York City this morning. Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Ahmed, only on Bloomberg.
Two days away from a Federal Reserve decision here stateside. Equities into that just about unchanged on the S&P 500, slightly lower through a very, very volatile trading week last week. The Nasdaq 100 down by 0.1%. The Russell down by 0.1% also. Under surveillance this morning, tensions rising across the aisle.
If the mayor and the governor are going to put our ICE officials in harm's way and there's a chance of losing more, innocent lives or whatever, then maybe go to another city and let the people of Minneapolis decide.
If we don't stop this in its tracks, what you are seeing in Minnesota, people being killed simply for exercising their First Amendment rights, is going to be a regular feature in this country. That should unite Republicans and Democrats in Congress.
So here's the latest this morning. Senate Democrats vowing to oppose a government spending bill unless funding for the Department of Homeland Security is split off. Bloomberg's Tyler Kendall joins us now for more. Good morning, Tyler.
Hey, John, good morning. Well, a senior aide to Democratic leadership tells me that Senate Minority Leader Chuck Schumer says that he has the votes to potentially block this spending package, which could risk a partial government shutdown this Friday, which is the deadline for the full appropriations process to ultimately play out. If we look at the math here, Republicans need 7 Democrats to get on board with the spending package as it stands. And we've already started to see some of those Democrats that supported Republicans last time around start to peel off when it comes to their support. If we take a step back, the Senate is right now considering 6 spending bills that would fund the government for the rest of the fiscal year. One of those in part funds the Department of Homeland Security, and Democrats now want to see some of that funding stripped out. The issue with that, though, is that any changes to the broader spending package would have to get kicked back down to the House, and they're out of Washington until February 2nd, which means that they would have to come back in early, and we're already starting to see some issues and delays on Capitol Hill related to the weather. There are also big questions here about whether or not this could reverse some key and hard-fought wins for Democrats in the spending package as it stands. They were able to reverse some of the Trump administration's spending cuts to foreign aid, for example. Plus, we have to keep in mind Immigration and Customs Enforcement received a whole lot of funding under the One Big Beautiful Bill. So others are raising concerns that this is actually going to impact other agencies under DHS and not ICE, such as FEMA, as just one key example here. So there's going to be a lot of negotiation as this goes forward, and we'll have to see what ends up happening, John. It is our understanding that Senate Republicans have reached out to Democrats as we're starting to see some growing unease among the GOP when it does come to President Trump's immigration crackdown, but they're really more calling for investigations to happen rather than impacting any of the funding that's currently under consideration on Capitol Hill.
Tyler Kendall down in Washington. Tyler, thank you. To build on some of that, Terry Haynes of Pangea Policy joins us now for more. Terry, I'm going to kick it off by asking for a projection, a forecast, the call. Where are we going to be by the time we get to midterms at year end?
By the time we get to midterms, I think this will be an important aspect of things. I think what you end up with today is I think you end up with a continued Republican Senate. The map is just not very good for Democrats. And also, I think anybody that tells you, as I've heard on your air in the past, that the Democrats are projected to pick up this many seats or that many seats, I think is way, way over their skis. You have a situation where there's about 10% of the seats that are open right now. We don't even know who the challengers are in a lot of those seats, and yet people are already projecting Democratic gains or Republican holds. I think what you got is a situation here at the bottom line is where you have a very small Republican majority in the Senate, and whether or not there is a Democratic majority, it's going to be tiny. And a lot of that depends, a lot of a Democrat's pitch depends on how electable their candidates are. If they end up with a lot of Jasmine Crockett-like candidates in the House, their odds go down substantially.
Terry, there was a shocking incident when it comes to the deadly shooting in Minnesota this weekend. How do you see Congress pushing back against some of the rhetoric we saw in the White House over the next 24 hours or even the next week?
Well, I got to say two things. One, both institutional. One directly on Congress. Look, John Kennedy used to joke, President Kennedy used to joke that his Pulitzer Prize winning book, Profiles in Courage, was a very short book for a reason. And that book was about congressional bravery. What you got here is, Congress is lazy. And that may sound uncharitable to people who are running around like crazy, dealing with their constituencies and their jobs. But Congress is not doing any of the oversight that it needs to do on ICE or 100 other things, frankly, to make sure that these things run smoothly. Congress has had a huge role here. It has not exercised it at all. Republicans or Democrats. Democrats could have months ago been agitating for hearings, changes, whatnot, and now we are where we always are, which is nobody's done their jobs on oversight. So now we're going to have hair on fire, last-minute spending battles. That's irresponsible for the public. The second thing, frankly, that's irresponsible for the public is to have state and local government officials talk as if they're equal partners or that they can stop things that go on in the federal government. Not to put too fine a point on it, we had wars over this. This is a federal government policy, good or ill, and what they need to be doing is working a whole lot more constructively than they have been too. There's an awful lot of people here who are contributing to this bad situation, and they all need to have a little more humility and stop, frankly.
Terry, you talked about Congress, you talked about state and local officials. You haven't mentioned the White House, which some officials in the White House are calling the individual, the American that was shot, a terrorist. What's your assessment of how they are handling this situation right now?
Well, I mean, the short answer is badly. I started with Congress and the institutions because you asked me about them. But they are... they're doubling down on things that need a lot more subtlety and a lot more tact. And I think when the White House has lost the Wall Street Journal editorial page, I think it ought to sit up and take some notice and understand that they need to be doing things substantially differently, whether it be retraining, whether it be just adopting a different posture anywhere that they're trying to enforce immigration policy. That message, I think, is going to take a little bit of time to get through. I think the Senate, frankly, has a big role to play this week in that because it's going to be on a bipartisan level, I should say. They're going to be agitating for a lot of changes, and the White House would be wise to get in dialogue with those folks and come up with some consensus.
You were right earlier this year calling for the potential of a government shutdown. When it comes to how the White House deals with it, do you think the president is going to have a shakeup of his cabinet?
I think it's a little bit too early for that, but at the very least, Homeland Security Secretary Noem has got some questions to answer about this. A lot of people will applaud her desire to strongly defend the ICE folks wherever, what they're doing and how they're doing it. At the same time, I think leadership takes a little bit of tact. I think it's a little bit too early to assume that cabinet secretaries may topple, but there's a lot of people, Noem among them, I think, who are being looked at a whole lot warier by others in the White House than they were a week ago.
Those questions certainly being asked this morning. Terry, it's good to see you. Thank you, sir. Terry Haynes of Pangaea Policy. Up next on the programme, Stephen Shork of the Shork Group, with natural gas prices surging, plus Danny with your morning movers. Mining stocks rally as gold hits all-time highs.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
To double check this, the first back-to-back weekly loss on the S&P 500 going back to June of last year. Just a small one last week, but still a weekly loss down by about 1/3 of 1%. This morning we're down by 1/10 on the S&P, on the Nasdaq down by 0.2. The standout last week was just how flat the bond yield curve actually ended the week to week. 2s, 10s, 30s not doing much. 10s this morning at 421.33, yields down by around a single basis point. I think you have to think about the backdrop here, the convulsion we saw in the Japanese debt market, and yet 10s in America are still round 420. Let's turn to the big moves that we've seen develop in the last week or so. In fact, the last several years. Gold, explosive move higher, up by 2% through 5K. Silver, up by 7%. Amy Garrett of Morgan Stanley on the program in the last hour. Absolutely fantastic. Pointing out that you've got the industrials trade in copper, the precious metal story in gold, and the best of both worlds in silver.
And also, she was pointing out that when it looks at central bank buying, which has been historical really since Russia's invasion of Ukraine, I was struck that it's not just the Chinese that are doubling down. It's central banks like Poland that are wanting to double down on making sure they have enough gold. And then you look at what Bank of America put out over the weekend. Michael Hartnett talking about 6,000 by spring. If you are on this desk trying to analyze what's going on in this space, how do you even have a price target? I remember when this moment was the price target.
It's just flying, Anne-Marie. Up by more than 8% last week, up by close to 16% year to date, I think.
Last night, when I saw the move and I was tweeting about it, you know what I thought about? Treasury Secretary Scott Bessent.
Biggest position, right?
Would have made a ton of money had he not gone into the administration.
I believe it was one of his core positions in his fund.
It was his biggest holding in his fund.
Yeah, we should ask him about that one.
Yeah, next time he comes on.
Get his thoughts. It's working now, that's for sure. As we count you down to the opening bell about 2 hours away, let's get you some single names, some morning movers. Here's Danny with more. Hey, Danny.
Hey, John. Here's the equity market consequence of that. Newmont, Barrick Mining, both of them surging this morning, up 4.5%. For Newmont, 3.7% for Barrick Mining. Both of them closed at a record Friday, so they are well on their way to hit another record today. Elsewhere, there is a Reuters report that NVIDIA has chosen Samsung Electronics to provide its latest digital memory chips. Micron is one of the biggest competitors to Samsung Electronics, so the fact that it didn't get the nod means that those shares are down 1.2%. It's also had a rip-roaring rally, so it is sensitive to those drops. Finally, ending things with Baker Hughes, the oil, gas, and services company, reporting earnings that beat. It was expected to be a very sluggish environment because less spending on oil and gas. Even so, they had a record 2025, a positive outlook. There are questions around Venezuela and whether they will be participating in that rebuild. And as fate should have it, Matt and I will be speaking to the CEO around 10:30 a.m. this morning. So we will ask him those questions, John.
Danny with the update. Danny, looking forward to that. Thanks for joining us. On our radar this morning, Treasury Secretary Scott Bessent saying Canada will face 100% tariffs if it makes a trade deal with China.
The Canadians, a few months ago, joined the U.S. in putting
high steel tariffs on China because the Chinese are dumping. The Europeans also have done the same thing. And it looks like that Prime Minister Carney may have done some kind of about-face.
The Canadian Foreign Minister saying the nation won't be derailed in its efforts to diversify trade away from the United States.
I think that's an important coming out from Canada. They're not looking for a free trade agreement with Canada, but it was peculiar that before he made really that prerogative speech in Davos, you had Mark Carney actually go to Beijing and talk about strategic new partnerships. That speech, I think, was the standout speech of Davos this year. And what I found also interesting on the final panel of the week, Christine Lagarde was asked about it, and she said...
She disagreed.
She disagreed. She says, I don't quite agree with Mark. As you know, they're on a first-name basis. The Prime Minister of Canada, she doesn't see this being a rupture.
Isn't it refreshing that the virtue signaling at Davos is out and the mask is starting to come off and people are just speaking their mind and disagreeing freely, just a little bit more anyway?
So you were there last year. I was at the inauguration, but the prior year when I was there was a ton of virtue signaling, and I got the sense in 2024, everyone was just so scared of the U.S. upcoming election. This year, it felt like everyone was willing to say what they wanted to. And I think that was pushed by the President of the United States because of his attacks on Greenland, which really, I think, galvanized the Europeans to fight back.
Let's see if we see more of that in the year ahead. Elsewhere, we've talked about this move in the stock market this morning. The White House planning to invest $1.6 billion into USA Rare Earth. The Trump administration will take a 10% stake in the mining company. The announcement could come as early as today. That stock is higher in the pre-market by 15%. Elsewhere, big tech earnings kicking off on Wednesday. 3 of the Mag 7, Meta, Microsoft, Tesla, all reporting after the market close. Apple set to report after the bell this coming Thursday.
So it's going to be about Apple is actually the earnings call. What does Tim Cook say? First off, I saw him in Davos. He clearly had a lot of interactions with the administration. Then there was this report that there was almost this private viewing of the new Melania movie about the First Lady. And the NICE CEO, Lynn Martin, who we spoke to at Davos was there. And also Tim Cook was there. And it comes at a time when corporate America, at least the ones that are based in Minnesota, like Target, Best Buy, Land O'Lakes, Cargill, General Mills, are pushing back on this administration, and they want some clarity and they want peace in this state, given what has been going on with ICE and Border Patrol.
We call Tim Cook the diplomat in the president's first term. He played the politics really well. This time around, relative to, say, Jensen Huang, seems to be on the outside looking in. Is that what the developments of the last few days are about for him?
No, I think Tim Cook has once again really reasserted himself as potentially the key diplomat. Now, I don't know if he's running policy the same way you'd think Jensen Huang is, because everything Jensen Huang has wanted for NVIDIA and the AI space is happening in this administration. But Tim Cook, very close to the sun right now.
Apple right now in the pre-market higher by around 1%. Let's turn to the weather. What a storm over the weekend. A powerful winter storm blanketing much of the U.S. East Coast with heavy snow and sleet yesterday. New York, New Jersey and Connecticut are all under states of emergency, with their governors warning people to stay home if possible. New York City Central Park seeing 10 inches of snow. For the latest, Bloomberg's Miles Miller is there, and he joins us now for more. Good morning, Miles. What have you got?
Hey, good morning to you. Yeah, and you can tell that nearly a foot of snow fell here, because if you walk around Central Park, you see people out here with the dogs and all of that. I mean, it is really tough getting around. Yeah, the city seeing in some parts over 12 inches, over a foot of snow that fell yesterday. And it's not just the snow that's of concern, it's the Arctic chill after, right? We are expecting to have a week below freezing, which means that all the snow that fell before it gets off the ground by melting or by pushing it away, it's going to be really tough getting around. That is what played into the decision to close schools today. Obviously, a lot of New York City businesses closed as well. And as you make your way through the streets, you can really tell just how slick it is. And, you know, every bit of this snow, of course, is going to stay frozen where it is. Of course, the mayor yesterday taking pains to talk about the New Yorkers who died as a result of these cold temperatures. One of those New Yorkers, homeless in Queens, dying in a local park. I mean, these conditions are such that they had to stop New Jersey Transit, and it is not even back up and running running this morning. So a lot of these people who are commuting to Wall Street North, of course, having issues this morning, most of them probably going to be working remotely. The big challenge is going to be what to do with all of this snow. And what you usually see in New York is that they get these snow melters, dump all that snow in, and then it becomes water and goes straight into the drains. But it's going to take quite some time. In parts of this city, as I said, you saw 12 inches, you saw 13 inches of snow, and there's really not much to do besides just playing it, take your dog out and have some fun. Of course, the schools here in the city are closed, and for good reason. Buses would not be able to make it in this snow, but it is beautiful here in Central Park. I mean, picturesque, and I've seen some snowmen. I did not see a sled, and so I'll leave that to the experts, and I'll just stand here and continue to tell you about the conditions.
Well, it looks like you're enjoying yourself, Miles, so thanks for taking a beat and taking a break from your very, very busy morning. Miles Miller there in Central Park this morning.
You can't go out and build a snowman, though, if the mayor has decided that classes will pivot to online instruction. I have a problem with this because I grew up in New York, and you get so excited when you see your school district across the banner of the TV screen. And if you miss it, you have to sit in front of the TV, and this is a morning where you're allowed to watch TV in my house because you need to know whether or not school's closed. And school's closed, that's it. You're outside sledding, snowman building, shoveling elderly individuals, a sidewalk to make some money.
Yes.
Then you have hot chocolate. All of this is being ruined by remote learning. I'm sorry. It had to be said.
I almost misheard you. I thought you said shoving elderly individuals, but shoveling their driveways. Okay.
Yeah.
Appreciate the clarification. Let's talk about the energy system. U.S. natural gas jumping almost 20%, topping $6 for the first time in nearly 4 years. Joining us now, Stephen Short of the Short Group. Stephen, welcome to the program. Can you just sort of frame for us the amount of pressure that's been put on the energy infrastructure in this country in the last 24 hours?
We're at unprecedented levels right now. And what was really interesting was that 2 Fridays ago, the Friday before the MLK long holiday weekend, is just how complacent the market was. And now the market is paying for that complacency. So let's frame this out now. So 2 Fridays ago, we had the weather forecast that we saw extreme heating demand in Chicago, your largest gas furnace market, spreading all the way east up into New England, an area that was going to cover major production regions, Appalachia, which accounts for about 1/3 of U.S. production of natural gas. And yet, even with that known out there, the market was completely complacent. On January 16th, spot gas traded within 0.6 of a penny of $3. March gas, the last winter contract, traded at a discount to April, a spring contract. And most importantly, realized risk was higher than implied risk. That means to say that options traders were discounting this event. Now we come into the weekend, the MLK weekend, the weather forecast shifts. Now all that deep freeze goes further south, all the way down to Texas, Louisiana. So now 3/4 of U.S. production is now under stress. So you're looking at a market that was completely complacent at the coldest time of winter, and now they are scrambling for BTUs. What we saw today is PJM, the largest grid operator, went ahead and told utilities, you have to secure your gas supply, not just for the normal 1 day ahead. They have to go ahead now and secure it for 1 week ahead. So they are now forcing utilities to buy gas at the worst possible time, and utilities are paying up for that gas.
Why did they discount this event so much, Stephen?
And that's a great question. Historically, if we look back since the NYMEX started trading natural gas, the contract in 1990, historically, by this point in the winter, we've already seen the high price for spot gas. Typically, we see the highest price paid in about the first 2 weeks of December. And this is generally because we go into the winter, you have a run-up, we don't know what the winter's going to look like, but by December, you have a feeling of where we're going, where supply is, where demand is, and then prices tend to drift off through the winter, even during cold winters. So the market was extremely overconfident in history repeating itself to the point where large institutional investors, when you look at the Commitment of Traders report, under the category of other reportables, their position right before this cold front was they were short 2 NYMEX contracts for every 1 contract they were long. So they were extremely vulnerable. So you have large speculators that were completely just underwriting or just not assuming this was just going to be the event it has turned out to be. Now that we have the weather forecasts coming out, not only is it cold now, the deep freeze is here. If you look at the NOAA chart going out to the third week of February, what you're seeing now is cold sticking around from Chicago out to the east. So this cold doesn't look to be going away. And this is very important because, as I said before, last week, they were undercounting the risk in the February contract. Well, the February contract expires Wednesday. There's this automatic assumption because February is trading at such a large premium now to the March contract, which turns prompt on Thursday. There's an assumption, oh, well, when the cold passes, the market's going to come crashing down. Don't count on it because look at March. They're now looking at realized risk, historical volatility, what we've actually seen this market price variance, as opposed to what options traders are now pricing. They're still underpricing a weather event for the March contract. So we're certainly not out of the woods at this point.
That's a big move, Stephen. Appreciate your time. Stephen Shork there of the Short Group. Stay warm, sir. It's good to see you. Front month futures above 6 for the first time since December 22. That is a major move.
Historic rally. And Stephen says that this is not going to crash in February. This is going to continue what he thinks in March. And you already see the premiums being paid up by the industries. What does this mean for the everyday consumer? Higher prices potentially on electricity bills.
Yeah, things are getting expensive and getting even more expensive. Let's give an update on stories elsewhere this morning. Here is your Bloomberg brief. A massive winter storm hitting the US East Coast on Sunday, bringing heavy snow and ice, straining electric grids and grounding thousands of flights. More than 1 million homes and businesses across the US losing electricity. Elsewhere, Senate Democratic leader Chuck Schumer vowing to block a massive spending bill unless Republicans strip funding for the Department of Homeland Security. Schumer's announcement coming after an ICE agent shot and killed a US citizen in Minnesota during protests this weekend. And finally, Samsung is close to getting certification from NVIDIA for its AI memory chip HBM4. Sources telling us here at Bloomberg the company entered the final qualification phase and is preparing for mass production in February. And that right there is your Bloomberg brief. Up next, the return of the Sell America trade.
I would kind of describe it as a quiet quitting of U.S. bonds.
Diversifying away from the U.S. and also from the dollar is a quite dangerous bet.
If your fiscal house is not in order, the bond vigilantes can come out and extract their price.
Up next, we'll catch up with Bob Michael of JP Morgan from New York City. You're watching Bloomberg Surveillance.
What's great about it is it's a well-developed gaming ecosystem, right? So, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller, and it's things like, you know, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, you know, basically are gonna like unleash this with a bunch of creators, and they're gonna go figure out stuff that we didn't even imagine that they can do with that interactivity.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays, only on Bloomberg.
Bringing you up-to-the-minute financial and geopolitical news whenever and wherever it happens. I'm Francine Lacroix in Davos, Switzerland, and this is Bloomberg.
Here's a snapshot of the price action so far this Monday morning. Good morning to you all. Equities are down by about 1/10% on the S&P, down 1/4 on the Nasdaq. Bond yields just a little bit lower, down a basis point on 10s to 4.21. Under surveillance this morning, the return of the South America trade.
I think there is going to be some marginal move away. I would kind of describe it as a quiet quitting of U.S. bonds.
Diversifying away from the U.S. and also from the dollar is a quite dangerous bet.
The US bond market is still the most liquid market in the world, and it is still the closest thing to a risk-free asset that there actually is.
If your fiscal house is not in order, the bond vigilantes can come out and extract their price.
So here's the latest this morning. Treasury volatility fading after geopolitical tensions triggered a massive sell-off in US government debt. Bob Michael of JP Morgan Asset Management writing, we do not see evidence of a Sell America version 2.0 trade. Joins us now for more. Phrase massive sell-off, it lasted like 5 minutes and it wasn't that large. The massive sell-off was actually in the Japanese debt market. And Bob, this morning, I'm more intrigued by how stable the bond market is, not how vulnerable it is. It's impressed me how stable it's been, given the convulsions we've seen in places like Japan. Bob, what explains that?
Good morning, John. When I look at the bond market, I think it's about as perfectly priced as you could have a bond market. Look at the 2-year. It's right at the Fed funds rate, which is perfect. Look at the slope out to the 10-year. It's 50 to 60 basis points. That's textbook. Look at where we are in the U.S. economy. We're gliding along at trend, maybe a little bit above trend. When you look at credit spreads, they're pricing that in. I don't know what more we could ask from the U.S. bond market. I like it here. I hope the Fed stays on hold. This will give investors plenty of opportunity to get into a bond market that's fairly priced with a lot of yield in it.
So, Bob, it depends where those investors are coming from, because, yes, we haven't seen the South America trade of the bond market, but we've seen it in foreign exchange. Bob, how do you consider the moves we're seeing in FX with your approach to, say, fixed income?
Well, this is a very different FX market than March to August of last year. March to August of last year, we were working with our non-U.S. client base nonstop, thinking about alternatives to dollar exposure. We're not seeing any of that right now. Yeah, there's discomfort with U.S. policy. There's some dissatisfaction. But in the end, our client base is looking at the breadth and depth of the U.S. markets and deciding they want to be there. The kind of movements we've seen have been market participants pushing FX around. That can only go so far.
Bob, what do you make, though, and I know it's small, but there are some countries that want to divest away from the United States, including dumping treasuries. If we have more geopolitical or political risk from this administration, can you see that becoming a trend?
It's possible. I think what we've seen so far can be politely termed as decorative relative to the breadth and depth and size of the U.S. Treasury market. I think the Treasury and the administration would work very closely with the holders of large treasury positions. So I'm not concerned. Listen, for several years now, market participants have been looking for an alternate reserve currency to the US dollar. You're seeing that in gold now. It makes sense. But you know what? We're sitting on a diversified bond portfolio, little bit of investment grade and high yield that's yielding 6%. Gold's got to go up 0.5% a month from here. Otherwise, you're better off in bonds.
Gold right now is up by about 2%, still a massive move over the last 4 years or so. I think, Bob, it's worth, every time we have this conversation about selling US fixed income, it's worth pointing out that overseas holdings of treasuries at the back end of last year hit the highest on record. Bob, I understand where the fear is coming from, and we can get into that now. The fear is coming from this idea that maybe some of the money that was traditionally invested into US assets will go home. And not just because of what's happening in America, but because of what's happening domestically elsewhere. Bob, that's why Japan's important here. The great repatriation trade that people have been talking about over the last 12 months. Bob, any sign it's developing? As yields in Japan get to higher levels, is the money coming back home into JGBs?
So last Monday, while you guys were on a skiing jolly, I was back at the coalface, a lot more worried last Monday than I am this Monday. I feel there's some sense of calm that's been restored to the markets. So I can live with where yields are in Japan currently. When you look across the global spectrum, it's hard to find fiscal discipline anywhere. Of course, that's going to worry some central bankers. Of course, that's going to worry bond market participants. What we've seen in Japan is a wake-up call that bond vigilantes are back. There's only so much that we're going to put up with.
What is it that's unique about Japan, Bob, where they can live and thrive? What's unique about that particular market that is going to keep elsewhere insulated?
Well, it's been off on its own for coming on to 30 years now. It lived with zero and negative interest rates for a long time while the rest of the world went through the normal cyclical pattern. It's heavily controlled by both the MOF, the Bank of Japan, and the city banks. So there are things that can happen in Japan that can compel buying of the long end of the curve to stabilize things.
But Michael, just before you go, was Jamie Dimon also on a ski jolly last week? Just one clarification, or was he working?
Ooh, savage.
He's the hardest working banker I know.
Of course he is. Well said, Bob. I'm just there for you in your corner, making sure you say the right things. Bob Michael of JP Morgan Asset Management. Bob, thank you.
Yeah, it's interesting how, of course, we, the journalists, were busy skiing, but of course, the CEO of his bank is very busy, having very important meetings, telling off. You know, he was kind of telling off Washington in a polite way, but he did his, talking to the policymakers.
Bob's point about Japan last week was of concern, I think, for Japanese policymakers, and I'm not sure they've put that concern to bed just yet.
They haven't. I mean, they have a snap election, and they're going to shore up their grip on power, and you're going to see a lot of fiscal impulse. You know who else was nervous what was going on in Japan last week, and you heard him talk about it at Davos? The Treasury Secretary.
Yeah. Which is why some people are thinking about joint intervention, possibly. At least that's what's keeping things settled this morning, with dollar yen back down by what? We're negative 1%, back down to about 154 this morning.
Right. When the New York Fed comes out and does these rate checks of individuals who might want to buy, that is basically the precursor for intervention. And that's where the market, at least right now, is thinking potentially we could be headed.
Are we the only people in Midtown Manhattan?
I think so.
Bob was at home.
Yeah. Unbelievable.
Getting things done.
Getting things done. Maybe he's on his ski.
He's on his ski jolly. Yeah, he's on his ski jolly. At home, in the backyard. Up next on the programme, Julie Beale of Kane Addison Rudnick, Savvy Sith of Raymond James, Seth Carpenter of Morgan Stanley, and Mo McHugh of PSP Growth from New York. The third hour of Bloomberg Surveillance, up next.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
After 20 years of financial repression, we're back to live markets.
The market's probably going to take off again.
We still see a lot of upside opportunity in U.S. markets.
I wouldn't really bet against the U.S.
The U.S. bond market is still the closest thing to a risk-free asset that there actually is.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Back-to-back weekly losses on the S&P 500. More so far this morning. Live from New York this morning. Good morning, good morning. The third hour of Bloomberg Surveillance starts right now. Your price action looks like this. We're down about 1/10 on the S&P, down by 2/10 on the NASDAQ. On the Russell, the small caps down by 0.15. In the precious metal space, a massive move. Gold through 5K for the first time ever, up by 1.8%. Silver up by even more, up by 5.6. A stacked week ahead, including a Federal Reserve interest rate decision, an address from the President of the United States, and a lot of tech earnings from Microsoft, Meta, and from Apple.
A huge week ahead. You have to think of what's going on right now. The so-called potential debasement trade is backed. But Jonathan, to your point, you've been very good about bringing this up. It's in the dollar, but hasn't been in treasuries. This morning from UBS's Paul Donovan, politics overwhelms sentiment. And that is what we are seeing in gold, whether it's inside the United States and the domestic policy that's happening right now and the whole country on edge and potentially a partial government shutdown starting this week at the end of the week, or what's going on in the geopolitical space, central bank buying, the fact that geopolitical tensions are also heightened. All of that is driving into the precious metal.
Not much drama in the U.S. bond market right now. Yields down by 2 basis points, 10s at around 420 so far this morning. How much drama will there be in the news conference this coming Wednesday with the chairman of the Federal Reserve, who would typically not engage in questions about central bank independence and policy coming out of the White House, but things seem to have changed. for Chairman Jay Powell?
He might flirt with some of those questions this time as he hasn't in the past, also because he knows his chairmanship is up. He also knows he has the backing right now. What it feels like, at least in Congress, them pushing back at the White House, Senator Tom Tillis saying to us, it's not the person, it's the process, and he is not going to move ahead with whoever the administration decides to be the next Fed chair until what's going on with this probe from the DOJ, there's a bow on it, and we have some closure on it. So I think there's going to be a lot of questions potentially we could see the chairman entertain at this press conference.
If it's super icy in Washington, do they do that meeting remotely? How does that work tomorrow?
Come on, by Wednesday. I will say, D.C. is terrible with the snow.
Right.
They get like a centimeter or an inch, and, you know, everyone just, you know, full on shut down. You can't work. It's, you know, it's a tiny city. Like, come on, you can get it together. But yeah, I think by Wednesday, let's hope that they're back in the office.
We got to put some numbers on this big freeze. This came from Aditya Bharvev, Bank of America. I shared it earlier on this morning. I'll share it again for you, just in case you missed it. The impact of Fern may drag down Q1 GDP by anywhere between 0.5 to 1.5%.
We have to think who's at work today, and then who's going out and getting lunch, and who's going out and getting coffee. Everything pretty much to stopping to a standstill. Every single guest we've had that was supposed to be in studio is now getting a little bit of an insight of what their house looks like. They are working, but they're working remotely. When you look at how many inches we have gotten, Central Park more than 11 inches, Fordham more than 13 inches, Newark 11 inches, JFK, which is why you're seeing all the flight delays, close to 11 inches. Most flight cancellations since COVID, and that number this morning just keeps up and ticking after more than 11,000 flights canceled over the weekend. It's astonishing.
Big disruption in the last 24 hours. Equities just about unchanged. We're down by 1/10 of 1%.
But we're here.
Some breaking news just to get to in just a moment. Coming up this hour, Julie Beal of Kane Anderson Rudnick with stocks looking to bounce back. Seth Carpenter of Morgan Stanley previewing Wednesday's Fed decision, and Mo McHugh of PSP Growth with earnings from 4 of the Magnificent 7 on deck. We begin this hour with some breaking news from NVIDIA. Bloomberg's Ed Ludlow has more. Hey, Ed.
Yeah, good morning, John. NVIDIA is going to invest an additional $2 billion into CoreWeave by purchasing common stock at a price of $87.20 a share. Stock right now in pre-market up. Bouncing around, actually. I think there might be some algo moves going on in that. You know, when we spoke to NVIDIA CEO Jensen Huang last night in a Bloomberg interview, he said this is simply about confidence in CoreWeave, CoreWeave's plan, CoreWeave's management to build out capacity, accelerate data center capacity. But we asked him, well, isn't it circular financing? And his answer to that was very simply, it's not circular financing. It would be ridiculous to call it that, because it is a tiny portion of what we know CoreWeave is going to have to raise if they're able to build out data centers to a level where they can meet the demand that's already out there. He also said that it's basically consistent with the investments they've made all over the AI stack at a same level, and pushed back pretty hard on that. But unsurprising that CoreWeave, in reaction, had a big jump in the pre-market.
What do the investors that you speak to every single day call if it's not circular financing, Gad? Doesn't it just look and smell like circular financing?
You know, like they would say we have to discern between the different deals. In some of the investments NVIDIA makes, they are explicit that it's not a quid pro quo. In other words, the startup they're investing in can take NVIDIA's money, but they're not required to use NVIDIA chips. In this case, CoreWeave now up more than 9% in the pre-market. There is a technology arrangement here as well. So one of the other big pieces of news, you see like AMD and Intel under pressure in the pre-market, is NVIDIA is going to start offering its CPU, not its GPU, its CPU as a standalone offering, and CoreWeave gets to be first to deploy that. You know, it's hard when it's both a technology and financing arrangement to move past the circular argument.
Big move from CoreWeave, up 9–10% in the pre-market. Ed, are you seeing the other chip makers take a similar approach with other neo-cloud makers?
Yeah, you know, well, neo-cloud makers also, you know, the AMD, the distant number 2 behind NVIDIA in the market for AI accelerators, is doing exactly the same thing with the frontier labs as well, right? Going directly to OpenAI, saying we're collaborating, we're going to agree on a capacity deal where the capacity is based on AMD chips specifically. What, to its credit, CoreWeave has said is consistently the users, the customers of CoreWeave want NVIDIA. So even if there are other products out there in the marketplace anyway, it's NVIDIA that they keep asking for. And it's not just the latest generation of NVIDIA accelerators. I should have got this terminal chart ready, I apologize. But if you look at older generations, we have this on the terminal Hopper, for example, those obsolete older generations are seeing their rental prices go up a lot at the moment. Utilization's really high. That's the story still, whether AMD likes that or not.
Ed, good to see you. Looking forward to the programme and the coverage of this story a little bit later on Bloomberg Technology. Ed Ludlow there. Let's stay on the markets. Judy Beale of Kane Anderson Rudnick writing, I think stocks going up will require real earnings growth and not just from the lucky few, and it could create more volatility. Judy joins us now for more. Judy, welcome to the programme. I just want to build on what Ed was talking about there, that breaking news that NVIDIA is investing $2 billion in CoreWeave Class A common stock. Is that circular financing? Does it look like circular financing to you?
We could get you a little bit.
Absolutely. When you think of it, genuinely, it's a little bit like, you know, these trust fund kids being bolstered up by their dads and being like, I am a producer, right? It's hard to take it super seriously when you have Daddy Jensen supporting you and thinking that's going to be enough to kind of propel this market forward. You really need to have a little bit more growth and underlying economics, and I think that's what makes everyone nervous. The idea that you're going to bolster your argument as Jensen and say, we've done a whole bunch of these, well, that doesn't tell you that it's not circular financing, you know, and that the structure of the deal isn't circular financing also doesn't make a lot of sense to me.
Well, Jensen Huang told Bloomberg that he thinks this idea is ridiculous, basically talking about that they have the confidence in these companies. It's only a small percentage for them, the amount of money that they ultimately have to go raise. But when you see deals like this, what does it make you think of the AI trade writ large?
I think that the problem that we're coming to is that we still don't have a lot of clarity on, firstly, whether it's going to be the most important thing to have the large language models themselves, or are they going to become commodities? I think that's concern number one. And the second thing is, what are going to be the underlying economics if adoption is not as strong as people are hoping for, right? We continue to see studies of companies trying to do pilots that are not quite working the way that you would want, and that is going to slow adoption, right? It's not good advertising if everyone is saying, yeah, I mean, it works. It saved my employee about 15 minutes every day. So that's good. That's good. We should spend, you know, billions of dollars for that.
You also say that AI potentially, you have this question mark whether or not it's to blame for labor market softness. Are you seeing that play out right now in the business space?
I just don't think that that's really to blame just yet. I think the productivity boost that we saw coming out of last year was more a function of actually getting labor markets where they need to be and much more right-sized. We had so much overhiring that happened in the pandemic when there was this grab, this mad dash for any kind of labor. You could work at home with your dog on your lap. It was no problem. We just needed you in the seat. And I think businesses have actually kind of digested a lot of that and started to make the people that they hired much more productive. I think AI is going to be a massive productivity tool. It's going to completely change the nature of work. But as it stands right now, outside of, say, probably coding, it's probably not delivering on the productivity growth that we're hoping for. I really believe in it long term. I probably don't think it's in the here and now if Copilot's making this many mistakes.
I think it's fair to say there's a lot of people working with dogs on their laps today.
I was just thinking of Tom King because he has that little fluffy white dog.
TK was doing that from home on TV through much of the pandemic with both dogs.
Yeah.
And was not hiding it. Judy, let's talk about some of the moves we've seen in the equity markets so far. Small caps, the outperformance of small caps so far this year, and whether you think that appropriately reflects the amount of GDP growth you think will be stimulated by tax refund season at the early start of this year.
Yeah, I think that it's really hard to have any kind of negativity on the U.S. market, at least for the first half of the year, when you have this just tsunami of stimulus that's coming through fiscally. I think part of what people's enthusiasm for small caps is they've really been left for dead. And there's this recognition that there are certain parts of the more speculative small caps, kind of quantum and biotech, that have people the most excited. I would say that you probably have a good outlook for the U.S. economy, but I would be in higher quality tiers of small cap rather than focusing on, you know, your lowest quality, highest beta. There should be a reversal. We haven't seen kind of this level of move away from quality and small cap in quite a while. You have to expect the pendulum's going to swing the other direction.
Judy, is there something that small caps are insulated from that large caps are exposed to? We keep bringing up this question as we look down to Washington and some of the headline risk. Is there a story there?
Conceivably, you have to think a little bit about the mix of the businesses that are in the small cap index. So you have less technology than you used to. You have more banks and real estate. But the thing is it's hard to really talk about banks and real estate without talking about interest rates, and interest rates are inherently an international thing. So it's really hard to say whether they're completely divorced, because many of the drivers in small caps are really about interest rates. So I would say, broadly speaking, yes, there are places where you can be more insulated, but we have a very global economy, and a lot of these factors are pushing these stocks around as well.
Judy, good to see you, as always. Judy Bill there of Kane Anderson Rudnick, looking ahead to some of the tech earnings we get this week. Meta and Microsoft on Wednesday. Thursday, we get Apple. Let's get you an update on stories elsewhere this morning. Here is your Bloomberg brief. CoreWeave. Shares rallying following a $2 billion investment from NVIDIA. The chip maker announcing it will begin selling CPUs as standalone products. CoreWeave will be among the first to deploy them. NVIDIA CEO Jensen Huang telling us here at Bloomberg, the move reflects growing confidence in CoreWeave's business model. Elsewhere, a powerful winter storm blanketing much of the U.S. East Coast with heavy snow and sleet. More than 1 million homes and businesses across the U.S. losing electricity, and the airlines cancelled the most flights since the COVID-19 pandemic. And finally, the Trump administration investing $1.6 billion into USA Rare Earth in exchange for 10% stake in the mining company. USA Rare Earth is also raising $1.5 billion in private investment to accelerate domestic heavy rare earth production. A stock is up by close to 20%. That is your Bloomberg brief. Up next, the morning calls plus Savvy Sith of Raymond James with airlines looking to get back to normal after massive cancellations. From New York City, you're watching Bloomberg TV.
Politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
The banking sector has had some strong earnings coming in. That all of a sudden throws some potential cold water on what could happen there on the earnings front. So the concern would be that while you have a reasonably good earnings picture, which we think we do right now, that anything that looks like it's going to threaten that earnings picture is going to be problematic, because that is what is going to drive equity prices
That was Sarah Hunt of Alpine Saxon Woods joining the programme a little bit earlier on this morning. If you're just joining the show now, welcome. Equity futures right now in the S&P just about unchanged. The upper inbound 1 hour and 14 minutes away. That's the price action. Let's get you some morning calls. First up, KeyBank raising its price target on Alphabet to 360, citing stronger cloud growth and profitability. Elsewhere, Rothschild & Co. Redburn upgrading Meta to buy, saying its upside potential outweighs any near-term risks. And finally, JP Morgan raising its price target on Apple to 315, expecting better than expected iPhone demand and lower operating expenses. They're your morning calls this morning. Let's turn to the weather. Nearly half of the United States is experiencing dangerous winter conditions. More than 800,000 homes and business are without power. Bill Waddell of AccuWeather is in Greenville, South Carolina, and he joins us now for more. Bill, welcome to the program. The worst of the snow behind us. How dangerous is the weather going to be through the next several days?
Yeah, good morning. It is the temperatures, the coldest air so far this winter on the backside of this storm. That's the biggest safety concern over the next few days for the hundreds of thousands of people across the country who are without power and without heat. Here in Greenville, South Carolina, a lot of people waking up to this, about an inch of sleet and ice all over the place on the sidewalks and the streets. And then we had freezing rain that fell on top of it. So you can imagine, especially for people who live down hills like this one all across the South and Southeast, they may be stuck at home for several days. And when we're talking about the widespread impacts of this winter storm, it's really staggering the economic effect it's having. More than 200 million people impacted by this storm across more than 24 states. And AccuWeather experts estimate that the preliminary total damage and economic loss for this winter storm, $105 billion to $115 billion. I mean, that is a lot of money we're talking about here. With the travel shutdowns, we were in Atlanta earlier for the storm, where one of the busiest airports in the world had thousands of flight cancellations. And then you think about all of the business, all of the commerce, all of the rail disruptions, and especially along the ice storm section, the southern side of the storm where there are extended power outages. Businesses could be shut down for days. And if they don't have emergency generators, or if those generators fail or run out of fuel, then we're talking about goods, groceries, pharmaceuticals that go bad that can't be refrigerated. So very impactful storm. And just to put this in a big picture context, AccuWeather experts say this winter storm is the most economic impactful U.S. weather disaster since last January. That's when we had the California wildfires, causing an estimated $250 billion to $275 billion in total damage and economic loss, according to AccuWeather. So it's been about a full year since we have seen a large economic U.S. weather impact like this one. Remember, we did not have any hurricanes making landfall in the U.S. this past season.
Wow, that's some context. It's also a messy commute, Bill, here up in New York when it comes to what's going on the Long Island Railroad and also some of the other trains right into, the main metropolitan area of New York City. What does the rest of the week look like, given we're going to get cold temperatures?
Absolutely. It's going to be tough. The cleanup, the plowing, all of that is really slowed because of the really cold Arctic air that is surging in on the back end of this. The Midwest, I mean, AccuWeather is forecasting real field temperatures 30 to 60 degrees below zero at times this week. So big safety concerns, even for people who do have power and heat, who are outdoor workers. They are dealing with trying to clean up these icy streets and the snow. But again, that cold is going to slow down the cleanup process here, and that's why we're saying that economic impact, it is going to linger for days, and of course, in the hardest hit areas, weeks or longer.
Hey, Bill, good to see you. Stay warm, sir. Thanks for catching up with us. Bill Waddell there of AccuWeather. Let's turn to the airlines. The storm leading to the most flight cancellations since the COVID-19 pandemic. Savi Sith of Raymond James joins us now for more. Savi, welcome to the program. As you look across the airlines, the airports across this country in the last 24 hours, who was hardest hit?
Hey, good morning. It's fairly broad-based. Obviously, to begin with, you saw American getting hit just given what happened in Dallas, but all the airlines are having significant cancellations. However, what I would kind of remind is the nice thing of a winter storm, as much as there could be something nice about it, is that you do see it coming, unlike summer storms. And so I would chalk up a lot of Sunday's cancellations, which were significant for airlines, making sure that the aircraft and crew are in place so that once the storm passes, they can get back to flying relatively quickly. Now, there are a high level of cancellations today, but nowhere nearly as many as there were on Sunday. So, as long as folks can kind of get out of their houses and get to the airports, we expect the operations to start resuming because airlines had some early warning and were able to prepare ahead of time.
Well, 3,600 and counting for today, Savvy, when it comes to the cancellation. So when do you think we truly will be back to quote unquote normal?
Yeah, what we're seeing today is a little bit similar to what you saw on Saturday, so elevated. We'll see. It really depends on how the winter progresses and getting crews to the airports. But I suspect by midweek we'll be back to normal, if not already by tomorrow.
Savvy, I don't want to make this worse for the airlines, but it potentially could be a perfect storm this weekend. What happens if the U.S. government does shut down?
We'll have to see. You saw what happened last time. What I would say, kind of from the lessons learned last time, is that demand didn't have an impact. The impact really came once you got to the end and the FAA kind of required cancellations. I think that's when you really started to see demand being impacted, and maybe even a little bit before that. Once the shutdown was about a month in, I think you started to see a little bit of impact, but at least early days, there isn't much of an impact. You do have TSA agents and FAA workers, really showing up, even though, they might miss a check in a week or two. So hopefully we don't get a shutdown. Hopefully it doesn't, if we do get one, it doesn't last as long as it did last time and doesn't come to the brinkmanship that it came to last time.
Let's finish on an airline that's really shown up, not in the last 24 hours, but in the last 12 months. This from the Wall Street Journal, Airline of the Year, Southwest. Savvy, what is Southwest doing right?
Yeah, I mean, I think they learned their lesson after the winter storm of in December 2024. And really, or 23, and really kind of improved and invested in their operation. They probably also benefit a little bit from being in the right geographies, but more so it is what Southwest has done to really focus on managing the operation. And I would kind of point out that they did this, had this performance at a time that the airline was going through a significant change in, their product offering and strategy. So definitely a commendable result there.
The performance gap in the stock market between a Southwest and American Airlines couldn't be wider. I mean, Southwest was up by more than 20% last year, and American Airlines was down by more than 10%. Savvy, what is American Airlines getting wrong? And incidentally, by the way, they are joint last in this survey, this Wall Street Journal Airline Award of the last year or so. They came joint last. What is American Airlines doing wrong?
I mean, I think American also had the unfortunate, incidents that hampered them early on last year. So that also had a hit on American. But I think you are seeing them making some changes this year. They announced it in December about kind of adding a little bit more, schedule cushion so that they can make connections. They are trying to do that. But yes, definitely on the operations side, both kind of internally, what they could control, and then externally what they couldn't control really hurt them last year. In terms of kind of stock performance, I think, again, Southwest has come up with a very credible plan on turning around their earnings, and you're starting to get early signs that maybe they can execute to that. Still a lot of skepticism in the market, but I think American really needs to come up and show that they can do something similar this year as well. There are kind of early signs that they're trying to do that, but they really have to kind of put up the numbers.
They've really got to step up big time. Savvy, good to see you. Savvy Sith there of Raymond James on the airlines and travel and the situation of the past 24 hours. Up next on the programme, we'll catch up with Seth Carpenter of Morgan Stanley, previewing Wednesday's Fed rate decision, plus Danny's back with your morning movers. CoreWeave shares surging after a $2 billion investment from NVIDIA. CoreWeave higher by close to 10% in the pre-market. Live from New York City this morning, good morning. You're watching Bloomberg TV.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
60 minutes away from the opening bell. Equity futures slightly negative, just about unchanged on the S&P so far. We're down about 0.2 on the Nasdaq, going into a big week for earnings from big tech. That starts on Wednesday into Thursday. So we count you down to the cash open. Let's get you some single names, some morning movers. Here's Danny with more. Hey, Danny.
Hey, John. Let's start with that big move in gold, surpassing above $5,000. That's moving the miners this morning. Newmont, those shares up 3.8%. Barrick Mining up 3 1/3%. Both of those will open, likely close at new records too, after already reaching new records on Friday. Elsewhere, some breaking news coming in the last 30 minutes. That not OpenAI, you'd forgive me for being mistaken, NVIDIA is investing $2 billion in CoreWeave. It's already invested in CoreWeave. This just adds to it, part of its mission to get 5 gigawatts of AI energy running by 2030. Just to put this in context, that's only 2% of what CoreWeave even wants to spend on its infrastructure. CoreWeave shares up 9%. NVIDIA, little change this morning. Finally, another deal to wrap things up. The U.S. government confirming earlier reporting and announcing that they are making a $1.6 billion investment, a non-binding agreement into USA Rare Earth. They're also getting over $1 billion in a private investment too, hoping to speed up the development and digging out of the ground of those rare earth metals. So those shares soaring just under 20% in the pre-market trade, John.
Big move again. Danny, thank you. Losing count, and we're all asking who's next, because you have to imagine someone's next.
Intel, Lithium Americas, there have been half a dozen companies that this administration has gone out, taken equity stakes and saying this is because of national security. And yes, when you see a company, especially with the words rare earth in the title, you can expect other similar companies that have anything to do with either processing those rare earths, finding those rare earths. They are going to potentially have an eye of this administration.
To your point, they've made themselves easy to find, right? With a name like that one. That's the latest on that front. Let's turn to the Federal Reserve. Traders looking ahead to the first central bank decision of the year. Joining us now to discuss is Bloomberg's Enda Karen. Enda, welcome to the program. This one with some additional spice potentially in the news conference, given Chairman Powell's more assertive posture towards the White House.
Indeed, it's going to be a lot of policy and a lot of politics, John. On the policy side, as you know well, they're not expected to move, but still a lot of interest around any fresh commentary on, are they any closer to the neutral rate, for example, and where are they now in the labour market? Any hint of confidence that they think the labour market may have stabilised? But really, it's on the political side where all the folks will be in that press conference. Given the Department of Justice subpoenas on the Fed since the last Fed meeting, Chair Powell will be asked about it. He'll be expected to comment. He probably won't dive too deep into the legal side of that, but it will be interesting to see whether or not he doubles down on his broader commentary around this being an attack on the independence of the Federal Reserve. So like I say, lots of policy and politics, but I think more interest in the politics this week.
Well, Enda, let's stay on the politics and the process. You're tracking a horse race, I'm sure. Who's in front, who's behind, with regards to the race to replace Chairman Powell. Now, Anne-Marie and I were talking to Senator Tillerson the last week or so. Do you think people are underestimating just how long this could actually take to get that person, whoever it might be, nominated and confirmed down in Washington, D.C.?
I think that's a real complication. John, it's not a complication many people saw at the start of the year. I mean, to your point, no matter which name the president nominates, whenever that comes, and they've said it's coming soon publicly, and our colleagues in the White House have been reporting that, BlackRock's Rick Reeder certainly seems to have gone ahead of the pack at the moment. But whichever name comes out of that pack, they are going to have to somehow get through the Senate confirmation process. And as you mentioned, Senator Tillis has said he will not budge, he will not approve any Fed nominee until this DOJ threat against the Fed is fully resolved. And of course, that begs the question, what does fully resolved mean? When do we get to that point? How do we get to that point? And of course, there's a whole other dynamic going on in the background then as well around, does Chair Powell stay in that committee, keep his seat there? What would that mean for Governor Myron, for example? So even though we expect to get a headline announcement on a new Fed chair at some point soon, there's going to be a lot of pieces of the jigsaw in the background that still haven't been put in place, and there's going to be a lot that has to be worked out in this, John.
Andrew, appreciate it. And Karen down in Washington. Anne-Marie, this is so much messier than it needed to be.
And if you know that the Senate is going to be a potential hurdle and they're not going to budge until the DOJ investigation is wrapped up, then potentially why would you make the announcement so soon? Which is why the president keeps saying a week, 2 weeks, but he's been saying that literally for months, which is why I think potentially this can drag on for a lot longer than this administration was expecting. And you have to think the Treasury Secretary is pulling out his hair, because this was supposed to be swift.
Let's stay on the Federal Reserve and we'll talk policy. Seth Carpenter of Morgan Stanley writing, we push expected Fed cuts to June and September. Lower unemployment suggests inflation will play a larger role in rate decisions. Seth joins us now for more. Seth, welcome to the program. This is something of a theme for you and the team over at Morgan Stanley, so let's get into it. It was the labour market driving decisions at the back end of last year. How important is the other side of the mandate going to be in the back half of this year?
One of the key things to remember is the Fed seems to have fairly squarely come down on the view that the inflation that's coming from tariffs is temporary, that it's going to fade on its own. And so we still think there's more of that tariff-driven inflation to pass through the first quarter of this year. And then inflation should peak and start to come down. And for us, that really will be critical for the Fed. If that plays out along those lines, they'll get confirmation that the tariff-driven inflation was temporary, and then they'll start to ask themselves, okay, how soon can we pull policy down to something that's neutral so that they're not getting in the way of the economy growing, but they're also not necessarily stimulating things, because ultimately there is this tension that the spending data has been reasonably solid, but it's the employment data that have been soft. They pulled the policy rate down a lot in response to the soft employment data. Things still look like they're chugging along. Our forecast is that even if you get choppy data in the first quarter, the underlying trend is there and things will keep chugging along. And so I do think they're in a holding pattern, given the strength in the economy, waiting for inflation to decisively start to move back down towards target.
Seth, it's interesting we're talking about this sort of trend line back towards target, these disinflationary forces. At the same time, this phrase has come from you and the team, I believe, in the last few weeks, and that phrase is overheating, the risk of overheating. How great, Seth, is the risk of overheating the first half of this year?
I mean, I think it's something we have to pay a lot of attention to. The underlying strength of the U.S. economy is there. We are seeing clearly spending on the household side from the top end of the income distribution. That's been quite strong. We're seeing the CapEx spending driven by AI. That's been quite strong. I think the real question becomes, what happens with the labor market? It's been soft. Does that start to catch up to the aggregate spending in the economy? Do we start to see even more spending? Maybe because we have underestimated just how much the fiscal package from last year contributed to spending this year. I think there's a real consideration there that aggregate demand is just fundamentally stronger, and that could over time lead to overheating in the economy. The unemployment rate, we got one reading where it ticked back down. That was a surprise for us. Was that noise or was that signal? If it's signal, then I think the overheating risk is there.
If we are thinking about potentially overheating in this economy, what would it mean if we get a Fed chair nomination that is very close to this administration?
I mean, I think there's a lot of considerations. The first thing to keep in mind is you all were talking before about the different names. I would just say, if you think about all of the names that have been floated publicly and consistently, none of them is particularly far outside of mainstream thinking. None of them is sort of a completely unusual name who thinks about the world in a fundamentally different way. That's one point. Another point is decisions on policy really do get made by a committee. And this committee is, they're torn right now about whether or not cut at this meeting, how much to cut, all of those sorts of things. But they're not torn about going to 0 versus going to 10%. So the committee itself is pretty solidly in an orthodox place. What that means is even a chair coming in who traditionally has had a lot of influence on the committee, you're not going to be able to get a massively different outcome for policy than what the committee would have done otherwise, unless and until you get such a huge turnover on the board. And so for this year, I really think the reaction function for the Fed is more or less business as usual.
Seth, would it be business as usual if Jay Powell, because the DOJ investigation is not wrapped up, stays on longer than his chairmanship should be expired?
I do think so in the following sense. Chair Powell has been very clear, and I very much take him at his word. He is focused on doing the mandate of the Congress for the Federal Reserve, maximum sustainable employment, stable prices, based on the available data, analytics, and judgment. I think if he were to stay on, he would redouble his efforts to just try to stay very much on that narrow path. And so in that regard, I think it keeps sort of business as usual for the reaction function of the Fed.
Seth, any outstanding questions that you think need to be asked on Wednesday, or is this a bit of a snoozer?
I mean, I really do think there are questions that the reporters in the room should ask in terms of how much conviction does the chair have and does the committee have about the ultimate temporary nature of tariff-driven inflation. Remember, Chair Powell got a lot of heat for having called COVID-driven inflation transitory. Now the committee have gone back to the well and said that the inflation from tariffs is going to be temporary or some other adjective. I think that's a place where there's probably a bit more pushing that could be done.
Seth, good to see you. No doubt Mike McKee's listening, and he'll make that push. Thank you, sir. Seth Carpenter there of Morgan Stanley on the Federal Reserve. Basically, the way things are set up, at the end of last year, the labour market drove the eventual rate cuts we got from the Federal Reserve. Team at Morgan Stanley believes it'll be the disinflation they're anticipating in the back half of this year that's going to unlock the door for more rate cuts further down the road.
When it comes to tariffs, though, actually, Amazon CEO speaking at Davos was talking about the fact that they're finally starting to see some of that pass-through of the tariff-induced inflation starting to creep into some of those businesses that they sell on their website. So potentially this is going to be back to tariffs once again when it comes to the press conference and Jay Powell, besides all the political noise that he's definitely going to get questions about.
Conditioned by the experience of the last 12 months, so many people were burnt by that call. They just don't seem to be making that call this year. They're not looking for that inflationary bump from those tariffs. If you're just joining us, welcome to the programme. Equities down by only 0.1% so far this morning. Let's get you an update on stories elsewhere with your Bloomberg Brief. First up, CoreWeave shares jumping in the pre-market after NVIDIA announced a new partnership with a $2 billion investment. CoreWeave will be among the first to deploy new NVIDIA CPU chips and storage systems. Elsewhere, a massive winter storm hitting the US East Coast on Sunday, bringing heavy snow and ice, straining electric grids and grounding thousands of flights. More than 800,000 homes and businesses across the US are without power. And finally in sports, the matchup is set for Super Bowl 60. The New England Patriots taking on Seattle after defeating the Denver Broncos, while the Seahawks took down the LA Rams. The Patriots are eyeing an NFL record 7th Super Bowl title, with the Seahawks hoping to win their second. You got rid of the Chiefs, you ended up with the Patriots all over again.
Yeah, we're back to the Patriots. I just feel like deja vu. I've actually worn that Patriots ring before, and I guess they're going to try to go for another Super Bowl ring. It's massive.
Up next on the programme, less football will set you up for the day ahead and the week ahead, plus my MQ of PSP growth with key tech earnings on deck this week. From New York City, you're watching Bloomberg TV.
crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
I don't think there's any uncertainty about AI. I sincerely believe there is no bubble in the AI space.
The idea that this technology becomes obsolete or useless after 3 years or 2 years, it's bunk.
The U.S. has been ahead in the digital race, and because you need a digital foundation, the U.S.-based companies are ahead.
This is the largest infrastructure build-out in human history. That's going to create a lot of jobs.
Society will have more production. We're going to cure a lot of cancers. You're not going to slow it down.
Fantastic lineup of guests in the last week or so from Davos, Switzerland at the World Economic Forum, weighing in on the future of AI. And I have to say, it was very difficult to find anyone who wasn't bullish on that particular thing.
I don't think there was anyone who was not bullish on AI. Everyone out there was very constructive, especially when it comes to the concerns that what it means for the labor market or concerns about things like circular finance. It was, no. You got it wrong. This is going to be the trade, and there's always dislocations when you're moving with new technologies, but this is going to be ultimately productive and good for society and the economy.
More on that story in just a moment. The price action looks like this going into the opening bell. Equity futures unchanged on the S&P 500. On the Nasdaq, down by 0.2%. As we count you down to the opening bell, the trading down for the week ahead looks like this. At 2:30 p.m. Eastern, the president participating in a policy meeting. On Tuesday, the president speaking in Iowa, and results from American Airlines and General Motors. Wednesday, an FOMC rate decision and Fed Chair Jay Powell news conference, plus earnings from Microsoft, Meta, Tesla. Thursday, another round of jobless claims and Apple earnings. Then on Friday, PPI, and a deadline that's becoming increasingly important over the last few days. The government funding deadline.
Yep, potentially. The odds of a partial government shutdown have went right up this weekend, given what is going on in Minnesota. Senate Minority Leader Chuck Schumer came out and vowed that he will not vote yes, and neither will his caucus, on passing through the appropriations bill that we need to keep the government open if DHS funding is linked to that. So right now, everyone is expecting a government shutdown. Guess what? The House is out of session, and we're a storm, and they're going to have to come back. It's going to get a little bit messy in Washington.
That's one to watch going into the weekend. This week, let's talk about those tech earnings. Mandeep Singh of Bloomberg Intelligence joins us now with a preview of this week's results and a sneak peek of next week as well, with Alphabet and Amazon on deck in early February. Mandeep, welcome to the program. What are you focused on when these guys report later this week?
Look, I mean, for me, it's always about cloud growth when it comes to the hyperscalers. And last quarter, we saw Microsoft hit 40% growth for their Azure business. And it was aided by, AI. That's where all the CapEx dollars are going. So you want to see that cloud momentum carry on. Even Alphabet saw 35% growth in their cloud segment. So that to me is the real sort of ROI indicator when it comes to these CapEx investments. The other thing to keep an eye is there was a pushback last quarter on Oracle in terms of, their debt really reaching a point where a market felt it was reaching a limit, it exceeded their operational cash flow. So would there be any other company that would be put in that sort of basket this quarter, and especially someone like Meta, which plans to spend over $100 billion in CapEx with no cloud business? I would be curious to see how market reacts to, them raising CapEx. I mean, obviously their top line growth has been super strong, but that would be of interest for me in terms of the pushback that market may have, on companies really spending more on CapEx.
Mandeep, I'm right there with you. I think that's got to be an important one to look for, particularly given what we saw in the final few months of last year. And what we saw from these guys, the amount they're spending. Mandeep, I saw an estimate, a number that came from JP Morgan Asset Management. Michael Sembler's put this out, that 40% plus of the GDP growth that came in the first 3 quarters of last year came from the spending of tech companies boosting CapEx. Mandeep, ridiculous numbers. Do you think with Meta alone, they're an isolated case of weakness, or are you seeing other examples of that in the space?
Look, I mean, all the neo cloud guys, they're much smaller than a Meta, but at the end of the day, you are spending so much upfront with the hope that it's going to translate into recurring cloud revenues down the line. Amazon as well. Any company that is now spending in excess of their operational cash flow, I think it's a fair question to be asked in terms of how long will this last, and then what is the recurring revenue down the line that investors can hope for. And if you don't have that visibility, which was the case with Oracle, that's where you start to see pushback. So I do think the neoclouds would also face that kind of scrutiny, and that's why this CoreWeave NVIDIA partnership is of significance, because now you have that NVIDIA buffer in terms of, okay, you have some cash that you're getting from NVIDIA to spend on.
Mandeep, appreciate your take as always, sir. Thank you. More from Mandeep through the week. Mandeep Singh there of Bloomberg Intelligence. To build on this conversation, Momo Q of PSP Growth joins us now for more. Momo, welcome back to the program. I'm sure you heard some of the comments from Mandeep Singh just moments ago. Do you believe this could be the year of investor pushback?
I think it depends on where you sit. First of all, good morning. It's great to be back on the show. Big week for tech earnings. Investors are focused on who is at the center of the AI workload. We're shifting now from AI in terms of building and training a model to inference, which is actually using it in practice. So if you're sitting at the core of AI infrastructure, like we saw with CoreWeave this morning, then you're in a great spot. We're even seeing this not just in the public markets, but in the private markets. There are a lot of inference market leaders out there like Together, FAO, Fireworks, Space 10 that are seeing record revenue growth. So the companies that are positioned at the center of the AI wave in terms of running and execution will be well positioned. If your strategy is not necessarily at the core of those, if you're still figuring out your AI strategy, then investors are going to have scrutiny over you in terms of where all that investment is going.
When it comes to the earnings we're going to get this week and next week, you seem to be a little bit more bullish on Alphabet, given how investors feel about Gemini. What does that mean for the likes of, say, Meta and Microsoft?
I think for Meta and I would say Apple probably were those two that where investors are still trying to figure out what is their AI strategy. Microsoft, Alphabet, I think is going to be more on execution. So investors can pretty easily think about the positioning of Microsoft and Alphabet in the new world of AI. Sure, execution, you might have issues in terms of, are they spending too much on CapEx? Are they going to have margin compression? But overall, the strategy is pretty sound. But when you think about Meta and you think about Apple, they've had leadership turnover. Just beating your numbers is not going to be enough. Investor has to have confidence in, one, your overall growth outlook, but two, as we've heard all week, investors' confidence in your durability in the new AI era.
Let's get beyond this week, Momo. You're a much, much longer-term thinker than just this week. Are you developing thoughts about which part of the ecosystem will struggle to make money ultimately? Because clearly someone is going to make a ton of money from this theme. I'm not here to bet against the technology. This is where the world is heading. But is there a part of the ecosystem where you think will struggle to make money?
I think you're going to see a lot of compression on the application layer, which is the part that touches the users and touches the enterprise. That's the piece where margins need to get squeezed. There's going to be a lot of competitive pressures. So contrast that to what we were talking about earlier, right? Which is at the core of the AI infrastructure, you're going to have market leaders are going to be pretty resilient. But as we've already seen in the weakness of their prices, application layer software like Salesforce and Adobe and Workday have seen real weakness this year and I would say in Q4 as well, because they're getting pressure from both the AI native startups, they're getting pressure from model companies like Anthropic and OpenAI trying to go up and capture the same budget where they were previously dominant in. So I think that's the part where I don't know exactly who's going to shake out, but there's going to be compression and someone's going to lose.
In the next 30, 40 seconds, that's all we have left, forgive me. Is that kind of the opposite of what we saw take place with the internet boom?
I would say there's actually parallels in my opinion, which is anytime you have a technology shift, you're going to have big winners and big losers. So I think this is going to be the case too, where there's going to be a lot of winners and we'll stand by to see who they are.
Mame Q of PSP Growth. Appreciate it. Mame, thank you. Just thinking back to the building blocks of the internet era and the people who ultimately made money 10, 15 years later.
Yeah, exactly. I mean, there's a lot of parallels, but also you have to think of all those risks. Remember everyone that added .com and internet to their titles?
True.
Kind of felt that way at Davos this year, AI and everything.
I know. Down the whole promenade, right? It's a little bit overkill. I'm right there with you. I felt it too. Coming up tomorrow, we'll catch up with Cameron Dawson of New Edge Wealth, Evan Brown of UBS, the former Kansas City Fed President Esther George, and Joe Amato of Neuberger Berman from New York City.
Day 8 at the Australian Open. 20-year-old learner Tien upset three-time finalist Daniil Medvedev for the second straight year as he took out the Russian in 3 impressive sets. And Coco Gauff is into the last 8 of the slams for the 10th time in her career after she took out Czechia's Karolina Muchova in 3 sets. And don't forget, TC Live will keep you up to date daily.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting the between the rice air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now these 2 fingers, top to the bottom. make the sushi shape more beautiful. 3, then, I'm not, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is 1, 2, 6.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Happy Monday morning. 30 minutes till the start of the cash trade. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, NVIDIA invests another $2 billion in a customer, CoreWeave, ahead of results from Meta, Apple, Microsoft, and Tesla this week.
Shutdown risk rises. Senate Democrats threaten to block a spending package as fallout grows over a second death by ICE in Minnesota.
And under pressure, the dollar drops on talk of coordinated U.S.-Japanese intervention, while gold storms up through $5,000 a troy ounce and beyond. So a lot going on today.
So much going on if you've made it into the office, which I know a lot of people in the U.S. have not. Matt, I'm taking a look.
I can't think of any excuse why you wouldn't have made it into the office. You know, I got up at 3:30 this morning and drove in from Scarsdale.
Not everyone
wasn't hard.
Not everyone has a four-wheel drive SUV where they can do such things, Matt, just to be fair. Okay, I'm looking at the news that you mentioned, and it was one announced at around 8 a.m. this morning that NVIDIA is investing again in CoreWeave. Again, it's customer $2 billion this time. The idea is to help speed up an effort to add more than 5 gigawatts of AI computing capacity by 2030, and we're going to catch up with Ed Ludlow shortly on this story.
All right, really interesting continuation of the circular economy, right? USA Rare Earth signed a non-binding agreement with the Commerce Department to receive $1.6 billion in funding. They'll be using President Biden's CHIPS Act for that. And in case you're wondering what they do, it's all in the name, Danny. They want you to know. It's front and center. This is rare earths.
And USA rare earths at that. It is the holy grail of securing an investment from this administration. Speaking of investments, let's go back to that NVIDIA CoreWeave news. As well as Mag 7 earnings this week, Bloomberg Tech co-host Ed Ludlow joins us now. Ed, cue all of the alarm bells again of circular financing. What are the details of this CoreWeave investment by NVIDIA?
Yeah. $2 billion investment buying common stock, you know, and NVIDIA's done that mechanism before. And we spoke with NVIDIA CEO Jensen Huang last night, and his argument for why it is not circular financing is quite simple. He's basically saying that CoreWeave is going to have to raise infinitely more than the $2 billion additional that NVIDIA is putting in. So proportionately, it's small. And it's in line with what NVIDIA is invested in a number of other AI companies across the stack. You know, it's a great Jensen Huangism to talk about the 5-layer cake of AI. But to his mind, you know, you can see in the quote, he calls it ridiculous to say that it's circular financing. But the point here is that it is to accelerate capacity build out. There's still a situation where demand outstrips a data center's ability to supply. The difference in this, where those that say it is circular financing will focus, is there is a technology access part of this agreement as well.
First of all, I want to point out that I believe Layer Cake is the best of all of the British gangster films. And if you haven't seen it, I highly recommend checking it out. It is interesting, though, that, you know, this is a company, CoreWeave, that buys stuff from NVIDIA, right? And now NVIDIA is going to be giving money to the company that buys stuff from them to buy more stuff from them.
Yep, and therein lies the true definition of circular financing. But again, you know, to Jensen Huang's mind, this is a drop in the ocean, you know, essentially, and then that in itself justifies it. The technology sharing part of it is that NVIDIA is making another interesting move here, which is in the CPU business, good old-fashioned CPU. Right now, NVIDIA has a Vera CPU, but it's just one of 6 chips that goes into its overall system. And it's going to start selling that CPU as a standalone offering, starting with CoreWeave. And that's why I say not just the financing part of the deal, but CoreWeave gets the first opportunity to deploy NVIDIA CPU or Vera CPU as a standalone. Which is those that would argue, we should look at this more closely and would focus on that technology access piece too.
And it's going to be a very busy week for tech investors, which means all investors, because who's not invested in tech at this point? Microsoft, Meta, Tesla Wednesday, Apple Thursday, 16% of the S&P market cap by market capitalization on those metrics. Given the Mag 7's down year to date, Ed, only by 0.5%, what's at stake this week?
Yeah, it sounds boring, Danny, and I'm sorry, but it's the same, particularly for Meta and Microsoft. Capital expenditures, the expectation is that capital expenditures continue to grow in 26, and to justify that, Microsoft through the Azure Cloud Computing Unit and Meta through AI-driven growth, but its core advertising business need to justify it. With Tesla and Apple, I'm trying to think like what's analogous here. For both of them, China is critically important. You have a number of analysts saying buy the dip on Apple right now because they expect in that key holiday quarter, fiscal first quarter, that the China data might show up being good. Tesla also needs to address the China issue. Increased competition, subsidies are going away in China just as they have done here in the United States. But those themes are ongoing. There's nothing that new to start the year, I'm afraid.
But there is a lot going on in terms of big tech this week. Ed, we'll all be watching your program. Bloomberg Tech's Ed Ludlow's program kicks off at 11 a.m. with Caroline Hyde. Now, Washington and Wall Street are preparing for another government shutdown as Democrats demand that funding for Homeland Security and ICE is taken out of the equation. Meanwhile, more than 60 CEOs of companies, including Target and Best Buy, are calling for a de-escalation of tensions. Bloomberg Washington correspondent Tyler Kendall joins us. And Tyler, I think it'd be interesting to hear, after we've all digested the video in the killing of Alex Preddy, if White House officials, if Department of Homeland Security is starting to back off of their assertions that he was holding a gun at all or that he was a domestic terrorist. Have they taken any of that back, as we all see that it's no longer the case?
Well, Matt, rather than taking it back, we are seeing White House officials saying that they're going to look into this. President Trump, for example, telling the Wall Street Journal yesterday that they are, quote, reviewing everything when it comes to this case, which appears to be perhaps a more nuanced and softened position than what we originally heard when it came to the White House's defense of what had happened in Minnesota. And it does come as we are starting to hear from some advisors and those close to the White House that this could be a political liability, considering if you look at just the fallout happening on Capitol Hill right now. Now, we're starting to see some Republican members call full-throatedly for full investigations into this. They may not be going as far as Democrats, and we can talk about this, potentially threatening a partial government shutdown over it, but it is extending beyond those normal Republicans that we would expect to perhaps push back against some of the Trump administration's policies, like Senator Tom Tillis or Senator Lisa Murkowski. But we're also hearing from some staunch allies of this White House that something needs to be done, whether or not that is a full investigation or something else, including Bill Cassidy, a Republican from Louisiana, or James Comer, for example, coming out and saying that they should have a full investigation on Capitol Hill into this. So it is definitely escalating and ramping up that pressure on the White House to respond.
Tyler, some things are more important than asset price moves, and I think it's fair to say a tragic killing like this absolutely is one. But if you are going to look at any market impact, it has to be on the likelihood of a shutdown. Tyler, is there any way that this ends in not a government shutdown by the end of the week?
Well, if it does end in a government shutdown, we should also say it will be a partial government shutdown, considering that Congress has already passed 6 out of the 12 required appropriation bills for the fiscal year. But Danny, I have to say, a senior aide to Democratic leadership tells me that Senate Minority Leader Chuck Schumer feels confident that he does have the votes to withhold Democratic support from the spending package that is in front of that chamber right now, risking this potential shutdown. Because if we look at the math here, Republicans need 7 Democrats to get on board. Not to get too much into the numbers, they're considering a 6-bill package. One of those packages would fund DHS down the road, and that is what they are threatening to pull out. We'll see if it ends up happening.
Tyler, thank you so much for your reporting this morning. That's Bloomberg's Tyler Kendall. Let's now turn to commodities and currencies, the U.S. dollar dropping on speculation that America may help Japan support the yen. Gold, meanwhile, surging $5,000 past that level for the first time ever. Joining us now is Bloomberg intelligence strategist Damian Sassower. Damian, I mean, even just the news this weekend would have been enough for us to pause and say, wow, a lot has happened so far in 2026, but that just adds on top of everything we've heard. Is all of the angst, be it tariffs, be it concerns around domestic issues in the U.S., be it the Japanese yen versus the dollar, is the biggest way this is manifesting in just bidding up gold a massive amount?
Well, absolutely. The dollar debasement trade is back in focus for sure. But I think, this goes back to last week, Danny. You remember we had our big emerging market investment forum. And the big question there is what constitutes an emerging market, right? Is it South Korea? Is it India? Is it Indonesia? I mean, how do these countries fit into broader emerging market indices? How do institutional investors look to take advantage? And what we're seeing in the beginning of this year, very, very interesting, is it's Asia FX, not just EM Asia. It's Japan. It's the Hong Kong dollar, the Taiwan dollar. They're all kind of rolling over here. And the one currency that you just can't ignore in this environment is dollar yuan. The China yuan has now broken below the psychological 7 handle. And that gives, credence for it to be re-included in trend indices and momentum indices. And so, again, it's the Asian bloc and it's back in focus and it's very divergent.
Of course, the speculation, at least behind some of the market moves we're watching today, is that you could see U.S.-Japanese intervention, coordinated work. How likely is that, Damian? How often does that sort of thing happen? And where do you think these rumors start?
Well, I think many of us who have been looking at the market for a long, long time view dollar and yen as really one currency block. So Matt, I mean, I think, if you talk to Ed Yardeni and a lot of those guys who kind of do that sort of plumbing within the financial markets, that type of work, yeah, I can't disagree with it. And so, this is really nothing new. I think really, though, a 30 bip round trip move in 30-year JGBs, I mean, just take a minute to digest that. This is 30-year JGBs. They don't move. So, for markets, and believe me, and for investors, of which, Japan, the government of Japan is the largest of them, this definitely, leads people to start, the commotion about crowding out, right? It's all about fiscal pressures as we enter into the first half of this year. Germany, Japan, the U.S., all of the above. China's going to need to stimulate fiscally. And again, as this treasury issuance ramps up, is it going to crowd out other asset classes, other issuers? I mean, the verdict right now is no. U.S. high yield, global high yield, for that matter, is the best performing asset class this year, albeit, only through the first month. But EM credit, EM local, these are other high beta asset classes that are benefiting from this sort of environment.
All right, Damian, thanks very much. Damian Sassower of Bloomberg Intelligence joining us on the currency and commodity moves. Check on what's going on in futures right now. We're looking at, in terms of stock futures, S&P futures up about 0.1%, NASDAQ futures down almost 0.1%. So not a lot of movement on the index level.
Let's see if anything's moving underneath the surface. A unit of China's Zijin Gold is buying Allied Gold. That's a Canadian firm operating in Africa for $4 billion. Those shares are skyrocketing. By the way, all the gold miners hitting new records today with the price of gold above $5,000.
Understandably so. IonQ agreed to buy Skywater in a cash and stock deal that values the chip maker at about $1.8 billion.
And meanwhile, Revolution Medicines, that's plunging. The Wall Street Journal reporting that Merck has ended talks to acquire the biotech firm, down almost 21%.
All right, coming up, a powerful winter storm we've all now lived through absolutely buries New York City. Snarling commutes, canceling flights, pushing schools and workers online. We'll have the latest next. This is Bloomberg Open Interest.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Let's get now to high interest. Look at what's making headlines around the world. President Trump says U.S. borders are Tom Homan will travel to Minnesota tonight after federal agents shot and killed a protester during an immigration enforcement operation. Republicans are split over the fatal shooting that has fueled criticism of the Trump administration's immigration crackdown and sparked ongoing protests. Democrats are now threatening a government shutdown over Homeland Security funding. And Canada says it won't back down from diversifying trade beyond the U.S. despite new tariff threats from President Trump. Canada's foreign minister says reducing reliance on the U.S. is essential to protect Canada's economy as tensions rise over limited EV trade with China. Canada is expanding ties with India and Asia while insisting the U.S. relationship remains strong. And a massive winter storm slammed New York City, dumping heavy snow and disrupting the morning commute. MTA CEO Jano Lieber joined Bloomberg Radio to talk about how the nation's biggest transit system is working to get back on track.
Our concern now is we're operating a full Monday morning commute, which is amazing. But you know, obviously with a risk of thaw and icing, that presents new problems. So we're moving on in how we manage the impacts of the storm.
Meanwhile, city and state officials are urging remote work in New York City public schools move to remote learning. It's remote, wait, they have to, the kids don't get a snow day?
Only if you are a private school student. Apparently, like Trinity and those very fancy private schools in New York were like, congrats, you get a snow day.
That's awful.
So you have to pay if you want a snow day, apparently.
That's a bummer.
Super bummer. The kids should be able to enjoy it. Let's stick with the snow and the storm. We're joined now by Bloomberg senior reporter Miles Miller, who's knee-deep in the snow itself in Central Park. Miles, good to see you this morning. Thank you for braving the cold. Just how disruptive has this storm been?
Well, Danny, nearly a foot of snow fell here in Central Park. 11.4 inches blanketed the city in its heaviest snowstorm in years. Now, what we know is that this Monday morning commute has been messy for those who have been willing to brave it. And of course, commuter rail lines are operating with modified schedules. The Long Island Railroad, which gets many people into Wall Street, is running on a weekend schedule, and Metro North is on an enhanced Saturday schedule with reduced service on the Hudson, Harlem, and New Haven lines. New York City's subway and bus system is, of course, largely running on schedule, though multiple lines had delays this morning. But the critical piece of that transit infrastructure is, of course, New Jersey Transit, which halted all bus service and train service yesterday. It is resuming in phases, but the bus service is beginning to run at 10 this morning. No word on when full service will return. But, you know, when we talk about this, this was really the first test for Mayor Zohran Mamdani, who had urged anyone who could work remotely to stay home. Yesterday's snowstorm meant that plows were all throughout the city, hitting those primary, secondary, and tertiary roads. And for a good measure, it seems like the city did quite a good job. But it is cold here in Central Park, and people are taking in the sights. It is gorgeous. It is picturesque. And, of course, I brought my tea with me because I cannot stand out here and talk to you about how cold it is without keeping something warm near me. And this tea is basically iced tea now.
How much, by the way, cheers to that, Miles Miller. How much did Mamdani have to be prepared for this? You know, because of the experience that we all went through under de Blasio, where as soon as he came into office, the snow hit and nothing was cleaned off the streets. The trash piled up and nobody came to pick it up. And Mamdani, I'm sure, is sensitive to that issue. Has he doubled up on, you know, snow plows, salt trucks, and trash pickup to avoid that issue?
Yeah, you know, the mayor spent his time basically hitched to the sanitation department, went to a sanitation department garage early Saturday morning, and then was there with them for the start of the shift at 6 o'clock, and really paid good attention to where those snow plows were heading. There has been advanced technology, knowing where these snow plows are at any given time. You could go to Plow NYC and see when a snow plow had gotten to your street. And if you had an issue with that, you could call 311, and they'd figure out a way to get you a plow as soon as possible. I live on a major road in Brooklyn. I had both the big plow and those tinier plows going through my street so much so good that my all-wheel drive had to be put in overdrive in order to get out of that spot that I had gotten plowed into. And I'll tell you this, the mayor was very keen on operations for the first time, having NYPD vehicles giving escorts to ambulances to make sure that anybody who needed help got it. And for most parts of the city, you can say it was quite a good experience for people who live in the city.
Miles, thank you very much for that reporting. Stay safe, stay warm. Bloomberg's Miles Miller. Coming up on the show, PNC's Amanda Agati shares her thoughts on the resurgence of the debasement trade debate. That's coming up next. Stay with us on Bloomberg Open Interest.
This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute financial and geopolitical news whenever and wherever it happens. I'm Francine Lacroix in Davos, Switzerland, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today. and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
The dollar is weakening. Gold pushes above the $5,000 mark. The greenback itself is sent for a 4-month low on speculation that the U.S. and Japan may coordinate intervention to support the yen. Meanwhile, gold smashing records as investors flee from sovereign bonds and currencies. Let's bring in PNC Chief Investment Officer Amanda Agati. Amanda, it's clear that there is some real movement in these markets as the equity market refuses to budge, and everyone says it's earnings that's most important for that. But when do these concerns on the periphery, if you have gold surging above that $5,000, start to matter for overall risk assets?
Well, it's a great question. Thanks so much for having me. A hard one to answer with a lot of precision. I mean, I think this all comes back to what I've been describing for a while now as the purple haze of policy uncertainty, both here in the U.S. and abroad. I mean, you said it, certainly. We have currencies moving in a lot of different directions, global central banks in different places, interest rate differentials, questions around inflation. And so what is an investor to do in this environment? They just keep piling into precious metals as a hedge. We tend not to be very long only as it relates to gaining exposure to precious metals. It's not to say we don't want them in portfolios, but we tend to want more nimble exposures. And I think with gold, surpassing 5,000, you got to start thinking about, are there other avenues to, play this trade or play this hedge, or should we be thinking about a reset? So I'd be focused on a CTA kind of strategy, much more nimble, long and short, in and out of different precious metals. It's not just a gold story, even though gold is the headline story.
All right, Amanda, we're going to keep you with us. PNC's Amanda Agati sticking with us through the closing bell. In terms of futures right now, it's looking as unchanged as the close did on Friday. S&P futures right now up 0.1%. On Friday, we barely budged in that respect as well. NASDAQ futures really unchanged, or down 0.02%. And the small caps not moving much at all either. I think it's safe to say there may not be a ton of people at the trading desk, too.
I think that's right. Trains coming from New Jersey are what, like 80% reduced. You also have Boston with a weather effect warning, too. So it's basically everywhere no one's coming in. But if you are trading, we have the opening bell coming up for you next. So stay with us for that.
Estava sitiada.
Nisso eu começo, eu também não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. We are looking at very little change in terms of futures, although they're creeping higher and higher on S&P futures, now up about 0.2%. We closed unchanged at around 69.15 on the S&P Friday evening. NASDAQ futures, very little changed, as are Russell 2000 futures. Ringing the opening bell down the New York Stock Exchange's squawk on the street. What? These guys get to ring the opening bell like all the time. It's almost as if they have a set.
It was Squawk Box
on the New York Stock Exchange. Look at Jim Cramer there, and Sarah Eisen, Bloomberg alum. Wait, how many of these people used to work at Bloomberg? Okay, let's take a look at what's going on the NASDAQ. Atlas Critical Minerals, smart to put critical minerals in the name of, or rare earths in the name of your company when you're doing an IPO on the NASDAQ. That way investors know what they're getting.
Yeah, I wonder how soon until they get an investment from a certain administration. Anyway, leave it at that. Some of the stocks we're watching this morning. NVIDIA has invested another $2 billion in CoreWeave. If it's already invested in it before, this is all to help speed up an effort to add more than 5 gigawatts of AI computing capacity by 2030. CoreWeave surges by 13%. NVIDIA is little changed. That's only 2% of what CoreWeave plans to spend to get their infrastructure online. So Jensen Huang arguing it's not circular financing because they're not dependent on us.
Yeah. Please buy our stuff. Here, we'll give you money to buy our stuff. All right, USA Rare Earths signed a non-binding agreement with the Commerce Department to receive $1.6 billion in funding from the Biden-era CHIPS Act. So USA Rare Earths, I guess, is an American rare earths company.
I would hope so. It would be very disappointing if not.
Let's bring back in PNC Chief Investment Officer Amanda Gotti. Amanda, do you invest along any of this like pro-sec strategy? Do you say, okay, the Trump White House is going to want to bring manufacturing back. They're going to want to strengthen our chip or establish a chip manufacturing business in the U.S. They're going to want to pull rare earths out of the ground and refine them. Let's go invest in all of that stuff.
It's a great question, and I would say we haven't done a lot in that regard yet. I think it's I'll reiterate, the purple haze of policy uncertainty around what the administration is going to do or not do, and along the timeline does make it hard, I think, for investors to time this well. I think there's clearly a push. There's no question that dollars are going to be aimed in this direction, but I think at the moment it's hard to get really precise. And so with broad brushstrokes, yes, we do think about thematic and tactical trades in some of these areas, but I think we need to know a little bit more on how 26 is going to play out before we have a lot of conviction to lean hard in that direction. I personally think you just want broad-based exposure to U.S. equities in this environment. It's the best game in town. So I'm willing to hang on for the ride and the rally to come this year.
Amanda, how are you thinking about conviction around big cap tech? You have 4 of the Mag 7 reporting this week. The cohort's down about 0.5% so far this year. Are these dips where you want to buy?
Well, it hasn't been much of a dip. I mean, I'd like to see a little bit more of a correction to really back up the truck here, but it's a little blip on the radar here, I think, for these guys. There's no question they have to deliver and prove that they are worth these lofty valuations here. I think the fundamental chops are there, so we'll see how the reports play out. I don't think it's necessarily about this moment in time, though. It's really what that return on investment for all that infrastructure build is going to look like. And we're just not going to know that in 26. So if your time horizon is more than just a quarter or two, I still think, you know, it's hard to bet against these guys. It's a really strong secular tailwind story, and we definitely have exposure and want to continue to be a part of it.
So last year, we were talking a lot about the purple haze of policy. Is it any less hazy this year, Amanda?
No, it's like a snowmageddon blizzard of policy uncertainty here in 2026. I feel a little bit of a broken record in saying that, but I think it's a bigger story for this year than it was last year. I mean, you think about what's going on with fiscal policy, you know, all of the actions that were put into effect last year as a function of the tax bill, all that comes home to roost this year. Does it make a difference or not? What's going on with Fed policy counts as the purple haze. The midterms this year, geopolitical tensions. I mean, right out of the gate in the new year, we had some fairly unexpected and big geopolitical action. So I think it's still very much in the forefront of investors' minds this year, with the caveat that we're seeing a lot of momentum from the fundamentals as we enter 26, and that may be enough of an offset to keep the market rally engaged.
Yeah, it's that old adage of there are decades where nothing happens and there are weeks where decades happen, and that's certainly what's been 2026 so far. And Amanda, maybe this is what you were hinting at with some of the fundamentals, but why with all that is it a VIX still at 16 and a MOVE index of bond volatility that is at its lowest in at least 4 years?
Yeah, you're totally spot on with that. I'm surprised as well, even with the noise coming out of Japan and the snap elections and the currency intervention that potentially is happening there. Credit spreads are really tight. Volatility is very calm. It's unusually so, I would say, given the purple haze that continues to swirl. But maybe it is a function of the both economic and earnings growth story that's sort of building momentum here. We're finishing out 2025 with Q4 earnings that are really much better, I think, than expected. It's still early, of course, but revisions were positive over the entire course of Q4. And so I do think that there is fundamental strength. If you can just dial back some of the noise and look at the path for GDP this year, look at the path for earnings growth this year, it could still be a strong year. I just don't think it's going to be a straight line. I think it's going to get choppy, and you just have to assume that vol is going to pick up a little bit. Maybe not a spike, but it's definitely going to pick up from here.
What about the interest rate situation? I mean, are you concerned at all that that starts to rise, that rates start to rise, that inflation is sticky at 3% or more, that these things could slow down earnings in Qs 2, 3, and 4?
Yeah, it's something that we're always paying close attention to. I don't feel particularly concerned about the inflationary backdrop. I think even if inflation kind of stays about where it is, maybe ticks up a little bit, valuation multiples and nominal earnings growth are correlated to sort of that tranche of inflation. So I don't think that in particular bothers the market. Definitely focused on what's happening with the 10-year, the steepening in the yield curve. The bond market's not giving policymakers a lot of room. So even though, you know, the Fed may lower rates again later in the year, again, there's a lot of haze of uncertainty around that, the 10 to 30-year portion of the curve is sticky and higher. And so I do think that is going to pose some challenge for multi-asset investors as the year plays out.
Some really interesting moves to start the year. Amanda, thank you so much for joining us. PNC's Amanda Agati. About 7 minutes into your trading day, let's take a look at where equity markets stand, because we are on track for a rally after 2 consecutive weeks of declines. We're up by about 1/3 of 1%. Breadth is fine, about 360 stocks higher. Apple is up by about 3.2%. That would be, or 3.2 points, I guess. That would be good for them, considering they've fallen for 8 consecutive weeks. It hasn't fallen for 9 since 1993. A lot of the Mag 7 having an okay day. NVIDIA up barely 1%, Broadcom, Meta, Oracle. Those are all moving higher after NVIDIA makes a new investment in CoreWeave. To the downside, it is Tesla this morning. Tesla will also be reporting earnings on Wednesday. Whether they show up or not will be a different question. Micron getting hit hard after NVIDIA made another agreement with Samsung Electronic, Micron's rival, to supply memory chips, so that's a disappointment for them. Microsoft, they'll also be reporting earnings this week. Those shares are down. Let's take a look at some of the sectors. All of them except one, I believe, are up. The GRR screen will confirm that for me, and it does. Everything is higher, led by utilities, materials, financials. The only sector to move lower this morning is consumer discretionary. That is down by 0.25%, Matt.
All right, coming up, we're going to discuss NVIDIA's further ties and investment in CoreWeave and Mag 7 earnings with Bloomberg Intelligence analyst Mandeep Singh, who has made it back safely from Davos. Stay with us for that. This is Bloomberg Open Interest.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything. Bringing you up to the minute news whenever and wherever it happens. I'm Sherrian in Seoul, and this is Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Let's get you some top calls. What the sell side is upgrading and downgrading. First up, Phillips Securities, they upgrade Netflix, saying the company's leadership in video on demand is translating into durable pricing power and a stronger long-term outlook. They say that the streaming giant scale gives it a clear advantage over its peers, but shares down about 1/3% this morning. Next up, Evercore, they raised Cisco to a buy, saying that the company has clear growth tailwinds that can drive revenue and earnings growth over multiple years. They point to sustained strength in networking through 2026 and rising AI-related demand. Shares up 2.75%. Finally, Rothschilds and Redburn is upgrading Meta to a buy. The firm also lifting its price target to $900, signaling increased confidence in Meta's long-term outlook. Shares are up 1%, just thereabouts, and I believe they also have earnings this week, Matt.
66545.
Yes.
I guess that rounds up to 666. NVIDIA announced a $2 billion investment in CoreWeave as the AI stalwarts deepen ties. Let's get reaction from Bloomberg Intelligence Global Head of Tech Research, Mandeep Singh. And Mandeep, I'm sure this makes good sense from the standpoint of NVIDIA as an operating business, but it does seem like they're giving their customers money to buy more stuff from them. Does that not seem like what is happening?
Well, I do think, balance sheets are getting stretched for all of these companies that are investing in AI infrastructure. Unless you are an Alphabet or a Microsoft, I think they still have room to, stretch in terms of their CapEx versus where their, operating cash flow is. But for everyone else, I mean, the more you raise CapEx and the further out your revenue is, which we saw with Oracle last year, it's going to, create some anxiety among investors. And so an NVIDIA coming in and saying, okay, I'm willing to put, $2 billion in the company does calm down some nerves in terms of, CoreWeave potentially raising their CapEx for 2026. And so from that perspective, I think it makes sense for an NVIDIA to do that. Look, the other way they could have done is to bring down their gross margins and really give these companies a subsidy in terms of, what they're charging for the latest versions of their chip. I think NVIDIA prefers this approach where they make an investment in OpenAI or a CoreWeave, and that to me seems to be their playbook in terms of, these minority investments.
Jensen Huang, his defense in response to accusations of circular financing was to say this is just a fraction of what CoreWeave and these other companies are going to have to spend in order for their total infrastructure ambitions to come true. This is about 2% of what CoreWeave plans to spend on getting its infrastructure online. Mandeep, is that a fair defense that if NVIDIA were to have to pull back for some reason, for example, CoreWeave would have other funding and spending it would need to do beyond this $2 billion?
Yeah, more than that. I mean, look, sovereign AI was a big deal at Davos, and it's very clear to me that everyone is thinking in terms of gigawatt capacity. And the rough math still is in the US, it takes anywhere from $40 to $50 billion to add 1 gigawatt of new capacity. So from that perspective, $2 billion isn't a big sum. And, yes, it helps you kind of procure some of the chips that you would have to pay full price. So they're sort of giving you a subsidy on that. But you still need the power, you still need the land and other infrastructure. And so from that perspective, to keep building this out, you need funding from different sources. I'm sure CoreWeave will have to raise some debt as well, as they think about expanding their gigawatt capacity.
I wonder, you were in Davos, and you were, I guess, had the opportunity to talk to a lot of these big CEOs. And what we heard publicly was nobody thinks that there's a bubble. No one has any bubble fears. Everyone is trying to convince all of us that there's no way this is a bubble. But the concern is, right, that we're investing so much and we're not going to get the return on that investment soon enough. It took so long for the internet investment to pay off. Did anyone there share those concerns at all?
I mean, look, so far, all of the financing for the build out of this AI infrastructure has come predominantly from these hyperscalers, right? So now sovereign AI, which was a big theme at Davos, essentially means the governments are getting on board, like the G42 unit and the UAE, as well as, Saudi Arabia, all the countries, India, they're talking about building their own sovereign AI. They're talking about adding more power for the infrastructure. So from that perspective, it is expanding in terms of who is involved in around build out of this infrastructure beyond the hyperscalers. And that's a positive sign. Will there be an overinvestment where you can't really show the ROI? Potentially. And so from that perspective, we still have to wait to see, who can show consistent ROI and who will have this further out where it will cause some anxiety. And so those conversations did happen along with the job displacement. I think there is a lot of anxiousness around what this means for the jobs and what kind of new jobs will be created where, the governments and the heads of state really want to figure that part out. And those were a lot of the conversations we had at Davos.
And we'll see whether any of those lingering questions get answered by this week, Mandeep, a week where we have Microsoft, Meta, Tesla reporting on Wednesday, Apple reports on Thursday. I personally am most interested in Apple, considering the shares have gotten so beaten up, down for 8 consecutive weeks. It hasn't made it 9 since 1993. Mandeep, how much is at stake when Apple reports its results on Thursday?
There is, and look, we talk about the partnership they have with Google. So Google clearly seems to be in that sweet spot where they have everything going right for them. But for someone like Apple, still, a lot hinges on what they will do with Siri. How will that revamped Siri look like? Will it really drive that upgrade cycle? So a lot of uncertainty. And in this market, if you don't own your large language model and you don't own the infrastructure, I think you still have to figure out what your AI path really is, and I would put Apple in that bucket.
Hey, Mandeep, thank you so much. I know we're going to talk a lot this week as those earnings come in. Mandeep Singh of Bloomberg Intelligence. Coming up on this show, an increasingly unstable global geopolitical order has turbocharged defense stocks. Will those earnings, though, bring valuations back to reality? That's coming up next. You're watching Bloomberg TV.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on what's going on with stocks here. You can see S&P 500 gains of almost 0.5%. So 69.46 gets us about 39 points away from a record high. The NASDAQ 100 up 0.3% at 25,680. Small caps actually gaining the most of the 4 major indexes as the Dow gets closer and closer to 50,000. Take a look at NVIDIA. It's actually off about 1/3%. That doesn't bode well for this rally. CoreWeave is gaining 14%. after NVIDIA invests $2 billion in its customer. You've got USA Rare Earths up, a company you've never heard of before, but now you know exactly what they do, and they are getting money from the government in terms of $1.6 billion, I believe, most of that coming from the CHIPS Act. Barrick Mining, gold powers through $5,000. Barrick is up 4% right now at 53.10. And then investors have been bullish on defense stocks, but these two are doing poorly today. So you can see Northrop Grumman actually down only 0.7%, and L3 Harris doing a whole lot of nothing today, but still, Danny, with the red arrow.
Yeah, over the past 1 year, Northrop Grumman is up 34%. The entirety of the sector in defense stocks, the ETF for it, is up 50%. It's high valuations for the defense stocks, even if they're slightly weaker today. It is going to get an earnings test in the coming weeks. Bloomberg's Matthew Griffin has been reporting on the sector's growth as geopolitical tensions climb. Matt, it is some real outperformance we've seen from the defense stocks. Just how fragile is that rally heading into the earnings season?
Well, Danny, I would say there are a few reasons to be bullish and reasons to be cautious. So if maybe we start with the caution, the sector as a whole really rallied last year. The S&P 1500 group of defense stocks was up more than 40%. You had, like you were talking about, big rallies in some of the names like Northrop, even bigger gains in L3 Harris, RTX. And that has taken the valuations higher as a group. You have bets on, for example, the U.S. growing defense spending to $1.5 trillion in 2027. Of course, that has not come close to being signed into law yet, so there's some risk that things won't materialize. That being said, there are pockets of potential opportunity here. Lockheed Martin and General Dynamics still trade at a discount to the broader market on a forward price to earnings basis. So investors are not necessarily bracing for steep downside here.
You know, Northrop Grumman's supposed to pay a $2.30 dividend. General Dynamics, a $1.50 dividend. All of these companies typically pay big dividends or give money back to shareholders through buybacks. Is that off the table for 2026?
We just don't know yet. The Trump administration did issue its executive order that was trying to curb buybacks and dividends at what Trump has called underperforming military contractors. That being said, it remains to be seen. Will there be legal challenges? What companies will be included? Just in general, whether and how this will be applied. Now, RBC does point out that this sector is in the political crosshairs. So even if that's not all sorted, there is a general level of volatility investors can expect going forward. At the same time, defense spending rising around the world, we could get some color on specific programs when companies report this week. For example, Lockheed's deal with the Department of Defense to boost Patriot missile output, and that could help move the needle in the other directions. So again, I hate to say I don't know, but these are a few of the things that investors are watching as they try to sort out what this all means.
All right, Matthew, we'll continue to talk to you about this then. Bloomberg's Matthew Griffin covering the defense stocks for us. Coming up in the next hour, Lauren Goodwin joins us on the pressure on the U.S. dollar as well as earnings expectations. Plus, we'll talk energy demand with the CEO of Baker Hughes and TrueCar's Scott Painter, a pioneer in online car sales, will tell us what AI can do for the sector. This is Bloomberg Open Interest.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
CBS News on the Hour, your original reporting.
I'm Deborah Rodriguez. President Trump sending an envoy to Minnesota amid outrage over the second shooting death by ICE agents there in a month. This time, ICU nurse Alex Pretty was killed. Correspondent Natalie Brand.
He announced he is sending his border czar, Tom Homan, to Minnesota, saying he's and fair and, quote, will report directly to me. Now, Caroline Levitt, in reposting this message, said that Homan will be managing ICE operations on the ground and will also those leading investigations into alleged fraud in Minnesota.
A federal judge in Minneapolis will consider the legality of the president's immigration crackdown. A massive storm that's left states from New Mexico to New England in a deep freeze is winding down. It's not enough for this man in Doylestown, Pennsylvania.
It's slick, it's cold, it's really windy, and it's predictable.
The fallout is affecting airports outside the storm zone. KNX Radio's Craig Figner is in Los Angeles.
LAX reports more than 200 flights canceled.
Our flight was supposed to be at 12:33. We got rescheduled at 1:41.
You're talking about 12:33 this morning?
This morning. We go to TSA to try to at least get through the gate. They closed.
TSA is closed?
TSA was closed. So we slept right here.
No, just stopped. Able to miss the storm this weekend. I was worried.
A total of almost 6,000 flights are canceled into and out of the U.S. today. Israel says it's found the body of the last remaining Israeli hostage in Gaza. Linda Gradstein reports from Jerusalem.
Ron Gavili, a policeman, was 24 when he was killed defending an Israeli kibbutz during the Hamas onslaught into southern Israel, and his body taken into Gaza. The Israeli army announced that it had found his body after searching in a cemetery.
Israel says it will reopen the Rafah crossing, a lifeline for Palestinians, in days. A U.S. official tells CBS News the USS Abraham Lincoln aircraft carrier strike group entered the Middle East region this morning. That includes Iran. It comes as Tehran issues new threats. The nation's Revolutionary Guard commander threat that his force had its, quote, finger on the trigger. A new survey of businesses finds many are cautiously optimistic about what's to come. in the months ahead. NABE analyst Lester Jones.
Our member firms are absolutely cautious about what's happening. We see some positive aspects to the economy, but it still leaves us in a position where we're just going to hold pat with the number of employees we have.
It's not just gold. Silver broke another record today. This is... A pile-up at the Tour Down Under after cyclists collided with some marauding marsupials.
Australia's Jay Vine and several riders were about 45 miles into the 105-mile stage when two large kangaroos suddenly hopped onto the course, knocking them off their bikes. At least 5 riders were forced to retire from the race. A serious injury was suffered by one of the kangaroos, which had to be euthanized. Vine went on to win Tour Down Under for his UAE team Emirates. Vicky Barker, CBS News.
The Super Bowl is still a couple of weeks out, and Budweiser's Clydesdales are making headlines again. Your giant this commercial has one of its iconic foals befriending a down-on-its-luck eaglet. They support each other, rain, snow, growing pains, and flying lessons. The ad ends with the bald eagle seeing the Clydesdale back, spreading its wings, and taking off. Deborah Rodriguez, CBS.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Monday morning from the Bloomberg Interactive Broker Studio in New York City. Snowy New York City. We are all here. The gang's here. We're also streaming live on YouTube as well, so check us out there. Scarlett Fu, Paul Sweeney. This is the Bloomberg Intelligence program. Coming up, we're going to check in with Rob Caroline, Bloomberg meteorologist, to get his thoughts on kind of where we're going to go from here with this weather, post-snow, sleet, all that kind of stuff. It's going to be cold, folks. Julie Fine, Bloomberg Texas Bureau Chief, on the U.S. travel chaos set to linger as airlines try to restore flights. This is a nationwide problem, so we'll get the latest there. Miles Miller, Bloomberg senior reporter on the winter storm. He's in Central Park. We'll get the latest reporting there. We're going to hear from the city like now to see about what's the next steps are. Frank Monkham, head of macro trading at Buffalo Bayou, to discuss his outlook for the market. So we had a lot coming up in the next couple of hours on a green screen day. Stocks trading higher. Let's go to John Tucker for a Bloomberg Business Flash.
All right, guys, this flash brought to you by IBKR. Will the U.S. unemployment rate exceed 4.5% in January 2026? An IBKR forecast trader. The yes was recently at 33%. Start predicting today at ibkr.com/forecast. Last trading day for this contract, February 6, 2026. Right now you have 10 of the 11 major industry groups in the S&P 500 higher, with the winter storm forcing everybody to gobble up more power. It is utilities that is the best performing individual sector right now. Worst performing industry group, that belongs to consumer discretionary, and that's home to shares of Tesla. They are lower today. NVIDIA investing an additional $2 billion in CoreWeave. As a result of that, CoreWeave shares, they're up just about 12%. And then you have this week's lineup of Mega cap earnings should shape sentiment around the AI trade. We're going to be hearing from Meta Platforms, Apple, Tesla, and Microsoft this week. And then U.S. Rare Earth soaring. They signed a non-binding agreement with the Commerce Department to receive $1.6 billion in funding. They're going to try to accelerate production of rare earth elements, and as a result of that, those shares 17% higher. Meantime, a lot of focus on the dollar. Cameron Dawson at New Edge Wealth firmly focused on the greenback.
If we were to see a lot more dollar weakness, that would likely bring back the trade of non-U.S. stock outperformance.
And dollar DXY down 0.6% right now. The dollar's actually fallen about 2% in the last 6 sessions. There's speculation the U.S. is going to assist Japan, a kind of a coordinated effort to try and boost the Japanese yen. Let me give you a yen quote. Yen is right now at 153.73. As it moves lower, it's higher, so it's stronger by 1.3% right now. And of course, gold smashing through $5,000 an ounce, 51.2970 right now. Silver also at a record at 111.86. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Scarlett.
All right, John Tucker, thank you so much. We appreciate it. Scarlett Fu and Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, and we're streaming live on YouTube as well. As John was just reporting, we got strength in the stock market across the board here. Let's take a look at some stocks that are on the move today. We can do that. We are joined by Bloomberg's Isabel Lee. Isabel, what are you looking at today?
Let's start with CVC Capital Partners. It's an Amsterdam-listed firm, and they agreed to buy Marathon Asset Management. So this is a part of their efforts to widen their footprint in U.S. credit markets. Citigroup, in a note, said that the Marathon deal allows CVC to fill the white space that is in the U.S. credit market and should allow them to really just grow, especially in 2 areas, which is private wealth and insurance. So CVC is an Amsterdam-based firm. Ticker is CVC. It's down slightly by 1%, but still, it's good news for the company. The deal includes earnout consideration linked to Marathon's future financial performance over 2027 to 2029. I mean, most deals have that.
All right, good stuff. What's next on your list, Isabel?
Mankind, ticker is MNKD. The stock is barely hanging in there, up by 0.4%. We have the FDA approving an update to the company's inhaled insulin. So this was the first time I heard that there's such a thing, and it's revising recommendations for the starting mealtime dosage. So the revised recommendations are for Afrezza, that's the inhaled insulin that's approved to improve glycemic control in adult patients with diabetes mellitus. So revisions include recommended dose conversions from injected mealtime insulin or insulin pumps. So that's good news for the stock. I feel like with these companies, it's always, whenever there's an FDA approval or any regulatory news, the stock really just spikes higher.
Or they can move down too.
Oh, yes.
I mean,
or move lower, yes.
I mean, you got to be on your toes with those kinds of names. How about Revolution Medicines?
This one is really moving a lot lower, down by 20%. Ticker is RVMD. So they slid after Wall Street Journal reported that Merck ended talks to acquire the biotech firm, citing people familiar with the matter. And this came after the two companies couldn't agree on a price. So the deal, if it happened, could have valued Revolution Medicines at around $30 billion, the report said, adding that talks could restart or maybe another suitor could emerge. So Merck really has been looking for deals that will strengthen its treatments to counter patent losses that will erode sales by around $18 billion in the next years.
All right, thank you so much, Isabel Lee, with our Market Movers on the morning. And for more conversations like this, subscribe to our Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. It is a full house in our Bloomberg Interactive Broker Studio because we all made it into the office.
You all came in yesterday.
We all came in yesterday.
Did the hotel
correction.
thing.
That's right. So we're all in here, but I imagine throughout the city and through much of the East Coast and much of the country, people are working from home and hoping to have things return to normal pretty soon. Rob Carolyn is Bloomberg's meteorologist, and he is here with us now for an update on this storm. At least in New York, it stopped snowing, and I think cities and crews can start getting things back on track once again. But Rob, before we talk about how that effort is going, there's speculation that there's another winter storm coming this weekend?
That's the potential, Scarlett. Yeah, we're in a very active weather pattern, and I think we're probably going to see a couple more storms before we finish out with the month of January and into February. With the polar vortex as far south as it is, storms are going to be forming on its periphery. We saw this happen during the winter of 2015 when a lot of the northeastern United States got absolutely buried during the month of February. And we're starting to set up a similar pattern with record to near record cold temperatures sitting over the eastern half of the country, and then the storm track setting up over the areas from the Gulf of Mexico to the Atlantic coast. So yeah, there is the potential. We'll have to keep a very close watch on it. Not a lot of melting from what fell either in the form of sleet, freezing rain, or snow this weekend. What's on the ground is going to stay on the ground for the foreseeable future. And as you mentioned, we may be adding to it by late in the weekend.
Hey, Rob, how about our friends down in the southeast and the southwest and Texas that had a lot of ice issues? How does that play out for them?
Well, they're going to slowly recover today, Paul. The big problem is temperatures are very, very cold, even all the way down into Texas. Much of the country east of the Rockies covered by cold weather warnings or advisories. Dallas today is only going to be 28. Temperatures are going to be only near 20 in Nashville. Western Carolinas are only in the 20s. So those areas that had significant icing, not going to thaw out today, not going to thaw out tomorrow. It looks like their temperatures stay below normal right through Friday.
We talked a lot about how big this storm was and how it covered a wide swath of the country. This Arctic freeze that has now come in after the storm, how broad is this Arctic freeze? How much of the country does it cover?
Well, right now we've got cold weather advisory, Scarlett, from the Dakotas to Brownsville, Texas, eastward to northern Florida, and then northward to New England. So it is literally the eastern two-thirds of the country. It is an impressive air mass. So we've put so much snow cover now down over the country that it is going to hang around for a while. And it looks like towards the end of the week, it may get reinforced from the Dakotas to the Great Lakes and the Northeast.
Rob, thanks so much. We really appreciate your reporting here after this storm. Rob Caroline, he is Bloomberg meteorologist, giving us the latest there as folks are digging out. One area that has been impacted for sure has been air travel. No surprise there with the storm, stretching across so many parts of the country, wreaking havoc on air travel. Let's get the latest reporting. Julie Fine, she is Texas bureau chief for Bloomberg News down there in Dallas, where it's a little colder than the Texans are used to. Julie, talk to us about kind of where the air system is these days.
Well, the good news is, by the way, let's start with that. Most people are in good shape here. There's about 8,000 power outages in the Dallas-Fort Worth area, which is good compared to the fact that there are more than 4 million customers served here in that area. However, this could break record cold here today. It could get down to 9 degrees. That is a possibility. So obviously very cold here right now. And people here are not used to it. Obviously, either are the roads. The roads here are built for heat. They are not built for ice. So basically what everyone does here now is just simply wait. Got to wait for the sun.
Okay, that could be a long wait. Talk to us about how the Texas power grid is holding up so far.
Power grid is holding up so far. There are plenty of reserves in the power grid. They have a dashboard. We've been checking it constantly, and the reserves are fine. What we're dealing with here is localized outages. If there's ice on a power line, that has nothing to do with the power grid, and that's just basically waiting for that to be restored. But again, in the Dallas-Fort Worth area, you're under 1% of people without power. Now, of course, nobody wants to be in that 1%, but overall, the grid looks fine for right now.
How are the airlines doing right now, Julie?
The airlines are not having the best time. I mean, Dallas-Fort Worth, as you know, is a massive hub for American Airlines. A lot of flights have been canceled. In addition, if you look on social media, see a lot of people saying once they do land, they're sitting on the ground and they're waiting for a gate. So the airlines have to obviously deal with this because of de-icing, because of getting crews in, and for problems throughout the United States.
Yeah, pretty remarkable numbers, Paul. Sunday marked the highest number of cancellations since the early days of the pandemic.
Yes, I saw that.
22,751 flights scheduled for back in 2020 with 12,143 cancellations, and we're hitting similar numbers right now.
Yep. Julie, what's the FAA saying about when maybe air travel will get back to more normalized service levels?
You know, I'm not 100% sure how they are affecting the weather here in terms of when it will go. However, I just did see this morning that there's a bunch of more cancellations here in the DFW area. So obviously here, it is basically a wait for the sun. Again, we are expecting that tomorrow. We've got a little sun. You can see here behind me at home, we've got a little sun, but if you're not over 32 degrees, that's a problem. So by tomorrow, things should be moving a little bit more back to normal.
All right, Julie, thank you so much. We appreciate it. Julie Fine, Texas Bureau Chief for Bloomberg News. She's based in our Dallas, Texas bureau. But again, some freezing temperatures down in that part of the world with the ice. They're not used to that.
They escaped the Northeast so that they didn't have to deal with that.
Exactly. Yeah, we come down here because we don't like taxes. We don't like cold weather. Well, it follows you, it seems like. But the good news is, as Julie was just reporting, the Texas power grid seems to have held up really well.
They've had to learn some hard lessons since 2021, right?
Yeah, I think they have to. I think they've done a pretty good job, it seems like, of kind of making that a little bit more robust and dependable. S&P futures up 35 points. The Dow up 230 points. NASDAQ up 112 points. So solid green performance here today. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Let's start off with gold. It's, kind of the inverse of confidence. Gold smashing through $5,000 an ounce. It's pushed even higher extending this breakneck rally. Right now, spot gold up 2.2%, 51.2570 an ounce. Silver also spiking to a record. It's above 110, 111.83 right now. And then you have the dollar DXY. This continues to weaken. There are signs the U.S. is going to join Japan in a coordinated foreign exchange intervention. Now, if that's not enough to absorb, Wall Street also looks to tech earnings this week. At Meta, Apple, Tesla, and Microsoft are going to be reporting. A lot of power plants fire with natural gas, nat gas, crossing over 620. Well, wow. 623 right now. Oh, I can't wait to get that bill. Also, was energy the best performing industry group right now in the S&P 500? Oddly enough, wouldn't have expected this. The worst performing stock in the S&P 500? Generac Holdings, the
generator
people.
That's usually not expected on a storm day.
Down 5%. I don't know if it was bid up ahead of that, but anyway, S&P 500, 40 points higher. That's up 0.6%, 69.56 right now. The Dow, 258 points higher, and the Nasdaq Composite Index, 140 points higher. Let me do Treasuries real quick. The more policy reactive 2-year with a meeting this week, FOMC decision, 359. So that's unchanged. The 10 is down about 2 basis points. That's at 420. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Scarlett.
All right, you mentioned Generac, and it did reach about a 3-month high on Thursday, so that's probably why. And you know what? If there isn't like a widespread blackout, then people maybe are like, okay, we don't need to be holding on to this.
Maybe the power outages came in less than expected.
Yes, exactly.
Okay,
it's a strange world when that happens.
It is. We'll see how that plays out. All right, very good. John Tucker, thank you. We appreciate it. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. On one of our screens here in our Bloomberg terminal, we see New York City Mayor Mamdani making some remarks at City Hall, I believe. We'll have to check. Talking about the snow situation here in New York City. Let's get our reporting here. Miles Miller, senior reporter for Bloomberg News. He is in Central Park. He's been there all morning. Miles, what do we know about New York City and its plans to move this snow out of here somehow?
Yeah, I was just listening in on the mayor's press conference from City Hall. There are 5,000 sanitation workers who are working 24 hours a day on shifts in order to get this snow out of here. A lot of the snow that's at the edge of major avenues and thoroughfares needs to be melted, and so they hired emergency snow removal crews to do just that. They're going to be on your streets with shovels, picking up that snow and moving it, trying to get it into the storm drains, and then when it can't be, to be carted out and melted altogether. We know that 400,000 students logged on for remote learning today, and what we know is that of those students who are logging on, most of them are within the age range of kindergarten to 5th grade, but they should be back in school tomorrow. We also know that the mayor said he hopes to have the city operational by tomorrow. And he is paying close attention to making sure that people are getting where they need to safely. This, obviously, the storm has had will make quite an economic hit to many people, with average storm claims within the last cold snap reaching about $15,000 for water damage and freezing. And it's not just that. Of course, energy markets, as you've been talking about this morning, are reacting, with natural gas spot prices surging 57% in just in 1 week. And what we know is that's because the cost to deliver that energy is so much more than it was during the last storm, because of all the effects of AI and data centers and all of that as well. Retail's failing it too, as you know. When you looked at the grocery stores, you saw those posts on social media with those empty shelves. People went out and made sure that they had their groceries, they had the salt and all of that. And so that will be having an impact as well. But, you know, this storm here in New York and in the area was one that was very dangerous, but one that the city seems to have handled pretty well.
You know, although my heart breaks a little bit for kids who don't get the snow that
I guess
we used to have.
That's not going to happen anymore, I guess.
No. Well, I mean, but they used to build in snow days for this.
Yes.
exactly the scenario. In any case, Miles, given that there didn't seem to be much of a morning commute, we all stayed in the city, so we were walking to the office today, and I didn't see necessarily like the streets plowed or anything. What can you tell us about the transit agencies and public transit, whether it's back on track?
Yeah, of course, the MTA is operating on or close to schedule when it comes to the subways and buses. We know that there is augmented service on the commuter rails, the LIRR and the Metro North Railroad. This is quite shocking. You've got a new governor in New Jersey, Mikey Sherrill. New Jersey Transit is still not operating in the way that you would hope it would be. We know that bus service resumed on many lines as of 10 o'clock this morning, but much of the rail line and the light rail system is still offline, and it's unclear why Metro North Railroad and Long Island Railroad are able to operate easily in these storms, but New Jersey Transit seems to still have issues operating, and that'll be something that we'll continue to look into. But yeah, as you said, no snow day for kids, because what happened is the school system factored in 3 new religious holidays, and so there's no time on the back end. Of course, New York City schools end so late anyway. They end basically like June 26th, 27th, and so you couldn't do it. But the kids were out yesterday. I found this is the nose of a snowman, and oh, sorry, goodbye.
You took it off the snowman.
So yeah, kids were out here having fun.
He's making
goodbye.
kids cry in
See you
Central
later.
Park.
Get out of here.
Disassembling their snowmen.
Exactly. All right, Miles, thank you so much. We appreciate that. Miles Miller, he's out there for Bloomberg News in Central Park.
Stay
here.
warm, Miles.
Yeah, but I had just gone on the New Jersey Transit app. They are not taking me home today, at least at this point. So
how are you going to get home, Paul?
John and I are going to take the ferry from East 35th Street to the Highlands in New Jersey, which is where John's got the estate there.
And then from the Highlands, how do you
I'm
get
going to
back?
hop in an Uber and hope for the best.
He's hoping to hop in an Uber.
Otherwise, I'm hopping on John's Tucker's
my couch is very comfortable, Paul.
Let's get back to these markets here. Again, we got a lot of green on the screen here today with the S&P up about 0.5% Frank Malcolm joins us. He's head of macro trading at Buffalo Bayou. Frank, thanks so much for joining us here. Love to get your thoughts as you were kind of starting out 2026 after a year where U.S. equity investors did very well. International equity investors in many parts did even better. U.S. fixed income folks had high single-digit returns. How do you frame out a 2026 after that kind of performance?
Hey guys, thanks for having me, and Happy New Year. Look, this year 2026 is going to be a year where we see geopolitical risk really moving back to the forefront here. I mean, we saw Davos really, kickstarting things here, and I think that the policy risk that we're seeing ahead of us now, typically, when you're dealing with policy, you always think of policy being a backstop and a volatility suppressor. But this time, policy is really a volatility instigator. And I think Davos really confirmed that. I think it's going to be a really volatile policy and geopolitical environment from Davos really to the midterms. And as far as the rates market is concerned, I think that we're in an environment where we've seen volatility really having compressed a lot in rate space. And I think it's one of those, periods of times where it could be the calm before the storm, where investors are really taking the time to kind of, get a pulse of this market from a policy perspective. We already know what's coming in the pipeline in terms of monetary stimulus and fiscal stimulus, but I think it's really the direction of policy that's gonna dictate which way we really escape this range as far as the rates market is concerned. When it comes to the yield curve, I think the high conviction trade here is really for the curve to continue to steepen. We know the Fed has an easing bias, so that's going to keep the front end anchored. But the back end, really, as you know, from 10s onwards, has a lot of things to deal with, from fiscal dominance to potentially some inflation back in the pipe with fiscal and monetary stimulus, but more so, the policy risk and the policy uncertainty that's ahead of us here in 2026.
Okay, so one of the most popular trades, the steepening yield curve, continues to maybe have more room to run. Let's talk about currencies for a moment here, because what we've learned is that on Friday, the New York Fed asked traders for what's called a rate check to confirm the price of yen versus dollar. And a lot of folks in the market are interpreting that as a sign of concern regarding the weak yen and a setup for some kind of joint intervention from Japan and the U.S. to support the yen. how are you thinking through what we're seeing in the currency markets? John Tucker was pointing out that the yen is stronger, and I mean, it's a pretty sizable move for the Japanese currency, currently now at 153, gaining 1.2%.
Yes, I mean, I think we kind of anticipated that to happen. I mean, the volatility that we're seeing in the yen was very disturbing to global macro markets. And as you know, the FX market is very tightly linked to rates markets. And I think the reason why the U.S. has even more incentive to step in and do coordinated intervention with the BOJ is because we saw the escape higher in yields in Japan, and the potential contamination effect that it can have on U.S. rates. As you know, this administration is very concerned with making sure that rates stay in check. So I think that just provided an extra incentive for the U.S. to really join Japan in trying to not just tame the level of rates, but also the volatility. Because a lot of times it's not so much the level, but it's how fast things move that really get policymakers. Yes, correct. That really gets policymakers nervous.
Frank, how do you see opportunities here, U.S. versus non-U.S. across the markets you look at?
U.S. versus international?
Yeah.
I think the U.S. in the equity space really is one of the areas where I think there's really value in national equities. I think the valuations that we're seeing in the U.S., some of the positioning that continues to be stretched, and also the weakening, the bearish sort of consensus that we're having on the dollar, I think continues to manifest itself. We've seen today the DXY now is back down to 97. I think that's a trend that's going to continue to extend here over the medium term. So that provides a good opportunity for investors to look to diversify away from U.S. equity into European equities, where valuations continue to be more attractive than what we're seeing here in the U.S. And I think the tail risk, when I think about U.S. equities more specifically, I think of a story really that's around tailwind and tail risk. So the tailwind is still there with fiscal stimulus, monetary stimulus, obviously, being bullish for equities. Earnings continue to be resilient, but the tail risk are around geopolitical risk, policy risk in the U.S., and also positioning. And I think those risks are a little bit more manageable in European equities at the moment. So I think there's still a good relative value proposition from European equities versus their U.S. counterparts.
Frank, thanks so much for joining us. Always appreciate getting a few minutes of your time. Frank Malcolm, he is head of macro trading. The firm is Buffalo Bayou, joining us there as the markets trade higher here. Look at the S&P 500 up 37 points. That's a 0.5%. The Nasdaq's also up about 0.5%. The Dow's up 215 points here. The VIX sitting right around 16. 10-year Treasury yields 4.20%. The DXY index, it is lower again today, below 97, 96.96. Continued weakness in the U.S. dollar.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Right now, stocks are pushing higher. The major averagers in the green. S&P 500, 35 points higher. That is up 0.5%, 69.51 on the index. The Dow Jones Industrial Average up 195 points. And the NASDAQ 125 points higher. That is up 0.5% right now. Among the individual movers, God bless you, NVIDIA investing an additional $2 billion in CoreWeave. They're trying to speed up this effort to add more than 5 gigawatts of AI computing power by, 2030. Right now, shares of CoreWeave up 10.3%. Merck, according to the Journal, no longer in talks to acquire the biotech firm Revolution Medicines. They couldn't come to an agreement on the price. Revolution Medicines right now 18% lower because of that. Then we just heard that the Treasury Department canceling $21 million of contracts with Booz Allen after the firm failed to protect taxpayer data. So they say, 21 million, not a great deal, but it is pushing the stock lower right now. Booz Allen down 7.7%. And with tech earnings this week, Drew Mattis at MetLife says some historical perspective is in order.
If we look back to the internet age, a lot of the companies that kind of made the promises that the internet age finally fulfilled aren't the ones who were around to kind of experience it. So, I think we want to be really careful here that we know exactly how AI is going to play out.
And gold and silver continue the record push higher. Gold 51.1250, up 1.9%. Silver through 110.71 right now. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Scarlett.
All right. Thank you so much, John Tucker, with our Bloomberg Business Flash. The Booz Allen Hamilton contracts, that's interesting because all these government contractors, when Doge really went to the fore, their shares were super volatile because it wasn't clear whether they were going to get more business as Doge reduced the headcount of government employees and perhaps outsource more business, or whether they were going to cut those contracts to these government contractors.
Yep, and Anurag Rana has said, because he follows a lot of the consultants, they're losing business on the margin because companies are allocating more of their CapEx budget to AI and less to some of the consulting. So that's been a pressure point over the last couple of years.
Yeah, so these shares, and it's not just Booz Allen Hamilton, there's a couple of these names that are all super affected by all of this.
Yep.
All right, we also have a lot of corporate news to kind of take stock of because we've got a big earnings week this week. 4 out of the 7 mega cap tech names will be reporting. You've got Apple, you've got Microsoft, you've got Meta. The only ones that we are not hearing from right now are Amazon and Alphabet.
Right.
And
so
NVIDIA.
we have, and it's been a while since we've kind of really focused on the AI part of the story here in the economy. It's kind of taken a little bit of a backseat to some geopolitical issues, Davos and so on and so forth, but that's going to come right back to the forefront here. And investors will be keen to see absolute dollars being allocated towards AI and arguably even more importantly now, some of the returns that are being generated by some of that CapEx spending.
Right. Analysts are saying that any sign of a slowdown could be seen as hyperscalers perhaps losing trust in the possibility of monetizing those investments in a timely manner. My question is, in previous quarter, too much spending raised concerns. So what is it that investors are looking for? Is there a Goldilocks amount that companies have to hit, or does it kind of depend on how management explains what they're spending and what their strategy is? I don't know what I'm looking for, but I'll know it when I hear it.
Right. I think that's going to be important here because, again, I think most of the markets, at least has a handle on what the total dollars are here, and it's a big spending. But I think we've kind of gotten used to some of those huge numbers being thrown around and maybe some of those circular deals. But again, now it's pay up time. Here's something for Damian Sassower that's interesting. Ecuador plans to sell dollar notes for the first time in like a long time. Ecuador's, I think JP Morgan, B of A Securities and Citigroup are handling the sale. $4 billion of new bonds. Apparently Ecuador's dollar notes they're actually trading very well. 59% return last year, one of the best performances in emerging markets. So coming to the market again. So it's maybe a sign of more continued strength in emerging markets going forward.
The first issuance since completing a restructuring in 2020. I mean, timing-wise, it's good in terms of there's a renewed interest in emerging markets. There's a renewed interest in seeking returns outside of the U.S. Not to say that the American exceptionalism trade has ended, but maybe it's slowing down. Maybe it's kind of at the, eighth inning as opposed to the third inning.
Yeah, so it'll be interesting to see because you don't see, Latin American countries come to the market that often with deals of this size. So we'll see. And the yields, the yield talk, I guess, here for this is you're going to pay up. I mean, they're paying up here 9.375% to 9.875% is kind of the price talk right here. So that's where you are. Let's switch over and do a little healthcare here. We can check in with Sam Fazeli joins us from Bloomberg Intelligence. He's over there in London covering all the healthcare stuff for us. Sam, what's front of mind as you go into earnings season this season for investors in some of the biotech and big cap, big pharma companies?
Yeah, so Paul, I think what people hope to hear and expect to hear is that all that MFN stuff is behind us. All the negotiations that have happened, they're not worried about any talk of it anymore. And of course, what people are also looking for is what pharma is doing, looking into 28, 29, 30, whether some patent expiries, how good is their pipeline looking? Are they still solidly behind it, etc.? Do they have any negative things to say about any of their pipeline? And also listening out for M&A, right? M&A is what the solution to some of these issues they might have with their patents are. And therefore, that's what biotech investors are looking for in terms of what are the kind of commentary. Remember, Paul, we just had this up and down yo-yo with Revolution Medicines share price, where there was a rumor that Merck might be wanting to buy them. And at JP Morgan, they said, look, we got tens of billions of dollars to put to work. And of course, that's the sort of number that people were thinking about Revolution Medicine. And apparently, they've walked away from each other. So we've done a lot of analysis on that, but that's the sort of thing people are going to be looking for.
I didn't realize that Merck was this price sensitive. I mean, how much more particular, how much more price sensitive are these big tech, not big tech, sorry. They're, in a way, they're kind of like tech companies, big pharma companies going to be at this stage of M&A?
Yeah, I mean, there's price and price though, right? I mean, what we calculated here is that at about a $30 billion value for Revolution Medicines, the only way it would have worked is if you had the largest number that we might be out there already with in terms of sales going out to 2035 and assume a massive cash generation out of that, something in the region of 60, 70, 80% cash conversion. Doable. Novo had a few years of having like almost 100% cash conversion. The point is that doesn't usually work in a standard pharma company. So we just thought that number was too much, and it turns out to be what the company came back. Not too much, but too hard to justify. I mean, Revolution Medicines is a classy company. It's got a great pipeline. Probably is going to change the fate of many people with pancreatic cancer. We'll have to wait and see the data. So there's a lot going for them, but price sensitivity, I mean, $30 billion is a small amount of money.
M&A in 2026, Sam, should we expect it to be another robust year in the healthcare space?
Yeah. I mean, biotech was pretty good last year in terms of pharma buying them and some biotech buying each other. You had Genmab buying Merus. So I think that would be still the case, whether this deal happens or not, or whether it happens at $110 a share or whatever, or never happens. There's plenty of good assets out there. What also we're looking at for 2026 is IPOs. We've had a couple already. It's holding above the issue price. And I think people are hoping maybe we get 20 to 25 IPOs in 2026 in the biotech sector.
Fantastic context there. Sam Fazeli, he's our Director of Research of Global Industries, but our go-to guy in all things biotech. Sam Fazeli of Bloomberg Intelligence in London. All right, let's stay with what's happening overseas because David Wu has been one of my favorite guests for years. He was the head of interest rates and economic research at B of A for many, many years, one of our long-term guests. And then he retired. He had told me even before he retired that he was planning to write a book. And this book is now about to be published. So David Wu joins us right now. He is the founder and strategist of Unbound Retail on his new book, Merry-Go-Round Broke Down, a novel of guilt, greed, and globalization. David, good to speak with you. You now live in Israel. You've written this book. It's about to be published, except the world is very different than what it was when you first started writing this book. What stage of globalization are we at right now? Isn't it just deglobalization?
I think, honestly, Scarlett, I think it's as dead as dodo, actually. And the way I look at this is that I'm just hoping, I know it's over. I'm just hoping that, we're not going to throw out the baby with the bathwater. And this is the reason why I wrote the book, by the way, because I now want to basically take the war, the battle over globalization, to the general public. This is why I wrote it as a novel as opposed to another policy book, because I want to basically explain, I want to basically make accessible the story of globalization to every person in the street, regardless their background, so that we can make a decision about which part we want to keep and which part we want to part with. So that's really the purpose of the book, because I think, to be honest with you, I think for the world to be a better place, there's never been more important for everybody. I'm talking about everybody to understand the workings of the world.
So, David, to the extent that globalization is at the very least losing prominence in global trade, some people would say the era of globalization is over. I don't know. What's changed in the last several years? Because it really seemed to be on a post-World War II pretty solid trajectory.
Right. I think for the most part, I think, the honest truth is, if you look at what's going on, right? I mean, we all know the U.S. has not only been the guarantor of the rule-based global order that's been in place for, 70 years, let's call it that, right? And the U.S. has also been, the biggest beneficiary. Now, so the question is, why all of a sudden the U.S. wants to walk away from this rule-based order? I think the answer is pretty obvious, which is that the U.S. was the main beneficiary as long as U.S. economic and military domination was total. And it's become very clear that this is no longer the case. And therefore, the U.S. decided that, you know what, we want to be able to reposition ourselves in a competitive way. This is why we want to basically do away with the rules. And this is why, in a way, the whole Maduro's extraction from Venezuela was not about the U.S. is trying to go down to Venezuela to promote democracy. I mean, this is really about an oil grab. It's about the U.S. It's China, no longer the U.S. That is the dominant trading partner for South America, the biggest sovereign lender. And then U.S. decided, that's it. That's what we're going to do. So I think from that point of view, this is what it is. I mean, it's not about globalization or not. It's about the global, I think it's about the root-based international order that has come to an end. I mean, I think from that point, I'm sympathetic to the view of, Mark Carney, who declared this thing is over.
Right. And to the U.S.'s credit, or to President Trump's credit, he never pretended that this was about promoting democracy in Venezuela, right? It was always about oil, and he was pretty upfront about that. So in your book, David, Merry-Go-Round Broke Down, you have a number of different characters to really tell the story of globalization from their perspective. There's a director of a failing factory in China, a trader in London, a Japanese housewife who learns and perfects the yen carry trade, a Mexican artist who becomes an undocumented worker in the U.S. Which is your favorite, first of all, to write about? Which is the one that you think can survive in this next stage of globalization/deglobalization?
The honest truth is, and I'm embarrassed to say this, is of course the hedge fund manager.
I knew it.
Because in a way, it's very sad. It's very sad. I mean, this is why we have a K-shaped economy right now. The world could be going to pear shape, but somebody's going to make some money basically on their way down. And that's what it is. I mean, this is why, I think from that point of view, it's actually the financialization of a global crisis that's making a lot of people very rich. And I'm not just talking about, obviously, the hedge funds, whatever. I mean, everybody's trying to milk this cow, because what is really going on, also part of this is that, ironically, as Trump tries to dismantle the global order, the only thing that he cannot dismantle is the stock market. That's the honest truth. This is why it's taking Trump less and less time to tackle. And because at the end of the day, for him to go out there and win trade wars, he needs the U.S. stock market to cooperate. I mean, the honest truth is, if the U.S. economy would have gone into a recession last year if it hadn't been for the stock market. So from that point of view, that's just what it is. And so people get it. People get it. This is why everybody and their grandmothers overweight stocks. Everybody and their grandmothers overweight gold. So basically, buying stocks and buying gold has become the Trump trades of basically a second term. And it's about how he's going to dismantle the world, but he has to tackle when the stock market even has a little, basically, coughing contest.
Right. Okay. Stock market or bond yields, for that matter. David Wu's new book, Merry-Go-Round Broke Down, a novel of guilt, greed, and globalization. And in my advanced copy, I can see that there's some prominent blurbs from some prominent names. names: Paul Tudor Jones of Tudor Investment, Howard Marks of Oaktree, and Jagdish Bhagwati of Columbia University, an economics professor there. I'm curious to get their take on the book as well. Thank you so much, David. Good to speak with you. All right, let's head over now to Washington, D.C., to Laura Davison, our Bloomberg Deputy Washington Bureau, who's got an update for us on everything that's been happening on the front lines of what ICE is doing, especially in Minnesota. There's been some costs to this because we are seeing a little bit of skepticism, maybe some resistance from the Republicans. And Laura, can you put it into context for us in terms of what we're hearing from some Republicans?
Yeah, so there's been several Republicans who have come out in various degrees pushing back on the shooting over the weekend. You had Andrew Garbarino, who's a Republican from New York, who chairs the House Committee on Homeland Security, who said he wants to have an investigation into the shooting and ICE's operations on the ground. You also have James Comer, who's another top House lawmaker, who have said, really kind of pushed back and said that the White House needs to be careful here. We've also seen acknowledgement from the Trump administration itself that things may be getting out of hand in Minnesota. The White House announced earlier today that Tom Homan, the border czar, would be going to Minnesota to manage all of the on-the-ground operations. Tom Homan is, someone who reports directly to Trump, so a sign here that the White House, is not quite pleased with how things have been managed and wants to have a tighter control as this is spilling out and becoming very politically unpopular.
So sending the Mr. Homan into Minneapolis, does that suggest that maybe President Trump is starting to feel some political pressure about this, how this is all developing out there in Minnesota?
It certainly does. It's not business as usual for the White House. They're sending, they're essentially their top, political immigration person to manage this. We saw over the weekend, there was some polling that came out that showed that about 60% of Americans disapprove of the work that ICE is doing. This is a real sea change from, a year ago or even 6 months ago. The Trump administration and Republicans have really been able to own the immigration issue. Now we've seen that polling flip, suggesting that there's a lot of risk here for Republicans headed into a midterm year.
So Tom Homan going in there, I mean, is that for him to kind of oversee Kristi Noem? Does she become less the point person here, the Homeland Secretary?
It's certainly possible. We'll see how this remains to who will be the spokesperson going forward. But the ICE head, Greg Bovino, who's really been running things on the ground, Tom Homan can be seen as sort of being, cleared over him.
And we also have Minnesota CEOs. I guess not chiming in. I don't think that's the right word, but they are making
voicing
comments.
a unified voice.
There you go.
Yep, of just maybe some concern about what's happening there.
Absolutely. Target, of course, very prominent because of where it's headquartered in Minneapolis. Tell us a little bit about how they are now speaking out.
Yeah, there was a letter over the weekend signed by several CEOs. You had, there's lots of big corporate headquarters in Minneapolis. You have United Healthcare, you have Target, you have General Mills. So there was this CEO letter that went out and said that they wanted to, essentially kind of pause all of the on-the-ground operations. Really an acknowledgement, both that they see this crackdown as bad for business, bad for workers, bad for just sort of general security, and also likely an indication that their employees are pushing back, asking their corporate leadership to do something here. Just another sign that there's really growing discontent from some of the signs that Trump listens to, business leaders, CEOs in the market.
In Washington, D.C., Laura, are you hearing any talk about maybe, again, as Scarlett was mentioning, the Secretary of Homeland Security, Kristi Noem, is her position is it tenuous at this point when you see the border czar, Tom Homan, being sent out there?
We don't have any indication yet that Kristi Noem's job is in danger. But when you start to have someone else, come in and sort of filling some of the functions that Noem had been doing prior, it raises a lot of questions about exactly what her future is like. I'll note the administration, and particularly Susie Wiles, the White House Chief of Staff, has been very clear about wanting to keep this original team that Trump went into the White House together, and they've been very reticent to fire people, at least so far.
Laura, thank you so much. Appreciate your reporting. Laura Davison, she's a politics editor for Bloomberg News. She is based down there in Washington, D.C. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour on Bloomberg Intelligence starts in just moments with the stock market holding on to some gains here. The S&P up 37 points. That's a half of 1%. The Nasdaq's up 138 points. That's 0.6 of 1%. This is Bloomberg Morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good snowy Monday. This is Bloomberg Intelligence from the Bloomberg Interactive Brokers studio in Midtown Manhattan. Paul Sweeney and Scarlett Fu. We are streaming live on YouTube as well. A jam-packed Monday here as we take you into the second hour of Bloomberg Intelligence. We're going to kick things off with a check with Miles Miller, Bloomberg's senior reporter, on the winter storm and how New York is managing through the aftermath of this storm in the wake of some Arctic temperatures coming up this week. RJ Gallo, senior portfolio manager of fixed income at Federated Hermes, will join us to give us his take on the markets as we see yields on move. They are lower this morning with the 10-year at 4.20%. We're also going to check in with Vincent Piazza, Bloomberg Intelligence's senior equity research analyst, on how this massive winter storm is dislocating natural gas. Nat gas has been on a tear over the last couple of weeks, although there's been, a shorting position heading into this big storm. So there could very well be, some short covering that's continuing to drive these gains. We will keep you posted on all of that. But first, let's get the setup on these markets with John Tucker for Bloomberg Business Flash.
Yeah, the markets are higher right now. The Dow Jones Industrial Average up 173 points. The S&P 500 37 points higher. That's about 0.5%. The NASDAQ 100, Scarlett, that's 149 points higher. That is up 0.6%. So you have utility stocks rising as the storm leads to increased demand. Utilities, best performing major industry group right now, the S&P 500. And since you mentioned nat gas, up another 18.5%, 625. Intel, most active stock, falling about 5%. And then ahead of the big tech earnings this week, the Bloomberg Mag 7 index right now up 0.6%. And the earnings scorecard, might as well do that. 64 companies, only 64 so far in the S&P 500 have reported. And of those, 81% delivering positive earnings surprises at this point. Not just earnings, the Fed likely to keep rates on hold. Policymakers meeting this week. Brian Belsky at Humilus Investments sees healthy signs in the markets.
At the end of the day, we think a broadening out of the market to more small mid caps is actually quite positive for the longer term breadth and positive nature of the overall secular bull market that we continue to call for.
But then there's this, I guess we can call it the debasement trade, dollar DXY. That is down again, right now down 0.75%. Gold and silver both pushing through records. And again, dollar DXY, that continues lower. This is kind of surprising. Disney's best performing film last year.
Yeah.
It wasn't Avatar.
Okay.
It was the cartoon about talking animals, Zootopia 2.
Absolutely.
Highest grossing American animated film of all time. $1.74 billion, $7 billion.
It's comfort food.
Yeah, I guess so. And the place where it really did well is in China. Go figure.
That's great. It's good for Hollywood that the Chinese market's reopening to Western films, because that had become the second biggest market in the world after North America.
And then I'm waiting for Hollywood East to open up in New Jersey.
Oh,
Hollywood
yeah,
East?
that's
Is
right.
that what they call New Jersey now?
Well, that's what I call it. Netflix is, the studio's underway. They're building it at the old Fort Monmouth.
Yeah, and that's a huge property. So I can't wait to see what they do there.
Where Dad Tucker met Mom Tucker during the Korean War, by the way.
Thank you for that bit of Tucker history.
Fort Monmouth.
Exactly.
Anyway, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker at your Bloomberg Business Flash. Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio. We are streaming live on YouTube as well, so check us out there. Green on the screen as John was just reporting. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Isabel Lee. Isabel, what are you looking at?
CoreWeave, the stock is popping up by 10%. That's the highest since November. So NVIDIA invested $2 billion in CoreWeave. This is to help speed up an effort to add more than 5 gigawatts of AI computing capacity by 2030. So NVIDIA purchased CoreWeave Class A common stock at around $87.20 a share. And as part of this collaboration, CoreWeave will be among the first to deploy forthcoming NVIDIA products. This is including storage systems and a new CPU called Vera. So lots of good news there. We know that NVIDIA is a dominant maker of AI space. And again, they're flexing their muscle.
They're flexing their muscle. They have a lot of cash to use, and they've already invested in CoreWeave. So this is kind of to build up, to buttress their current stake. All right, let's move on to your second stock.
Second stock is U.S. Rare Earth, ticker is USAR. The stock is up by also 16%, so really a huge pop there. They signed a non-binding agreement with the Commerce Department to receive $1.6 billion in funding. This is again to also speed up U.S. production of key rare earth minerals. The deal will support the company's spending on rare earth mining, processing, metal making, and magnet manufacturing. Of course, it's subject to further due diligence. But for now, investors are cheering because we know that rare earth has really been central to this administration, and production of that has been a key focus. We have MP Corp, that's a country's only rare earth miner currently producing. They also secured a landmark deal last year. So maybe this could be a trend.
Company's based in Stillwater, Oklahoma.
Oh.
Talk about middle America. That's cool. I'll always love that name, Stillwater, Oklahoma. All right, one more you got for us.
AppLovin, ticker is APP. The stock is in the green, up by 4%. So it's a mobile marketing app. So shares are rising after Needham upgraded the company to buy from hold. The analyst said that they have more confidence in the trajectory of the e-commerce revenue growth in the coming year. At the same time, the stock has pulled back off a few highs a couple of months ago. So price target is set to $700. That's a 33% increase from the close on Friday. But for now, the stock is down 25% from a December peak. But I guess that's why the analyst sees further upside for that, and that it's not overvalued. So for now, it's good news for the stock. I gave you all greens, actually.
Thank you for that. Well, in line with the broader markets, which are all higher, except for the small cap Russell 2000, actually down 0.25% right now. Isabel, thank you so much. Isabel Lee is one of our cross-asset reporters. And for more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. All right, let's check in with our Rob Carolyn, Bloomberg meteorologist, for the latest in terms of the weather, the snow, and how the rest of the country is getting through. Here in New York, Paul, John, and I stayed in the city overnight to make sure that we could get into the office.
And we have photographic evidence, Rob.
Yes, we do.
We don't need to share that with everyone in the world. You know, that's not going out on social media. But Rob, I do want to check in with you in terms of this winter storm. Is it pretty much over for the U.S., or is it still snowing in, maybe the north or northeast?
There's a few spots that are still seeing some snow from it, Scarlett. Winter storm warnings remain in effect for northern and central New England. There's going to be a couple more inches that fall over northern New England, northern New York State, and eastern New England this afternoon and tonight. May see a flurry or two in the next couple hours in the New York City area as this upper-level energy following the surface storm slides through. The big story now is this storm heading out into the Atlantic is just going to be pulling cold air down out of central Canada over the next several days. It was able to drive it all the way down to the Gulf of Mexico over the weekend, and that cold air is going to be very slow to retreat. As we finish out the month of January, we're going to continue to see below normal temperatures across much of the country east of the Continental Divide.
So what's causing this prolonged cold period of cold air here? Because it looks like a week or 2 weeks out.
Yes, we disrupted the polar vortex, Paul. So what happens is the polar vortex, a big storm up over the North Pole. Now that it has shifted southward, correspondingly, the cold air has shifted southward from the pole into central Canada and down in our area. The pattern is starting to get very reminiscent to what we saw in February of 2015, where we had a similar setup where the polar vortex got disturbed, a piece of it dropped down over the Great Lakes and Northeast, and we saw below normal temperatures and above normal snowfall for the month of February. And we're already starting to see some indications with some of the longer range guides now suggesting that there may be another coastal storm that we'll have to deal with late in the weekend or early next week. So the setups are starting to kind of get reminiscent to what produced in some parts of New England record snowfall from late January through February of 2015. There were areas around Boston that had over 100 inches of snow. Now, I'm not saying that's what's going to happen, but it's starting to get reminiscent of the prolonged cold we had in the winter of 2015 that continued right into March and April.
Wait. So if we get this storm this coming weekend, how does that set us up for the rest of February?
What happened?
Is it too early to say that?
No. It does, Scarlett. What happens is the more snow we put down on the ground, the more the cold air hangs around because the sunlight gets reflected by the snow cover. That perpetuates the cold. We saw that in February and March of 2015. So we had record snowfall in February of 2015. And then March 2015, temperatures were 7 to 8 degrees below normal for the whole month because it took forever to melt the snow. So it's a positive feedback mechanism that starts to breed on itself. If you start getting really deep snow cover over the Northeast, the Mid-Atlantic states, Great Lakes, it can lead to colder than normal temperatures for quite a while.
The Northeast ski resorts are loving this, by the way, in the meantime. All right, Rob Carolyn, thank you so much. Bloomberg meteorologist, giving us, the outlook here for the rest of winter. And if you love snow, I suppose you're, pretty happy about this.
Absolutely.
For everyone else.
But no snow days.
No snow days, yes, that's an old thing that no longer exists. Miles Miller is a Bloomberg senior reporter, and he is out in Central Park right now. He knows about this no snow days anymore for New York City, the public school kids. Why is that, Miles? Why don't New York City public school kids get snow days anymore? It's not as if global warming has eliminated snow days, because just look at what happened this winter.
Yeah, the city school system added 3 holidays, one of them Diwali and also Eid. And so in order to accommodate those holidays, 3 days that they added to the calendar, snow days basically are tough to do. And especially in this new environment, right after COVID, the ability for students to log on with Google Classroom's remote learning, it really sort of negated the need for these snow days. And, I grew up during an era where a certain person who we may know, who may be in our office, only had 5 snow days in 12 years in office. So I don't feel bad for these kids. What I do feel bad for is my wife, who's at home with the baby, because there's no snow days, the teachers at the daycare have to stay home. And so I just did a rendition of Skidamarink, of the Wheels on the Bus, and also his personal favorite, Old MacDonald, right before this live shot. I want to show you what's going on here in Central Park. Look at these guys. They're clearing the snow from Woolman Rink down there, and, they want to be able to let people skate eventually here, but that's the rink at Central Park, covered in about 11 inches of snow.
Looks like a field.
We're up at the top of this hill, right on top of the pond. Yeah, it's a really cool shot. And then beyond that is, of course, the smoke, or the heat coming out from one of the manholes here. Yeah, we're in Central Park. Lots of people have joined us here, and of course we know that the city has 5,000 sanitation workers who are trying to clear this snow away. And I'll tell you, they've been making their way through Central Park, and a lot of these park roadways have been getting clearer and clearer. And we're also starting to see a little bit of snow coming down. We're going to have off and on snow until about 2 p.m. today. And the city says they hope to have those schools back open tomorrow. So, listen, once you log off the remote classroom at 2 o'clock, 3 o'clock, come out and enjoy the snow. It's really beautiful. But yeah, those students are sitting in class and having to do math and reading and all of that kind of stuff. I don't feel too bad for them. I'm sorry.
Yeah, Miles, Mayor Mamdani just moments ago had a press conference in New York City where he was giving an update here. Did he suggest when they expect to get maybe the roads to, a much clearer condition?
Yeah, what he said was basically that the city has hired a bunch of emergency snow clearers who are going to be doing a lot of the work on those primary streets to get those sidewalks fixed and all of that. And then that snow will have to be melted or carted away. It takes quite some time. That snow goes basically right into the storm basin. So they're going to be trying to do that work as quickly as possible. But they're telling people if they see that there's a place that hasn't, especially bus stops and all of that have not been cleared out, to call 311 and they'll get somebody dispatched immediately. This new administration came in and started to look at old 311 complaints about city-owned sidewalks, city-owned buildings that had issues with snow in the past. And so they came in and immediately started to put crews there. It seems to have worked for some of those areas where they knew were going to be problem spots. But if you know anything, if you live in the city, call 311 to get, an area that seems like it has too much snow, has not been visited yet, fixed. We were driving around on the Upper East Side. Surprising, right? Like, you think the Upper East Side, they're going to get out and shovel that snow. 63rd Street, still some of those small businesses hadn't shoveled the snow, and you got to kind of do it immediately before it turns over to ice, and it's already starting to do that.
Yeah, there's a huge contrast between those buildings that have cleared the snow and those that haven't yet. So for those people who did go into the office and commute to work, and that includes present company, what is the setup for the evening commute? What is the status of public transit, MTA versus, say, New Jersey Transit?
Oh, yeah. MTA is operating on or close to schedule, basically. New Jersey Transit is slowly regaining its services. We know that the light rail system is basically back up and running, 15-minute delays, give or take. But the rail service for New Jersey Transit is still in flux. Some trains running, some trains not. The buses are largely getting back on schedule. But it's a big dichotomy in this city. A lot of people commuting in with New Jersey Transit have grown frustrated with issues with the service. When the MTA, Jano Lieber, who was on our air earlier, he was asked in another interview, did they ever consider shutting down service? And he said simply no, because the MTA basically has planned for snow like this. And, the system is very old, but you see some train stations that have snow in them because, there's the hatches from outside and all of that. But, beyond that, they basically know how to handle all of this.
Miles, thanks so much. Really appreciate Miles Miller, senior reporter, Bloomberg News, joining us remotely from Central Park. He's been there all morning, so we appreciate that and the team out there. John Tucker dropped something in our internal chat here. Governor Mikey Sherrill is going to make a winter weather announcement with the state police acting superintendent, with the Department of Transportation acting commissioner, and with New Jersey Transit president and CEO. So maybe we'll get an update there at noon about how things are going in the Garden State.
The rail service still suspended, New Jersey Transit.
Yes.
While Metro North.
Is this standard for a snowstorm?
No. I'm going to say there's nothing really standard.
That's a good point. But I think what's a little unusual today, just for folks in the Metro New York area, if the Metro North, which services northern parts of the city, Westchester, Connecticut, Long Island Railroad, which, as the name applies, services Long Island, if they're running, then it's likely that New Jersey Transit would be running as well. The fact that it's not is unusual, and I think that's what
and just a few days into her job as the new governor, she's facing the heat because of this, I would suggest.
Yep, exactly right. So maybe at noon here, Eastern time, we'll get some news
frustrated
on
New Jerseyans here.
Exactly. But John and I, we have a backup plan. Yeah, so we're going to be going to the high seas to get back home here today.
It's going to be rocky, right?
It's going to be rocky, but we'll figure it out. We're going to have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. And we are being brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver information guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Major averages pushing higher right now. The Dow up 131 points, a rise of 0.3%. The Nasdaq 100 up 142 points. That's up about 0.6%. And the S&P 500 35 points higher, up 0.5% right now. And pushing the index higher, Seagate Technologies, those shares up 6.5%. Arista Networks, that's up close to 6%. Then you have AppLovin, that is up 4.5% right now. This week's tech earnings mark the biggest test of traders' conviction in the AI story in months. And then you have global uncertainty getting channeled into precious metals. Gold, right now, $5,133.50 an ounce. Silver pushing through its record, 110. Right now, 113.56. And we have some IPOs. Once Upon a Farm, PBC. This is the organic kids snacks maker, co-founded by Jennifer Garner, the actress, and some of its investors seeking to raise as much as $209 million. At the top of the range, Once Upon a Farm could have a market value of $764 million. And then you have Bob's Discount Furniture. Yeah. We actually first got some indications a couple of weeks ago. They're going public, Discount Furniture Company, filing. It's looking to raise $370 million, and they'll trade on the New York Stock Exchange. I think Bob that's an available ticker, B-O-B.
I don't know.
I don't know what the ticker is going to be.
Yeah.
Anyway.
It's good to see some non-AI stories get into the marketplace.
Well, I'm sure yes. Bob's got something up his sleeve where he's going to have an AI-powered bed or something, a bureau.
Smart couches.
Exactly. Yeah. There you go.
We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash, Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube as well. Fixed income market 2025, solid year for sure. High single-digit total returns. And as I go to the INGO function, I see starting off the year with some more green on the screen, led by U.S. corporate high yield, putting up some good numbers so far year to date. Let's get a lay of the land of the whole fixed income space. We do that with R.J. Gallo, Deputy CIO, Global Fixed Income Group at Federated Hermes in Pittsburgh. R.J., what's the call for you guys in 2026 in the bond market, given pretty solid numbers across the board in 2025?
Well, good morning. It snowed here too, but everybody's doing okay. In terms of the outlook for fixed income, it continues to be relatively sanguine. Last year the aggregate index posted about a 7.3% total return. Very, very strong. Key component of that is that in the wake of the Fed's massive tightening of policy and the resetting sharply higher of market interest rates, which caused terrible bond returns in 2022, we're now able to harvest the fact that income has returned as a driver of total return in fixed income, broadly speaking. And that certainly was a strong contributor. It's a tailwind to bond investors last year and will continue this year. The yield on the aggregate index starts the year around 4.3% for 2026. With the duration around 6, if yields just hold steady, you're up in that mid-single digit, north of 4% kind of returns. We think the Fed's going to ease a couple of times. Now, as we've noted for a while now in all kinds of bond market discussion, the yield curve has been steepening. So even though the Fed eases and 2, 3, and 5-year Treasury yields go down, longer-term yields haven't cooperated as much. So we still think you'll get a little bit of price appreciation in a Fed easing outcome. So I think we'd be well north of 4% total return, maybe 5 to 7% as we look forward this year on a diversified sort of Bloomberg aggregate basis.
So you see the Fed easing a couple of times, but it's unlikely to do that this week. The Fed meets for its two-day meeting tomorrow and then comes out with its rate decision on Wednesday at 2 p.m. What are you looking to hear from Jay Powell on Wednesday? I imagine there will be a ton of questions about Fed independence thrown his way, given the DOJ criminal investigation into his comments.
Well, I mean, you hit the nail on the head. Powell has been asked at the podium many times previously about Trump's statements regarding him or his performance. And he's always sort of, passed on the whole thing. I think now we face a greater likelihood that he might actually say something from the podium. Obviously, he and the Federal Reserve leadership, I'm sure he consulted with his colleagues to some degree, put out that video regarding the subpoena that they received from the Justice Department in relation to the renovations of the building, which is, a very high ticket item. I wouldn't be surprised at all if he ends up at the podium now, maybe repeating some of those same statements, because we haven't really cleared this up. The markets seem to have moved on to some degree, partly because President Trump in an interview, Secretary of Treasury Bessent, they all seem to make an explicit effort to distance the DOJ's actions from the White House or the Treasury. But the subpoena, as far as I know, wasn't rescinded. So it is very much a hot issue. I would prefer, as a bond investor, that we just talk about growth and inflation and macroeconomic performance, all the things that we are supposed to be talking about at a Fed press conference. But I do think this will come up. The subpoena will come up again.
This uncertainty, RJ, around the Fed and just some of the politicization of the Fed, does that get reflected in the market at all? Do you see?
Good question.
I don't know, just yields behaving a little bit differently than maybe they normally would?
So the Treasury market is the world's biggest bond market. It's ultra liquid, for lack of a better phrase. It's got broad participation both domestically and outside the United States. Some people, I think, look at the fact that the 10-year Treasury is at 421, the 30-year Treasury is at 481, the 2 years at 360. Those aren't very unusual yields. We haven't seen a stampede away from the U.S. Treasury market, resetting yields sharply higher into sort of a new range as a result of the Fed concerns and the attacks on Fed's political and operational independence. So at first blush, the answer is probably it doesn't seem to have much effect. But right before we started this conversation, I went on to my Bloomberg and I brought up the Kim Wright term premium for the 10-year and the ACM term premium, which comes out of the New York Fed. And Bloomberg is very helpful, allows you to chart each one of them. The term premium, remember, is the extra yield that the market demands to make a 10-year investment, a holding period of 10 years, and all the extra duration and interest rate risk that comes with it, as opposed to just rolling over 3-month bills for, repeatedly for 10 years. And so what's in that term premium? All kinds of things. You might want extra compensation for inflation volatility. You might want extra compensation for fiscal policy risk, or you might want extra compensation that goes into the term premium because of the attacks on the Federal Reserve and the risks to the Fed's operational and political independence. And if you look, the ACM and Kim Wright term premia each were about -50 or 40 back in 2021. They're now closer to 60 and 70. And much of the increase in each of them occurred building up and into President Trump's victory in the 2024 election. So I think the market has rationally reacted to add a few extra basis points to that term premium. And it's linked to President Trump's spotty record of really beating up the Fed in just about every chance he gets.
All right, fantastic insight there.
I learned a new function today.
I know.
This term premium. I didn't even know it existed. Thank you, RJ.
I learned INGO from you just now when you said it. I typed it in right away. RJ Gallo, thank you so much. He is Senior Portfolio Manager of Fixed Income at Federated Hermes on these markets. It is Fed week after all. All right, let's stay in the goings-on of Washington right now, because President Trump is sending his U.S. border czar, Tom Homan, to Minneapolis. There's been a lot going on in Minneapolis with the immigration crackdown perhaps gone awry following the shooting of 2 U.S. citizens, Alex Preddy and Renee Good. Let's bring in Laura Davison. She is our Deputy Washington Bureau Chief in Washington to talk to us a little bit more about this assignment for Tom Homan to go over to Minneapolis. Is this a sign Laura, that the president is conceding that perhaps the Immigration Customs Enforcement agents had maybe acted and gone too far?
Yes, it certainly is a sign of that, and that the White House wants a little bit more direct control over exactly what's happening on the ground. Tom Homan is, a longtime Trump advisor. He reports directly to the president. His remit is the entire country. The fact that they are sending him to Minneapolis to focus on that suggests that they think that the situation on the ground there has gotten out of control with 2 ICE-involved shootings in just about 3 weeks here. It also raises questions about exactly what Kristi Noem's involvement will be going forward. She's the cabinet secretary in charge of Homeland Security, which involves ICE and Customs and Border Protection, though it's not clear that her job is at stake yet, but it really, both Homan and Noem have been at loggerheads in the past over some policy issues. So Homan, it seems to be, at least for now, winning out on, getting the ICE agents a little bit more under the White House's thumb.
Laura, about 17 hours ago, former President Bill Clinton on social media put out a statement on the horrible scenes playing out in Minneapolis and across America, in which he says, over the course of a lifetime, we face only a few moments where the decision we make and the actions we take will shape our history for years to come. This is one of them. Is that reflective of maybe a growing sense in Washington and political circles in general that maybe this thing's going a little too far here and something really needs to be done?
Yeah, we're hearing that sentiment both from Republicans and from Democrats. We've heard from Republicans on the Hill, folks who have traditionally been very reticent to speak out against the administration's immigration policy, saying they want to see some investigations and want to make sure that ICE agents are being held accountable and review all their training. We're also seeing from Democrats a real galvanizing moment for them to, the one piece of leverage they have is this spending bill that's coming up to fund the government by the end of the week. Democrats have said that they are not going to approve that legislation unless the portion funding the Department of Homeland Security, including ICE, is taken out and renegotiated. It seems, given the timeline here, senators are away from Washington because of the snowstorm and just the tight deadline, that it's, as after Saturday's shooting, that the odds of a shutdown ticked up greatly.
Yeah, that is definitely something that we're keeping an eye on here. It's something that Wall Street needs to now factor in, the possibility of another shutdown. What would that mean in terms of government agencies? Because this would be different if there is a shutdown. It would be a partial shutdown compared to what we saw in November.
Yes, so some federal agencies, including like the U.S. Department of Agriculture, have already been funded through the end of September. But there's a large swath of the government, including the Pentagon, as well as DHS, ICE, and also TSA, that has not been funded and would be funded through this package of spending bills that are moving through Congress right now. So this would mean that this would really highlight the ICE issue, whereas the last shutdown was all about healthcare. This would really be all about immigration and border security. As well as, kind of the pain point there would be that, flights, we could continue to see a lot of those flight delays that we saw during the last shutdown.
Right.
Other benefits like SNAP wouldn't be affected because those are funded.
Laura, thanks so much for joining us. Really appreciate it. Laura Davison, she's a politics editor and deputy bureau chief in Washington, D.C. for Bloomberg News. Appreciate getting the latest reporting there. President Donald Trump is sending U.S. Border Czar Tom Homan to Minneapolis amid a growing outcry over his immigration crackdown. We will keep following that story. S&P up 38 points. That's a 0.5%. The Nasdaq's up 150 points. That's 0.6%. More coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. S&P 500 extending the advance for January ahead of the mega cap earnings results. A company's accounting for about a third of the market cap of the S&P 500. They're going to open their books this week. You have Meta, Apple, Microsoft, and Tesla among them. And with the Federal Reserve expected to pause its rate cuts, treasuries remain in pretty narrow range. The dollar sliding on speculation the U.S. could coordinate intervention with Japan to support the yen, dollar DXY. That is down 0.7%. The policy shifts, the uncertainty, sending gold and silver to records. As gold hits another record, Russ Kostrich of BlackRock says it is an effective hedge against risk.
In this environment where you have both fiscal issues in most developed countries, not just the U.S., but Japan, the United Kingdom, France, and obviously geopolitical risk that is growing rather than shrinking, gold works in a portfolio.
And right now, the S&P 500, 38 points higher. That is up 0.6%. The Dow up 147 points, up 0.3%. The Nasdaq Composite Index is up 156 points. And just a bunch of headlines crossing the Bloomberg on various subjects. At least if you're flying, Delta Air says flights are now resuming across Atlanta as well as the Northeast. And then President Trump posting on Truth Social saying he had a call with Tim Walz, the governor of Minnesota, saying they both want to work together, essentially. So, okay. I mean, at least it sounded positive. He says they are on, quote, similar wavelength. And we check the markets for you and other stuff right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Scarlett and Paul.
All right, thank you so much, John Tucker. Did you watch any football this weekend?
I did. First game was boring, but the second game was pretty wild. But and then the snow got crazy.
Yeah, so. The 10-7 road victory. I can't believe that was the final score.
Yeah. So, but I mean, I don't know, two good franchises, both sides of the country. So you get a big national audience there. It's going to do monster numbers. I don't know what the 30-second spot is this year. I haven't seen a quote yet. If it might be $10 million for. 30-second spot. Do you think
we reached peak Super Bowl ads? I mean, it's not quite as exciting as it used to be.
It's as big a business as it's ever been. And now, as you know, there's 4 or 5 hours before kickoff is when they start. True. And they sell those for premiums as well. Then, of course, the in-game.
And they release the teaser commercials days before the actual commercial.
I think what's amazing is that in a world where digital advertising has taken over global ad spend.
This is the exception.
This is still the exception. Exactly right. And the amount of money that brands put into it is just staggering, given how diffuse their spending is now over all these digital
Well, you and I grew up with a monoculture where you can go back to your youth and point out something that happened and someone else who grew up across the country would understand it. Yep. But kids these days don't have that. So this is the monoculture. This is what it's become. Super Bowl ads.
Yep.
Right?
So it's interesting to see. But again, it's big advertisers spending big money. It's also new products, new brands just trying to break through. Mm-hmm. And, this is our one time we've got a $20 million budget and we're blowing the whole thing on this.
And we've got everyone watching it at the same time.
Exactly.
So AI commercials were really, really big the last couple of years. You think that'll be the big theme once again?
I think it's going to be just massive here. Now we got the halftime show, which John Tucker's all fired up about.
Is he?
Bad Bunny.
Oh, yeah, Mr. Bonet.
Yes.
Oh, it's going to be awesome.
Fired up for that.
Going to be awesome.
But that'll do huge numbers for,
Mr. Bonet.
Yep. So we'll see how that goes, but they're going out there. So we'll keep an eye on that.
Can you name one Bad Bunny song?
Yeah, that one that's, I love it. Just listening all the time.
All right. Goldman Sachs, got some news out on Goldman Sachs. Goldman Sachs promoted 7 partners to its management committee, expanding its top decision-making group to 46 people. The promotions include new global heads of wealth management, John Mallory and Nishi Somaya, who replaced Tucker York in their new roles. The moves increased the proportion of women on the management committee to 24% to 22%, with Chief Executive Officer David Solomon saying the bank has more to do to advance women.
They say he says that they say that all the time, and this comes after Goldman tapped the lowest share of female MDs since David Solomon became CEO. And you kind of have to be an MD before you can be a partner.
Exactly right. And before you can get onto this committee here, but you know what? The challenge, having been on Wall Street for 40 years, is, you know, even back in 1986, my investment banking class, it was 50-50, or pretty darn close to 50-50, pretty darn close. And it's that way every year. And then 7 years later, when I made partner, it was probably, that was 8 years later at Solomon, it was probably 70% men.
What did you do? It's all your fault, clearly.
I don't know, but it's just it's been that way for a long time, and it's not just in investment banking; it's in consulting and the legal professions as well. So, but Wall Street certainly has that challenge there. So, but we'll see. But that management, I kind of think of like a management committee of 46 people. That's kind of a big management committee, isn't it?
It is, but Goldman is its own beast, right? It does things its own way. You can't really compare it to anyone else. And I do think it's interesting that there's higher representation of wealth management, because that's kind of the growing part of Goldman Sachs to kind of counterbalance the more volatile trading business. And it's right from Morgan Stanley's playbook as well.
Exactly right. And it's a question, you look at the Goldman Sachs, the Morgan Stanleys of the world, you know, who gets promoted to partner or managing director or in senior management positions. It's just a question of which group is in ascendancy?
Yes.
Is it trading?
Yeah.
Is it, you know, investment banking? You mentioned wealth management. Now that's certainly a big growth area for a lot of these big firms, and so they need better representation there. So, so keep an eye on that. But Goldman, you know, having competed against them my entire career, they are different. They are better, and I don't know why. Other than the only thing that's different there that I've always said over the years is their culture. That's unique relative to the rest of the street.
Kind of sets the tone for the rest of the street. Speaking of setting the tone, we've got a big week of earnings. And I know we say that every time earnings season begins, but really this is when the Mag 7 names begin reporting. You've got 4 of the 7 big tech names reporting this week, starting with Meta, Microsoft, and Tesla on Wednesday, followed by Apple on Thursday. And of course, the key focus will be on what they say about AI CapEx, how much they start spending on, or how much they continue to spend, because they've already been spending quite a bit, but whether they're seeing any returns. And I feel like investors are definitely delineating between one company and another, right? Like they're paying attention to the stories being told.
I think so. And I think, you know, for when we first saw the NVIDIA beat and raise 2.5 years ago, I guess now, that just reset the bar for everybody and reset expectations, I think, for everybody being the market and investors about what this AI story really potentially could represent in terms of dollars being spent, in terms of revenue being generated. And it's been a beat and raise ever since then for NVIDIA and for most of its peers in the tech stack, if you will. Now those numbers are going to be harder and harder and harder to beat. So that you have to reset I guess, the narrative a little bit.
Well, Apple gets a chance to reset the narrative with AI because of this agreement that it's made with Alphabet to incorporate Gemini into its software, right? Because up until this point, the story when it comes to Apple and AI was that it was behind. It was shedding talent. It was losing talent to other companies. They weren't really moving on it. Of course, they could always buy it because they have so much cash available. And, you know, that's proven to be a good solution in the past, but now they have a good story that they can talk to investors about. Using Gemini to launch 2 new versions of Siri, which, you know, has been the story all along. What is Apple going to do? How is it going to play catch up here?
Yep, I like the Gemini strategy. First of all, I like using Gemini. I mean, now it gives you such a good product, Gemini does, a good answer, a good fulfillment of your query, that I'm not clicking on links to get more information.
Which is exactly what Google's advertisers don't want.
I know. So I'm just not sure how that really plays out here. So longer term. But Apple stock's up 2 3/4% today. It's down 6% this year. It's up 14% trailing 12 months. So again, lagging some of the peers. Still hasn't gotten, I would argue, the AI wind in the sails that it would like. So
I think it's interesting that you said that you like Gemini, that you've noticed it, because I think a lot of people don't even notice it, right? When you put something in Google search in your phone, and the AI response comes up, that's Gemini. But we're not thinking about it in that same way. We're not actively choosing it. It just becomes the default.
And when I don't get a Gemini answer, I'm like, oh, this is disappointing. Now I got to go click and try to do some more work here.
I have to click my way around.
Exactly. And whereas, you know, 6 months ago, you wouldn't even have thought about it. We still got some green on the screen here. S&P up 37 points. The Dow up 145 points, and the NASDAQ up 150 points, or 0.6%. Yields pulling in just slightly. 10-year Treasury, 4.20%. We were on a 430 watch, went back down to 420. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in Midtown, New York City. We're also streaming live on YouTube as well. So you can head over to youtube.com and search Bloomberg Podcast, and that's where you'll find us. All right, in what could be, I guess, another one of these circular financing deals, NVIDIA Corporation today announced it's invested an additional $2 billion in CoreWeave, a cloud computing firm and key customer, to speed up an effort to add more than 5 gigawatts of AI computing capacity by 2030. There's a lot going on there. Let's check in with Anurag Rana. He's a technology analyst at Bloomberg Intelligence. Anurag, thanks so much for joining us here. What's your reaction to this additional investment by NVIDIA into CoreWeave?
Yeah, if you go back in history and see when CoreWeave was going public, it was having a hard time getting a good pricing. And then NVIDIA kicked in and said, you know, we're going to be a part of this particular IPO. And I think what's happening here is this. NVIDIA is creating the chips, and CoreWeave is helping them sell the computing using those chips to different public that's out there. Now, at this time, CoreWeave has a massive backlog of orders, but it needs to get funding done in order to convert that into data centers and then capacity. Now, NVIDIA isn't giving them money straight away, but it's basically saying, we have confidence in this company, and it would help. Then CoreWeave go out and raise capital from outside. So I think it's a little bit more like spreading the NVIDIA ecosystem is what's happening right now.
Looking at your research note, you note that CoreWeave has $50 billion in remaining performance obligations. What does that mean?
Yeah, basically it says this is kind of the contracted revenue they have on hand, which means, Microsoft has said, you know what, I'm good for 10 out of that, for example. Meta has a deal with them. So they have this backlog of all these orders. But, unlike other companies, you just can't go out and fulfill the demand. You have to create a very large data centers using NVIDIA chips. It then starts to work out or runs, and then you realize that 50 billion into revenue over the next several years.
So what's the gating issue here for CoreWeave? Is it more access to more data centers? What's kind of the gating issue for them to fulfill that revenue?
There are multiple gating factors. One is actually the data center itself. For that, you need land, you need power. The chip side is okay at this point because NVIDIA is there, but then also you need capital. I mean, CoreWeave is not a company like Microsoft or Amazon that has unlimited capital to create these data centers. It has to go in the market and raise capital. Before they went public, their cost of capital was north of 10%. Right now, after they went public, the cost of capital has gone down to about 8%. But the entire neoclouds arena, whether it is CoreWeave or whether it is Nebius, really depends on private credit lending or lending by other banks to really come up with the funding to create these data centers.
So I also see in the news here today that Microsoft unveils latest AI chip to reduce reliance on NVIDIA. What's going on there?
So this is something that's going on with all hyperscale cloud providers, whether that's Google with its TPUs, Amazon with its chip, and now Microsoft launching. They have one chip, but the first generation was not, you could say, did not do that well in terms of, reception from customers. What Microsoft is hoping here right now is, for training, they'll still use the more powerful NVIDIA chips. But for, running, let's say, a Copilot, they could get around and use less powerful chips. And if they do that, they actually save a lot of money. In our math, we think if Microsoft is going to spend, somewhere north of $140 billion this year, more than 50 of that is going to go just buying chips. And so, it's a very big ticket for them, and everybody needs to be doing this, frankly, in-house.
So what's the next thing we should be looking for? We got earnings coming up this week. Anurag, just give us a little preview of kind of what you think the market's keying on this time around.
The biggest thing we want to know is where are the use cases? What kind of AI adoption we are seeing across different sectors? And that's, I think, is going to probably be the most important thing for us. We have already seen that infrastructure spending is very high. Everybody has that big AI factory in place, but is the demand coming from, non-LLM customers to deploy those? And that's really, I think, one of the biggest focus areas for us going into this earnings season and probably all of 2026.
So what do you think is the best positioned of kind of the big tech names that you follow for 2026 here? Because there's probably as much concern in the marketplace that this could be a year where the AI story begins to disappoint, perhaps.
Yeah, I mean, if you think about it, the three companies that are probably better positioned than the others are really Microsoft, Google, and Amazon. Because not only do they have an emerging AI infrastructure business, but they also have a legacy cloud business. And one of the ways you deploy this technology is using cloud. So if you're building an application using one of the LLMs, you're hosting it in one of these cloud providers. And we've already seen that, an improvement in growth rates for Microsoft and Google. And I think this year we see that improvement coming in for Amazon as well.
All right, Anurag, thanks so much. We appreciate that. Anurag Rana, he is our senior technology analyst, along with Mandeep Singh. Those two gentlemen run Bloomberg Intelligence Technology Research, which is a global effort with analysts in Europe, across Asia, and North America as well for Bloomberg Intelligence here. Some good news for New Jersey Transit riders. I'm seeing that some services beginning on the rails starting at noon, so get to the app and check it out there. So that will be an option. We already got Metro North and Long Island Railroad. They have been on their Saturday schedule, which is limited service. So starting to kind of reopen a little bit here, get that mass transit back up and rolling here in the greater New York area. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, closed coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Top stories and global business headlines are coming up right now.
This is CBS News on the Hour, your home for original reporting.
I'm Cammie McCormick. There are still many questions about what led to the fatal shooting of a second person by federal agents in Minneapolis. This time an ICU nurse, Alex Preddy. CBS's Weijia Jiang has the latest from the White House.
The president announced that he is sending the border czar, Tom Homan, to Minnesota. The president says that he will be managing ICE operations on the ground. We also heard from the White House press secretary, Carolyn Levitt, who said that he will be coordinating with those leading investigations into the massive widespread fraud in Minnesota.
I'm Stacey Lynn. A federal judge in Minneapolis is hearing arguments on whether the administration's deployment of thousands of federal law enforcement officers violated the state's sovereignty. The lawsuit contends the surge amounts in constitutional occupation. The hearing will be held later today in Minneapolis as well. This one addresses evidence preservation. This weekend's second deadly shooting in Legend.
Authorities now say 7 people were killed and another is in serious condition. The crash of a private plane at Bangor Airport yesterday. Jose Safreda is the airport security director.
Our emergency protocols were immediately activated and first responders were on scene in under a minute.
Parts of the Northeast could see even more snow. The remnants of that powerful winter storm that swept across the nation. The power's out for more than 800,000 people in the South, where ice snapped power lines. In Oklahoma City, our Jason Allen.
This place is still, for the most part, shut down. No school here today. A lot of offices closed, at least through midday. And still 8.5 to 9 inches of snow on the ground here. So this area is still feeling the impacts from this storm. 3 days later, the good thing is the sun is out, although it doesn't feel like it's helping very much to warm things up yet.
More than 4,000 flights have been canceled today in and out of the U.S. and domestically. Israel's prime minister said today the remains of the final hostage in Gaza have been recovered, clearing the way for the next phase of the ceasefire. The return of all of the hostages, living or dead, was a key part of the first phase. It's been called the commodity of fear, and Vicki Barker reports it's surging.
The price of gold has risen above $5,000 an ounce for the first time ever, extending a historic rally that saw the precious metal jump by more than 60% in 2025. What's driving that surge? Ongoing tensions between the U.S. and NATO over Greenland. President Trump's latest tariff threats have also worried markets.
And stocks are high hour. This is CBS.
Most people out here think that taking care of one another is important. And most people would step up for a neighbor going through a tough time. Most people around here help out friends.
Visit our website at aminet.org. If you're in need of a website that provides an unparalleled consumer experience, I highly recommend American Eagle.
York Van Post. Blue. Seahawk. Kind of company.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Tom Homan heads for Minneapolis as the government heads for another shutdown. Welcome to the Monday edition following a weekend that saw another deadly ICE shooting in Minneapolis, drawing the president's border czar to the city and Democratic opposition to Homeland funding ahead of Friday's shutdown deadline. Add an historic winter storm here, and we start this week in a very different world than we ended the one last. In this hour, we'll get an update from Bloomberg Washington correspondent Tyler Kendall. We'll spend some time with Bloomberg senior editor Wendy Benjaminson. And as the USS Lincoln arrives in the Mediterranean, we'll talk it out with our political panel. Is Iran next? It's all after a look at Wall Street. Charlie Pellet has the latest, braving the wind, snow, and ice in New York City. Charlie, how's it look?
Right now looking green. Dow, S&P, NASDAQ all higher. Back to work Monday after that major snowstorm for much of the country. S&P right now advancing by 43 points. We're at 69.59. That is a gain now of 0.6%. The dollar falling to a 4-month low. Gold topping $5,000 for the first time. Equities, though, higher. S&P extending its January advance. All of this ahead of high-stakes mega-cap results this week. And, of course, the Fed decision on Wednesday. The Dow up 172 right now, up by about 0.3%. S&P up 0.6. We've got NASDAQ higher by 0.8%. The Russell 2000 index of small cap shares on a day when the rest of the day, stocks are rising. We've got the Russell 2000 down now by 0.3%. The 10-year 4.21%, with the 2-year 3.59%. Gold at $5,095 the ounce. It is up right now by 2.1%. That move nothing compared to what is happening with spot silver, now at $114, up 11.2%. West Texas Intermediate Crude 60.74 a barrel, down now by 0.5%. And Bitcoin at 87,516. Bitcoin up by 1.9%. So bottom line here, Wall Street is looking ahead to Wednesday's Fed decision and, of course, Jay Powell's news conference. Bloomberg's Enda Curran in Washington says there's two parts to this week's Fed meeting: policy and politics.
Really, it's on the political side where all the folks will be in that press conference. Given the Department of Justice subpoenas on the Fed since the last Fed meeting, Chair Powell will be asked about it. He'll be expected to comment. He probably won't dive too deep into the legal side of that, but it will be interesting to see whether or not he doubles down on his broader commentary around this being an attack on the independence of the Federal Reserve.
Bloomberg's Enda Curran in Washington. NVIDIA, the dominant maker of AI chips, is investing an additional $2 billion in CoreWeave to help speed up an effort to add more than 5 gigawatts of AI computing capacity by 2030. NVIDIA shares lower little change, down 0.3%, but CoreWeave is surging now by 9.6%. Recapping here, we do have the S&P 500 index higher by 0.6%. Spot gold at $5,092 the ounce, up 2.1%. Silver up by 11%. Balance of power continues now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, great to see you. You cannot keep that man away from the microphone, not even Winter Storm Fern. Charlie will be back in about 15 minutes' time with the latest on Wall Street. Yeah, it's back to business today, whether the government's open, the schools are open, or your house is open. Indeed. You got about, what, 12 up there? 11.4 inches, I read, in Central Park. We got closer to about 6, I don't know, 5, 6 here in the Washington, D.C. area. But the snow is not the story. It's the ice. This thing is encased in ice this morning. You can barely walk around Washington, D.C., which is why no one is walking around Washington, D.C. It is a complete ghost town down here, and there's not a lot of pavement to be shown for the work that our intrepid snowplow drivers did over the weekend. You think 6, 7, James? Yeah? Maybe from the heights of Northern Virginia here. We'll keep tabs on all of this. What do we have? It's not very nice in Washington at the moment. As I check out the forecast here, it's going to be below freezing for like the next week and a half, so this ice isn't going anywhere here. And, well, we'll see if lawmakers can get in town. Because, yes, while you were shoveling, scraping, and sleeping over the weekend, the whole world changed. Look no further than Minneapolis, of course, where, by the way, you think it's cold where you are? I just checked a minute ago. We're at -3. That's not feels like. That's the actual temperature in the city of Minneapolis, where thousands of people spent the weekend out protesting. Just imagine, they shut down intersections following the second fatal shooting in an ice raid that we have seen in that town. Hundreds of thousands of people have no power all over the country right now, so I'm assuming that for many cases, you're just digging out and paying attention starting now. I can tell you that everything has changed since Friday, not only in terms of the national mood surrounding this whole situation, but also what's going on here in Washington, D.C. We left on Friday telling you that the funding had been solved. Well, it has not been. And it looks like we're going to have at least a partial government shutdown come Friday when we hit the deadline here. Remembering, we do this not by individual spending bill. I know everyone's pretending that we had regular order here, but that's not exactly how it works. It's a series of minibuses, and those are not all going to pass by the time we're done here. It is everything to do with the Department of Homeland Security. But as we've been discussing here, that's tied to a number of other bills. And so we could be in a world in which 4 to 6 agencies, 4 to 6 funding bills are not passed because Chuck Schumer wants this whole thing separated and voted on separately. Democrats are not in the move to give ICE more funding. Now, play that against everything else that we have going on here with regard to Minneapolis. And it's going to be an interesting week here in Washington, around the country. The president's going to be traveling this week to talk about affordability. That's an interesting concept right now as we consider the way forward here. He's just on Truth Social. Before we bring in Tyler Kendall, I want to mention Donald Trump has gotten on the phone with Tim Walz. This is actually very important. He says, Governor Tim Walz called me with the request to work together with respect to Minnesota. It was a very good call, and we actually seem to be on a similar wavelength. What? I told Governor Walz that I would have Tom Homan call him, and that we're looking for any and all criminals that they have in their possession. The governor very respectfully understood that I'll be speaking to him in the near future. This is the same Tim Walz who the president has been excoriating for days. And look no further than Caroline Leavitt, who's going to be holding a news briefing coming up at 1 p.m., less than an hour away, on X at 1 p.m. yesterday. Tim Walz does not believe in law and order, she wrote. No amount of propaganda from his allies in the liberal media will convince the American people of otherwise. Under the incompetent leadership of Tim Walz, Minnesota oversaw massive fraud schemes that resulted in tens of billions. You know where this is going. The president posted one just like that himself yesterday. Now he is on the same or similar wavelength. Does that mean that ICE is pulling out of Minneapolis, or does that mean that Tim Walz is welcoming ICE? Tyler Kendall likely does not have an answer to that question, but she's with us right now. Snowed in here in Washington. Tyler, what do we make of this latest call here and this latest post from Donald Trump?
Well, Joe, I don't think I can beat your setup here because you really illustrated both sides of what's happening and really what we know at this moment, though it is considered to be a significant development that this call was held. And I will add that President Trump did seem to indicate that the pair of leaders are going to have another call down the line, perhaps signaling that there's going to be a little bit more cooperation here between federal, state, and local authorities, which is something that has been demanded of, included by at least 60 CEOs from major companies that are based in Minnesota, to have this sort of collaboration among all of the levels and the authorities that are currently on the ground there in Minneapolis. Now, in terms of what could potentially happen here next and what we do know, we're going to be tracking very closely, as we have confirmed that the border czar, Tom Homan, is expected to arrive in Minneapolis tonight. And we sort of got this signaling from President Trump that the administration was going to perhaps try to dial down the temperature, considering overnight the Wall Street Journal had a brief interview with him where he said that they were, quote, reviewing everything, and then they will make a determination, which appeared to be at least a slight pullback from the initial rhetoric that we heard from administration officials such as Stephen Miller or the DHS Secretary Kristi Noem. So it's going to be something that we are going to watch develop over the coming days. But Joe, as you mentioned, there has been mounting pressure on this administration to take action amid sources saying that this is becoming a potential political liability. And you have lawmakers on Capitol Hill, including in the Republican Party, now demanding a full investigation, not even mentioning that Democrats are now proposing a potential partial government shutdown unless they see some real changes to ICE.
Yeah, Tyler, thank you so much. As I mentioned, everything has changed. You can add 120 Democrats signing on to articles of impeachment against Kristi Noem. You'll hear more about that this week. But yeah, Bill Cassidy, sort of the poster child for Republicans here, calling for a joint investigation. Pete Ricketts demanding a prioritized, transparent investigation. Andrew Garbarino was on our program last week. He chairs Homeland Security, asking the heads of ICE, Customs and Border Protection, and U.S. Citizenship and Immigration Services now to come and testify. Wendy Benjaminson is with us now with a couple moments to talk about the political reaction here. Wendy, so we're going to shut down presumably Friday. What did Democrats get for this, knowing that ICE was funded greatly through the big, beautiful bill and that FEMA and other agencies might suffer in a shutdown?
Well, you got to remember, Joe, this is an election year. It is the midterms. A third of those Democratic senators are up for re-election. All of the House members are. So what they got out of this, I'm afraid, is probably going to boil down to political theater. They stood up and said, we're not going to keep funding you if ICE keeps killing American citizens on the streets in Minneapolis. But what it's not going to achieve much. There may be a government shutdown if they resist this funding, even though, as you point out, the one big beautiful bill contains funding for ICE and Border Patrol. So even if the government shuts down, or even if they win this spending fight, ICE and Border Patrol still get paid. So this is just a very fancy and possibly, risky way of standing up and saying enough is enough.
Tom Homan goes to Minneapolis today. And by the way, we're not just talking DHS, Wendy. We're talking Departments of Defense, Health and Human Services, Transportation and Labor. So like half the government, I guess, would be open and half would be closed. I've only got a minute, Wendy. Yeah, they'd have to split them up, right? And then the House would come back, would have to. So we're shutting down either way.
Probably, yes. At this point, that would be my guess. Yes, we're going to shut down Saturday morning, maybe.
30 seconds. What are the odds Tom Homan walks into the briefing room at 1?
It's possible. Trump said he would be in Minneapolis by the end of the day. That still leaves him plenty of time.
You have plenty of time, Wendy. Thank you. We'll talk more with Wendy Benjaminson as the day rolls here, our senior editor here in Washington. I'm Joe Matthew. We've got a lot to unpack from the weekend, and Nathan Dean is going to help us do just that with his view from Bloomberg Intelligence. The odds we're running here on suddenly a government shutdown at the end of this week. It's all ahead on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all advancing, but a key takeaway at this hour, we've got the Russell 2000 index of small cap shares declining. Divergence there, down 0.3%. Keeping it all in context, S&P up 0.6 right now, higher by 43, trading at 69.59. The Dow up 202 points, 49,300 on the Dow, up by about 0.4%, while NASDAQ is up 171 now, up 0.7. The NASDAQ 100 index also up 0.7. This ahead of key tech earnings this week, but the Russell 2000 index down 0.3%. 10-year 4.21% with a 2-year 3.59%. Spot gold trading at $5,089 the ounce, moving above $5,000 this morning for the first time, up now by 2%. But look at silver, spot silver with a $115 handle. Silver up now by 11.6%. Biggest gain since 2008 for spot silver. Target's incoming CEO has sent out a video message to employees acknowledging, quote, the incredibly painful violence in Minneapolis. More than 60 CEOs at some of Minnesota's big companies, that would include Target, 3M, General Mills, Best Buy, Land O'Lakes, and Cargill, are calling for an immediate de-escalation of tensions between local and federal authorities in a public statement over the weekend. And USA Rare Earth has signed a non-binding agreement with the Commerce Department to receive $1.6 billion in funding to accelerate U.S. production of key rare earth elements. Shares of U.S. Rare Earth right now, they are trading higher by 16.4%. Target, by the way, down 3.6%. Balance of Power continues now. Back we go to Washington. Once again, your host here is Joe Matthew.
All right, Charlie Pellet reinforcing the FOMO around silver and gold. Wow. Just for that, we're going to call Mike McGlone to join us in a couple of moments. This is insane. Silver's up 12%, biggest gain since 08 after that run-up. Is this the blow off top, the short squeeze? I don't know. We'll talk to Miami Mike, where, by the way, it's like 85 degrees, James told me. It's -3 in Minneapolis. Here in Washington, I don't know, we're somewhere in the 20s. And, of course, 2/3 of the country is frozen out right now. Even Julie Fine shivering down there in Dallas with a lot of ice to show for it. But, hey, you know, we went into the weekend talking about the challenges, the political challenge, the politics of snow, whether your name is Zoran Mamdani or Greg Abbott. And it looks like everybody did pretty well. Everybody, you know, I don't see a lot of asphalt around here, let's be honest, Governor Spanberger. But the lights are on. Got to work. A lot to be said for that. The federal government is closed, by the way, today. They made that decision over the weekend with the big storm. The question is, will it be closed a week from today? Not because of the ice, which will still be here, but because of the funding deadline that is approaching on Friday. You heard what Charlie just mentioned? If it's not politicians, it's probably the CEOs who are going to move this, right? But it's one thing to get a letter from Target, Best Buy, Land O'Lakes, and the rest of them. It's another thing to have politicians take a stand on funding Homeland Security. That's where ICE gets its money. But, of course, if you've been following this program, you know it's a little bit more complicated than that. Taking a political stand on this might not actually get to the funding issue because ICE has a lot of money from the big, beautiful bill. That doesn't mean the government won't shut down. You need 60 votes in the Senate to clear these minibuses. And based on the stuff that we're hearing, CC compiled a whole bunch of statements on X from the likes of Republicans, Tom Tillis. There must be a thorough and impartial investigation into yesterday's shooting. Senator Cassidy, Republican from Louisiana, this is the one that got everybody's attention. The events in Minneapolis are incredibly disturbing, he writes. The credibility of ICE, DHS are at stake. There must be a full joint federal and state investigation. We can trust the American people with the truth. Chuck Schumer says we're not giving ICE any more money. We want to split up the bills. And, of course, the House is gone. So if the Senate either doesn't pass it, changes the language, splits up the bills, we got to wait till next week for the House to come back. So looks like we're shutting down. All of this has happened since Friday. when I believe Nathan Dean had 30% odds on a shutdown, but he could have lowered them because they did their work in the House and they went home. This was supposed to be rubber stamp week. The big news was going to be the Fed meeting and maybe a new Fed chair announcement. But boy, again, things have changed. And so we call Nathan for some help. We'll talk to Nathan, then we'll talk to Mike McGlone. We just do this as, you know, we build the plane in flight. Producer James is riffing. He is, of course, the senior U.S. policy analyst at Bloomberg Intelligence. Nathan, where are the odds today?
So I think we're at 70%, and honestly, I'm a little bit low on that one just because, look, I don't see how this is not going to end with a shutdown this weekend, because even if Republicans were to agree to strip the DHS funding, I don't see the House coming back. And look, this is, you know, shutdowns occur when both parties think that they are feeling politically advantageous going into it. And I just don't see how the Democrats can vote for DHS funding after this weekend. And because the Republicans, a bulk of the Republican Party, look, you know, polarization in the House and the Senate is such a thing that, you know, a lot of Republicans still agree with President Trump's policy on this. I don't see a lot of Republicans really trying to change their votes or change their stances before this weekend. So I think what happens is that if we shut down, it's short-lived. It's 1 to 2 weeks. Let the lawmakers come back. And then, like you mentioned before, ICE funding is already separately funded through the One Big Beautiful Bill through the fiscal year 2029. I think they strip that, and then they pass the rest of the government packages, and they save DHS for another day.
Okay, that makes a lot of sense. Just in the meantime, though, when we talk shutdown, we're talking partial shutdown, right? This is DHS, Department of Defense, Health and Human Services, Transportation and Labor. Does the other half of the government just keep cooking?
Yep, the other half, I mean, look, the appropriations are such that, you know, this wouldn't have happened many years ago, but, you know, Congress is now doing appropriations by piecemeal. And so, you know, you get these partial government shutdowns. And, you know, from the market perspective, you know, during the shutdown in 2025, we really didn't see much market movers. So we always put that note out to say markets really don't care about shutdowns. But we did see that markets did care about the lack of data here. So, you know, again, I'm going to go with this idea that we're only going to see a 1 to 2 week shutdown. So I don't think it's going to get to the point where we're missing economic reports, you know, or anything like that on a monthly scale or anything like that. But, you know, it's certainly something that we're going to get used to more and more and more as polarization continues.
A couple weeks, though, I guess is something, Nathan. Would there be any residual damage from a couple weeks shutdown in the specific departments that we're talking about?
I don't think so. I mean, honestly, you know, we've looked at it and we really didn't come up with much that we think that's really much of a threat for markets to pay attention to at this point. I mean, you know, this is a political messaging exercise that they have to go through. So when I say 1 to 2 weeks, this could all be resolved by early next week. It's just, what is the political message? How do they go through this? Because ultimately, I just don't see any Democrats supporting this. And I don't see that really changing. But I do see Democrats, and we saw 2 statements from moderate lawmakers in the House today saying, look, I need Coast Guard to have funding here. I need FEMA to have funding here. So, you know, there is a desire amongst some Democrats to get this package done. It's just the ICE portion in particular, I just don't think they can support it for the next week or so.
You know, you start backing off this stuff, Nathan, and you're giving us a very sober read on this. Probably be open in a week or two, and we'll still have a partial opening, I guess. We could be half glass full here and call this a partial government opening starting on Friday. But when you back off all this stuff, Nathan, you just wonder where we're going to be for the balance of the year with the tension and the lack of trust, not only between these two parties, but now on a greater level between Congress and the White House. It makes you doubt that much can get done here. How about you?
Yeah, you know, we put out a note this morning sort of talking about that. You know, look, legislation is going to be very difficult to come by, and deregulation takes time. Executive orders get challenged in the courts. So what is President Trump going to do for the rest of this year and probably for the rest of his presidency as he gets closer to that dreaded word of lame duck? He turns to the idea of the bully pulpit, idea of turning on Truth Social and saying, look, I say that, let's just take it for example, effective January 20th, credit card interest rates must be capped at 10%, or else they're breaking a law. Now, they aren't, but, you know, they didn't stop Bank of America and Citigroup from reportedly trying to offer a credit card in that situation for 10%. So companies need to be more cognizant of what President Trump is going to do over the next 2.5 years, and that is using the bully pulpit to try and force policy implementation on companies and industries and sectors, because the other ways of getting things done in Washington aren't going to be really there for them.
Yeah, Nathan, it's great to see you. Hope the kids are helping you shovel out. Nathan Dean, Bloomberg Intelligence. With these fancy new backdrops now, we don't see stumping anymore. By the way, it's 9 degrees in Des Moines. That's where Donald Trump's going tomorrow. He's going to gas up the jet, go to Des Moines to talk about affordability. Remember? It was every week is what Susie Wiles said. That was from the back of the jet. Just we're going to get out on the road once a week and beat the drum on affordability. It's 9 degrees in Des Moines right now. Makes me think of the good old days at the Caucasus. If only we were above zero, that would have been luxurious. You could just walk your way to the 801 Chop House without having to worry. Now, we're looking at silver, we're looking at gold, we're looking at oil. Yep, we're looking at natural gas up again today. I mentioned what the utilities are going through here, and we have seen another spike in natural gas, but that's the way that is going to go here with this massive winter storm. Les, you're in Miami, where, again, it is 85 degrees. Mike McGlone, once again, the smartest guy in the room, and he's with us now, Bloomberg Intelligence Senior Commodities Strategist. With one of these days, Mike, where I could ask you about a half dozen different commodities that are moving for one reason or another. Let's start with the storm, natural gas, and any damage that we've seen on infrastructure that's moving prices, because it looks like we did pretty well, at least so far. We've done pretty well. What's your view?
Well, the biggest, most shocking part about it, Joe, is how cold it is for the second colder than normal winter in a row amidst global warming. So obviously that has natural gas spike. That front contract, that February contract that stops trading on Wednesday, is hitting a short squeeze. It just got to $7 per MMBTU. We talked a few weeks ago, the low was 3. So it's been a great range already. But if you look at the contracts that's going to shift to front on Wednesday, that's the March contract. Yep. Right now it's trading $3.80. And you go out to next year, January, it's around $5. So what always happens in natural gas, the price spikes, the incentive to bring on more supply comes on, you cut off demand a little bit, rinse and repeat, it goes back down. This is just pretty extreme.
Okay, we got you. What the heck is happening in silver here? Up almost 12%, biggest gain since 08 today after this massive run-up. Mike, we've all got FOMO. Is it real?
Well, price is always real. It's a lesson you learn in the trading pits. The price is always what it is on the screen. No, probably not. The key thing is, the rally, we've never had gold and silver rally at such high velocity with stock market volatility, inflation, and crude oil staying so low. So it's just purely frightening. So I'll give you facts about silver. There's only 3 months in our history of silver, going back to 1950, that it got as extended as it is now versus 60-month moving average. And that was 1979 December and January, February 1980. It peaked around 50, and that peak lasted until last year. So the peak we're going to see in silver this year might last for many years. Where it's going to be, I don't know. But silver flight to quality is an oxymoron compared to gold. It's just very speculative, excessive. And I'll end with one key thing that's different from the past. Right now, there's almost 850 million ounces of silver sitting in ETF holdings. That's more than a year's supply, and those investors have started selling a little bit. So there's plenty of silver that can come on board when prices reach the right levels. We might have done that.
Fascinating. I'm getting the hook, Mike. What's more likely first, gold 4,000 or 6,000 an ounce?
Oh boy, momentum's going up, so I'd say 4,000. I'm going to go risking that.
Wow. All right, I missed all of this. I have nothing. Mike, thank you. You're the greatest. 85 degrees in Miami. We'll assemble our political panel next. I'm Joe Matthew in Washington. Thanks for being with us. This is Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. Developing story headline right off the Bloomberg Professional Service. The oil majors that operate an oil field in Kazakhstan have lost an international arbitration case, leaving them liable to pay as much as $4 billion in compensation to the country's government. Now, among U.S.-based oil names, ExxonMobil lower by 0.3%, Chevron up 0.2%, ConocoPhillips down 0.1%, ADRs of BP, they're up now by just about 0.5%. Stocks are pushing higher. The Dow, the S&P, NASDAQ, they're all in the green. S&P very close to session highs right now, up 42 at 69.58, higher by 0.6%. The Dow up 206, up 0.4%, while NASDAQ is up 169 points for the NASDAQ Composite Index, a gain right now of 0.7%. While U.S. stocks are pushing higher, small cap shares trading lower, at least as measured by the Russell 2000 Index, down now by 0.1%. 10-year 4.20%, with the 2-year ahead of the Wednesday Fed decision 3.59%. Spot gold is surging $108, up 2.2% now to $5,096. Silver up by 12.5%. Spot silver, $116.15 now on spot silver. West Texas Intermediate crude down 0.2%, $60.96 a barrel, and Bitcoin up now by 1.2%, 87,489 on Bitcoin. The Fed is widely expected to halt its interest rate cutting cycle this week as a steadier jobs market restores a degree of consensus at the central bank. Policymakers will meet tomorrow in Washington, a decision Wednesday, and of course that all-important, closely watched 2:30 p.m. Jay Powell news conference. All of this as Wall Street awaits word on President Trump's pick for Fed chair, and of course questions about what it potentially means for the path of interest rates. Seth Carpenter is global head of macro research at Morgan Stanley.
Decisions on policy really do get made by a committee, and this committee is they're torn right now about whether or not they cut at this meeting, how much to cut, all of those sorts of things. But they're not torn about going to 0 versus going to 10%. So the committee itself is pretty solidly in an orthodox place.
Morgan Stanley's Seth Carpenter. Airlines across the country struggling to get their flight schedules back on track after that massive winter storm. Among airline names, they're all lower. Right now, UAL, United, lower by just about 0.5%. American down 0.6. Delta down 0.5. Shares of JetBlue, they are trading lower now by 2.4%. Again, recapping, stocks higher. The Dow, the S&P, NASDAQ, all in the green. Natural gas surging 12%. Spot gold at a record now, just breaking through 5,100. S&P up 0.6. That Joe Matthew. Lots going on as a Bloomberg Business Flash.
Unbelievable. 5,100. So
5,100.
Gas, gold, and silver.
Exactly.
Things are getting pretty old-fashioned around here, Charlie. I love it.
Yeah, and what's amazing, Joe Matthew, quick anecdote. I had an ounce of silver that I've been sitting in a drawer at home for decades, literally decades. I suspect I bought this ounce for $5 back in the 80s, and I was like, how do you get rid of an ounce of, how do I monetize this? What do? I walked into a pawn shop, P-A-W-N, a pawn shop, and managed to sell it there.
I've heard of those.
And you know what they gave me? $86. Spot gold right now.
$86.
$86. Spot right now trading at 116. I didn't know how to monetize it.
This is awesome. Was that in the city? I just have to know. Like, did you cross the street from working to a pawn shop, drop the silver?
I happened to go, I was walking past a pawn shop in my neighborhood, and that's where I decided to unload it.
Great. Did you see my guitar while you were there?
They got a lot of guitars in the window. Exactly.
Right. I know, they always do.
And I'm surprised you didn't get one from your rock and roll buddy a couple of weeks ago.
P-A-W-N.
Pawn. Yep,
Thank you,
pawn.
Charlie.
My pleasure.
You're a great American. Is that the best thing you ever heard? Charlie will be back at the top of the hour, 1 p.m. Eastern Time. We'll see what else we can unload between now and then. That's, by the way, when we welcome our global television audience to the conversation. Sorry if you're sleeping on the floor at the airport, man. I'll tell you what, maybe you got into the lounge. Because Charlie's right, you know, they've just been canceling flights around the country because of this thing. And when you look at the totals, I did sell us short earlier. Producer James set me straight on this. We got 7 inches at the airport here. That's, you know, they go with the airport as the official total. 6.9. Dulles, that was as of midnight, by the way. Dulles ended up with about 8. BWI with the jackpot over 11 inches. So between 7 and a foot is kind of where we are here. Again, the snow is not so much the story. It's the ice, and that's why there was so much concern about power outages. If you look out the window here, there's a little bit of pavement, but not too much to be seen. They're still spending most of their time just sort of pushing snow around the nation's capital because there's nothing else to do. No one else is downtown. It's going to make it difficult for lawmakers to get in. 11.4 inches in Central Park, according to AccuWeather, and that is where we find the great Miles Miller. You know this is a banger of a storm when they put Miles in the winter outfit and station him in Central Park. This will be the best part of the program, I'm guessing. Miles, it's great to see you. The big question that we were asking on Friday is the mayor up to the test? What are they saying today in New York?
Listen, I'll tell you, high marks for the mayor, who was able to make sure that plows got down the streets they needed to get to and made sure that people were informed ahead of the storm. You know, at the beginning of the de Blasio administration in 2014, he basically had to get rid of his sanitation commissioner because of what a bad job was done on the Upper East Side, which is, of course, where the mayor's mansion, Gracie Mansion, is. No problems thus far here. The only gripes are really from schools children who are doing remote learning today, but not too many, because behind me, well, those must be the private school kids, because they're doing some sledding behind me. Some of the private schools here in New York City are closed today, but not New York City schools. They are remote. And Joe, you know, we're two people who spent some time in local news. I did not think that I'd be back covering storms once I joined Bloomberg, and you know, it's a different world. Can you go out and cover the storm?
Absolutely,
we know you've done it before. Sure. Let me show, you know, I got to do what we do in TV, right? Let me just show you the scene here in Central Park. People taking leisurely strolls, children, I forgot radio as well, right? Children are sliding down the hills, and it is a beautiful sight to see here in Central Park. But yeah, you know, beyond that, what we know is that nearly 3,900 flights were canceled as of 9 a.m. today. That follows roughly 11,600 cancellations since the start of the storm. And if you got some of this storm in D.C., it was nothing like what we got. I'll tell you about that. Rocking and rolling in the all-wheel drive Toyota Highlander today, doing the best we can, but, you know, it's really slick out there.
I don't know. This is very authentic, I've got to say, Miles. Just embrace it for one day. You look fantastic, and I appreciate the update very much.
Wait, hold on, Joe. So wait, hold on for the YouTube audience. Hold on. There's a bunch of people from all around the world behind. Come on over. Come. Oh, they're all. I don't think. Wow. Oh, there they are. Yeah. They're slow. They're slow to move, but yeah,
we've got this. I love
from all over the world. I can tell. Big
Miles,
Bloomberg
this is
audience
an incredible
here.
service. I just didn't want to make you late for your next hit. This is fantastic. Is Macaulay Culkin in that crowd? Are those the private school kids? Don't take any gruff from them. I know where they're from.
Listen, our tourism dollars at work, baby. I'll send it back to you. We got a $12.50.
Great job. Yeah, I love this. I don't want to get Miles fired today. Can we do that again next hour? That's just highlight of my day. Miles Miller in Central Park. Thank you. Born to be in a storm. I'm Joe Matthew in Washington. Yes, formerly covering local news, now here in the nation's capital. And there's a lot of stuff we haven't even gotten to yet this hour. In fact, I told you this was a game-changing weekend. When we turn to geopolitics, there's huge news as well. All of these stories could be leads on their own. With now Israel recovering the remains of the last hostage in Gaza. That's a headline a couple of months ago that would have shaken the building. A step toward further implementing the president's post-war plan for what is left of Gaza. Now, this happens as the USS Lincoln carrier strike group makes its way through the Strait of Hormuz. This is a big deal because by tomorrow, if not sooner, the carrier will be in position to strike Iran. The president, of course, has been beating the drum on and off with a possible strike following the protests that brought millions into the streets and saw tens of thousands killed and arrested. And it's where we today begin our conversation with our political panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us. Rick is, of course, partner at Stone Court Capital and our Republican strategist. Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick, what's your gut check today? Will we be striking Iran by the end of the week?
You know, the line is at a time and place of our, decision. So the reality is, I think the president's got all his equipment in place. The Abe Lincoln and his destroyers, F-15s, C-17s full of, heavy equipment. The armada that we saw in the Caribbean right before the Venezuela strike now basically exists in its version in the Indian Ocean right off of Iran. So if you follow the thread, something's going to happen. If you're Ayatollah Khomeini, you might want to be thinking about a parachute.
Wow. Jeannie, when we've seen this administration gear up this much material, man and material, they tend to use it. Do you expect that to be the case this time?
If they do, I hope they have an end goal in mind. This has been the problem, not just with this administration, but the United States, going back several decades, taking military action without being able or willing to specify what is the end goal here. And so I think that's the big question and answer I would like to hear from the administration. What do you have in mind? Are we involved in a regime change situation? Rick just mentioned, maybe the Ayatollah should be able to parachute out. What comes next if we do strike? And I also think there's profound questions to be asked about what was the June 2025 strike. We've been told repeatedly if it was successful. If it was so successful, why did Netanyahu tell Trump to hold off a few weeks ago when these protests were heating up? Because they didn't think they had the implementation missiles in place to defend themselves. So there's a lot of questions here, and I think a lot of bravado and not a lot of answers in my mind.
The president was talking a big game at the end of last week, Rick. We have a big flotilla going in that direction, and we'll see what happens. What is it that he is watching? The threat previously was if the protesters are harmed or killed, if the executions take place, we will strike. What is this decision being based on now?
Yeah, that's not totally clear. One, it's a rationale the administration has writ large, right? I don't think they're going to respond to events. I think the president was satisfied that his very clear threat that the over 800 individuals that the Khomeini regime were going to hang in a public square, if that happened, there would be dire consequences. Looks like they backed off of that, but they are still killing innocent Iranians in the streets who are protesting. In last reporting I saw, they're even grabbing people out of hospitals now, disappearing them. So there's plenty of rationale for the president to act. This is one of the worst rogue regimes in the world. They are historically part of the axis of evil, if not the center of it. They have caused problems everywhere from Ukraine to Israel to Europe to the United States. And if the worst thing that happens is this regime falls to a new government, I think we'd take the trade. And I would say just one thing. I mean, all the naysayers on Venezuela, on Syria, what happens if you get rid of Hezbollah in Lebanon? I mean, so far, there's a relative stability in these places after these sort of decapitation strikes that the president has promoted. And so I think we got to give him a little leeway at this stage, especially considering he has rid the world of some of the most vicious offenders of human rights, democracy, and the rule of law.
Jeannie, we've got just a minute left. All of that can still be true with the president still not being able to emphasize the issue of the moment domestically, which is affordability. He's going to Des Moines tomorrow. How does he get back on that message?
He's been trying to get on that message. I think we'll see him try that. He knows that that is the big issue in the midterm. But let's just go back. There's absolutely no evidence that Iran withheld from killing those protesters. Their own state television is saying over 3,000 protesters killed. Human rights groups are saying it is far more. Some people saying up to 30,000, perhaps the largest massacre in a 72-hour period we've seen in the modern era. Yeah. So there's no evidence that the president was able to successfully stop that.
Jeannie, we'll have much more ahead with Rick and Jeannie. Our great panel will be here in hour 2 as we welcome our global television audience to the conversation. Their take on what happened in Minneapolis and what might take place next in Washington.
From Washington, D.C., this is Balance of Power with Joe Matthew.
President Trump says he's on a similar wavelength as Governor Tim Walz. Welcome to the Monday edition as Washington reels from another deadly ICE shooting in Minneapolis, setting up a partial government shutdown likely on Friday. even after the president spoke with Waltz a short time ago in a call that Waltz described as productive. This hour, we will get an update from Bloomberg's Washington correspondent Tyler Kendall and from our senior Washington editor Wendy Benjaminson, and we'll delve into the legal debate over this second deadly ICE shooting with constitutional law attorney Robert McWhirter. We'll have analysis as well from our political panel. Jeannie Shanzano and Rick Davis are with us for the hour. So we get started, as always, with a look at Wall Street, the Monday trade, and Charlie Pellet with details in New York. Charlie,
thank you very much, Joe Matthew. Higher across the board. If you're not in the office today, you're missing a lot of wild stuff. I'm going to begin with natural gas right now. Natural gas surging to $7.12 per million BTUs. All of the cold. Right now, we've got natural gas up by 35%. This is spot gold surges to $51.01. Big move there, up by 2.3%. Also among the commodity sector, we've got silver now surging by 13.5%. Silver at $117. Keeping an eye on all three. Equities higher across the board. S&P, though, off session highs right now, up 38 at 69.54. Looking at a gain right now of 0.6%. Dow Industrials up 225. We've got the Dow up 0.5. NASDAQ, meanwhile, up 0.6. The NASDAQ 100 index up by 0.6%. But as stocks push higher, not taking part today, small cap shares, at least as measured by the Russell 2000 index. That index down now by 0.3%. Busy week for tech earnings. The Bloomberg Mag 7 index up now by 0.7%. 10-year 4.20%, with the 2-year 3.59%. Gold up $113, $5,100 even right now on spot gold. Silver up by 13.6%, $117 on silver. Bitcoin, meanwhile, up 1.3%, 87,590. Crude 60.90 a barrel, down by about 0.3%. NVIDIA shares down 0.7%. NVIDIA, the dominant maker of AI chips, it is investing an additional $2 billion in CoreWeave to help speed up an effort to add more than 5 gigawatts of AI computing capacity by the year 2030. CoreWeave up by 7.3%. So again, recapping here, stocks are higher, but perhaps the big story today, the surge in natural gas up by 31.4%. We've got spot silver trading higher by 13.8%, 117 the ounce, and gold, spot gold, 5,100, trading at a record there, up 2.3%. Lots going on. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, there is a lot going on today. Thanks for being with us on the Monday edition of Balance of Power here on Bloomberg TV and radio. Charlie will be back with more on the markets in about 20 minutes' time as we consider the fallout politically and legally of the second deadly ICE shooting in Minneapolis. Judge Catherine Menendez today is considering the state's urgent request by way of a lawsuit to end ICE's so-called Operation Metro Surge and take the agents out of town. Minnesota officials filed that lawsuit around the time of Renee Good's death, which is, of course, a couple of weeks now. There's a tandem lawsuit, a separate lawsuit that Judge Eric Tostrad is weighing in Minnesota. Law enforcement's lawsuit requiring the Trump administration to preserve evidence stemming from the shooting over this past weekend, the shooting of Mr. Preddy. And to that end, there are multiple reports now, as of the lunch hour today on the East Coast, that several federal agents had their body cameras on during the fatal shooting that took place on Saturday. In fact, now DHS is reviewing that camera video from the Preddy shooting, according to those sources. Knowing that the president himself said in a very brief interview with the Wall Street Journal, I guess they got him on the phone for about 5 minutes, that, quote, "We are looking, we're reviewing everything, and we'll come out with a determination." Asked whether the officer who shot Alex Preddy had done the right thing, he provided no answer. But a short time ago, the president on Truth Social updating the story once again. And I'll note that we don't know if we're going to be hearing from or seeing the president directly today. He's got a number of events on the schedule, but so far, at least, they are all closed press. This post, as of last hour, reads, Governor Tim Walz called me with the request to work together with respect to Minnesota. President says it was a very good call, and we actually seem to be on a similar wavelength. I told Governor Walz I would have Tom Homan call him. That's his border czar he's referring to. And what that we're looking for, any all criminals that they have in their possession. Tom Homan, according to the president earlier today on social media, will be making his way to Minneapolis by the end of the day. And before we get to the political fallout with regard to government funding and now a likely government shutdown at the end of the week, we want to update things with Bloomberg's Washington correspondent Tyler Kendall, who's got her eyes on everything coming out of the administration. Tyler, we should note press secretary is scheduled to deliver a briefing this hour. What else can you tell us?
Right, and no doubt, Joe, Caroline Levitt is going to be asked questions about the potential political fallout here and what the White House's actions are going to look like going forward, because you mentioned that call between President Trump and Minnesota's Governor Tim Walz, which is considered to be pretty significant in the fact that they hadn't had contact ahead of this, and the president did indicate that they do intend to hold another call down the line, perhaps signaling that there is going to be more cooperation here when it comes to state, federal, and local law enforcement, because there are a whole lot of different threads that we could pull on. You mentioned that we are closely tracking this court case in Minneapolis. We can confirm that that hearing has ended, but without a ruling. And at this point, we don't know what that timeline is going to look like to get a ruling on whether or not ICE will be expelled from Minneapolis, which means that at this point, all eyes are on the administration as they face this mounting pressure to act in some accord. Now, you did mention we got some perhaps signals last night that President Trump would perhaps move towards a more de-escalation stance, considering he said that they were reviewing this, which seemed to be in opposition to some of the initial remarks that we heard from administration officials over the weekend, including the DHS Secretary Kristi Noem. But Joe, of course, at the heart of this is the fact that Tom Homan is going over. That is seen as a de-escalation tactic in a way. He operates separately from the DHS Secretary. He is in his own silo, and of course, DHS has been overseeing these operations that are out there on the ground.
Yeah. Tyler, thank you so much. Bloomberg's Tyler Kendall with the Washington and administration side of this story, and I suspect we'll hear more with Caroline Levitt set to brief any moment now. This is what we heard from officials in Minneapolis and Minnesota over the weekend. Listen.
The world knows how he died. He died at the hands of ICE agents on the streets of Minneapolis. And I call on all Americans to see the decency that this state is exhibiting and the horrific cruelty, unprofessional, absolute abomination that is passing for what these ICE agents are doing on our streets.
If we don't stop this behavior here, it will only expand, and it won't be good for anyone in our country.
Our officers are tired. Our businesses are tired. And this additional support is necessary. And again, the chaos that we are seeing is caused directly by ICE, Border Control, and this federal administration.
Governor Tim Walz, Attorney General Keith Ellison, Mayor Jacob Fry. Wendy Benjaminson was working over the course of the weekend as our senior Washington editor as all of this unfolded, and joins us now with her eyes on the administration and, of course, the state capitol in Minnesota. Wendy, it's great to have you with us here. The president says he's on the phone with Tim Walz this morning, similar wavelength. Is this evolving again before our eyes based on the pushback that the president's been hearing?
I think it is, and it sort of begs the question of what would have happened if he'd called Tim Walz a month ago and said, hey, thinking about coming up there, you know, can we work this out? And maybe that would have saved Renee Good and Alex Preddy. This has been extraordinary, and I think, you know, as we know, Trump is a huge has a huge appetite for social media. He is on it all the time. That means he cannot escape the videos that we are all seeing. And he is seeing this go down. He is having, even the Republicans who aren't saying anything publicly, we believe are calling him and saying, look, you better turn the temperature down. This is going out of control. And then we hear last night that he's going to review the evidence. And just before I came on, I saw that after Trump said we are reviewing the evidence, DHS says they now have a body cam video of the shooting.
Yes.
So we will see that now. So they will review the evidence. He sent Tom Homan up there to sort of take some control over the situation. We don't know right now whether that will calm things down or make them worse, although Tim Walz seems to welcome it. And then you have the possibility that they'll just pull out of Minnesota entirely.
Mm-hmm. I have to be honest, I'm not sure I understand what sending Tom Homan is going to do here, Wendy. The border's closed. This is the president's border czar. What's he going to be doing in Minneapolis?
Well, I think he trusts Tom Homan very much. There has been scuttlebutt, but it's only scuttlebutt that, he may not be happy with the way Kristi Noem is running things. He may not be happy with Greg Bovino. Yeah. He is that border control commandant who walks around in the military garb and has become sort of the unpopular face of this. So it may be that there's a guy, Tom Homan, whom he trusts, who can get up there, be his eyes and ears, and tell him just how bad it really is. And if Homan meets with Waltz and Frey and Ellison, then maybe some reason will prevail at some point.
Wendy, thank you for the insights. As we consider the voices in the administration, including the aforementioned Greg Bovino, who Wendy mentions, there were a lot of folks out doing social media, doing Sunday morning television. Here's a sense of what we heard.
An individual approached U.S. Border Patrol agents with a 9mm semi-automatic handgun. The agents attempted to disarm the individual, but he violently resisted. Fearing for his life and the lives and safety of fellow officers, a Border Patrol agent fired defensive shots.
This individual showed up to impede a law enforcement operation and assaulted our officers. They responded according to their training and took action to defend the officer's life and those of the public around him. And I don't know of any peaceful protester that shows up with a gun and ammunition rather than a sign.
That was Secretary Kristi Noem there following Greg Bovino. Kristi Noem saying without evidence that Freddie was there to, quote, massacre law enforcement, unquote. We add the voice now of Robert McWhirter, the constitutional lawyer practicing criminal defense, civil rights attorney. Robert, it's great to have you with us once again on Bloomberg TV and radio. I'm just wondering your thoughts on this most recent revelation. They have at least one, and it might be several, body cameras that were being worn by federal agents. Will they matter in this case? Because they did not seem to matter in the last one.
Oh, I think they most certainly will matter. And the difference in the Renee Good case from this one is the videos are even more stark about what occurred here.
And to be clear, Robert, that was cell phone video in that first case. This is actual body cameras they were apparently wearing, right?
Well, body cameras from the officers, but you've got the cell phone videos of other people around. And, you can't, if you're Kristi Noem, I mean, if I was her lawyer, I'd say, look, you can't lie your way out of this one. You have the videos. And I've thought a long time, like, what is a better thing for protecting rights? Is it our Constitution and Bill of Rights, or is it our cell phones? It might be our cell phones under this particular regime. Wow. Because if you see what happened there, it is just shocking. It was an execution of an American citizen who was standing there. There was no reason to go beyond that. I'll also add another point. When Secretary Noem states that there's no reason to bring a firearm to a protest, well, what did they say during Kyle Rittenhouse when that young man went fully armed and killed 2 Black Lives Matter protesters? They weren't saying the same thing about that. They say we have a Second Amendment right to bear arms. This man did not brandish it, he did not pull it, and he did not deserve to be killed by an ICE agent.
Execution is the word that you chose there. Would that suggest, if proven, that officer be charged with murder? Because J.D. Vance says ICE agents have absolute immunity.
J.D. Vance is wrong, and I think he supposedly had law training. He should know better. No, federal agents, including ICE agents, have a qualified immunity for the conduct of their federal duties and while they're doing their federal duties. That does not give them immunity from a homicide charge. And I will tell you, there is no statute of limitation for a homicide charge. So you don't have the right to then violate the Constitution, barge into people's homes, and do what ICE agents are doing. And realize this was preceded by several assaults against women who were being pushed down by the ICE officers. So really, that is just simply wrong. You cannot say that committing the killing of a protester is within your official duties. Because if you say that, then I think we're all lost.
Interesting language from Mr. Bovino as well, who talked about the law enforcement, in fact, as victims here. Good job for our law enforcement in taking him down before he was able to do that, referring to the massacre of law enforcement that was being alleged. Bovino said Preddy injected himself into an active law enforcement scene. Robert, that's what we've been hearing from a number of members of the administration, that by way of blocking the officers' work, the protesters are voluntarily putting themselves in danger. How would you react to that?
Well, everybody has a right to protest. What this man was doing is he had his camera up and he was videoing what the agents are doing, and you have a perfect right to do that. Also, the person who unholstered this man's gun was another ICE agent. He never pulled his gun. He may have had it strapped to him, but he never pulled the gun. It was an ICE agent who did it just before another ICE agent, and it looks like shot him in the back of the head. So, you know, you can't lie your way when you have video evidence. And I think that's what this case really comes down to. And look, you know, this is just absurd. You know, I need to say one thing. ICE agents are enforcing immigration law. For the majority, immigration law is a civil violation. You know what else is a civil violation? A traffic ticket. So now you have people in full military regalia enforcing civil violations. It's performative, it's a big show, and it's dangerous. And frankly, they're not even deporting as many people as the Biden administration and the Obama administration did. So they're incompetent at the very job they're saying they're doing.
I want to clarify this Second Amendment issue while you're with us, Robert, and this has been very helpful for us to clear some things up. We heard a lot about the Second Amendment over the weekend. To your point, it appears in the video that he was disarmed by one of the agents. So it was legal for him to be carrying this as a licensed gun owner with a carry permit here. But the fact that these were federal officers, does the presence of ICE at any level supersede the Second Amendment in the way that he acted yesterday in carrying, or Saturday, carrying that weapon?
Absolutely not. The Second Amendment applies. Well, when the Second Amendment was first written, it applied directly to the federal government and not the state governments. We have since expanded our understanding of the Bill of Rights, so it applies to state government as well. But being a federal agent doesn't mean you have the right to violate people's constitutional rights, and it doesn't mean that you can violate the right to bear arms. Now, if you want to say that there should be greater gun regulation, well, then that's a different discussion, but then I think you're going to have to call upon the National Rifle Association to come in and say, oh, okay, we're going to allow for more gun regulation to prevent this from happening. And they seem pretty quiet right now in this situation.
Really interesting. Robert, I really appreciate it. I'd love to call on you again this week as we learn more about these two cases before the state. Robert McWhirter with us from Maricopa County in Arizona, our constitutional law expert and criminal defense attorney with us here on Balance of Power. I'm Joe Matthew in Washington. We'll assemble our political panel next. Now that we've set the baseline on what has happened, not from over the weekend only, but today as well, the president's call with Tim Walz. We'll get the read on this from Jeannie Shanzano and Rick Davis, Bloomberg Politics contributors. They're up next on Balance of Power on Bloomberg TV and radio.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all advancing. Russell 2000 index of small cap shares in the red. Disconnecting from the S&P again, down 0.2%. The S&P up 0.6, higher by 43, 69.59. The Dow up 292 now, up 0.6%. S&P, by the way, very close to session highs. NASDAQ up 0.7. The NASDAQ 100 index up by about 0.6%. The 10-year 4.20% with a 2-year that's currently yielding 3.58%. Gold at 5,086 did have a print just above 5,100 moments ago, up now by 2%. Silver, major move there, up 11.9%, 115.50 now on silver. West Texas Intermediate crude down 0.6%, 60.67 a barrel. Natural gas now surging by roughly 30%, 684 per million BTUs. And Bitcoin up 1.6%, 87,839 on Bitcoin. Target's incoming CEO has sent out a video message to employees acknowledging the, quote, incredibly painful violence in Minneapolis. This after a second fatal shooting by federal agents in the company's hometown. And more than 60 CEOs at some of Minnesota's biggest companies, including Target, 3M, General Mills, Best Buy, Land O'Lakes, and Cargill, are calling for an immediate de-escalation of tensions between local and federal authorities. Target shares trading lower now by 3.9%. And briefly, USA Rare Earth has signed a non-binding agreement with the Commerce Department to receive $1.6 billion in funding to accelerate U.S. production of key rare earth elements. Shares of USA Rare Earth, they're up by 16.8%. Balance of Power continues now. Back we go to Washington. Once again, your host, Joe Matthew.
Charlie, thank you. We'll get back to the markets with Charlie Pellet in just about 20 minutes' time here on Balance of Power. Thank you for joining us on this Monday on Bloomberg TV and radio. Presumably curled up somewhere warm. I hope that's the case for you. With an ice-ensconced nation, at least 2/3 of the country hit by that storm over the weekend, and we're still looking at, of course, hundreds of thousands of power outages. We'll get an update a little bit later on from Bloomberg's Miles Miller, who's in downtown New York. In fact, it's been in Central Park looking at the response from city officials and what was, of course, a major early challenge for Zoran Mamdani. We've got our eyes on the White House as well today, following the second deadly shooting by an ICE agent in Minneapolis. It took place over the weekend. As you can see on Bloomberg TV and on YouTube, Caroline Leavitt, the White House press secretary, just began her briefing at the White House in what is a room full, even with the weather here shutting down the federal government. It does appear we have some mixed messages coming from the administration. Caroline Leavitt saying a short time ago, quote, Governor Walz and Mayor Fry have shamefully blocked local and state policy from cooperating with ICE, actively inhibiting efforts to arrest violent criminals, encouraged agitators to stalk, record, and confront federal officials, creating dangerous situations. Obstructing federal law enforcement and inciting violence against officers is wrong and illegal. She says they've used their platforms to encourage left-wing agitators, and saying this only an hour roughly after President Trump went to Truth Social to describe a phone call he had today with Governor Tim Walz. He writes on social media, Governor Walz called me with a request to work together with respect to Minnesota. It was a very good call, the president says, and we actually seem to be on a similar wavelength. That does not sound like what we're hearing from the press secretary as we attempt to rationalize these two lines of thinking, knowing as well that it is expected the government could be facing a partial shutdown by the end of this week because of not only Democrat but Republican pushback on what took place over the weekend. The fact is you need 60 votes in the Senate, and getting a DHS bill, which is, by the way, combined with other spending bills in a minibus, is not going to reach that threshold as Chuck Schumer demands the bills be split apart in DHS be addressed on its own. It's where we start our conversation with our political panel. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us. Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick is a partner at Stone Court Capital, our Republican strategist. Jeannie, have Democrats decided to shut down half the government on Friday?
Yeah, I think it's very clear from what Schumer and all Democrats that we've heard from so far have said is that they hope that the Republicans split this, take out the one bill with the DHS in it, pass the others, and then negotiate or work on what is going to go forward in terms of DHS, because they simply cannot now fund this thing. They are hearing from their constituents. It is loud and clear. People were in, for many millions of people in this country this weekend, watching these horrific videos out of Minneapolis. And I think if anybody thought there was unification on the part of Democrats over healthcare to shut down, this is something I don't think we've seen in a long time. They are widely unified. They've got some Republicans who may come over. So I think we are looking for a partial shutdown, unless, of course, John Thune decides that he's going to, that there's a deal to be had here and that they break this thing apart and work on revamping DHS.
Well, for starters, I'm just struck, to both of you, by just the extreme nature in which the entire political landscape changed between Friday and a Monday. It is incredible the impact that this second shooting has had over the funding debate. Rick, you spent a lot of time in the Senate. Is it realistic for Chuck Schumer to talk about pulling all of these spending bills apart? Because even if they do, the House isn't here. They'd have to come back. They won't be around like little next week, and the government shuts down anyway, right?
Yeah, obviously his focus is on the Department of Homeland Security, ripping that out of the minibus. And I think he's got plenty of support within the Democratic caucus to do it. It's kind of a gift handed to him by the Republican administration saying, hey, we're right about to have a opportunity to finally get this budget done without a shutdown. And we're going to create a scene in Minneapolis that'll be so extreme that even you can't say yes to the deal you've already said yes to. So, yeah, this is a problem. And the administration, has created this problem for itself. Even Republicans aren't prepared to walk the plank for DHS. You can count on two hands Republican senators who have said we need a immediate investigation, state and local people involved. That we're trampling on the rights of core values of the American citizens, right to protest. There's very little support right now, even on the Republican side, for not doing something dramatic to sort of give a message to DHS that we can't have these kinds of things happening anymore. So, even though Republicans aren't prepared to vote against it, they need Democrats in the Senate to pass this omnibus, and they're not going to get it. So, yeah, the next worst thing is Republicans are going to be in the House on leave while this is going on and aren't going to stop and come back right away to try and fund the government. They're going to go ahead and finish out the week, let the government expire, and then get around to it later on. So American public is not going to feel well served this week.
It's only been a couple of weeks since the last shutdown, Jeannie. How quickly we forget. I had to chuckle. The tip sheets all pointing out the fact that it is not news when Tom Tillis or Lisa Murkowski push back on the president. But some of the other names that we've been seeing, Bill Cassidy is suddenly the poster child. Not that he's very happy with Donald Trump as being primaried by the president, but the Republican from Louisiana writes on social media, the events in Minneapolis are incredibly disturbing. The credibility of ICE and DHS are at stake. There must be a full joint federal and state investigation. He was echoed by Andrew Garbarino in the House, Jeannie. This is the chair of the Homeland Security Committee who was on with us last week, asking for the heads of ICE, Customs, and Border Protection to testify before his committee. You've even got James Comer suggesting ICE leave Minnesota. We'll look back on this, I guess, as a turning point, Jeannie, but I'm not sure what we're turning to. Do you?
That's right. And I was just going to mention James Comer went on Fox News. And if you look at the more conservative media, I'm just looking at the New York Post here where I am, and they have a headline now saying Trump snubs Kristi Noem, who they call Iced Barbie. And their point is, of course, along with a big story on Comer on Fox News, that there is, if you look from the Washington Examiner and some of these other more conservative outlets, they are reporting on these people who are calling the administration to task. And what's so baffling is to hear the press secretary right now in the room with reporters blaming Democrats not more than an hour after the president took to Truth Social and tried to walk this thing back. And this has been a theme with this administration. They simply cannot get out of their own way. They had a big victory here with closing down the border on an issue that got them the White House, and yet they have done everything they can at this point to disrupt that. And Republicans in Congress are not going to walk the plank for the administration on this. So a very difficult time for the president. And by the way, none of this was hard. We're really sorry this happened. Let's have an investigation. Let's work with local officials. These are things that are said all the time. And yet instead they went on the air this weekend calling victims, suspects, calling them assassins and terrorists. I mean, it's utterly inexplicable from a messaging standpoint or from any common sense standpoint for this administration.
Well, I'm compelled by the business side of this, Rick Davis. We can talk about outrage among politicians all day long here, and there'll be more where that came from. But it's not every day you see a letter like this. 60 chief executive officers from Minnesota-based companies calling on the president to de-escalate tensions between state, local, and federal authorities, knowing that, of course, we have a real standoff here on a government level. We're talking about Best Buy, Target, Cargill, General Mills, United Health. We're also talking about sports teams, the Minnesota Vikings and Timberwolves are on here. This was shared by the Minnesota Chamber of Commerce. Is this what's moving the president, Rick Davis?
You know, I think all these things are starting to maybe get his attention. You know, you can't avoid the impact that all of this is having on the people in Minnesota, and the impact economically to the community. I mean, the city and state are shut down, and that was the intent. The administration makes no bones about it. They're going to go to these quote sanctuary cities, and they're going to root out these illegals who are supposedly causing all this trouble in the community. Except in these communities, there wasn't that much trouble, and the federal officers who are there are creating so much disruption that it's impeding the flow of commerce. It's keeping people, at home, away from their schools and their churches. It's just phenomenal, the impact on these communities, and so the administration is getting what they asked for. I think someone needs to actually start talking to Stephen Miller, the deputy chief of staff. Is the first one to call Preddy a terrorist, and in any other administration, there would be people from his own party calling for his head today. But in this administration, they throw so much out there that you don't know which atrocity to react to.
30 seconds, Jeannie. Representative Robin Kelly, a Democrat, of course, has articles of impeachment for Kristi Noem. 120 Democrats have signed on. Is that going anywhere?
I don't know if the impeachment is going to go anywhere, but Donald Trump looks like he is about to take action potentially. I mean, just the movement of Tom Homan up there, and Tom Homan and Kristi Noem and Lewandowski have been at odds for a while. So I think he knows how bad this is.
Jeannie reminds us Tom Homan is making tracks directed by the president to Minneapolis. Jeannie Shanzano and Rick Davis, thank you both so much. Great analysis at a very difficult moment. This is
1:40 on Wall Street. We do check markets all day long here at Bloomberg. The dollar drops, gold tops $5,000, natural gas up 30%, stocks higher across the board. The Dow, the S&P, NASDAQ are all advancing right now. S&P up 44, up by about 0.6%, with the S&P currently trading at 69.60. The Dow up 318, up by about 0.6%. S&P, by the way, holding close to session highs. NASDAQ up 0.7%. NASDAQ 100 index ahead of all those big tech names reporting this week, up by about 0.6. Interestingly, on an update for much of the market, the Russell 2000 index of small cap shares is down, trading lower by 0.2%. Our Mag 7 index up 0.7%. The 10-year 4.20%, the 2-year 3.58%. Gold now higher by $78 the ounce to $5,065, up 1.6%. Silver at $111 the ounce, up 7.8%. West Texas Intermediate crude down 0.8, 60.56 a barrel. Bitcoin up 1.7%, 87,986. And natural gas bears repeating, up 30.4% now, 688 per million BTUs. Travelers continue to face extended disruptions to begin the working week in the U.S. as airlines try to get their schedules back on track following an intense winter storm that saw the most flight cancellations since the start of the COVID pandemic. Among airline stocks, they're all lower today. United down 0.2%. American Airlines down 0.4. Delta trading lower by 0.4. JetBlue down 2.6%. Southwest down 0.1%. This among U.S.-based carriers with a lot of domestic operations. Again, recapping here, S&P up 43, gain there of 0.6%. Balance of power continues right now. And back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet on the case and watching Wall Street for us every day here on Balance of Power on Bloomberg TV and radio. Great to see you. Yes, I'm Joe Matthew in Washington, where there are only the hardy souls at work today. The city is largely shut down as plows continue to push snow around. Lawmakers are going to have a tough time, and by that I mean senators. The House is out this week. Senators with a lot of work to do are going to have a tough time getting in per usual this evening with so many thousands of flights canceled, and they're looking at a funding deadline at the end of this week that will likely bring us all to Capitol Hill on Friday to witness what appears to be another partial government shutdown in the works. If you've been with us, you know this has everything to do with the deadly ice shooting that took place over the weekend in Minneapolis. Of course, the White House, though, is also tracking this storm, and we just got an update a little while ago from Caroline Leavitt, the press secretary, in the briefing room today. We're looking at about 765,000 homes and businesses that are out right now. The grid has actually behaved quite well around most of the country, but these power outages are simply part of our reality here with ice hitting local distribution lines. According to poweroutage.us, more than half of the outages are in 3 states. They are not in the Northeast: Tennessee, Mississippi, Louisiana. In terms of snowfall, and ice for that matter, we've got more than an inch of ice around the southern plains and southeast, Oklahoma, Louisiana, Mississippi, South Carolina, dealing with a pretty major test of their grids so far. The heaviest snow, though, in the Northeast, indeed. 23 inches, the jackpot in New Bethlehem, Pennsylvania. In New York City, 11.4 inches, and that's where we find Bloomberg's Miles Miller right now. He's actually in the middle of Central Park checking out the response from the city. This is, of course, our national security reporter who is on storm duty today. Miles, you are no stranger to politics, and I'm wondering what the reviews are so far for your relatively new mayor, Mamdani.
Yeah, and it's not just him, of course. New York City Mayor Zohran Mamdani and New Jersey Governor Mikey Sherrill just facing their first major crises with less than a month in office. For Mikey Sherrill, just about a week in office. She was sworn in on Tuesday. Of course, Mamdani worked quickly to mobilize more than 2,000 sanitation workers on 12-hour shifts. Actually, that number is about 5,000 sanitation workers. Every street in the city was plowed by this morning several times. The subway kept running. He closed schools outright, but avoided and did not get to avoid that remote learning disaster that plagued Eric Adams 2 years ago, because there's still some people who were not able to log on. Cheryl, of course, suspended all New Jersey transit on Sunday to keep people safe and keep them off the roads, implementing emergency highway speed restrictions, but both of them truthfully avoiding the mistakes that have ended or damaged some mayoral careers. What we also know is that there is the flight situation. 3,000 flights here in New York, more than 3,000 canceled today, and the economic impact is going to be large. Usually when storms like this happen, you're looking at $15,000 worth of damage in the hard-hit areas, and of course the dependency on the electrical grid, with more folks trying to warm up their homes, making it more difficult for those homes. But listen, here in Central Park, people taking it all in stride, making snowmen, doing some sledding, enjoying themselves. I saw a snowman, and because I could not be out and have fun in the snow because it's that really powdery snow, I had to take the snowman's nose. Bye-bye, snowman. Adios.
For those of you on Bloomberg Radio, you missed him with his carrot. Miles, you know, I'll tell you what, having every street plowed in New York City is quite a feat. I can't say the same for the District of Columbia. There are a number of side roads that have not seen a plow. But I'm wondering then what that means for transit, not just in New York, but in New Jersey as well. How are the buses, the trains holding up?
You know, New Jersey Transit has a lot of difficulties on any given day. The buses are largely back and running, but most of the lines on New Jersey Transit are not working right now. Light rail got back up to speed. You're starting to see some branches of New Jersey Transit back up and running, but it's going to take some time for them just because of the way that system works. A lot of it is operated, you know, on Amtrak's trains as well. So if there are issues with Amtrak, there's issues with New Jersey Transit, especially on that Northeast corridor line that we know so well. So they're having a tough time, and it'll be a big test for Mikey Sherrill. Will she be able to, in her governorship, be able to improve the way New Jersey Transit responds in storms like this? You know, this was one instance in which the service was completely shut down in New Jersey, but in New York, the MTAs, Long Island Railroad and Metro North Railroad, which are both commuter rails, were able to run almost normally.
Remarkable. Miles, you look really comfortable out there. I think this is great. Try to make some friends in Central Park while you're with us here. Bloomberg's Miles Miller, live on Bloomberg TV and radio. We have a number of logistics to consider here, not just the grid, but the role that the federal government played in helping states prepare for all of this. Monica Medina is with us, former Principal Deputy Undersecretary of NOAA in the Biden administration. Monica, it's great to see you. The scale of this storm was truly remarkable. How are you feeling now that it has largely passed? Because there were many concerns going into this of massive power outages, and I know we have hundreds of thousands, but there were great memories, difficult memories of what happened, for instance, the ice storm in Texas in 2021. We seem to have avoided stories like these.
Thank you so much, Joe, for talking about this today, because I think it's important for people to understand that we did get through this storm really well. And I want to take a minute and thank the National Weather Service forecasters who worked around the clock. And they are still short-staffed. I want to thank all of the first responders, the people out there who are cleaning up those downed trees and putting the power lines back up and trying to get all those people's power restored. 800,000 people is not a small number of power to be restored, especially in places where they're not used to it. Kathy Hochul, the governor of New York, called this an Arctic siege, and she's right. And what we see, I think, and what we need to be prepared for is more and more of these Arctic blasts. It is colder now in Chicago and Indianapolis, significantly colder than it is in Anchorage, Alaska. And so when the president and this administration makes light of climate change, they really are shortchanging the American public, because we need to be prepared for a lot more of this kind of extreme weather, the kind that a lot of places just aren't prepared for. And the Weather Service cuts are definitely impacting the Weather Service, and we can talk about that.
Well, yeah, hold on to that, because I have a question for you on budget cuts. But you mentioned the administration, and I saw this post from the president last week. This was 3 days ago. The president on Truth Social, record cold wave expected to hit 40 states, he wrote. Rarely seen anything like it before. Could the environmental insurrectionists please explain whatever happened to global warming? I don't know if you're an environmental insurrectionist, but the president is obviously trying to get to something that's a matter of semantics here, correct? I mean, if we talk about global warming, you could call it climate change or whatever. Why don't you go ahead?
He is. And I'm a realist. I'm someone who looks at the facts. And the fact is that our global climate has been warming. And last year, we just got the information out of NOAA, kind of quietly. They snuck it out the door. It was the third warmest year in the U.S. on record. And after the last 2 years, which were 1 and 2. So the last 10 have been the warmest. What that means is incredible shifts in climate. So one of the reasons this storm was so powerful was because it was supercharged by warm ocean air. And that's why it was so wet and so extensive across the country. It's not these days, what weather and climate scientists are saying is that the storms that we're seeing are stronger, are wetter, and that's why we had so much ice, frankly, and that between the dip in the Arctic air that went all the way down to Louisiana and Texas and Tennessee in record low temperatures, and on top of that, a lot of moisture coming out of the Gulf, what you see is a huge storm that spanned thousands of miles. And so the president can pretend that climate change isn't happening, but it is. And Americans know it. That's the thing. They see it. It's like a lot of things he tries to spin, but you can't change what people see with their own eyes, what they experience. And so here we are. We need to be adapting to these things. We need to be prepared. And one of the reasons why I think the grid, you mentioned earlier that the grid had held up pretty well, was because we've seen this happen before, and we switched to a stronger grid with more renewable energy. Places like Texas, which had huge problems in 2021 with a similar storm, now have much more battery storage, much more solar and wind power. And so they were able to shift away from the more difficult types of power. But what people will see because of the really terrible policies of this administration is a rise in their electric power bills because, as you also mentioned, natural gas prices going up, electricity demand through the roof at a time like this. We've taken power projects out of line. We've taken them offline, the ones that were coming online that were going to help relieve some of the strain on the system during these cold spells. So the policies of this administration have been really a disaster and make really challenging.
Monica, I want to ask you about the budget cuts at NOAA. Clearly, you're not a fan of the administration. I just want to know more specifically about the cuts to NOAA. Following the cuts we saw from the DOGE, and now these proposed, I believe, roughly 30% cuts. It's a $1.7 billion cut to the National Oceanic and Atmospheric Administration. Where would that leave the agency in 2026?
That will leave the agency really strapped. Listen, the Weather Service, which is kind of the basic service that every American relies on, that the government provides on a daily routine basis, is 4 things. It's people. They've cut people. They've cut important people. They've cut years of experience. So even if they try to hire back some of those people, they won't be able to get back people with the kind of experience that they've lost. They've cut the amount of data we're collecting. You know, these little weather balloons, people talk about them. They, offices used to put those up in the atmosphere every day, like clockwork, routinely, and that collected basic data that made our models better. And we don't do that as much anymore. There are lots of holes in our data now. That's going to make these forecasts less accurate. On top of that, we're cutting the science, the analysis of the data. It's not science for science sake. It's science so that we can get these forecasts right, so we can give people the kind of advance warning they had on this one, which was a massive storm. But what if it's a flash flood? What if it's a fire and wind, right? We need that data and the analysis that makes our models stronger. And then we need to collaborate with the private sector. And they're cutting the research centers, the places where that collaboration happens. So it's devastating what's going on at NOAA. And even if, which the House did put back money so that NOAA would be fully funded, I'm not sure this administration will follow the Congress's direction and actually fully fund all those programs and offices and people.
Okay, Monica, thank you for joining us. I appreciate it very much. Monica Medina, former Principal Deputy Undersecretary of NOAA, with us live on Bloomberg TV and radio. Obviously, a lot of questions here about the direction that agency is going in. We're headed to Bloomberg Business Week Daily. That program starts just a couple of minutes live from World Headquarters in New York. I'll meet you back here on the late edition of Balance of Power as we dig out and try to clear out the cobwebs here on a Monday, counting down to a government shutdown on Friday. This is Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. Yes, indeed, it is a snowy Monday, but we made it. A lot of people made it.
I made it. It took a while.
Yeah.
The city is pretty quiet, I would say.
It's so quiet.
The commute was very quiet.
Yeah.
But, people across the country are digging out after this storm. New York, just part of the recovery. I mean, a lot of the South still without power. And the ice storms that we saw in the last couple of days wreaking havoc on some of those power grids.
Like we often say, we know New York is the center of the world, but let's remember this storm has impacted a big chunk of Americans.
It's not the center of the world.
No.
She's just joking, everybody. She's just joking.
Am I?
Before
No,
you
I'm
get
just
all
kidding.
before you get all the hate.
It all matters. It all matters. And that's kind of what our focus is, no doubt about it, in the next 60 minutes. We're going to talk markets. We do have the dollar down to a 4-month low, gold topping $5,000 for the first time. My sister actually messaging me about this. Remember when gold was, and she named some really small amount.
Is that a sign? Is that an indicator of some sort?
It made me wonder when everybody is talking about something. I don't know what it means. Interesting week. We've got, 4 of the Mag 7 actually reporting earnings this week.
Yeah, Tesla, Microsoft, Meta Platforms, and Apple as well. And then, Carol, Wednesday, Fed decision.
That's my general.
The first one of 2026. I think a lot of people are going to have questions not about the Fed decision and instead about Jay Powell and the political challenges that he's been facing.
All right, looking forward to all of that. Hey, and in the next 60 minutes, here's what we're going to do. We're going to get into U.S. border czar Tom Homan heading to Minneapolis. We're going to get into a decade in a year of inflows where money is and should be going towards. We're going to talk about that this hour as well.
And a check of the C-suite in manufacturing, Fastenal's CEO on the manufacturing economy and being a CEO in today's volatile and stressed world.
All right, let's get to it. Let's get you caught up to date on the market trade. Here we go. Here's Charlie Pellet.
Hi, thank you very much. Equities higher across the board. A lot of big moves in commodities. We'll get to that in just a moment. But the Dow, the S&P, NASDAQ all in the green. S&P close to session highs, up 44 right now. 69.60 where we stand. That is a gain of 0.6%. The Dow also up 0.6%, up 285 right now. S&P, by the way, 69.60. We've got NASDAQ up 0.7%. The NASDAQ 100 index also up by that amount. Interestingly, though, the Russell 2000 index of small cap shares, a disconnect there. That index right now lower by 0.3%. The Mag 7 index with 4 out of the 7 reporting this week up 0.8%. The 10-year 4.21%. The 2-year right now at 3.58%. Gold is up 1.3%. 50.50 the ounce. Did see a print of just about 5,100 earlier on gold, while silver is surging 6.4%, $109 now on spot silver. Bitcoin at 88,400, up 2.2%, and West Texas Intermediate crude 60.65 a barrel, down 0.7. Cannot ignore the move in natural gas. Look at that, up 26.3% right now. Nat gas 6.65 per million BTUs. Target's incoming CEO has sent out a video message to employees acknowledging, quote, the incredibly painful violence in Minneapolis. This after a second fatal shooting by federal agents in the company's hometown. More than 60 CEOs at some of Minnesota's biggest companies, that would include Target, 3M, General Mills, Best Buy, Land O'Lakes, and Cargill, are calling for an immediate de-escalation of tensions between local and federal authorities. This in a public statement issued over the weekend. Target shares, they're down today. Target trading lower by 3.7%. Again, recapping, stocks pushing higher, S&P up 0.6%. Natural gas with much of the country in a deep freeze right now, up 26%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I'm sure by now you know that President Trump is sending U.S. border czar Tom Homan to Minneapolis amid a growing outcry over his immigration crackdown that was inflamed last weekend when federal agents fatally shot a U.S. citizen. Now, this is happening as a growing number of Republicans called for a full investigation after federal agents shot and killed that protester in Minneapolis. It's really, Tim, and you really stressed this on our call this morning, about we're seeing some tensions within the GOP.
Yeah, it's a sign of unease within the party about the administration's aggressive immigration tactics. We're seeing some members of Congress talk in a way right now that they don't typically talk about and going against what the president says. Remember, we're in a different political environment now. than I think it's fair to say we've ever been in.
And CEOs starting to speak out. And we're going to dig into that over the next 60 minutes as well. We want to bring in Wendy Schiller, certainly well known to the Bloomberg audience, professor of political science at Brown University. She joins us from Providence, Rhode Island. Wendy, good to have you here. President Trump was out on social at 11:39 a.m. Eastern, saying he had a very good call with Minnesota Governor Tim Walz, expects to speak to him again in the near future. He said that Walz called the president to request to work together. A lot going on. What's your read on all of this? The president sending Tom Homan. If Governor Walz indeed did call the president, what's this say all to you, someone who studies presidents, studies administration, studies the core and foundation of America?
Well, I mean, I think what you're seeing are two different political actors with very different incentives. Walz is not running for re-election in Minnesota, but he's the governor. He's responsible, and he's got this huge federal presence that is basically spinning out of control on the streets of his own state. And he wants to reassert authority in the sense of calming things down, not necessarily disobeying the federal government, but calming things down. President Trump has other things he thinks he wants to get done. It's not just that it's a midterm election year. This is freezing up his presidency. Basically, this sort of spin out of control for the Department of Homeland Security in their tactics, not their aims or goals. President Obama deported more than 2.4 million people in his 8 years as president. So I think the American public has patience for the effort to sort of say, okay, if you're not here legally, then you have to leave. But, you know, he's underwater in the 60s, meaning more than 60% of Americans disapprove of ICE tactics. So it's spilled out not just from ICE, but certainly to his entire presidency. Now the Congress is saying, we don't think we will fund the Department of Homeland Security. So by the end of the week, you could have some agencies funded, but you could also have a partial shutdown because of Homeland Security. And so that is sort of throttling up all of President Trump's energy and agenda, and he's got to clear the decks.
Wendy, on the company side of this, I think this got a lot of our attention when this happened, because this is sort of like, you know, we're watching at Bloomberg what these companies that are based in Minnesota, what they're saying. And I was surprised to hear over the weekend that Target, United Health, 3M, Best Buy, among others, addressing immigration actions in Minnesota, some calling for peaceful de-escalation, emphasizing compassion. The NBA issued a statement saying it must defend the right to freedom of speech, and they stand in solidarity with the people of Minnesota protesting. Is this a turning point that has any effect on the president and his policies?
Tim and Carol, I think this is exactly the question mark. I mean, it'll be deep. If it's an inflection point right now, it says, is this the America we want to be? We've had 2 U.S. citizens shot by federal law enforcement under circumstances that have not been clarified by the federal government. And there's calls for investigations. But this, you could ask most Americans, and they say that's not the way we want this to go. So that's affecting not just the Republicans, but the Democrats as well. It's government, exercise of government power. So I do think there is a turning point in the sense of expressing, you know, real opposition to this particular tactic. And we know that CEOs and business owners have also been unhappy with the Trump administration with these raids on businesses all over the country, anywhere from Idaho to Iowa, all over. And Trump said, oh, I'll pull back on some of these raids because I know it's hurting business. You know, so I think it's the culmination of unhappiness. And now there is a sort of flashpoint where I think corporate America can safely come into the fray and say, this isn't just about business anymore. This is about loss of life. And, you know, there's got to be a better way of doing it.
And yet, you know, Wendy, and we're going to dig deeper into this letter of CEOs in Minneapolis, but it's been largely an environment where the corporate community has sat by and just worked out deals, it seems, with the White House to get what they need done, but kind of turned away from some of the other injustices that have been going on, or the ignoring of the rule of law in this country, which has really been so much a foundation for this country. So I'm just trying to understand, you know, what has really been a kind of a silence that we have seen largely, whether it's the corporate community and just other leaders in our world, especially in the U.S.
Well, Carol, I think this is a really important observation that you're making. And what we see at the sort of lowest levels is a rejection in some cases of what you might call an abuse of executive authority. For example, presidential attempts, Trump's attempts to go after his quote unquote enemies. Grand juries, which are made up of your average, everyday American who is doing their civic duty, have said no. We don't find any cause here. We're not giving you a bill of indictment. And that's a very important democratic mechanism at the lowest level, which is saying no to overreach of power. So I think when businesses start to see that the average American is standing up and saying no, whether it's in a grand jury room or it's on the streets in Minneapolis, I think it gives them more backbone, really, to step up and say, okay, enough is enough.
Wendy, though, let me just counter. Is it really backbone, or is it just, well, okay, midterms coming up, it's not looking really good, I can start shifting around? Same thing for members of the GOP.
Well, I mean, for practical effects, do those of us who are concerned about overreach of power care what the motivation is? I think once it becomes safer to venture into this space, I don't see them retreating. So I think their voices, you may argue, or I may argue, have been too silent thus far. But now they do have that backup of midterm elections, but that backup rests with consumers. So we saw a lot of this in the reverse when we had DEI and boycotts of places that weren't really paying attention to DEI. Then we had a reversal under Trump. But especially with Target as a company, for example, that had to really pivot again. But now we're seeing the power of the consumer, maybe not expressed so far in retail, but certainly that same person who's objecting in polls or on the street is somebody who may be buying your product. So it does make sense, if we want to say it, to jump on this bandwagon.
Wendy, I do want to be fair because we all talk to, and I'm sure you do too, talk to a lot of leaders, and whether it's China, a position that President Trump took in his first administration, that President Biden continued a lot of the pushback in his administration. When it comes to immigration, you mentioned what President Obama did in terms of deportations. So to be fair, what some say too is there are these problems, and President Trump has brought them to light in a big way. And so they don't necessarily disagree, but the methods kind of get messy and in the way of what maybe this country stands for.
Right. So what you want to ask yourself is this a self-inflicted political wound? If the president used different rhetoric, I mean, this is a frustration in the Trump administration, I think, because if you look at the Obama administration, they say, wait a minute, he deported more people than we've managed to deport in our 5 years in office combined. But it's the rhetoric, it's the demonization, it's sort of the dismissal of people's concerns. I think that is self-inflicted, and we have seen this president be able to pivot. You know, this phone call with Waltz should not be discounted. This is very important for settling things down in Minneapolis, but also giving Trump an off-ramp. Can he make Homan the acting department secretary, for example, if Kristi Noem, for example, were to depart from that position? Does it give an opening for Trump to make changes at the top there? And that may, get his presidency back on track and appease Democrats enough, theoretically, that they'd be willing to support funding at the end of the week. So I think there's an opportunity for a president who does pivot quite frequently to tamp down the rhetoric. We know Trump can do it.
Right.
Whether he's willing to right now, we just don't know.
All right. Love getting time with you always. Wendy Schiller, professor of political science at Brown University, joining us from Rhode Island. All right, let's get to the trade today. This as demand for exchange-traded products focused on European equities was so strong last year in 2025 that they attracted a decade in a year of inflows. That's according to BlackRock's Ursula Marchioni, head of investment and portfolio solutions for EMEA at the world's largest asset manager. She caught up interview with Bloomberg TV this morning over with our European colleagues. Check it out.
From investors with historical own bias towards Europe, that has to be rectified. But then on the flip side, from a more tactical perspective, there is this desire to diversify and remain exposed to the AI trade and to the US, but with some form of protection. And so we've seen last year the great repatriation trade with nearly 92 billion of flows going back into European equities ETPs. If you compare it to the period 2014 to 2024, that was 94. So it's basically a decade in a year.
It's pretty remarkable. A decade in a year. That was BlackRock's Ursula Marchioni, head of investment portfolio solutions for EMEA. Let's get to the trade and today's trade and what she's seeing on the Robinhood platform. Stephanie Guild is with us, Chief Investment Officer at Robinhood Markets. Did that resonate with what you're seeing on the Robinhood platform, or is that completely different than what you're seeing on the platform?
We haven't actually seen a ton of international take up, at least here in the U.S. You've seen a little bit in the Chinese tech aspect, like in names like Baba, but largely it's been a very U.S. focused, AI and lots of other investing themes focused over the last year.
Why do you think that is?
I think our customers take sort of a long-term view, and they like to invest in things that they know and understand, really no different than, past generations. And I think they feel that they know and understand, tech, and can understand kind of the long-term secular growth trends that can come from parts of tech, and are willing to take that risk, even if it's in the space like quantum computing, which is still, in sort of discovery phase.
Do you think that has to do with some of who are actually on your platform? In other words, the demographics that I think, I don't know.
Then maybe they've only seen U.S. equities outperform, right? Like
exactly.
That's not the world that you lived in for much of what you've done.
Right. It could be absolutely part of that. I mean, it's the same kind of thing as like, has a generation ever seen value outperform growth?
Yeah.
Exactly.
Here in the U.S.
It's so funny that you say that. I on Friday was at a big dinner and was talking with someone who has started companies, sold them, now investing their own money, and just talked about some of the big wealth managers who come to him and say, you should be buying the market, and paying me a fee for doing that, and so on and so forth. And he's like, you know what? I haven't bought the market. I've actually doubled down on those big tech names and have outperformed the market, even though if you think about the last few years, people keep saying, oh, back off some of these. It's time to diversify. You know what? If you didn't, you did really well, and especially if you played on those Mag 7 names.
Yeah, I do think it's shifting now. Like I'm sort of a student of looking at the market and saying that once you had sort of a post-COVID world, I do think the fact that we have interest rates has shifted what is possible and can outperform. And there was, COVID's kind of brought tech right into front and center and the need for it. But I think as more time goes on, and especially with some of the incentives from the One Big Beautiful Bill and other, that I think it's possible that you can start to see other things do well.
And yet the net buys on your platform, right? Meta, Microsoft, I'm thinking about, we're going to have for the Mag 7 reporting this week alone, including these two names, net sales, NVIDIA, AMD, and CoreWeave, which is interesting because CoreWeave rallying in today's session, but that's what you've seen in
Thanks
the last...
to an NVIDIA investment.
Right,
yeah.
right.
Yeah, and that's over the last week, so
Okay.
it does shift. What was also interesting over the last week is that I saw, and you kind of saw this news all across the X platform, but you saw below those top names a number of software companies starting to come into the net buy side. So taking advantage of the pretty deep sell-off in that space. And then more recently, just like in the last day, we've seen some Netflix buying as well.
Was that because of the Alex Honnold stunt over the weekend? Just 30 seconds?
Might be. Obviously there's a lot of drama with Netflix right now.
Yeah, there is. It's been beat up ever since the announcement that they're going after Warner Brothers Discovery's assets. So investors don't love it, but they keep steady with, hey, we want those assets and we'll pay for them.
They still have a solid business underneath it.
It's pretty. Yeah, that's a good point.
All right, good stuff.
Stephanie, good to see you as always. Appreciate your time.
Come back soon. Love talking with her. She is Chief Investment Officer over at Robinhood Markets. Coming up, the CEO of Fastenal. We talk manufacturing and on being a CEO in today's tough environment. That's next.
2:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow, the S&P, NASDAQ all advancing. S&P 500 index holding close to session highs, up 43 right now at 69.59, up by about 0.6%. The Dow up 300 points, also up 0.6%. NASDAQ doing a little bit better, up almost 0.7%. Interestingly, though, on an update from much of the market, the Russell 2000 index of small cap shares is slumping by 0.3%. Our Mag 7 index up 0.8%. We got 4 out of the 7 names in that index reporting this week. 10-year 4.20%. Spot gold is surging, up $34 now, up 0.7%. Earlier today did see a $5,100 print on gold. Silver, meanwhile, up almost 5%, 108.20 the ounce on silver. Bitcoin up 1.8%, 88,065 on silver. Natural gas cannot ignore the move there. Nat gas surging now by 27.3%, 671 per million BTUs. I'm Charlie Pellet. It's a Bloomberg Business Flash.
All right, Charlie, thank you so much. So something we've already touched upon, and this is this letter from 60 CEOs of Minnesota-based companies, more than 60, I should say, have called for an immediate de-escalation of tensions between state, local, and federal authorities as the state is reeling from another fatal shooting of an American by immigration agents. The chief executive officers of companies, they include Target, Best Buy, Land O'Lakes, Cargill, General Mills, United Health Group, as well as professional sports teams, including the Minnesota Vikings, among the signatories of the letter that was shared yesterday, Sunday, by the Minnesota Chamber of Commerce. We're laying that out for those who are watching on streaming and TV. Just to get to the crux of it, though, the open letter says, we are calling for an immediate de-escalation of tensions and for state, local, and federal officials to work together to find real solutions. This is why Tom Homan is headed to Minnesota.
Our next guest is head of a company in the great state of Minnesota. We're talking about Fastenal. Recently reported earnings, the stock selling off on the day of the report, but rallying the day after, the most in 9 months. That trade reaction had us scratching our heads, so we're grateful, Carol, to have back with us to talk about the release of the outlook. The CEO of the close to $50 billion market cap company, Fastenal, Dan Florness, is back with us.
Yeah, so delighted. Let's get to it. Dan, good to have you here. Happy New Year. We do love talking with you. We feel like we get a great read on the U.S. economy, the manufacturing world. You've seen a lot in your career. We want to get to all of this. But I really do feel like we'd be remiss to not ask you about what's going on in your home state. And I feel like those who are listening might be curious if you were asked to sign this letter of CEOs who want a de-escalation of what's happening in Minneapolis specifically. So were you aware that this letter was happening, or were you asked to sign it?
First off, Happy New Year, and thanks for allowing me to participate today. I was not aware of it. We're outstate Minnesota. We're about 2.5 hours from the Minneapolis-St. Paul market, and so it's not uncommon. It's a pretty tight-knit group up in the Twin Cities, and was not aware of it going out. With that said, was not surprised by it going out, and it seemed to be pretty common sense of, hey, let's dial down the heat.
So would you have signed it, though, if asked?
Yeah, I would have signed that.
We talk so much about leadership at this time, and I am curious what you see as the responsibility of leaders in the United States when we see situations happening where it feels like, and again, I don't want to get political, I don't want to take sides, but it does feel like Americans are being, what some would say, is targeted unfairly.
Yeah, I think as a leader, one of our tasks are to create some calm in the air. I think back a few years ago when COVID was going on, it seemed like everybody every day turned everything into a political thing. And sometimes it's a case of, if you're around a bunch of people that are high at risk in the case of COVID, put a mask on. If you're not and you don't want to be there, then go someplace else. Same thing here. Let's try to dial the heat down and focus on what we're trying to accomplish, not how we can see who can be the most boisterous in the market of throwing ideas out. And that's on both sides of the fence.
Dan, one thing that we're trying to figure out is getting a good read on the economy, and you guys have such a great read on it, given that you touch so many sectors. I mean, if you're using nuts, bolts, screws, anchors, rivets, any kind of fastener, industrial janitorial safety supplies, you guys do it. On earnings, you mentioned the broader market conditions remained mixed. What exactly did you mean by that? When you say mixed, what's the good, what's the bad?
Well, mixed from the standpoint, we focus a lot on the Purchasing Managers Index, published by the ISM, and that's been sub 50 for 36 of the last 38 months. So from the standpoint of the economy's not giving us any lift, we are getting good traction in the marketplace, and we finished out the last half of 2025 with double-digit growth. That's really an exercise of taking market share more than the wind is to our backs.
And I know we've talked about this too, Dan, with you about being in a prolonged downturn in the industrial economy. Any green shoots that you were seeing or signs of an inflection? And if so, I'm just curious what markets might you be optimistic and which are maybe running weaker than you anticipated and maybe will continue to this year?
Yeah, this is a little bit of an anecdotal answer, so I apologize for that. We're seeing in some of the published data, some industrial production numbers improving late in the year. We aren't seeing that directly in our business, but for us, November, December is a seasonally weak period, so that doesn't surprise me that we wouldn't see it. So don't know if there's some green shoots there. I can tell you this from my travel, if it's a business that's linked to certain industries, and data center is an example from a recent trip I had on the East Coast where I was visiting a mechanical contractor, and their business was on fire, and 70% of their activity was around data centers.
So
go ahead.
So that's the good part, right? And
that's the good part.
That story we keep hearing about the AI build out, the data center build out, you saw it firsthand. It's real.
It's real. It's real. In fact, I spend a big chunk of my time having conversations with our district leaders. We have about 240 district managers. They each run about a $35 million business. You add them all up, that's an $8 billion Fastenal. So I had a conversation with our team in Atlanta this morning, one of our district managers, and most of his discussion was about business pickup he's seeing in his market because of data centers. Now, Atlanta is unique in that it's one of a handful that are really being impacted by that buildup.
What is the pricing power, Dan, that the company has right now? Because historically, during periods of inflation, you've been able to be pretty aggressive with price increases. I think people would argue you weren't as aggressive as you could have been in 2025. What's the barrier to pushing price more aggressively?
Well, the one barrier is the size of the customer, the nature of the products, how much of it is production centered versus maintenance centered. And because when it's production centered business, you have customers buying a very large volume of narrow band of SKUs, and their price sensitivity is different than if it's MRO and they're buying $100 of this and $100 of that.
One of the things I want to ask you too, there was a story on my read-in this morning, Dan, in terms of Volkswagen saying that they had plans for a possible Audi factory in the United States. They're not progressing due to President Donald Trump's tariffs and unsuccessful talks for local incentives. So we have certainly seen an administration that talks about all the investment money coming into the U.S. And I think we here at Bloomberg continue to try and figure out how much of this is actually going to play out. You can say you're going to invest, and then there's the reality of actually building facilities. First of all, tariffs, and I know we've talked about this with you in the past, so forgive me if I'm repeating, but you're thinking about outsourcing. How have tariffs changed that, especially when it comes to fasteners, I think primarily sourced from China and Asia. So I'm just curious how any of it's been shifting for you.
Yeah, so you are absolutely correct. Most of the fasteners in this country, in North America in general, come from Northern Asia, China primarily. Obviously, huge impacts. And for us, what it's meant is for about the last 7 years, we've been actively expanding our ability to import fasteners because there's still not a lot of domestic production. And so when I think back to 2018, our primary sourcing entity was based in Shanghai with a secondary location in southern Taiwan. Today we have personnel in Bangkok, we have personnel in India, and that's where all of our growth and movement of sourcing personnel has occurred over the last 7, 8 years to just broaden our ability to be a little more agile and where you source from, depending on the geography it's going into.
So that's on the sourcing side, but what about on your customer side and about customers moving manufacturing back to the U.S.? Are you seeing that happen? Are you hearing discussions of that?
Yeah, I guess, anecdotally, yes. I can't say that we've seen a tremendous influx. What I would say is I hear less about stuff leaving than maybe I would have, 10 years ago or 5 years ago. And that in itself is a win from the standpoint of production. But, a lot of it is folks are getting closer to where the end customer is for a lot of our customers. And so when I see customers expanding production facilities in North America, and I'll say more broadly than North America rather than just the United States, it's usually to service more efficiently the local market.
Which makes sense, which we've seen that trend happening, I feel like, over time. Hey, Dan, you mentioned about maybe less companies leaving the U.S. Speaking of leaving, you are stepping down as CEO come July. You've been CEO since 2016. You were CFO before that, going back to 2002. You've been there a long time. And I know last time you were on, I asked you a question about this cycle, and I was not very kind. I got yelled at by my team because I think I gave you 20 seconds. But I wanted, we do get yelled at.
You get 25 seconds now.
No. You've got almost 2 minutes. How do you describe this cycle? Because it feels unusual.
Well, it's unusual in that, you hear about everything, whereas in years past, there was so much of this political stuff that went on, but most of it, if you weren't in the midst of it, you were oblivious to, and you went around about your life. Now everybody hears about everything when it happens, so that's just a lot more noise. On the flip side, what's really different is I mentioned on that conversation with the team in Atlanta this morning, we were talking about data centers, and one of the people on the call, he leads our business in the southern U.S. He said, "Hey Dan, I'm going to flip you something." And he punched in a bunch of questions, and he came back with a 29-page report on the data center industry in the United States. And so I read through a bunch of it. It's actually pretty accurate and pretty good information. I mean, there's stuff in there I can pick apart, but it's pretty good.
Yeah. I know. Well, okay, now...
Dan still had to do the reading, though. It didn't read the report for him. So
I probably would have, but I'm old school, I guess.
Is that, just quickly, I know this is truly like 30 seconds, is that the most transformative change you think we'll see over the next decade, is just the continued impact of AI and things like ChatGPT and everything else connected? Just your quick thought on that.
Yeah, because, when I think of our business, we're selling... tens of thousands of different parts to customers every day, and the ability to improve the visibility for folks sourcing all that stuff is an incredible efficiency tool.
All right. Dan, come back soon, especially before you leave in the summer. Dan, thank you.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg with the Dow, the S&P, NASDAQ pushing higher. S&P close to session highs right now. Russell 2000 index in the red. Right now, the S&P up 45 at 69.61. That is a gain of 0.7%. The Dow also up by that amount. NASDAQ as well. The NASDAQ 100 index up 0.6%. But we've got the Russell 2000 index diverging. It is down today by 0.3%. The Bloomberg Mag 7 index ahead of 4 out of the 7 members' earnings this week, up now by 0.8%. 10-year currently yielding 4.20% with a 2-year 3.58%. Gold is surging another 0.9%, 5,034 now, trading at a record, breaking through 5,000. Indeed, we did see a 5,100 print earlier today. West Texas Intermediate crude down 0.9%, 60.52 a barrel. Natural gas now surging by 23% to $6.50 per million BTUs, and Bitcoin up 2%, 88,215 on Bitcoin. Meta Platforms and its peers will be scrutinized for how well their heavy AI spending is translating into profits. Meta Platforms will report Wednesday, along with Tesla and Microsoft. Apple on Thursday. Right now, we've got shares of most of them trading higher. Meta Platforms up 2.4%. Tesla up down 2.6%. Microsoft up 1.5%. Apple again on Thursday up by 3.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got to Charlie. We'll go back to him until the close and after the close. A lot going on here on this Monday. Hey, as we mentioned in the last segment, more than 60 CEOs of Minnesota-based companies called for an immediate de-escalation of tensions, their words, between state, local, and federal authorities as the state reels from another fatal shooting of an American by immigration agents. And Tim, what's interesting is, remember we noted last week our team on the ground in Davos, what they said Wall Street chiefs were kind of up to?
Yeah, they want to lay low at the World Economic Forum, don't really want to draw the attention of the president. We've asked this question a lot, like why aren't companies more speaking out more about how, you know, it's kind of obvious why. There's limited upside. There's really no upside is what some observers have told us. Like, what do you have to gain? You have nothing to gain.
They don't want to be mentioned maybe at a press conference at the White House. That's, I think, a safe thing to say. So we wanted to get a good deep dive into this, continue kind of what we've been doing this hour. It's great to have back with us Rebecca Humkes. She's faculty at the London Business School and at Duke Corporate Executive Education, also author of Survive, Reset, Thrive, Leading Breakthrough Growth Strategy in Volatile Times. She joins us from London. Rebecca, great to have you back with Tim and me. CEOs have had to navigate a lot of tricky times, the great financial crisis, COVID, the murder of George Floyd, President Trump's immigration crackdown across the U.S., most recently Minneapolis, that has resulted in the killing of 2 Americans. CEOs have largely been quiet up until now. What are you hearing from the global leadership community about this moment in time, and those specifically in the United States?
Yeah, I think, Carol and Tim, the discussion you've been having today and in Davos last week, a couple things are going on. One, let's state the fact that we have always run and tried to grow and lead companies through uncertainty. Uncertainty is not new. Like, it is the new certainty. You know, there is an element of geopolitical volatility that we have now that is kind of changing the expectation, as well as the current administration's involvement in the private sector. You know, one thing that we saw in 2020 with George Floyd was that companies really weren't prepared of how to handle social issues. They didn't have policies. They hadn't had meetings. It was a pretty tough time. What we've seen since then is most companies have something agreed and signed off with the board of how they are going to address social issues. You know, you can agree or disagree with the fact that they have policies. Where we're seeing perhaps a delayed response is that companies now have policies in place where they did not in 2020. And some feel that they might have reacted to knee-jerk, kind of not getting the right consensus, maybe not doing it appropriately. We're seeing a bit of that.
Can I just say, to be fair, it sounds like the response that they've agreed is to say nothing.
You know, Carol, that is partly what we're seeing. We are also seeing
up until
an administration,
now, perhaps.
Yeah, up until now, up until today, we are seeing an administration who is very quick to jump. We've seen that from Venezuela, from Iran, from Chair Powell. We saw it last week with Jamie Dimon. This is an administration who is not afraid to call out CEOs by name if they say something that might contradict their policies. And this is the new norm that executives are operating within. And you can disagree with their processes. What we're seeing the difference is there is a process in place, and they are trying to lay low. go. There is very much a sentiment of just put your head down, create value for your shareholders and stakeholders, and frankly, try to stay out of the way of the administration.
Is that the right move?
No, every CEO needs to decide with his or her team and board, Tim, on what's best for them and their company and their employees. And you're going to see different responses because of that. And that's the great thing about employees and teams having a choice. They can choose to align themselves with organizations that might meet their mission or purpose, or those that don't. We are really, for the first time over the last week, a bit of what we saw towards the tail end of Davos today, what we're seeing from Minnesota. We are seeing more of a response. And again, we get to align ourselves as an investor, as an employee, as a team with those companies that you want to align your values with.
And to be fair, like you made that good point that, you just take a look at last week, like the different things that maybe came out of the White House or from the president's social posts. And it's a lot of things that maybe go nowhere, right? So as a CEO, you've got to think about, as a leader of any institution, the longer term, right? And things that are ultimately going to impact you longer term. So I kind of get that. Having said that, I do think about the impact, though, on society at large, where it feels like a lot of anger, a lot of hate, a lot of division. We've had division before in this country. Yes. I know that. And people who lived through the 60s or race riots, like we've had really difficult moments in time. How are you thinking about this, though, in terms of, what are the roles of CEOs? Is it fiduciary responsibilities if you're public? Is it, I don't know. I feel like you go back years ago where you'd have a company in a community and they cared about the community around there. I'm not saying CEOs don't. Lots of great leadership out there. But I do wonder what's the larger role of leader and leadership.
One thing that I think is getting lost in the debate from Davos last week to this week, Carol, is that we're speaking about this new world order and changing geopolitical relationships. Most CEOs at Davos last week, if not frankly all of them, run global companies. They have teams in the US, in Europe, in Asia, in Latin America, and these teams get along, and these companies are proud to be global companies. So while we're making a lot about what's going on a political level, that same rife country to country, region to region is not happening inside our global companies. And I think we need to remember that, right? Mm-hmm. And kind of separate what we're seeing there. Again, for companies, we're seeing different aspects. You are a fiduciary responsibility if that is your role as a CEO, which is why we're seeing CEOs sometimes take a stand or align with the current administration in a way that you might want. But that is the power of having the ability to move across different ones and, again, align with those who do share your values. I think that we are seeing, over the past couple of days, a tipping point, and companies that were silent are finally now saying there are things that we need to stand up about, and we might see even more of that going forward. We're seeing that on a policy level, as we saw from JP Morgan on the credit cards. We're seeing that on a social level, as we're seeing from the CEOs in Minnesota today.
You bring up a really interesting point about these global companies, and so many American companies have revenues from all over the world. There's a really interesting Bloomberg Business Week story about how Canadian skiers are not coming to U.S. mountains as a result of the president's rhetoric and the president's policies, and how it's really hitting some of these mountains pretty hard. Jay Peak in Vermont, for example, seeing a real toll from there. What is the right way for an American company to communicate to the U.S., but also communicate to customers outside of the U.S. so one doesn't alienate the administration, but also at the same time does not alienate international clientele?
The majority of American and Canadian companies have very strong relationships with the other, Tim, and I'm not seeing that change at all. We are seeing on a strategy and structure aspect trying to get a little bit more production or manufacturing either in Canada or the U.S. If you're heavy in Canada, you might be trying to build up a bit in the U.S. and Canada, or across suppliers, across partners. And what we're seeing, again, on a political aspect, we're not seeing replicated when it comes country to country, when it comes company to company, when it comes to our CEOs. And I think that's a good thing, right? You're not seeing it in kind of employees and companies. You're not seeing it across CEOs. The trading relationships remain very practical. What's the best way we can set each other up for success? What's the best way that we can make sure that we can both continue to serve our customers with as much continuity as we want? And that sometimes means having a higher cost burden. Continuity is trumping cost when it comes to making some decisions now. But when it comes to the relationship aspect, I'm not seeing that fracture. And I work with hundreds of CEOs across different countries. I'm not seeing that fracture at all.
Interesting, especially when you think about, take it to an investment perspective, especially with companies with global exposure. Rebecca, so glad we got some time with you once again. Dr. Rebecca Humkes, faculty at the London Business School and at Duke, corporate executive education, author of Survive, Reset, Thrive. When we come back, more on
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody. I don't know about you, but I actually stayed in a hotel last night. I don't live that
in the Hotel
far.
Stenovec household.
What you?
Yeah, that's where I stayed.
But you made.
And I got a wake up call very early in the morning
from
a 7-year-old.
Oh.
Yeah, it's all good.
How was your trip in this morning?
Not bad.
Not bad.
All things considered. I waited a long time. Kids didn't have school, so I helped out at home with that.
Okay.
Very empty. I got lucky with the 2 trains that I took. I didn't have to wait very long, but
yeah, which wasn't the case for everybody.
No, and I mean, if I would have missed the train, it would have been 20 minutes to the next train. It said on the.
So not terrible.
Not terrible, but it could have been worse.
Well, thank you, company, Bloomberg, because my